when you have excess capital. So we can, instead of, like in the last 24 months, we haven't been putting a lot of money into credit. We've been investing in our equity strategies. Right. We just hold lots of cash. Right. And we've been investing in equity strategies similar to what Berkshire Hathaway did for years. And that's sort of the model that we've been tending towards.
So it makes you more flexible, I guess. Flexible and more profitable.
The number one thing in investing is to have flexibility and not be defined in what you have to do. And by having more capital and allowing your balance sheet to be flexible, it allows you to be creative, innovative, and to assist people achieve their goals. And so our whole goal over time has been to have as much capital and more capital than any other competitor we have so that we can do things that others can't. And it just allows us to help our clients, customers, institutional investors, counterparties, do things that others may not be able to do with them. And it doesn't always work that way, but it just helps you be better. And we happen, for 35 years, we've collected capital. Yeah. We've paid a small dividend, we've collected capital, and that allowed us to have a very large balance sheet. And sometimes people look at it and say it's overcapitalized. But the fact is, there are times when excess capital is extremely valuable, and it allows us to have the confidence to do things that many others can't.
M&A? I mean, so Oaktree is fully integrated now.
We're shortly closing the Oaktree transaction. We did it in a very staged process over 6-7 years. People businesses should be assimilated over 7 years. We've got to know all the people, and all the strategies today are going to run like they've always run. Yeah. But some of the functions in the back office will be put together. But really, they'll just run like they have for decades. And what we have is two brands. We have two amazing brands. We have an Oaktree brand for really opportunistic credit. And we have the Brookfield brand for global infrastructure and all the things that we're known for.
Do you have appetite for another big acquisition?
You know, I'd say never say never. I never say never. We never say never. But these are people businesses, and they're you need to be very careful with people businesses. So
in terms of culture or integration?
Yes, it's all about culture. Like, remember, we have in our investment business, Oaktree Brookfield is 4,000 people. Yeah. You need to be very careful with every person and your culture and what you do, and it's very, very important. So this is not like we buy $100 billion of businesses annually in our investment funds, and they're normally assets. You buy a pipeline, it doesn't really argue with you. It has 75-80% margins. Yeah. There's very few people in the business. Your pipeline can come and go. It doesn't argue. Yeah. When you buy an asset management business, it's about people. So there may be an opportunity. Why we keep excess capital is because it's amazing what eventually comes around. And if you sit and wait, opportunistically, there's some incredible opportunities.
But is there something that you would, at the right price, love to buy, given all of the uncertainty?
There's many things in the world that we'd love to take a look at. Often they're not available, or they're not at the price we would pay for them. So we keep lots of lists.
Okay. You won't tell me your top three?
Definitely not.
Talk to me about succession. So how, you've always been quite prepared, right, in terms of succession plans. Like, what kind of timeline can we really look at? What will you do next?
First, I'd say the number one important thing in a business is people. In every business, especially in an asset management business, it's about people. And secondly, our business is about building businesses. We buy businesses, we help the management teams. The number one thing we do with them is plan the people side of the businesses. And we focus on our own business the same way. And therefore, we've planned for long periods of time. We just Connor Teskey became the CEO of our asset management business. I had been the CEO since we started that business. When we spun it off, we thought it was appropriate for me to be the CEO, just to have it start that way. He's run the business for 4 years. So nothing really changed overnight because he always ran the business. But and I'm going to do the same things for him that I did to today. I help out on investments once in a while. I look after some clients, and I help with strategy.
So you're not going anywhere?
I am not going anywhere, unfortunately.
Why, unfortunately? you like
some people maybe right? Some people maybe want me gone.
Bruce, I mean, there's just so much news day in, day out. How do you keep a level head, right, and focus on your long-term strategy when you say everything that's happening with trade and tariffs, with, it could be U.S. policy, what's going on in Japan? It just feels very unsettling.
Look back over 50 years, look back over 30 years, look back over 20 years, look back over 10 years. The world is better today than it was. When you look out 10, 20, 30, 40 years, it's going to be better. The advances that are being made in medicine, the advances that are being made in technology, the advances that are being made in the world are making us more productive, better, healthier. We're going to live longer. We're solving many issues that are in the world. So the world's getting better. So if you look at the, we always focus.
Yeah, because people don't feel it.
People focus on the short term.
Yeah.
I'm positive 15 years from now, they're all going to be better off. All is a strong word because there's always winners and losers. Don't get me wrong. But for those that persevere and can look to the future, it's going to be better. And that's, you asked me how we think about it. That's how we think about it. We build the business for the long term. Remember, the money that we invest is invested for 10, 20, 30, 40, 50 years. So this is a very, very long-term business. We don't think short-term. We have to think long-term.
Do you worry about getting, caught in the crosshairs of geopolitics?
No, we operate in 50 countries. It's really 25 in a major way. And we're a local player in every single country. So we go to a country, we invest capital. Remember, what we normally do is we take money there from found around the world. We take money there, we buy local businesses, we provide local services to either individuals or to companies. We don't really trade over borders. Once in a while we have a business that does, but by and large, we don't trade over borders. We provide your fiber to your phone. We provide the telecom towers. We provide the office space. We provide we provide services or goods to you in your country, and therefore we're just a local player in every country. So the geopolitics, it affects everyone. I'm not trying to make light of it, but our business is about local business in local countries. What's really important to us is we pick our countries right.
Bruce, thank you so much. Bruce Flatt, you'll have to come back to finish that sentence. Bruce Flatt, the Chief Executive of Brookfield Corporation. Coming up, we'll discuss the outlook for global trade and tariffs. We'll be joined by Rick Deverell from Macquarie Group and George Saravelis from Deutsche Bank. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. you know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump defends his economic record in his State of the Union address, with polls showing Americans are anxious about affordability ahead of the midterm elections. Anthropic says it wants to integrate with companies and not replace them. The AI rally is now waiting on NVIDIA earnings later. And UBS says private credit could see default rates surge as high as 15%, 2 percentage points higher than just 1 month ago. So President Trump has focused on the domestic audience for much of his State of the Union speech, boasting that inflation is plummeting and incomes are rising fast. The president also defended his tariff policy after last week's Supreme Court defeat. Well, with us now, Rick Deverell, Macquarie Group Chief Economist, and George Saravelos, Global Head of FX Research at Deutsche Bank. So thank you both for joining us. George, let me start with you, because just last month you were kind of in the crosshairs of the Treasury Secretary Scott Bessent for something you said about U.S. assets. I mean, has it been a long month?
Well, 4 weeks is a long time in markets every year. But what I would say is the episode really reaffirmed the importance of research independence at Deutsche Bank. I got tremendous amount of support from clients, from internal colleagues, and it just really energized us to keep doing our job. It showed the importance of research.
You started this year neutral on the U.S. dollar against the dollar. Has anything changed?
Well, we've been neutral on euro-dollar specifically because it just had such a big move. But as far as the broad dollar goes, in terms of emerging market currencies, the renminbi, we've still been bearish on the dollar there, and the broad dollar is weakening. It's just you're seeing rotation. So we're keeping that view. There's lots going on, as you said, and we'll see how the year develops.
Rick, what's your take on, I mean, dollar kind of changes everything. And I don't know whether there's appetite for the U.S. administration to have a much weaker dollar, or whether actually they think it's okay.
Yeah, I mean, it's interesting. If you look at the real effective dollar, it's still very expensive. I mean, it's tended to move in big cycles since Nixon left the gold standard in 1971. So even without the Trump administration, I think it was at the levels that you'd normally expect now to have a bear market. And I think the Trump administration is adding to that as people think about diversifying. So, I mean, I'd be very surprised if the US dollar's not weaker in 5 years' time. Of course, the next 3 months is much harder.
Yeah, George, I mean, again, because you've written so much about foreign investors diversifying away from the dollar, either through FX or asset allocation changes, I mean, are you seeing that come to fruition?
Well, there's a very interesting dynamic going on in the market where you're seeing European investors de-risk. And, of course, this is relevant in terms of FX hedge ratios, but also the broader relationship, if you're seeing the ramp up in defense. But in Asia, we're yet to see that dynamic. Asia is, I want to say, doubling down in U.S. exposure. You can see that in Taiwan with some of the changes in hedge ratios. Japan, the Takaichi-Trump relationship is very strong. And I think how that dynamic plays out, because we've seen dollar weakness against European currencies, And in Asia, that's not happened yet. So to see another big wave of dollar down, you really see the Asia investor behavior changing. And that's what we're very closely monitoring this year. It's obviously related to how the BOJ behaves, all sorts of other things going on. But Asia versus Europe, I think that's quite important.
And I know you said, look, it's so important to have independent research, but why is it so difficult to write about things like this at the moment?
Well, I think as long as you write solid analysis that tries to be objective, is focused on markets rather than politics, I wouldn't say it's that difficult. So we keep writing, and clients like to read us.
Do you see, Rick, any asset allocation changes? As from a chief economist point of view, do you see a big shift in the next 4 to 5 years? Are you starting to see shifts now because of gold and some central bank reserves, or is it just little things that are unquantifiable for now?
Yeah. So I think a lot of clients that I speak to would like to diversify, but it's actually harder than it first appears because it's the biggest and most deep market. So I think it's at the margin, and I think it's slow, but I think it will happen. And if you look at things like the MSCI, the S&P was trading at a similar multiple to the MSCI World ex-US 10 years ago, and now the multiple is almost double. So they're also very expensive. So I think you put those two things together and there's an incentive to move. I just think it's actually quite hard to move in size quickly. So I think it's more of a multi-year process rather than something that happens fast.
But what's your biggest concern right now? I mean, again, I think George was pointing to the fact that there's a big concentration of AI risks in the U.S. There's a lot of uncertainty on trade and tariffs. There's, you don't really know how chief executives will behave, or actually the impact that AI will have on macro. I mean, is it all of the above, or is there something that we're not seeing?
Yeah, so again, it's interesting in that it's the kind of period where people like to focus on the negative, and there's a long list of things that could go wrong. But I think we've got to recognise that most of the time it goes right. And the last year has been a classic point again in that there's lots of things that could have derailed the global economy, but it's actually been once again more resilient than people thought. And as we're going into this year, I think it's speeding up rather than slowing down. So in the near term, I think we'll talk about these issues a lot, but I think the economy will be fine. But I do think you're building imbalances. So what normally drives a US recession is a bust in business investment. It's not consumption, because if business investment swings more heavily. And clearly we're having a very big surge in AI investment at the moment. And if that goes for another couple of years, which I suspect it will, at some point the market will probably say enough. Yeah. And that'll pull back, and that'll be the downturn. But I don't think it's this year.
But, I mean, again, this was a key concern of yours, George, right? The fact that there's so much concentration of AI risks in the U.S., and we're now seeing actually equity investors struggle to price this and price the impact across several sectors. So is this going to continue, or does it get settled at some point?
I would say it's probably likely to continue because just uncertainty is so high, and we're talking about a transformational technology. But as far as the global market goes, to me, the most important dynamic is for the first time in a while, these risks and the high volatility stemming from the US rather than the rest of the world. And that has dramatic implications for the relationship between the dollar and equities. So when the risks are centered in US equities, the dollar stops behaving as a safe haven, and it's something we've written about for a while. And then what that means is it reduces the incentive to hold equities unhedged. You want to remove the dollar equity exposure. Now, if you look at the rest of the world, something Rick mentioned as well, for the first time we're seeing good growth. So global data surprises have actually been positive now for more than a year. We continue to get good data, and I think that's where you're seeing the growth convergence as well. So the overall global story is actually quite good.
But what are you expecting from the Fed? And again, I guess does AI impact inflation or just the labor market longer term?
Well, the two would be related. So I think if you get the really fast, disruptive story, it would be disinflationary. As far as the Fed goes for the next 6 to 12 months, my view has been that they're not going to do anything. As I say, they're in a good place. The market is obviously very focused on the wash transition. But if you look across the world, you've got very few central banks that are moving. One exception is Australia. But most of the central banks, the ECB, G3, they're not really going to be moving this year, which I also think is helping keep vol quite low, despite all these risks we're discussing.
What are you expecting from the Fed?
I agree. I mean, I think that inflation...
A consensus around the table.
We really shouldn't do that. I know it's bad, but inflation's 3%, unemployment's very low, the labour market looks like it's rebounding, so I think they sit and wait. If they were to ease, I suspect it would be a mistake, and they'd have to take it back later this year. So I think they're just going to watch for a while.
How do you think about AI? Because I see reports say, it's 300,000 job losses. I think it's so difficult to actually have a comprehensive reading because...
And it is hard because there's so much churn in the labour market every year. So last year, for example, there were about 60 million people changed jobs. So when you have a big announcement, big companies shedding 20,000 jobs, that's terrible. But in the scheme of the size of the US labour market, it's actually not very big. If you look at the labour data, again, it's been interesting in that most sectors in the US economy were on a very stable trend between 2010 and 2020. COVID happened. It's really scrambled things. And there's been a lot of diversity since then. And a lot of them have fallen away from the trend that you saw in terms of employment growth in that period. So something's happening, but at a macro level, it's not clear yet that we've got a lot of productivity coming through at an economy-wide level. If it does come, which I think it will, most of the theory would say that's higher neutral rate rather than lower neutral rate. So like Kevin talks about Greenspan in 96, what people have forgotten is Greenspan didn't cut rates, he just didn't increase them. And the real 10-year in 1996 was double the rate that it is now. So it's actually quite ambiguous again whether it actually leads to lower rates or higher rates.
Do you expect, I just had a good conversation with Bruce Flatt of Brookfield, who's saying, look, he doesn't see anything systemic in terms of, private credit or credit markets. Do you worry about something really upending our economies?
Yeah, and again, it's on the list of things that could go wrong. And because it's private...
But it would be systemic?
I don't think it's systemic, and that's the key thing, because the problem is we don't have enough information on what's happening there. So when it's in the dark, bad things can happen. But it just doesn't look big enough. No. Now, famous last words, it could be, but it's not something that I'd put in the top 5 things to worry about this year.
Do you worry about it, George?
I think in the long term, it's definitely something to worry about and think about. It's one of the most interesting questions in my career, given the transformation of this technology. But I think it's very important to not just focus on the technology itself, but also the political economy. And I have to go back to reading Marx, to reading Keynes, when we're thinking about how these technologies transform the distribution of wealth, they impact on the unemployment rate. So if you go back to these big rollouts of technology in the 1900s, even in the 1800s, it was all about distribution and it was all about institutions. And I think we need to keep that perspective. So to answer the question on, is it systemic, is it deflationary, are you getting the fiscal response? How are the politics responding? What is the impact on elections? And I think that's what makes it really fascinating over the next few years.
So Japan, I want to talk to you about Japan because it gave us a little bit of, I don't know if it's a fright through a roller coaster ride. So what does the new PM with a massive landslide victory mean for yen?
Well, I think the first thing is she has a lot of authority. As a starting point, I would say our approach in Japan is that there is no systemic debt issue. We look at Japan in terms of consolidated balance sheets. We look at the external sector. And therefore, when you're looking at the dislocations in the back end, they look a lot more technical. Japan has the capacity to service its debt. It's all about the policy choice. It's about allowing the Bank of Japan to hike rates. We've seen some stories overnight as well into some of these appointments were dovish. And I think we're quite cautious on the yen because to be thinking about the large rally that would make sense, you really need to see real rates going up. And at the moment, it seems to be that the government is favoring a policy of low real rates, which allows debt to GDP to go down. It's effectively a form of financial repression.
Well, we've seen so much volatility across markets. Are you expecting more or less volatility for the FX markets?
Well, it's an interesting question because I'd say we're seeing very localized volatility. So you saw it around Takaichi, you saw it around some of the headlines with Davos. But if you take a step back, implied volatility is very low. Emerging market volatility is extremely low. Carry trades are doing well. In all the work we've done, the single most important driver of all is growth. So going back to the previous discussion we're having, if the market perceives growth risks to be relatively low, especially global growth risks, I would expect these vol shocks to be quite short-lived and carry to continue to do quite well.
In terms of risks, Rick, how do you think of China? Because again, there was a line of thought that we were going to import deflation from China. That's happened at the margins, but actually very little. I don't know if we spend enough time thinking about China, given everything that's happening in the U.S.
Yeah, and it is interesting in that if you step out of the noise and you look at particularly the US, but also Australia, it's too much inflation, not too little. So again, there's this bizarre conversation going on where people are worried about AI taking the jobs. At the same time, you go to places like Europe and people are worried about sluggish productivity. You can't have both of those. and then you kind of throw China in the mix. I actually think China is a source of stability at the moment. China's really interesting in that you've had the tariff shock, but exports are actually driving the economy at the moment. So again, there's a perversity there. If exports were to falter, which I don't think they will, because I think we've got a global recovery happening, I think then they'd turn the dial and they'd stimulate the domestic economy. So they're happy with 5-ish% growth. If it comes through exports, that's fine. They'll allow the property market to continue to deflate. But if suddenly they needed to change gears, I think they've got capacity to do it. So I don't think China's going to be a source of big volatility this year.
Why is it so difficult to you both to actually, price in geopolitical risk?
I mean, the problem with geopolitical risk is if you look at the very long run of history, lots of bad things happen in regional areas, and it doesn't really do very much to global growth and to global markets. So if there's an oil shock, obviously it impacts the oil market, but unless the price moves a long way and stays higher, it doesn't tend to have a lasting effect on other markets or on the economy. So again, there's lots of things that could go wrong, but in my judgment, the kind of things that we've seen so far are localised issues, very bad for the regions involved, but none of them have had a significant impact on the global economy or on global markets. And I don't think that's going to change in the next year.
I mean, it feels like, and again, there are bouts of volatility that, the markets have largely ignored the Supreme Court decision on tariffs, again, because it's uncertainty. But I don't know, George, how you see it. We don't know if countries retaliate. We had a response from the EU, but again, we're in flux, and the markets seem to be moving on.
Well, again, this Supreme Court decision is an interesting question. We've long been of the view that the market reaction would be very limited because if you look at the noise versus the reality is that the administration is going to be able to pivot to effectively something very similar. Now, it may well be the tariff rate is 1 or 2% down or up or down, but from a big picture macro perspective, it's not really going to change anyone's view unless you're assuming much bigger changes to tariffs, which don't seem to be going through. So again, you have this divergence where the headline uncertainty is very high, but if you're looking at the macro impact, and again, another example would be you're talking about headline tariffs of 16, 17%, but if you're looking at realized tariffs, they've been closer to 10%. So again, the impact is smaller than some of the headlines would suggest.
Yeah, and again, unfortunately, we agree. I mean, the main thing that happened last year is taxes in the US went up by about 1 percentage point of GDP.
Yeah.
So tariff revenue went from 0.3% of GDP to about 1.3. The fascinating thing about the Supreme Court ruling is that I think it's really important for things like credit markets because it shows that the guardrails are holding.
Yeah.
So, the famous US system is still working. But in terms of the macro impact, this year fiscal policy was moving from being tight last year with the tariff increases to being easier with the one big beautiful bill. At the margin, this probably means there's less tariff revenue and there may be refunds, but it's very much at the margin. So you wouldn't change a macro forecast based on the changes in the tariffs, at least as we know them at the moment.
Okay, thank you both for joining us. Rick Deverell there, Macquarie Chief Economist, and George Saravellos, Global Head of FX Research at Deutsche Bank. Thank you so much for joining us. Coming up, the AI scare trade has rippled through global markets. To discuss how venture capital is navigating the boom, we'll be joined by the president of General Catalyst Institute, Teresa Carlson. That's next, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East, and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome back, everyone. Now, AI has triggered weeks of turmoil in the markets and the so-called scare trades. To get insight on how a VC firm with portfolio companies, including Stripe, Mistral, and Airbnb, navigates the age of the AI boom, I'm joined by Teresa Carlson, President of General Catalyst Institute. Teresa, thank you so much for joining us. I'm really excited to speak to you because you've been in AI and technology-related companies for a long time.
Yes.
So, I mean, what worries you? Is it the adoption? Is it the demand, or is it the China versus U.S. race?
I'm more of an opportunity person, so I think about what's the opportunity, and when you think about the opportunity, we want to think about what are all the elements to make this work, right? Not like what are all this kind of scary things. I think this week has been actually a pretty good week because you're seeing, because of some of the releases like from Anthropic, a new level of confidence in the productivity and what can actually happen with AI. But when it comes to making it a reality, one of the big things that we focus on at the General Catalyst Institute is the policy side. Mm-hmm. Because believe it or not, if you don't have all the right policies in place, all these things don't actually work. So while the commercial companies have to go, right, get the land, get the compute, make sure that there's chips available, make sure that there's energy available, if policies don't line up so these things can actually move faster and there's great adoption, that's what I worry about the most. I would say also we do always have to consider what's going on in China. That we always are considering, because we have to move a lot faster, and you never really know how much is hype or not.
Yeah, I mean, I keep on being told that, China's only 6 months behind a lot of the major U.S. companies. Does that make a difference to how you think about policy and how policy should be implemented?
100%. We always want an unfair advantage outside of China, right? We need to make sure that everything we're doing has an unfair advantage to move a lot faster. And they have this issue of, hey, they're government-led on every single issue they do, so if they say we're going to do it, they move forward. And they also have a very long-term view of this, where we tend to, outside of China, have a shorter-term view on things based on who's in office, right? What kind of decisions are they making? But here's the thing that I think we have in the Western world that makes a really big difference here, which is we have talent, we have capital, we have entrepreneurs that are unbelievable. They like experimentation. They don't mind failure. They pick themselves up faster. And we have the research and academic institutions to really make this work.
Teresa, how difficult is it in 2026 to find the winners and losers, actually, of this new AI revolution? Because everything's moving fast, and I have a lot of chief executives on the show that say, look, I don't really know what model I'm going for, so I'm trying them all out to see what sticks.
Well, AI native, I mean, everything is about AI. When you're investing, we look at so many great entrepreneurs. We tend to invest on, believe it or not, the individual. We invest even on an idea. If we like the founder and the entrepreneur and we're like, this is like an amazing idea, we'll invest in that. So we do kind of pre-seed, seed, all the way through. So if you think of somebody like a Stripe, we've invested every round. I love that you had Minstrel on. They're one of our top investments. But we tend to think about the founder, their idea, and can they execute. But really, everything is about AI native at this point. You've really got to only think about that.
So when do you know who? I mean, is it first mover advantage? Is it first technology? Is it first funding advantage? Like, how do you? This is a completely new technology to what we've seen in the past.
Something that I see that's really different, and this is really based on my experience of years of being in tech, is it's also about ideas that people have that haven't really been thought of yet. And also, I'll say, I don't want to call it disruption of industries, but additive. So if you think about a call center or like a traditional real estate business, bookkeeping, record keeping, now legal, you're actually seeing high disruptions of what AI can do when they come in and take that over and really apply AI to it in a very productive way. So we're seeing industries actually take overlays of what we call applied AI and be able to change those industries. So those are also really high net worth opportunities.
Do you think that we underestimate the pace at which the change will happen on AI, or do we overestimate it?
I think we're underestimating it. I think we're underestimating it because if you see the releases that are happening already with, with, again, I'll take Anthropic.
Yeah.
They're all, but I mean, these releases, and people are like, what just happened? I mean, they can't even believe that these releases are coming out. And I remember in the cloud world, we thought that things were moving fast. And now I call it a double strap in, like get prepared. This is moving so fast that we're actually having a hard time absorbing what's going on. And that has to happen. Of course, enterprises have to be able to adopt this. Governments have to be able to adopt this. So there's got to be training and learning and understanding and skills along with this.
Do you ever worry that there's so much money in AI that is needed to build the infrastructure, the data centers, that there's not going to be enough demand for it?
I don't worry about that. I just think because I've been in tech so long, I think these things get balanced out. Yeah. And also, these are really smart people doing this work. They understand how to do capacity planning. Oh. And the other area that we don't talk a lot about is why are these models, why do we keep releasing the models if people aren't adopting them fast enough? But we have to make sure, again, staying ahead of China. We can't let them get far advanced on us, especially because of defense, mission capabilities, financial markets, healthcare, things that we really care about that make our economies resilient. We've just got to be ahead of all this.
Teresa, when you just speak to policymakers across the world, who gets it and who doesn't get it? Because I get, a lot of chief executives, again, from the AI world say, when you go and see politicians, they think about AI, but they don't really understand how transformative this technology could be for their economies.
I'm so glad that you asked that question, because this is literally why the General Catalyst Institute exists, is to go out and work with policymakers and bring our companies to the table so they understand it. And you nailed it. A lot of them, they're struggling understanding the full capability of all these technologies. So we try to walk in and really explain and let them see the companies firsthand and talk about what's going on with finance companies, healthcare companies. We're even seeing things like PhysicsX, who's disrupted the way you do mathematics and how you, and then if you think about doing virtual healthcare, even in hospitals, all these things are really changing. And the policymakers have to understand how that operates so they can actually create policies to make this move a lot faster.
But I mean, there seems to be a timeline disruption, because if you have to educate policymakers, they could be behind the curve. By the time they understand it, the technology would have already moved on.
Well, always. So that's all. I mean, yes, that's always a problem. I will say, and I will give an example within the U.S., this administration, where they have excelled is on doing things like executive orders to say we are going to adopt this at every level of government. And it's really pushing both commercial enterprises and governments to go out and absorb all this.
Teresa, thank you so much for joining us. Teresa Carlson, they're president of VC firm General Catalyst Institute, focusing on policy. Up next, it's Bloomberg Brief, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies. You know, I was traveling, the business. But of course, after people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Our nation is back, bigger, better, richer, and stronger than ever before.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A turnaround for the ages. President Trump touts his economic policies in the State of the Union address. Stocks turning once again. The future is pretty steady now after a relief rally from another AI scare. And all of that as investors await quarterly results from NVIDIA this afternoon. It's going to be a big afternoon for NVIDIA investors and those of us interested. Let's take a look at how markets stand in the run-up to the open. So after that relief rally yesterday where we saw the S&P up almost 0.8%, the Nasdaq up 1.1%, we could be seeing that continue again today. Now, futures did erase their gains after the State of the Union address. Perhaps they were looking for more policy proposals from the president. But now we're firmly back in the green again. Let's take a look at the bond universe, perhaps more interesting elsewhere in the world than in the US. We have that 10-year yield creeping up just ever so slightly to above 405, but generally in the same environment that we've been in for the last few days. Let's look at Japan, though, because more interesting developments in Japan and some dislocations potentially in yields, particularly at the back end. We saw a rise, and you can see still a rise there for the 30-year yield of 8 basis points. The 40-year yield was up 13 basis points at one point after Sanae Takeichi nominated 2 considered dovish members to replace some retiring members to the BOJ. Not just dovish, but reflationary, and so they may not be looking at inflation as a problem at all in Japan. And so that's causing a little bit of ructions. As you can see, the yen now is up about 156.61. It was below that, about one big figure earlier on. And the Nikkei 225, of course, reaping the benefits of a weaker yen, up 2.2% in the session. All right, all that in the next hour. But first, let's get some individual movers. Here's Abir Abu Omar. Abir.
Good morning, Vonnie. Let's start with HP, down 5% in the pre-trade this morning. The stock is retreating on a bunch of different factors. Now, earnings is one of them. Profit is going to miss average analyst estimates. There is a tariff story as well. Now, the company has had to move some of its operations out of China to compensate or to mitigate that effect of President Donald Trump's tariffs. But also, and what is quite interesting here, is a story that we've mentioned a bit on this program before, and that is the demand for memory chips. Now, HP came out and said that this demand for memory chips, the increase in prices of those chips is affecting its margins, and that is expected to continue into next year and possibly the year after. So the stock not doing very well this morning. Moving on to Workday, an AI story. I don't know if it would be a regular day if we don't talk about artificial intelligence, Vonnie. So Workday is down 8.3%. Now the stock stock is losing this morning on those AI disruptions. Earnings is also another story, but this AI disruption that we saw create a rout in the S&P a couple of days ago. Now the futures picture looks a little bit better, but this stock is down on the AI disruption game. And then finally, a little bit different, Axon is up in the pre-trade this morning. Now, this is a company that manufactures tasers and some public safety equipment, and it is doing well, 16% on the back of earnings. A fun fact that was pointed out to me this morning is this is the third best performing stock in the S&P 500 this century. So that's Axon for you. Back to you, Bonnie.
Wow, this century, Abir. Do we really talk in centuries now? Thank you so much, Abir Abu Omar. And coming up in this hour, we'll discuss the credit environment with Henrietta Packman of Allspring Global Investments. But first, President Trump delivering the longest ever televised State of the Union address.
One of the primary reasons for our country's stunning economic turnaround, the biggest in history, where the Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years, were tariffs. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis.
Dozens of Democratic senators and House lawmakers skipping the event, including Democratic Senator Chris Murphy, who said, quote, Donald Trump is making a mockery of this great institution, and he doesn't deserve an audience. These are not normal times, and Democrats have to stop behaving normally. Joining us now is Bloomberg's Laura Davison. Laura, you expect some partisanship at events like this. Was this particularly bad, with many, many Democrats walking out and indeed staging counter events?
Yeah, this was an event where lots of Democrats from the start decided just not to attend. So the Democratic side was a little bit lighter. You had one Democrat at the very beginning who was ejected from the chamber. He had a sign that said that black people are not apes, referencing a social media post that Trump had posted and had since apologized for in recent days. There were occasional moments where Trump was interrupted by shouting. That's really become a characteristic of these speeches, in both the Trump years, Biden years, as well as during Obama years as well, where there have been sort of feedback, euphemistically from the lawmakers in the room, largely from the other party.
Yeah, absolutely. Laura, I was listening to the speech and I didn't hear too much that was new, if anything, in fact. He did talk a lot about affordability at the very beginning. He pledged new savings plans for workers without 401ks, but even that's not exactly new, is it?
Correct. That is actually a part of a bill that was passed under President Joe Biden back in 2022. This would allow some workers who don't have 401ks, employer-sponsored plans, to get a federal match of about $1,000 each year. This is set to go into effect in 2027. So this is something that Trump really borrowed rather than a new policy plan he's coming forward. This speech was really devoid of any sort of new policy plans. Republicans who were hoping to have some ideas to be able to take back to their constituents to talk about as they're campaigning for the midterms were left sorely disappointed. Trump really looked backwards. He, touted the economy, he touted his tax cuts, but he didn't really give the party something to seize on going forward.
And he did mention several agenda items that really have already been mentioned are pretty stalled in Congress on healthcare and other items. Do we see any legislation before the midterms?
It's going to be really hard for Congress to pass anything before the midterms. Every member of the House is up for re-election, and 33 of the senators. Remember, we're still in a partial government shutdown. The Department of Homeland Security currently is without funding. Some of the more essential operations are able to continue. So the scope of this shutdown is pretty limited. But Congress has really been mired in some of these basic funding fights. Funding the federal government, which is sort of their most basic duty. Doing anything beyond that seems almost impossible, particularly in an election year.
And Laura, just briefly, towards the end, and we had to wait until the end, it was a very domestic-focused speech. He did move on to foreign policy, eschewed any mention of China, really, but he did talk briefly about Iran, and it sounded a little threatening. He said Iran had resumed its pursuit of sinister nuclear aims. Can we glean anything about any potential attack from those remarks?
Yeah, these were some of the most sharp remarks from Trump. He did reiterate that he wants to find a diplomatic solution here, but was very clear that he would not allow Iran to get a nuclear weapon, and suggested that U.S. Could use more force to deter that. He suggested that Iran is looking to build missiles that could hit the U.S. And was clear that he would not stand for that.
All right, Laura, thank you so much. Laura Davison there for us. Futures higher this morning after days of swings from AI disruption woes. Another headline out of Anthropic that the AI firm is now loosening its safety policy, writing in a blog post, quote, "The policy environment has shifted towards prioritizing AI competitiveness and economic growth, while safety-oriented discussions have yet to gain meaningful traction at the federal level." Let's bring in Bloomberg's Neil Campling for more on this now. Is this an ethos changing? Should we be concerned, Neil?
Morning, Bonnie. I mean, it just so happens that they had a little bit of an argument with the Defense Department, and so, last week they were talking about the safeguards were essential to the AI safeguards, and now all of a sudden it's about having to reduce these safeguards in the interests of driving the technology adoption. I think it's an interesting development, and it also tells you that perhaps they had to blink first because the DoD wasn't going to.
Interesting timing, because as you say, they have a deadline of Friday at 5:01 p.m. to get in line with the Pentagon or else be put on a list. Let's move to NVIDIA, because that's going to be huge. Free cash flow is supposed to grow something like 123% year over year. Margins will also be on watch. What else should we be watching out for? I
think the price reaction is the most important thing, because NVIDIA, just like the NASDAQ, has underperformed semiconductors since it reached an all-time high in October. We kind of need some kind of unexpected mic drop from the results and the guidance tonight to really get the stock moving again, I think. So it's where is that left field surprise going to come from? Because we need a new catalyst, I think, really to confirm leadership.
Yeah, I mean, you really have to put a rabbit out of the hat at this point if you're Jensen Huang. The multi-billion-dollar investments, though, in Anthropic and OpenAI, surely they'll get questions on that, at least on the call.
There will be questions. Obviously, they are helping fund some of their own customers to really leverage off of the infrastructure investments. The other thing, I suppose, is that if we look at the latest generation of technologies in terms of the cost of the racks, there is a significant investment that's going into AI. We know that the hyperscalers are investing billions and billions, probably 600 billion plus this year. So you need to kind of have this ecosystem that is supported by these investments. But at some point, as you say, we're going to need to focus on ROI. When are we going to see returns from these investments? Not so much necessarily for NVIDIA, but for these companies that are receiving the investment and are investing in this hyperscale.
And Neil, the other fascinating company we'll be watching tonight is Salesforce, right? And particularly now after the software sell-off, Salesforce has to get out there and really prove that AI is helping them and that they have more of a moat than others. Is this going to turn into sort of a game of Survivor for these companies?
I think it's a game of Survivor for many of the companies in the space. Obviously, Salesforce itself was a disruptor previously. It disrupted the traditional software model. Mark Benioff is very proud of that. Be interesting to see whether he's on the defense or the offense tonight in terms of the message that he delivers. But it probably is just as important as NVIDIA in terms of understanding the AI risks and opportunities that are currently in the marketplace that investors are so nervous about.
That's such a good point, the disruptor getting disrupted. And as you say, their business model is a little more defensive than others in the space. Neil, thank you so much. We'll be getting some analysis, no doubt, afterwards from Neil Campling of Bloomberg. Thank you. A bidding war brewing once again. Warner Brothers taking another look at Paramount Skydance, saying Paramount's new $31 a share buyout offer could lead to a better deal than the existing agreement with Netflix. Bloomberg's Manuel Baigori joins us now for more. So the board hasn't finalized its decision, but it seems like they're leaning towards moving away from the Netflix bid, which would then give Netflix 4 days to come up with more money, I guess, Manuel. Does it?
Yeah, it is indeed, Bonnie, another super fascinating step in this saga that's been ongoing and keeping us very busy for a few months already. And yet Paramount came back with another sweetened offer, $31 a share for a full buyout of Warner Brothers. And now, obviously, Warner Brothers has indicated that they are open to further talks. Still, they don't fully back the offer. They're still going with the Netflix agreement, but obviously now it opens up a new window for further talks and kind of trying to negotiate a potential deal. Obviously, a lot of questions remain open on what the next steps would be, and if the board were to back Paramount's new offer, obviously Netflix would also have a 4-day window to come back with a potential new proposal. So super interesting to watch for sure.
So apparently this new offer values Warner Brothers at $108 billion, including debt, while Netflix proposal values it at about $82.7 billion. But of course, we're not including the cable networks there. Would it be easier to sell with the cable networks, or is that a consideration at all?
Yes, I mean, Paramount has made it clear that they want it all, and that they've also been quite explicit in the different tweaks and amendments they've made to the offer to make it compelling enough for the board to consider. Now, it is true that Warner Brothers believes that spinning out some of the assets, Vonnie, may create more shareholder value down the road. That's why they embraced, or they agreed to a deal with Netflix, which is not for the whole company, but mostly focused on HBO and the studios. Now the question is, and some shareholders have been very vocal, right, that they'd like to see Warner Brothers engage with Paramount because they feel that the offer is more superior. And also, let's bear in mind that the regulatory approvals can be quite tricky here. It's a massive deal in a highly consolidated industry, and this deal is very transformative. It's going to have global implications, putting these two big mega companies together for consumers at the end of the day as well. So regulators are going to take a very close look, as they've mentioned in the past, and offering a clear pathway towards that approval is very important in this transaction.
And of course, we get Paramount Skydance earnings later today as well, Manuel, so a lot to watch for. Manuel Baiguri, thank you. Now to other top stories trending on the terminal this morning. UBS strategists are seeing a grimmer worst-case scenario for private credit. UBS now says default rates could rise as high as 15% if AI triggers an aggressive disruption among corporate borrowers. That forecast up from the 13% UBS initially had less than a month ago. General Atlantic is said to be selling a stake in ByteDance that would value the company at $550 billion. That's according to Reuters. The potential sale would be the first since TikTok and ByteDance closed a deal to transfer part of their U.S. operations to American investors in January. General Atlantic and ByteDance didn't immediately respond to requests for comment. And Aston Martin cuts jobs. The company plans to slash as much as a fifth of its roughly 3,000-person workforce. The British luxury car maker has been faced with product delays, quality problems, and higher U.S. tariffs. Coming up, HSBC jumping to a record as it beats on earnings and boosts guidance. We'll bring you our interview with CEO George El-Hedary next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in London. Shares of HSBC rising in London after the lender's profit beat the street's estimates and it raised some targets. Bloomberg spoke with CEO George Elhedery earlier.
We are very pleased with the 2025 results. I think the key message, Haslinda, to take forward is, number one, we are performing, and this performance is delivering good earnings, strong earnings, and is delivering strong growth in all four businesses and all the key indicators that we look at, and strong distributions to our shareholders with the increase of dividend by 14% to 75 cents per dollar. The second key message is that we are transforming with precision, with discipline, and we're doing it at pace, and we expect to be able to conclude a number of the actions we set out to do earlier than initially planned. And the third key takeaway is that we are confident in our ability to meet our upgraded targets, and we're therefore investing for growth to be able to deliver growth. We shared that we expect now for 26, 27, and 28, we've targeted for 26, 27, and 28 revenue growing every year, rising to 5% in 28, and we have targeted a return on tangible equity, excluding notable items, for each of these 3 years of 17% or higher.
But Georges, there are still some concerns. The Hong Kong and Chinese commercial real estate weighing on your numbers. You book a charge of $700 million. Have you seen the worst, and what are you anticipating? When do you see a turnaround?
So first, Hong Kong remains a structurally high-growth economy, and we have strong conviction in the opportunities available for us in Hong Kong. We have a market leadership position, and we're consolidating our market leadership. I mean, testament to that, as you called out earlier, Haslinda, is the privatization of Hang Seng Bank, which we completed ahead of time. The growth opportunities are multiple. Hong Kong is on track or poised to become the world's largest cross-border wealth hub before the end of the decade. We have a leadership position to capture these opportunities. Hong Kong is a major trading hub and the super connector between the mainland, and the world, and those flows. We have a leadership role in capturing these opportunities. So these underlying structural growth opportunities are real. Insofar the Hong Kong commercial real estate is concerned, we've always believed, and we continue to believe, that this is a cycle. We know this market very well, right? 161 years in this market. If it's a cycle, when we look through the cycle, we are constructive and positive about the medium to long term. We already see signs of normalization in the residential space. We already see some easing because of interest rates coming off and the supply-demand dynamic improving. And we will support our customers in the short term, but we remain constructive of how it will evolve in the medium to long term.
HSBC CEO George Elhedery with Bloomberg's Haslinda Aman. This is Bloomberg.
Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Time now for your front page news and major outlets all leading with President Trump's State of the Union address. First up, the Wall Street Journal leading with President Trump's focus on the economy. The Journal saying he might face hurdles in persuading Americans the traditional measures of economic health are strong when economic sentiment is low. Next up, the New York Times leads with the boycott by dozens of Democrat House and Senate members and the counter-event on the National Mall. The Times says Democrats who left their seats in the chamber said they didn't want to legitimize Mr. Trump at a time when he has routinely defied constitutional limits on his authority. And the Financial Times focusing on foreign policy, reporting President Trump lashing out at Tehran's, quote, sinister nuclear ambitions just 2 days before talks in Geneva. Coming up, Henrietta Pacquemont of Allspring.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse. A discourse in which you respect the dignity of those with whom you disagree.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A turnaround for the ages. President Trump touting his economic policies in the State of the Union address. Stocks turning once again. The future is a little higher now after that relief rally from yet another AI scare. And all of that as investors await quarterly results from NVIDIA this afternoon. It is an exciting day all round. Let's take a look at those futures. Yep, still higher. They did erase some gains after the State of the Union. Didn't have any real new policy pitches. But we do have another day of gains potentially on our hands, at least until NVIDIA reports. After that, we'll see. That could change everything. But again, yesterday we saw the Nasdaq up 1.2%, and it was software companies that led the gains. So very much those AI jitters calming down. Let's take a look at bonds. We'll be talking about them next with Henrietta Pacmon. Not too much movement, although we are seeing that 10-year yield and the whole curve really creep higher just ever so slightly, but we're in those ranges as we have been. Let's take a look at Japanese yields, though, because the back end of the curve in particular had a huge move higher today. 338, as you can see there on the 30-year yield. 40-year yield moved even higher than that. And the yen is weakening pretty incredibly once again, well above 156. All of that helped the Nikkei earlier with gains of 2.2%. And the reason behind it all, or one of the reasons, market participants having a lot of fun, but also Sanae Takeichi nominating 2 dovish reflationary board members to the BOJ to replace some retiring members. And that's certainly giving the market a lot to think about. All right, let's get to some individual movers now. She's back again. It's Abir Abu Omar. Abir.
Good morning, Bonnie. Let's begin with HP, pairing some losses from earlier in the pre-trade session, but still quite a bit, down 4.5%. There's a bunch of factors playing into this performance today, and that's on the back of earnings. That is on the back of some of the tariffs. Now, the company has had to move some operations out of China to mitigate the impact of President Donald Trump's tariffs. But perhaps what is mostly interesting here is demand for memory chips. We talk about companies that are prone to the increasing prices of memory chips, and HP is definitely one of those companies. Now, it's saying that those price increases may press on its margins until the end of the year or possibly into next year as well. Moving on to another one in the AI space, and that's Workday. This HR software company is falling quite a bit this morning, 8.4% down, and that is on the back of this whole AI disruption hype that we've seen play into the market. Now, it's settled down quite a bit yesterday, but it's playing into software companies that are not doing so well this year. Finally, moving on to Axon. Now, this is a little bit different. It's not AI. It's not software. It is a company that manufactures tasers, that provides protection tech in the U.S. and beyond, and it is doing quite well this morning, up 16% almost in the pre-trade. And Vonnie, as I mentioned earlier, this is one company that is doing quite well, the third best performer in the S&P 500 after NVIDIA and Monster Beverages. So up quite a bit this morning in the pre-trade. That is Axon. Vonnie, back to you.
Nice move there, 16%, I'll say, Abir. Thank you so much, Abir Abu Omar. So the 10-year yield then hovering just over 4% as key questions over the economy and leanings of FOMC members, frankly, remain. Nonetheless, Allspring's Henrietta Pacmon is expecting yields to stay in a range with volatility trending lower. I'm pleased to say Henrietta joins us now. She's Fixed Income Investment COO at Allspring. Thanks for joining, Henrietta. Definitely want to talk about the US, but can we first start in Japan? Because that was some move we saw just a few hours ago, particularly towards the longer end of the curve. What is the market trying to say here, or trying to express?
So we've seen a bit of volatility in Japanese spreads over the last few months, right? So this is not new. We do have some new information. You were talking about the 2 new appointments there, so I think that was the driver. And I think the market is still figuring out which direction Japan wants to go from an inflation perspective. I think that's what's on investors' minds at this point in time, and the fact that maybe on the sort of front end, they may be a little behind the curve given the inflation numbers that we're seeing there.
What does it do to the carry trades such as these days, particularly when you see the yen jumping around so much, and there are so many questions over who will control the yen and what they'll actually do?
Yeah, I think that's a really interesting one, because now when you start looking at the yields in the Japanese markets, they're not looking bad, right? And the sort of differential between the yields in Japan versus the rest of the world is looking a lot lower than it has historically. So I do think that it is something that investors need to look at. I don't think we've sort of seen necessarily the flows that might be associated to that, but I think it is part of that trend of investors looking at diversifying their books from a rates perspective, and maybe US rates being less in favor as a result of that.
Absolutely, particularly when you see them drifting lower like this. Do they continue to drift lower? You're expecting volatility to trend down?
So what we've seen, again, over the last few months in terms of US rates, if you look at the 10-year in particular, it has been trading in a reasonably tight band, say, call it from September. We expect that to sort of continue at this point. Inflation is still high, right? It's still above the target of the Fed, but it has been stabilizing. So I think that's an aspect to look at. And I think there's still some question marks in terms of growth as well, particularly as you get more questions around tech and the sort of next steps there. So that is likely to keep a bit of a lid in terms of rates in the US.
So the bid in treasuries, because, as you say, we're in a tight range, but there's definitely a bid there. Is it a safety bid? Is it, expressing something about the confidence of traders in the market in the US once again? I mean, what is that bid?
If you look at yields that are available in the US, they're pretty attractive. So I do think that one aspect of this is the interest in income. Certainly, that's a conversation that we're having with clients. Is they are looking for that income play, and treasuries offer that. You also have a situation where sort of credit spreads are quite tight at this point in time. So again, the sort of relative value is of interest there. So I think that sort of explains the interest, particularly in the sort of middle to intermediate part of the curve. I think maybe a bit more sort of circumspect on the very long end of the US curve, because that's going to be more subject to potential disruption from a macro perspective.
Absolutely, and tariff questions, yes, that have not been resolved, and refunds potentially in the works. So obviously private credit is not something that you would look probably at a granular level at, but these warnings that keep coming now, was Weinstein and some assets being sold off, does it give you pause at all? Does it make you want maybe richer rewards in your areas?
So I think it is sort of causing a bit more of an interest in the public markets at this point in time, and definitely happy to see that. Private credit, I think, is at an interesting stage. It hasn't really been tested, so I think the markets don't necessarily know how to react to that. So we may be closer to that test in that market. And I think also, if you look at the mix of sector allocations in the private space, it is going to be a little different to what you're seeing in public. If you look at sort of exposure from a tech perspective, obviously a bit less exposure in Europe, a bit more exposure in the US. Again, in the higher ratings, you've probably got a bit less tech exposure. The further down the sort of credit curve you go, the more exposure. And then if you move into private credit as well, you've got a bit more exposure to the tech sector.
I want to ask you about structured credit and municipal credit, because you're looking at opportunities, particularly in mortgage-backed securities and, also municipal credit. The policies of the president when he talks about housing and, not letting institutional investors buy single-family homes and so on, and also, happens in various different states. Does it give you pause there at all, or do you think these yields will stay where they are?
So, in both those areas, what we've seen is opportunity to differentiate and opportunity to trade. I think that's really what we're particularly interested in the mortgage side and the muni side. We have seen a bit of volatility on the muni side last year, and that's opened up some opportunities for sort of selection in that space. In terms of mortgages, again, this is a bit more of a relative value play, maybe looking against the corporate, and we're seeing more opportunities in that securitized space, given where spread levels are generally.
All right. Henrietta, it's a pleasure to speak with you in person. Thank you so much for joining us today. That is Henrietta Packmont of Allspring Global Investments. Coming up, the longest televised State of the Union address.
Our nation is back, bigger, better, richer, and stronger than ever before.
More on the takeaways from that address next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
One of the primary reasons for our country's stunning economic turnaround, the biggest in history, where the Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years, were tariffs. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis.
President Trump's State of the Union address, laced with celebration of his economic policies, while a number of Democratic lawmakers skipped the event, including Senator Chris Murphy, who said, quote, "Donald Trump is making a mockery of this great institution and he doesn't deserve an audience. These are not normal times and Democrats have to stop behaving normally." Joining us now from Washington is Bloomberg's Tyler Kendall. So plenty of partisanship, Tyler, and counter events and so on. But what were the main takeaways from the State of the Union for you?
Hey, Vani, good morning. Well, it was clear that domestic issues remained front and center throughout President Trump's State of the Union address in a bid to convince Americans that the economy is in better shape than polling tells us that many voters think it is. But President Trump really touted policies that have already been enacted, including those tax cuts under the One Big Beautiful Bill, instead of putting forward some new forward-looking policy proposals like we were expecting ahead of what were officials floating that we could get some new ideas. We did hear from the president that he is planning a new retirement savings account for workers that do not currently have employer-backed ones. But a lot of what we heard was the president calling on Congress to codify proposals that have already been floated, including his healthcare framework that seeks to shift federal subsidies from insurance companies to American consumers, and also his plan to ban institutional investors from buying single-family homes, two proposals that don't necessarily have a broad support of Republicans in Congress. It also was clear that the president was doubling down that tariffs will remain at the centerpiece of his economic agenda, going on in that speech to threaten our trading partners if they pull out of previously negotiated trade deals, as some of those U.S. Supreme Court justices who struck down his broad-based IEEPA tariffs were sitting front and center last night. Vani, well, domestic issues really did remain front and center at the urging of top White House officials. We would be remiss if we didn't mention that foreign policy, of course, came into the conversation as well, something that has really been dominating the conversation here in Washington, including perhaps most notably those heightened tensions between the U.S. and Iran, as President Trump didn't rule out potential military action.
No, absolutely. And of course, those talks in Geneva are scheduled for Thursday. But as you say, Tyler, he did talk about Iran resuming its pursuit of, quote, sinister nuclear aims. So it does appear that that's still very much on the agenda. It was, as you say, very much for a domestic audience, though. Talk to us about the security portion of what the president had to say and how that might appeal to potential voters in midterms.
Well, in terms of the Department of Homeland Security, for example, we really heard on President Trump calling on lawmakers to reopen DHS amid what has been a partial government shutdown. In fact, this was not only the longest U.S. State of the Union address, it is also the first one that has happened while part of the government remains closed. And that highlights both fiscal differences between the two parties, but also differences when it comes to immigration and customs enforcement. Immigration, of course, is that counterweight, that second top issue when we're talking about domestic policy issues here in the U.S., and it's really been something that has been motivating President Trump's base, but we have seen some pushback to what has been a staunch crackdown when it comes to deportation. So that's another issue to watch closely as we head into the midterms, and like pulling on the economy, pulling on the president's immigration policies have dipped as well, though we have seen those numbers come up slightly in the wake of the pullback in Minnesota amid all of the unrest there. But it is going to be something crucial to watch, especially next week, because hundreds of thousands, 206,000 DHS employers could be at risk of missing their next paycheck.
Tyler, thank you so much. Bloomberg's Tyler Kendall up late and early in Washington, D.C. Turning to tech, Anthropic is loosening its hallmark safety rules, writing in a blog post, quote, the policy environment has shifted toward prioritizing AI competitiveness and economic growth, while safety-oriented discussions have yet to gain meaningful traction at the federal level. Let's bring in Mandeep Singh of Bloomberg Intelligence for more. Mandeep, given that these companies largely regulate themselves, should we be a little concerned here?
I mean, in the case of Anthropic, they've been talking about guardrails and safety for quite a while. And in this case, clearly the U.S. government wants to use, the version without the safeguards for the purposes of national security. And I think the company probably had to relent because of the Defense Production Act. So to my mind, it is really a case of the government recognizing how powerful this technology is and, the company having to create a backdoor, similar to what we saw probably with Microsoft Windows back in the day.
Mandeep, NVIDIA, obviously the big story today. We're all going to be listening to that earnings call, no doubt. What should we be watching out for beyond a massive increase in free cash flow, apparently?
Yeah, and look, the demand remains way ahead of supply when it comes to these chips. That's what we've been hearing throughout the quarter. I think the key would be how they manage the margin situation, given the component prices have been going up. But there is no doubt that NVIDIA has a lot of visibility. They've already guided to, a 500 billion plus pipeline over the next 4 quarters, and that includes, the revenue they'll be generating this quarter and the subsequent quarter. So from that perspective, that gigawatt equation, like 1 gigawatt translates into about $30 billion of revenue for NVIDIA, wherever, the customers are using their chips. And that is what will drive the narrative in terms of how much visibility they have going forward.
And Mandeep, another company that we'll be very much watching is the Salesforce earnings later on today. And curious what you think Salesforce will say and how it will approach this software sell-off question. Will it try and differentiate itself from its peers, or will it be the hero and try and sort of protect everybody?
Well, clearly software is under pressure, and I think Salesforce pitch is going to center around them being the system of record and the fact that they are integrating AI agents at their level, using whatever the frontier LLMs they can partner with. So from that perspective, the retention rate is important. But as we saw with Workday's reaction last night, even good earnings won't be enough in this environment. So clearly, the more AI agent integration they highlight, I think the more convincing it will be for the market to believe, they have a path in terms of integrating this new technology.
All right, Mandeep, just a few hours to go. Mandeep Singh of Bloomberg Intelligence, thank you so much. And staying on earnings, retailers TJX and Lowe's are set to release results before the opening bell. Bloomberg consumer reporter Maddie Parker joins us now. Maddie, let's start with Lowe's because Home Depot did report comp sales that beat expectations in the last quarter. Steady demand. Should we expect more of the same out of Lowe's?
Yeah, so Lowe's, of course, have been a pretty bright spot for retail, actually, over the past 12 months or so. There's no doubt they will look to Home Depot's results yesterday, obviously one of their major rivals. And you're right, Home Depot saw steady demand. They said that things were improving a little bit on the home renovation side of things, but actually they were still quite cautious about those macroeconomic conditions. Lowe's, obviously, in the middle of their turnaround. They've really leaned into the digital expansion and the AI side of things. And actually, the previous 2 quarters beat Home Depot in terms of sales growth, so it'll be interesting to see whether that momentum continues into this quarter.
Will any of them have any comments on President Trump's housing policies or his potential housing policies?
Yeah, well, it would be an interesting thing to look out for. I think investors are very interested in that side of things. They'll look out for commentary on the housing policy. They'll look out for commentary also on tariffs. Of course, these retailers have warned for a very long time that any tariffs will lead to price increases. And that, of course, will kind of compound the wider subdued consumer environment that has been impacted a lot by inflation, a lot by the cooling labour market. So I think perhaps they will have something to say on both those fronts.
What should we expect out of TJX? It's been a strange couple of years, and we got confidence data yesterday that looked better than we would have thought, but that doesn't mean that low-income consumers are having it good.
Yes, of course. I mean, TJX it's one of those where, their shares have been doing quite well. There's no doubt that the kind of stress on consumer confidence, those cash-strapped customers, that's the kind of thing that really does give big box discount retailers like themselves a bit of a lift, a bit of an edge. But it has been a strange couple of years. It's one of those where they do rely a lot on those consumers coming out and spending their money. The past year has no doubt been quite a sort of patchy scene for consumer confidence. Whether or not they can kind of push forward that value and really emphasise that value proposition to customers is something that we'll see in these results today.
Well, of course, their guidance will have to take into account any impacts from the One Big Beautiful Bill and tax rebates that might be coming down the pike and so on.
Yeah, of course. I mean, that's definitely something that's going to come into play. I think they kind of have had to navigate a lot of those kind of tricky things. Those consumers who are really being hit by so many different factors at the moment, they will say, listen, we raised that outlook at the last results. It'll be interesting to see whether they can kind of continue that momentum today.
And of course, all these companies will have tariff questions too. Maddie Parker, thank you so much. Coming up, we're going to get you set up for your trading day. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Brief. I'm Bonnie Quinn in London. Now a look at what's ahead today. First up, retail earnings continue. TJX and Lowe's before the opening bell. Then we get plenty of Fed speak throughout the day. We've Barkin, Schmitz, Musalam, all today. And then the main event, NVIDIA reporting earnings after the market close. Let's take a look at some pre-market movers now. Netflix moving after Warner Brothers is considering Paramount's new buyout offer. We know that to be true, although the board hasn't come to an official decision yet. And then look at Axon, the taser maker, up 16%. Fourth quarter earnings beat estimates. It is a different story for HP, though. That story just keeps getting worse and worse, down another 5% in the pre-market after it guided to the low end of its outlook due to memory costs. And here is your macro picture as we await the market open in just a few hours' time. Futures are pointed higher. It could be another up day. The dollar, though, erasing those gains. That's it for Bloomberg Brief. Surveillance is right ahead. This is Bloomberg.
Nobusan, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, I was traveling the business. But of course, after, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, So we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we started Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We've continued to see an economy that holds up.
I don't think that we can underestimate just how important the wealth effect has been allowing this overall economy to levitate.
When we really look under the hood, we are seeing this broadening out.
We probably are going to have to go and look at our Q1 GDP forecast and boost those.
At these levels, one can expect maybe a cut or maybe none.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday following the president's primetime address.
Our nation is back. Bigger, better, richer, and stronger than ever before. Inflation is plummeting. Incomes are rising fast. An unfortunate ruling from the United States Supreme Court. It just came down. The S&P hit 7,000. Where it wasn't supposed to do it for many years. The golden age of America is upon us.
President Donald Trump defending his economic record. As Fed officials continue to get behind a prolonged pause, the market is bracing for today's blockbuster earnings report. NVIDIA coming up after the close.
And we really can focus on NVIDIA because after 107 minutes of the president's speech, we don't have that much new policy to talk about. So really, we are focused very much on NVIDIA and how high the bar is for them to really cross the threshold and beat, given the fact that they have risen, those shares, just 3.4% since the fourth quarter of last year. Why? That has been the question perennially, given the $650 billion of capital expenditure planned for this year for hyperscalers alone.
When it comes to hyperscalers, this also did make it into the president's hour and 48-minute speech last night. He was talking about AI data centers and the demand for it, how it's going to drive electricity utility bills up, and he says, don't worry. These companies, the tech companies, were the one to help pay for that. And this gets at the heart of what the president really needed to address yesterday and didn't spend as much time in it as people thought. And you could see that in polls. Almost 7 in 10 Americans say that Trump is focusing on the wrong problems in the United States. That was an immediate poll done by CNN after the State of the Union. Americans, they don't really care, everyday Americans, all the time about the S&P 500 or the Dow Jones, where it's trading. They care about where beef prices are trading, and they care about what their electricity bills are. And that is crucial for the midterm elections.
The biggest asset that party has right now is time. It is the end of February, and the last 2 months have felt like a lifetime. Imagine how much longer it will take to get to November. They've got time on their side. 1, 2. The president's polling really poorly on affordability. But the real headline here is that no one is polling well. This came from the ABC Washington Post Ipsos poll. Americans are split on who they trust to better handle reducing the cost of living. Equal shares trust Trump and Democrats in Congress. That's a problem for both parties.
It's a problem when you have inflation that has climbed so much under Biden. Under President Trump, it's come down in terms of the pace of price increases, but the year-over-year increase since the pandemic has been really tremendous. How do you deal with this? You say time. This is the reason why I'm surprised we didn't get policy prescriptions like capping interest rates or some of the other aspects that President Trump has floated, because they have time. But what that does is it hampers how much they can raise tariffs or potentially some of the more punitive measures that are also hallmarks of the agenda. So real question here on what they can do.
It is peculiar that we didn't hear any new policy prescriptions, and the president was really just in full-on marketing mode to come out and say, look what I have already done. But all of this is behind us. All this is already baked into the market. All of this the consumers know is coming down the pipeline. What happened to potentially a state of emergency when it comes to housing? All we heard from him is basically the same. If you're an institutional investor, you should not be buying up the housing market right now. It's not fair for everyday Americans. So that is why this is very peculiar. And when it comes to the Democrats, they came out swinging after, in terms of Governor Spanberger,
clearly focused on affordability.
If you are just joining us, welcome to the program. Equity futures doing okay. No real reaction to that address overnight. Equity futures positive by about 0.1%. Coming up this hour, we'll catch up with Julian Emanuel of Evercore as investors shake off AI worries. The former senior White House trade advisor, Kellyanne Shaw, on the president's tariff agenda. And Angelo Zeno of CFRA ahead of key earnings from NVIDIA. We begin this hour with President Trump addressing the nation.
The roaring economy is roaring like never before. One of the primary reasons for our country's stunning economic turnaround were tariffs. Mortgage rates are the lowest in 4 years and falling fast. American oil production is up by more than 600,000 barrels a day. Democrats are destroying our country, but we've stopped it just in the nick of time, didn't we?
Joining us now to discuss someone who sat through all of that, Bloomberg's Tyler Kendall. Morning, Tyler.
Hey, John, good morning. Well, domestic issues remained at the forefront of President Trump's State of the Union address last night in a bid to convince Americans the economy is in better shape than polling tells us voters feel it is. And the president really seemed to focus on touting policy achievements that have already been enacted, mainly those tax cuts under the One Big Beautiful Bill. As it becomes apparent, this White House is going to be banking on larger refunds as we head into the midterms. As you guys were already discussing, we didn't get a lot of new policy proposals, though the president did announce a plan that would help workers without employer-backed retirement savings accounts, so perhaps we'll get some more details there. But it really seemed to focus on calling on Congress to codify policy proposals that we've already heard, including the president's health care framework that seeks to shift federal subsidies from insurance companies to American consumers, and his call to ban institutional investors from buying single-family homes. The thing is, a lot of these proposals do not have the full support of Republicans in Congress. President Trump also made clear that tariffs will remain at the centerpiece of his economic agenda, going on in that speech to threaten trading partners if they pull back on any of their pre-negotiated trade agreements, as some of those Supreme Court justices that have struck down his broad-based IEEPA tariffs were sitting front and center in that chamber last night. Now, you mentioned that new Ipsos polling out earlier this week that does spell trouble for both parties, but I will mention that there is that one poll in there that 57% of U.S. adults disapprove of the president's handling of the economy, really highlighting some of those headwinds that the president was facing as he headed into last night. John, while domestic issues seem to be the theme at the urging of top White House officials for the president to stay on that message, of course, foreign policy has been dominating the conversation here in Washington. The president making some headlines when it comes to rising tensions between the U.S. and Iran, as he still has not ruled out that potential that we could see military action.
That threat still lingers. Tyler, it's good to see you. Thank you. Tyler Kendall down in Washington, D.C. Quick programming note, 8:30 Eastern Time. Look out for this. USTR Ambassador Jameson Greer joining the program to break down just where we are with tariffs right now.
Well, right now we're at a 10% tariff level, even though the president did truth that it's going to be 15%. There's no directive yet for that. So it's at 10%. And I think we just want clarity right now from Ambassador Greer.
That conversation a few hours away. Here's a view on Wall Street this morning. Julian Emanuel of Evercore writing, the president's speech last night celebrated American values, intensified the partisan divide in Washington, and maintained the uncertainty around the situation with Iran. Julian joins us now for more. Julian, good morning.
Good morning.
I read your recent note. Despite valuations, despite geopolitical anxiety, despite the political anxiety, despite a series of blow-ups, the index has been really, really resilient. What does that tell you?
It tells us that, you know, the backdrop, the macro backdrop in a year where we're getting better earnings growth, it's likely going to be double digits when all is said and done in 2026. Long-term yields staying very, very, sedate, particularly when you think about the rest of the world. Stimulus and the potential for rate cuts. It says that stocks are likely going higher.
Now that we've passed the State of the Union, is NVIDIA the big event of this week? I mean, how big of a market-moving event is this going to be?
It's very big. What's fascinating to us is we're comfortable being contrarians, and when we came into 2026, we felt that being overweight the AI-centric names and themes was really in consensus, and that changed very quickly. The mood around technology remains very guarded. The positioning remains very light, frankly, and a lot of that has to do with the buildup around Iran. And so, look, we know that the report today will be good. They will beat on the metrics. It's just a question of how the shares will respond. And frankly, the market is poised for likely a good share price response.
So I wonder if what's good for NVIDIA is bad for everything else. We've seen this rotation through the rest of the economy at a time when there's a lot of anxiety about the labor market, where you're seeing those pressures. We got Home Depot yesterday, we got Lowe's this morning, raising the specter of uncertainty, really pressuring consumers. At what point is NVIDIA a counter indicator to the economic cycle? And could their earnings reverse some of the broadening out that we've seen?
Look, and again, think about the backdrop that we've had. The leading sectors this year: energy, industrials, the deep cyclicals, but also consumer staples. So in terms of the action and the interpretation of earnings, all is well, except, you've had these occasional blow-ups. But in our mind, if anything, NVIDIA is likely to, and remember, the public hasn't really soured on technology because the labor market, as difficult as it is to actually fathom with all the policy changes of the last year, is still relatively strong. And that bodes well, really, across the S&P 500.
You mentioned Iran. The president spent a lot of time last night talking about this. Do you think that this is going to be potentially the next catalyst for the market?
There's no question about it. And what's interesting is sometimes there is an eye roll when we talk about options, but actually the options market is telling you right now that investors are very hedged for a more challenging outcome in Iran. You look at the prediction markets, they think something's going to happen. Well, I got news for you. The skew, the price of downside puts versus upside calls in the triple Qs is as wide as it was during the trough of the April tariff tantrum. And so very contrarian, and the same thing in terms of bullishness in the oil market, as bullish as it was when oil was $120 a barrel when Russia invaded Ukraine initially.
So the market is screaming military intervention, not diplomatic off-ramp.
That's right. And so for us, the surprise, our base case is we think there will be some either off-ramp or limited military engagement. Because think about it. We heard it last night. We hear it all the time. If the oil price spikes further, you are losing the war on the affordability issue, and that means you're going to lose the midterms. So that's really, a least desired outcome.
The good news so far is that rates have behaved, that we've got 10-year bond yields back down to 4%. What's the signal an equity guy like you takes from the move that we've seen in fixed income?
Well, it's this dual-edged, thought that the violence under the surface. You've had crashes in software. You've had crashes in silver. You've had crashes in alt investment managers. That the message from all of this is that the credit market is disturbed and maybe we're having a growth scare. But frankly, if you look at the broad credit market, it still behaves very nicely, even though there's pockets of distress.
Julian, it's good to see you. You're going to stick with us. Julian Emmanuel there of Evercore. Yields this morning higher by just a few basis points. The 10-year at the moment, 4.05%. Looking at the broader bond market at the front end of the curve, twos up by 2 basis points to 347. Let's give an update on stories worldwide this morning with your Bloomberg Brief. Let's catch up with Yahira for more. Hey, Yahira.
Hi, John. President Donald Trump delivering a record 1 hour and 47-minute State of the Union address last night. The speech was heavy on his economic policy, with the president touting falling food and gasoline prices. Trump didn't offer many new policy proposals, though he did promise a $1,000 retirement savings match for workers without 401ks. Virginia Governor Abigail Spanberger delivering the Democratic response to the State of the Union, asking viewers whether they felt the president was addressing their core needs. Spanberger arguing he is not, pointing to Trump's efforts to implement global tariffs, federal immigration agents killing American citizens, and escalating tensions with Iran, Russia, and China. And we are seeing shares of Lowe's falling 3.5% in the pre-market. The company reporting fourth quarter earnings that beat estimates. Its full year adjusted EPS guidance, however, falling short of forecasts. Lowe's CEO saying, quote, while the housing macro remains pressured, we are focused on directing what is in our control. That's Bloomberg Brief. John?
Yahira, thank you. Appreciate the update. More from Yahira later this hour. Up next on the program, selling Americans on the economy.
Inflation is plummeting. Incomes are rising fast. Mortgage rates are the lowest in 4 years.
We did not hear the truth from our president. Everyday Americans are paying the price.
Up next, we'll catch up with Adam Posen of the Peterson Institute from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's the schedule today. Later on this morning, earnings from TJX. Should get them in the next hour or so. Later on this afternoon, numbers from NVIDIA. Don't forget Salesforce either. That one in the mix, disrupted by the AI fears. That stock has been kicked about quite a lot over the past few weeks. More on that a little bit later in the program. Equity futures on the S&P doing okay, positive by 0.1% on the S&P. On the Nasdaq, up by 0.2. Some outperformance on the Russell. Small caps higher by 0.4. Under surveillance this morning, selling Americans on the economy.
Inflation is plummeting. Incomes are rising fast. Mortgage rates are the lowest in 4 years. Beef, which was very high, is starting to come down significantly. Just hold on a little while. We're getting it down.
We did not hear the truth from our president. His reckless trade policies have forced American families to pay more than $1,700 each in tariff costs. Everyday Americans are paying the price.
So here's the latest this morning. President Trump defending his economic record in a marathon State of the Union. According to a recent poll from Ipsos, Americans are split on who can better handle the cost of living crisis, including 33% who say they trust neither Trump nor congressional Democrats. Joining us now to discuss is Adam Posen of the Peterson Institute. Adam, a warm welcome back to the program, as always, sir. Are affordability issues set to get worse and not better in the year ahead?
I think they are, John. Thanks for having me back. And I feel, the first time in my life, I feel a little bit of sympathy for Donald Trump because there's just not that much he can do on affordability. He would have to try to intervene directly into particular markets that matter, like housing or food, which he's not averse to doing, but even the Congress is not willing to do. And it's not clear those would be more than for show. And I think there remains a tailwind to prices because the labor market's a lot stronger than people think, because the Fed is not as tight as people think, because of the tariffs. And in the background, the migration issue is starting to hit. The other point, though, is, as Lisa and Anne-Marie and everybody said, he didn't make any major budget proposals. He didn't make any major policy proposals of any kind. And so against my prior forecast that there was going to be a handout, maybe inflation will be a little lower than I feared, because he's not going to blow out the budget quite as much.
But Adam, couldn't he do something when it comes to affordability, when it comes to tariffs specifically? Just let the Supreme Court's ruling stand and don't now have new deals of 10 or 15% with 122s.
No, you're right, Anne-Marie. I didn't mention that because it's something he's clearly not willing to do. He could take down tariffs unilaterally, and just since basically every ally we trade with, including Canada, including Europe, including Japan, including Korea, has lower tariffs on us now than we have on them. And as Governor Spanberger pointed out, none of the things he claimed about manufacturing or jobs or trade deficits were true. Some of the things he said were true, but those weren't. And so, yeah, he could reduce prices, but even that would be a great idea, and it'd be good for the country and good for the average working American. But it wouldn't necessarily translate into price drops. So as all of you have been saying, a decline in the rate of inflation isn't the same as seeing prices for things people spend on declining. You need real income growth for that.
Adam, the one thing that struck me as a potential market-moving influence was his discussion of tariffs as reshaping the way we pay income taxes. In other words, no income taxes and increased tariffs to account for the bulk of all income for the nation. He went on to say, as time goes by, I believe the tariffs paid for by foreign countries will, like in the past, talking about the late 1700s, 1800s, substantially replace the modern-day system of income tax. Is there anything that you take from that that could be codified? Do you see that as a feasible path forward?
It's not feasible, Lisa. I mean, it's just wrong. When the U.S. government was running on taxes, just like some sub-Saharan African and Central American countries today have tariffs, that's a big part of their tax revenue. It's because they can't collect taxes in a more efficient way. All they've got are troops at the border, and because the society and the economies are not very well developed, a tariff system doesn't work. It also isn't paid for by the foreign countries, no matter how many times the president says that, no matter how many times his people try to attack research, it's universally recognized. It's just right there in the data. Now, how much of that's the consumer versus companies is a question. How much that becomes inflation is a question. But there's absolutely no question. It is the American purchasers of the inputs and of the products who pay the tariffs. But finally, even with the Supreme Court ruling, tariff revenues are going to go down because if tariffs stay up, then people change behavior. They start buying more American products, or they start foregoing foreign products, or they start substituting in ways that are not good, or over time you bring some stuff home even though it's less competitive. And so what happens is you end up spending less on foreign goods. Now, that's not a good thing. But and from a revenue point of view, it's definitely not a good thing, because then if you're spending less on foreign goods, there's less tariffs. And so my view is we're already well past peak tariff revenues, even if the president were to let them lapse.
Adam, just a final question, just to go back to the summer of 2024. You warned ahead of that election, given the policies that were being proposed, that this Federal Reserve might have to prepare the market and the country for higher interest rates. They cut interest rates subsequently in the year ahead. Adam, given where things stand and your revision to your outlook on inflation, where are you now on Fed policy?
John, thanks for asking. If it turns out that the president doesn't put in a budget request for bailouts and handouts to people ahead of the midterm elections, I'll be surprised. But then I have to reduce my inflation forecast from 4% to 3.5 or less on CPI at the end of the year. But I also think that the Fed, as a large number of FOMC members have indicated over the last several weeks, the Fed is not going forward with an easing bias. They should not be going forward with an easing bias. The labor market is much stronger than people think. The pain is real for people, but that's different from us saying that there's a cyclical weakness in the labor market. You have to separate those two things. And in that situation, and as your guest Emmanuel mentioned, credit markets are holding up pretty darn well, and credit remains pretty available. So I don't think the Fed's going to be cutting as many times this year, even before we get into the independence politics, as markets currently project.
Adam, it's always good to see you. Thank you, sir. Thanks for your time. Adam Posen there of the Peterson Institute. Julian Emmanuel of Evercore still with us. Julian, let's talk about the consumer and how that's been priced in the equity market. We've got discretionary down by close to 4% for the year so far. Staples up 15%. Is there an economic story in there, or is that all AI?
It is very largely AI, frankly. And if you think about it, so when we did our foundational work on AI, we really digested what the job impact would be across sectors. And actually, when thinking about it, right, the least impacted sectors, metals and mining, agriculture, consumer staples, all of the sectors that have ripped year to date. The most impacted sectors, financials, software, the legal profession, all of the places where you've seen tape bombs on and off. And so, you know, to us, this is also typical behavior that you get in the first quarter of the new year, that kind of rotation, but there isn't really, in our mind, a broader message here.
Financials and the banks were a consensus overweight into the new year. Has that changed for the year ahead for you?
We've had it an inline rating. Look, they have been expensive. They remain expensive. And obviously, again, you know, while we don't see anything systemic, this is an environment where we're shooting first and asking questions later. We'd rather not be in areas where there's going to be more shooting.
Julian, it's good to see you. Thank you, sir. Julian Emmanuel there of Evercore on the equity market and the financials. A consensus overweight for many of you coming into the new year, and that sector's been beaten up. I think one day, one session in the last week, the worst session we've seen going back to April of last year.
Yeah, because they could ostensibly be subject to a report saying that actually Anthropic came out with a financial planning tool that eradicated the need for the big three banks in the United States. And so people want to get away from that because evidently the firing range is not an attractive place to be.
And the shooting hasn't stopped
Evidently.
just yet. Yeah, clearly. Equity futures on the S&P at the moment, positive by a few tenths of 1% on the S&P 500. Up next, we'll catch up with the former senior White House trade advisor, Kellyanne Shaw, as President Trump looks to push his tariff agenda, plus your Hira drops by. She's got your morning movers. Workday shares falling, adding more fuel to the AI concerns. That stock is down in the pre-market by close to 10%. Some big moves at a single name level. The index still around 2% from all-time highs. From New York City, you're watching Bloomberg TV.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The S&P continuing to chop at the index level, still within 2% of all-time highs. Futures this morning up another 0.2% on the S&P. On the Nasdaq up by 0.2, also up by 0.4 on the Russell. Chop from Monday through Tuesday. Staples leading on Monday, discretionary leading on Tuesday, and here we are so far this Wednesday morning. Things could change quickly, as you all know. In the bond market, 2s, 10s, 30s shaping up as follows. 10s still around 4%, 4.05. Yields up by 2 basis points to the long end of the curve on 10s and 30s. Take a note of what's happening in Japan. The new Prime Minister selecting some very, very dovish policymakers for the board at the BOJ may be pushing them to not hike interest rates in the face of increased government spending.
Yeah, this was the reason why yesterday you saw the yen really lose ground and people start to wonder, okay, are we going to reignite the sort of steepening yield curve trade based on Japan today? The appointment of 2 reflationary members to the Bank of Japan's board. So even though Takaichi was thought to be non-interventionist, maybe that narrative is changing just a bit on the margins.
Yeah, it's funny to me that everyone freaks out about what's happening in America, about the prospect of Treasury working more closely with the Federal Reserve. You're seeing it play out right now in Japan. It's happening. There's your case study, real time.
And it's great for equities. That's the amazing thing, because if you look at Japanese equities and if you talk to any investment manager, they are eager to go over into Japan. So it's a vote of confidence, at least on one hand. Then you look at the bond market, you say, shh, maybe don't show that to me.
Yeah, bonds down, yields up. The Nikkei still rallying. 3 hours away from the opening bell, the cash open just around the corner. Let's get you some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Low signaling the housing market isn't improving anytime soon. Shares are falling 3% in the pre-market after the home improvement chain gave a weaker than expected full-year sales outlook, echoing the issues we heard from Home Depot, that customers just aren't taking on big projects due to all the uncertainty in the housing market. The Home Depot shares did end the day up 2% yesterday after its comparable sales beat. Meanwhile, I never thought I'd be watching a Workday earnings report so closely, but here we are given the environment. Workday stock had been down 40% year to date heading into earnings on concerns that AI will disrupt enterprise software demand. And the outlook and the softer outlook it gave is only adding to that anxiety. The CEO did try and calm fears, saying that Anthropic, OpenAI, and Google all use Workday, but those comments not enough to ease fears. Shares are down more than 10% in the pre-market. And we are also seeing HP down 5.5% in the pre-market after warning its profits will likely land at the low end of its forecast. The company is seeing strong demand for its AI PCs, but that momentum is being offset by higher memory costs and tariff headwinds, echoing what we heard from the likes of Dell and Cisco, warning that the big memory crunch will eat into margins. John?
Yahira, thank you. Thanks for the update. More from Yahira a little bit later this hour. On our radar this morning, President Donald Trump pushing hyperscalers to cover energy costs for data centers.
We're telling the major tech companies that they have the obligation to provide for their own power needs. They can build their own power plants as part of their factory, so that no one's prices will go up, and in many cases, prices of electricity will go down for the community.
The administration reportedly in talks with companies including Microsoft and Alphabet about signing pledges. Elsewhere, Warner Brothers Discovery saying a new offer from Paramount Skydance could top its current deal with Netflix. The buyout offer, worth $31 a share, is enough to bring both sides back to the table, and a final winner has been declared. And finally, a massive $112 billion gap in trade data suggesting China may be dodging US tariffs on a record scale. American manufacturers warning this, quote, tariff cheating is an existential threat.
Because ultimately, if you're being charged those tariffs and your competitors aren't, well, guess what? You're at a competitive disadvantage at the same time that you could potentially be legally liable. That $112 billion gap between what China reported as well as what the U.S. and U.S. Customs said came into this country highlights just how important it is to really get a handle on this. The Federal Reserve actually at the time did research that showed about 2/3 of that came from evasion of these tariffs. So again, it goes back to this issue of how do you deal with revenues that are a bit more slippery and given some of the competitive landscape in the United States.
And the gap is getting bigger because the steeper the tariff rates, the more cheating that is going to fuel, and that's what we see. Too bad the president didn't have a moment to address China directly, head on.
Wasn't that strange?
And talk about the cheating that is going on and the state subsidies that China gives to their companies and all the concerns that you have in Washington in bipartisan fashion when it comes to Beijing. He didn't address China head on once.
Why do you think that is?
I think it's because he's going there in April, and he doesn't want to rock the boat, and he's probably trying to get some things done, and they're dealing with tariff rates right now, given the Supreme Court struck down IEEPA. But this is a president that many voted for him, frankly, because of the rhetoric. When he first started campaigning, when he walked, came down that escalator just a few blocks from here, and now he didn't address China head on, very strange.
That meeting in China just a few months away. Let's turn back to that State of the Union. President Trump remaining defiant that his tariff agenda will continue despite the Supreme Court's ruling.
They're a little more complex, but they're actually probably better. Congressional action will not be necessary. It's already time-tested and approved. And as time goes by, I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax.
Former senior White House trade advisor Kellyanne Shaw writing the following: it may not be a straight cut and paste, but I expect at least some tariffs to increase to 15% in the coming days. Kellyanne joins us now for more. Kellyanne, welcome to the program. Help us understand where we are. It was 10, then over the weekend it was 15, and then we came into the week and it's 10. What is it, and what's it going to be?
Well, right now it's a hurry up and wait. So it's technically a 10% tariff that went into effect at 12:01 a.m. yesterday. But I do understand from the administration that they are still looking to implement the president's 15% tariff increase. Part of the challenge is that Section 122, it's a really wonky statute. It's never been used. It does allow you to carve some countries out. It allows you to carve out some goods. It's not really clear that it allows you to differentiate between countries in terms of the overall tariff rate. So once you get to 15, you're actually increasing tariffs above some of these agreed trade agreements. And you're also putting tariffs on countries like Australia, the UK, and a lot of Western Hem countries. So it's a little more complicated to work out legally. I think that's part of the delay, but I'm still expecting that 15% tariff increase.
So if the rate is higher than what this administration has agreed to with some trading partners, and they want trading partners to abide by those agreements, are we going to get carve-outs?
So I've actually talked to some of our trading partners about this, and some of them are a little concerned that they're going to end up with a tariff rate that's above the agreed rate, and they're talking to the administration about that. So I think the administration is going to look for some flexibilities in terms of whatever proclamation comes out next. But they're going to have to do so within legal constraints. They just had IEEPA tariffs struck down. They're going to be really conscious of not wanting to have these ones enjoined or struck down too.
Well, are 122s legal? They have never been used either in the past.
Well, it's certainly a law on the books. And if you look at the CIT decision that initially struck down the tariffs, one of the bases was because the court thought that the president should have used 122 in the first place. So there's certainly scope to use Section 122. It's just really a matter of how you implement it. And I think that's really what the administration's wanting to make sure they're doing to make sure that these tariffs don't get struck down again.
There was a tension yesterday, Kellyanne, between this focus on affordability and this focus on tariffs and trying to explain how tariffs are actually structurally going to be better longer term because it could potentially reduce income taxes and other aspects tax that consumers pay. I just wonder how hampered the president is from increasing either the 122s to 15% or implementing some of the others based on the affordability aspects of his agenda.
Yeah, I think it's a great question. I mean, really what's going on here is the administration looks at the data, they look at the tariffs, and they say that, look, we haven't seen significant price increases on the backs of some of these, in some cases, really high tariff rates. We haven't seen some of the economic catastrophes that everyone predicted would happen if the administration put in a universal baseline tariff. And so this idea that tariffs are leading to this affordability crisis doesn't really register, but it does register in the minds of voters. And you have a situation in which voters are linking tariff increases to price increases and to the fact that they're having trouble affording grocery store, energy prices, and a lot of things that voters will vote on in terms of how they're feeling about the economy. And so the administration has some work to do in terms of trying to message this to the American people going into the midterms. But I don't see the administration significantly pivoting. You heard the president doubling down last night that tariffs were a core part of his economic policy. We might see some tinkering on the margins, but I don't expect a full-scale reversal of any of this policy.
There's also a question of what the IEEPA ruling by the Supreme Court does to international agreements with some of our trade partners, given that certainly the European Union has already pushed back. We're going to be speaking with Ambassador Jamieson Greer, the trade representative for the United States, later this morning. I'm just wondering what you're wondering about, what your biggest questions are for him.
Yeah, and certainly seeing the EU hit pause on its consideration of that implementing legislation was predictable. I think the EU in some cases has been looking for a reason to kind of walk away from this deal for some time. The U.S. implemented back in August. The EU hasn't cut a single tariff line since that Turnberry agreement. So this isn't a surprise, but I do expect that to escalate. I think in terms of what to ask Ambassador Greer, I'm curious about when we'll see some of these Section 301 investigations, what the tariff structure might look like, whether it's going to cover all trading partners or just some trading partners, really trying to get a sense of what the next 5 to 6 months look like as companies are trying to navigate this new tariff landscape.
Let's talk about the next 2 months. So Anne-Marie mentioned that meeting in China between the president and the Chinese leader. Kellyanne, do you sense that he's lost some leverage here, given how constrained he might be now at home? And the point that over the last year that China has run a record trade surplus even with these tariffs?
Yeah, I think it's a good question as well, especially going into the President Trump, President Xi visit. But I guess my big takeaway is long term, the United States already has tariff leverage over China. They're doing all of these 301 investigations to get more tariff authority over other countries, but we have that existing 301. We also have an ongoing 301 investigation into China's compliance with the Phase 1 deal. And there's a host of other levers the United States has, from financial tools to export controls and other mechanisms to really get leverage over China going into some of these discussions. I think my base case for an outcome is pretty low to begin with. I think the administration is really looking to just keep a stable relationship between President Trump and President Xi and the trade arrangement that they negotiated in Busan. Not expecting any massive deliverables there. So I think it's a pretty steady state with China, remarkably. But it is a good question as to what some of this means in terms of the president's negotiations with other trading partners, where it's not as clear what tariff authority he has to threaten some of these big foreign policy related tariffs.
Kellyanne, we have tariffs on them, but do we have influence? Do you sense we still have influence?
I do, but I do think the next few days are a bit rocky until we do get some more certainty over what the president's tariff agenda is going to look like, the authorities that he's going to use. I think the relationships with most of our trading partners will be stabilized. You know, when it comes to the U.S.-China relationship, there's a lot of soft power at play, and I think that's what you're alluding to. And certainly having a court decision which goes against one of the president's key policies isn't the best thing going into this meeting, but at the same time, I don't think it's devastating. And I think there's a really long time between now and March 30th when the president goes in terms of actions that can be taken. That's a lifetime in terms of the trade agenda and the negotiating agenda. So we'll see what happens in the next couple of weeks.
Hey, Kellyanne, good to see you. Thank you. The former senior White House trade advisor, Kellyanne Shaw, on the latest with trade, a record surplus with the rest of the world, even with these massive tariffs from the US on China.
And there's this extra added wrinkle with the German chancellor over in China speaking with Xi Jinping right now after meetings with other world leaders, how much influence China's courting with other former erstwhile allies of the United States.
And the other problem this administration has, which we haven't seen the data on, is how much China is going through other nations that then have boosted exports into the United States, this idea of transshipment.
Yep.
We need to see the data on that because China is still importing to the United States, maybe just not under the Chinese flag.
Futures this morning, positive by 0.2% on the S&P, just grinding higher. Let's give you an update on stories worldwide with the Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. In his State of the Union address, President Donald Trump praising the operation of Venezuela that captured former President Nicolas Maduro. The president saying the U.S. has received more than 80 million barrels of oil from Venezuela in the last month. He also awarded the Congressional Medal of Honor to one of the helicopter pilots involved in the raid. UBS upping its warning about private credit default rates. Strategists saying default rates could surge as high as 15% if AI triggers a, quote, aggressive disruption among corporate borrowers. UBS's initial report less than a month ago warned of a 13% default rate. And HSBC shares touching an all-time high in London trading, the company reporting earnings that beat estimates and raised some targets, signaling a sweeping overhaul of Europe's largest lender by its CEO, George O'Hallery, is paying off. The results boosted the company's bonus pool by about 10%. That's your Bloomberg Brief, John.
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. Up next on the program, NVIDIA, challenging the market.
There has never really been a moment in the last 3 years where the market got it, except for maybe that one big blowout report with NVIDIA. NVIDIA continues to challenge what is possible with compute.
Up next, we'll catch up with Angelo Zeno of CFRA from New York City. You're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
I've got some bad news for you. The snow is falling again in New York City.
Oh, come on.
Apparently we're getting another inch. You think this is good news?
No, this is fake news.
Yeah,
I didn't know this was happening. Yeah, no, I can't see it, so it's not happening.
Another inch of this apparently, and then we're going to move on until next week apparently. So yeah, okay, enjoy that. Equity futures on the S&P, I'm not enjoying it at all. Positive by 0.25% on the Nasdaq, up by a third. One single name for you, Diageo in London trading, the drinks maker. This is where the stock is, down 8%. Dave Lewis, the CEO, saying the consumers are facing significant spending squeezes, particularly weakness coming out of the US. Now, that's interesting. Is it about consumer weakness or is it just about drinking? Because earlier on this morning, this note dropped from Bank of America. Dry January peaks while dry December is gaining traction. Even though December always brings a jump in alcohol buying, those spikes have been shrinking for 3 years straight.
Young people are not drinking. I mean, they might be smoking other things, but they're not drinking as much. And you see this in Anheuser-Busch, and you see this in other potential earnings. And so that might be weighing on their results, but might not speak to the consumer. I mean, this actually isn't totally negative. I mean, if you think about it, it's,
maybe not negative for society, negative for Diageo and their shareholders. Gallup over the summer actually did some polling around this. The percentage of U.S. adults who say they consume alcohol has fallen to 54%, lowest by 1 percentage point in their nearly 90-year trend. Americans are just not drinking as much. They're going to the gym. They're having mocktails.
Some people also think it's negative for society. Some people do believe that. Diageo is down by about 8%.
Yes, depends who you ask.
I'm not one of them, but some
Tom
people...
Keene?
TK might say it's bad for society. Diageo down in London trading by about 8%. Those earnings out earlier on this morning. The big report coming out a little bit later on this afternoon. Under surveillance this morning, NVIDIA challenging the market.
There has never really been a moment in the last 3 years where the market got it, except for maybe that one big blowout report with NVIDIA. What they're missing now is that the way these GPU generations work is that they ship in volume production, which means the strong quarter we saw is likely to continue to flow. That momentum is likely to continue. NVIDIA continues to challenge what is possible with compute.
So here's the latest this morning. Traders eagerly awaiting results from NVIDIA after the market close. Angelo Zeno of CFRA lowering his price target on the tech giant and writing the following. AI monetization will need to ensure supply does not catch up, as this remains the biggest risk to the AI build-out. Angelo joins us now for more. Angelo, welcome to the show. Let's just start with base case expectations for you and the team a little bit later this afternoon.
Yeah, so thanks for having me, John. I'd say overall, we expect another beat and raise, quite simply, from NVIDIA here. I mean, that really shouldn't be the surprise. That really should be the base case after what we just saw across Q4 earnings season from the hyperscalers. Essentially, all these companies stepped up CapEx well above expectations, essentially wiping out most of their free cash flow here in 2026, and we think they're going to do that again in 2027. Again, that would be our base case. So we're looking for revenue growth this quarter north of 65%, another north of 60% growth here expected for the April quarter. And, I'd say if there's any sort of potential risk out there, it might be on the margin side. We're looking for gross margins to expand to about 75% here this quarter. We think that's going to be okay. The street's looking closer to about 76% for the April quarter. Again, maybe it might be slightly below that, but nonetheless, I mean, the trajectory is still very good. We think they sustain a mid-70s gross margin there on top of the elevated growth rates that you're going to see here throughout the year.
A lot of companies would be very jealous of mid-70s gross margins if they take a look at some of this. You talk about what a lot of people in markets are talking about right now, which is the potential for an AI bubble. And you still see that as actually a feasible possibility in the next 3 years, but still remain heavily overweight NVIDIA. Can you explain why?
Yeah, I mean, I think the market is going to, I think unlike other cycles where you kind of saw multiples really expand on, very healthy growth rates and continue to expand as you get towards the peak of a cycle, which then led to that bubble and deflating of the bubble or popping of the bubble. I think what you're actually going to see in this cycle is it seems like investors are so so freaked out about a potential top of this AI cycle that they're doing a lot of the hard work right now. They're essentially digesting, compressing the multiples as we look forward and move forward in future years. And that in many respects is a very healthy thing, right? In many respects, if you're an investor, as the cycle gets longer in the tooth, you should be essentially willing to pay less or a lower multiple as you get closer to that peak. And that's essentially what you're seeing happening on the chip side of things, on the infrastructure side of things. Again, the earnings growth will be there this year. It will be there in 2027. The stock price appreciation won't follow that to that degree, but nonetheless, we do expect positive upside in terms of the share price performance, given the robust growth that you see. I also say this as far as kind of the AI ecosystem is concerned. The fact that we're essentially pulling up 2 years worth of growth in terms of this AI spend from the hyperscalers essentially means that there's going to be a lot more capacity in the market here as we approach the second half of the year. That'll allow the OpenAIs, Anthropics of the world to continue to roll out new offerings. And that's a big reason why you are seeing, clearly the troubles on the software and services side of things.
Will markets reward NVIDIA for investing more in OpenAI and say maybe even Anthropic?
Yeah, I mean, I think, we'll kind of see how this all plays out. But, I think really the unknown here in the market, right, is we know what the supply growth is going to look like. And I think, the bears out there are really focused on the fact that the supply growth may get too heavy at some point in time and really start to exceed that demand landscape. And that's entirely possible. The fact of the matter is we just don't know what that demand landscape is going to look like, what that trajectory is going to look like as we go into the second half and into 2027. I think the enterprise AI applications are going to show up increasingly from the OpenAIs, Anthropics of the world. But I think we also need to take a close look at how this physical AI world really evolves here as the year progresses and into 2027. It's something you're going to hear Jensen really increasingly talk about, something he has been over the last couple of quarters, but I think more so as we go into the GTC event next month.
Angelo, good to see you. Thanks for updating us. Angelo Zeno there of CFRA on NVIDIA. Their stock is firmer in the pre-market, up for the previous 3 days, I believe, on that particular stock. Fact of the matter is that we're starting to see signs of AI monetization. CapEx is up, monetization is up, and this stock is range-bound. What gives? It's the question we've asked repeatedly over the past few weeks.
And Angelo's response is people are taking down their multiples for future years because ultimately there will be potentially a bubble that pops and people don't want to be exposed to it. Does that make the bar that much lower for NVIDIA heading into these earnings?
Up next on the program, we'll catch up with Kate Moore of Citi Wealth, Henrietta Trays of Veda Partners, Neil Dutta of Renmac, and the Port of Los Angeles Executive Director Gene Soroka from New York City. The second hour of Bloomberg Surveillance just around the corner.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
In such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
There are elements of disruption that are permeating the entire technology sector.
Diversification is your best friend.
There will be some defensive posturing in the market.
Investors are recognizing they can go into bonds. It is the counterbalance to risk.
Regime change looks a lot like a counter-trend rally at the start.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Futures positive by a third of 1% on the S&P, up by a third also on the Nasdaq. In the bond market, all is quiet, at least for the moment, on 2s, 10s, and 30s. 10s up by about a basis point or two, 4.05, still very close to the lows of the year. On the earnings front, things won't be quiet. Later this hour, we should hear from TJX. After the close, you should hear from Salesforce and NVIDIA. NVIDIA, the main event, of course, which should be a major CapEx beneficiary. Salesforce, kicked around by the AI disruption fears. And TJX, this is the one for me in retail. On an 18-year winning run, that stock has captured the hearts of many. A consumer.
Which is really because of their discount nature, and people are looking for bargains as they become, what is it, choosier? What word? Choiceful. Oh,
yes,
you love that word. Yes, I like to use language that you love. I mean, honestly, this to me is going to be a big question, especially because we are seeing select industries affected differently by consumer discretion and how people are pulling back. Do you see TJX mint money once again, even as Home Depot and Lowe's express concerns about uncertainty? And does that really add to the complications of this picture? Is the consumer strong or not? They might not feel good. And frankly, even as they feel a little bit better, their spending, has it been okay or not? I mean, honestly, the number of notes that I have that are going in on either side of this, absolutely off the charts.
Which is why it was so interesting yesterday, the president, when he was talking about affordability, a lot of individuals felt like he didn't meet Americans where they are. They are still going out and spending. We have seen somewhat of a resilient consumer, and I think TJX will point to how much they are going out and spending. But it was peculiar last night that he didn't talk about more prescriptions to this issue ahead of the midterm elections.
What happened to the report that came out yesterday afternoon?
I don't know.
I've heard barely anything about it.
Maybe it was a trial
12 hours or something. This came from a report. The president had a lunch with a few news anchors, and this came out of the lunch, that the president's planning to outline an unconventional idea for personal and corporate tax cuts, which he could implement without Congress, and we got no further details. And then heard absolutely nothing about it in the address.
I don't know, maybe you had the Senate Majority Leader John Thune or Speaker Johnson call and say, actually, you can't do that. And I think the Supreme Court maybe just told you a lot of the power of the purse still relies in Congress. I don't know, or it was just a trial balloon.
There was, however, a nod to this idea that tariffs could supplement or replace the income taxes that people have, pointing to further tax cuts ahead. it sort of goes to a question of how well vetted this particular speech was and whether it ended up so well vetted that we got nothing there, which is the reason why markets are moving on and looking toward NVIDIA.
So Adam Posen at the Peterson Institute was on the program with us about an hour ago, and this is the point he made as well, that we didn't see the additional policy proposal that I think many people expected, that would disrupt the bond market and maybe get people to revise up their inflation forecast. In fact, you heard from Adam, who's had to bring his back down. Is that the story of the next 6-9 months? Because that would be unexpected.
It would be unexpected, and it would have the fingerprints of Treasury Secretary Scott Bessent all over them. Again, who is vetting this speech? Because we all were surprised that there weren't more populist kinds of prescriptions in this speech. There wasn't a 10% cap on any kind of interest rate by investment banks, and there wasn't any further discussion about tax cuts. And that, I think, is a story, and the reason why you're seeing such complacency right now in the bond market.
If we were surprised, the bond market was not surprised. Looking right through those reports yesterday, unmoved, and essentially unmoved this morning, up by a basis point or two, and still very close to the lows of the year. Coming up on the program, we'll catch up with Kate Moore of Citi Wealth as equities look for a second day of gains. Henrietta Trays of Veda Partners as the president takes a victory lap, and Neil Dutta of Renmac as the president pushes for lower inflation rates. We begin this hour with stocks pushing higher. Kate Moore of Citi Wealth writing easier monetary and fiscal policy, resilient corporate profits, and strong balance sheet support cyclically strong nominal growth. Kate joins us now for more. Kate, welcome to the program. It supports nominal growth. Will it support this equity market at the index level?
Well, I mean, Jonathan, we've had this massive disconnect throughout the course of 2026, which feels like a much longer year than just 2 months so far, between what's going on in terms of earnings and the fundamentals and then what's been happening in price action. We've seen this disconnect across a variety of different sectors, whether it's around technology or energy. And so I'm not sure the market is actually reflecting the strong nominal growth environment that we feel we're experiencing. In fact, it's not really reflecting the strong earnings side. It seems to be much more about this rebalancing, reshifting, and multiple expansion for sectors that have been laggards.
Well, Kate, do you think there is a valuation reset in both directions taking place that could linger through the rest of the year?
I don't think it's going to linger, John. I think we're actually going to get to a place where people are going to be really focused once again on the fundamentals. You know, when we get these periods, and they often happen in the first quarter, you know this very well, we start off the year and people look for the laggards and say the valuation discount or premium needs to close. And they rebalance perhaps their sector or their country exposures. You know, it doesn't tend to persist because you have to eventually go where the earnings are. And look, when you look at technology and communications, people are tired of the story. They're worried about where the disruption is going to be. They're kind of exhausted from the outperformance of these sectors, but that doesn't mean that's not where the earnings are. And I think we're going to have more of a recognition of that in the second quarter, even as this rotation and this multiple reshift over the course of the first quarter really exhausts investors.
Kate, you know, we've seen earnings that haven't necessarily ignited the responses, that sort of positive flow back into U.S. equities. We've gotten that already, and it's been sort of a conundrum. Will NVIDIA kick off a shift back into some of the mega cap names that are delivering 76% margins, as we just heard from Angelo Zeno?
Yeah, I would love to think that one company can inspire a whole shift back into kind of U.S. equities, but I'm not sure that's going to be it, Lisa, to be honest. I think many people have very high expectations for NVIDIA after the close today. And it's not just the expectations that were sort of published, but as you well know, it's the whisper number and the discussion that the investment community has around how high or how much higher than the estimates they'll end up reporting and then guiding. But I do think it's critically important to keep people invested at this point because, as we've been talking about for the course of the last few weeks, there are a lot of things on investor minds, right? There's concern around, impact of stickier inflation, even if perhaps some of these shifts in tariffs won't lead to as high inflation as some people had feared in 2026. There's concerns around, slowing of consumer demand, which of course has been a theme we've been talking about for what feels like 7 quarters at this point. There are concerns around geopolitical impact on activity. There are concerns around, disruption coming from AI and what that will mean for labor force. I could go on and on and on, right? We've been wringing our hands. And I think many of these fears need to be quelled before you see people shift a lot more money into risk assets. So NVIDIA doing well and beating expectations is necessary, but not sufficient.
Have you gotten more bearish, Kate? I mean, I've noticed sort of a shift in your tone, and I was looking at your notes, and you like short duration, high quality fixed income, which doesn't exactly scream optimism about the future ahead. I mean, can you give us a sense in this very, very, very long 2 years that feels like 10 years, but is actually 2 months? I mean, how much have you actually gotten a little bit more pessimistic?
Well, I haven't gotten that much more pessimistic than I was kind of, over the course of the last year. I will tell you the short duration view in our fixed income outlook and how we're expressing our views in portfolios has been in place for the duration of the last 12 months. So that's been the case. We've been really kind of careful about adding to long duration fixed income, see lots of sort of headwinds. You might remember I added a bunch of gold over the course of the last year, which just turned out to be an amazing contributor to portfolio performance, obviously far exceeding any expectation that I had when I was using that as a ballast for equities. But we're still all in on equities, I should be very clear. And we continue to believe that we're going to have a significant amount of upside when it's being driven by earnings over the course of 2026. So I'm not bearish on equities. I'm still cautious on taking risk and duration, or what shouldn't be risk, but feels like risk and duration, and instead of using gold in portfolios.
Kate, the way you talk about gold, it doesn't sound like a hedge. It sounds like you're excited about this as an investment. Would that be accurate?
Yeah, I mean, look, the first add to the portfolios was really about kind of hedging equity risk and sort of a substitute for duration. And then over the rest of the year, a lot of the other kind of structural issues that are underpinning gold ownership really reinforced our thesis. Things about central bank diversification, concerns around sort of peakier inflation than many people were expecting. And so I'd say there are multiple forces and drivers behind our gold allocation at this point. So yes, it's not just a hedge, it's not just a ballast, but we see a lot of reasons for people, especially asset allocators around the world, central banks, sovereign wealth funds, pension funds, and institutional investors to kind of continue to add to their portfolios and use gold and precious metals in general as a tool.
And a lot of that was fueled by concerns about geopolitics and also economic policy coming from this administration. You mentioned one of the fears that you hope investors maybe could start to quell, and you mentioned trade. But are we peak past trade concerns, given what we saw from the Supreme Court, now the administration weighing 10, 15%, and new investigations using 301 or 232s?
I wish we were, Emery, but I'm not sure. I think that tariffs and the threat of tariffs is a tool this administration likes to use with trade partners and allies. And I think they're going to continue to pursue these tariffs in many different forms. You heard the president say last night during the State of the Union that he was going to be looking for substitutes and to be substituting the revenue that wouldn't be coming from the IEEPA tariffs. I know you have Henrietta on later. She's one of my all-time favorite policy analysts, and she's going to have great insights there. But I just want to make this point. I don't think tariffs and the threat of tariffs go away, even if the mechanisms look different. Maybe a little bit of relief on corporate margins in the near term. We certainly like that, although corporate margins have been in very good shape. But there's so many questions around refunds and what this means for small companies and in different parts of the supply chain that I think are still unanswered.
Henrietta is coming up next on the program. Kate, get the dog back. We want to know the dog's name. What's the dog's name?
Her name is Cora. Her name is Cora, and I'm really impressed that she decided to make this appearance so early in the morning.
Can we get a price target or not? I'm joking.
On Cora?
I'm joking. Don't take the dog out in the snow, okay? Don't do it. You'll lose her. Kate, thank you. Kate Moore of City Wealth there. Thank you very much. The snow is falling in New York City, I'm unhappy to say. I'm told we're going to get another inch or two here in the city.
I just saw less than an inch. You're making it now 2. You're trying to get the snow to fall. John, I understand
have no interest in the snow
you
falling.
like the snow and that
You
you
think
enjoy
I want to
it.
get
You think
stuck
it's
here
pretty.
at the office?
I
Absolutely
think that
not.
you enjoy it, and I like to reject.
Apparently some people
Zero interest.
sleep at the office. That's interesting.
Sleeping at the office?
Yeah, that's an interesting
What do they do?
one.
Get like a sleeping bag and go under the desk?
Yeah, on a cot or something.
No.
I'll make hot cocoa.
I could never. I love you guys, but absolutely not. Equity futures on the S&P, positive by 0.25% with an update on stories elsewhere this morning. With your Bloomberg brief, here's Yahara with more. Hey, Yahara.
Hi, John. The Pentagon issuing an ultimatum to Anthropic, threatening to use a Cold War-era law to force the company to let the U.S. military use its AI tools. Anthropic wants guardrails preventing its cloud system from autonomously targeting enemies or conducting mass surveillance. Pentagon officials laying out a series of consequences if Anthropic doesn't comply by Friday. Warner Brothers Discovery says a new $31 a share buyout offer from Paramount Skydance could lead to a better deal than its existing agreement with Netflix. In a statement, Warner says it's not withdrawing its recommendation that investors support the Netflix bid. It says the sweetened Paramount offer does, however, meet the threshold for further talks. And Aston Martin is cutting jobs. The British luxury car maker says it's cutting up to 20% of its staff, which is about 3,000 workers. The company is saying its turnaround efforts have been derailed by product delays, problems with quality, higher tariffs in the U.S., as well as a slowdown in China. That's your Bloomberg Brief. John.
The auto business is so tough right now. It's unbelievable. Yahara, thank you. Thanks for that. Next on the program, the roaring economy.
The roaring economy is roaring like never before. The Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years. We are doing really well.
Up next, we'll catch up with Henrietta Trace of Veda Partners, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Big earnings day coming up with NVIDIA at the center of things. NVIDIA coming up after the close. You'll hear from Salesforce as well. In the next 20 minutes or so, you'll also hear from TJX, so look out for that this hour. In the equity market at the moment, we're positive by 0.26% on the S&P 500. On the Nasdaq, up by 0.3. The Russell up by 0.6. Under surveillance this morning, the roaring economy.
The roaring economy is roaring like never before. One of the primary reasons for our country's stunning economic turnaround, the biggest in history, where the Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years, were tariffs. We are doing really well.
I really want the equity market schedule, if the president can share that with us. It's the latest this morning. The president taking ownership of the U.S. economy while delivering the longest State of the Union address in history. The president setting the tone for midterm elections, with Democrats holding a 4-point edge in congressional polling. Bloomberg's Tyler Kendall has more. Morning, Tyler.
Hey, John, good morning. Well, domestic issues really remained front and center during President Trump's State of the Union address last night in a bid to convince Americans that the economy is in better shape than polling suggests voters feel it is. And we really saw the president do this by touting policies that have already been enacted, including the tax cuts under the One Big Beautiful Bill. As it becomes apparent, this White House is banking on larger refunds and more cash in consumers' pockets ahead of the midterm elections. The president also notably really doubled down on his tariff policies, threatening additional tariffs against any trading partner that revokes its current deal struck with the U.S., and even going on to say that he was disappointed with those Supreme Court justices that were sitting front and center in the chamber last night. As you well know, this administration wasted no time instituting that new 10% broad-based tariff under different authorities just yesterday morning. The thing is, we didn't get a lot of new policy proposals as the White House plays defense on affordability, though the president did float a potential plan that could help workers without employer-backed retirement savings accounts, so perhaps we'll get some more details there. But instead, the president really called on members of Congress to codify some of those proposals that we've already heard before, including when it comes to a potential ban on institutional investors from buying single-family homes. Worth noting that some of these proposals don't have the full support of Republicans in Congress, though there is a new report out this morning that members of the House Financial Services Committee will be traveling to the Treasury Department later this morning to discuss that potential plan with the Treasury Secretary. John, as you well know, domestic issues were really the focus for senior White House aides for President Trump to stay on message, but foreign policy, of course, made its way into the conversation on the heels of the administration briefing the so-called Gang of Eight top intelligence lawmakers on Capitol Hill yesterday when it comes to U.S. and Iran. In his speech, the president did not rule out the potential that we could still see military action.
Tyler Kendall down in Washington. Tyler, thank you. On trade, it felt like the president had gone a little bit soft with the Supreme Court. Now, everything's relative, of course, on the Trump scale. Friday was an 11, and yesterday was what, like a 5?
I mean, even think less. I was expecting a lot more when it comes to trade. The Supreme Court justices were right in front of him. He came in, he shook everyone's hand that attended, starting with Chief Justice John Roberts, all the way down the line. And he said it was unfortunate, but it wasn't the language we saw on Friday. So he definitely was toned down.
Looking forward to the conversation about an hour from now with Ambassador Jameson Greer of USTR. Look out for that a little bit later this morning, right here on Bloomberg Surveillance. Henrietta Trays of Veda Partners has this to say. This was a victory lap speech, and for those inclined to hear good news, it was likely very effective. For others, it would likely be a stark contrast to their lived experience. Henrietta joins us now for more. Henrietta, welcome to the program. The president called it a roaring economy, and roaring like never before. How many people are buying into that?
Whatever the opposite of 64% is out of 100. I mean, the president's agenda on the economy is his least popular metric, and it's driven largely by these tariffs. And it's amazing to watch the administration and the president double and triple down on something that the American public just does not like. What really stood out to me is the idea of replacing the income tax with the tariffs. The income taxes bring in like $3 trillion a year, and the tariffs bring in $300 billion, maybe annualized over 12 months. So in that, if that's going to really come together, we have a lot more tariffs coming our way. That's a scary thought.
Henrietta, when it comes to the tariff story, it sounded like the president he talked about how he wasn't going to punt this to Congress. He has other legal avenues. Is that your takeaway as well? When the 150 days are up for the 122s, it'll all be done through Section 232s and 301s?
Yeah, absolutely. I mean, that's just acknowledging that he doesn't have the votes. The House and the Senate have both voted about a half a dozen times to strip the president of these tariffs, not to put them back in. There's one senator that I can think of from Ohio who supports extending these tariffs, but Leader Thune and Speaker Johnson have both been really clear that they just don't have the votes to extend this. So the president is right to talk about how he does not need Congress. To Kate's point, and I petitioned to have a field trip out to her house, all of us to go next time, but her point, the 301s and the 232s can ratchet up tariffs from here. I think we're stuck at 10% for now, mostly because the EU deal, the UK deal, Japan, South Korea, all depend on the rate being below 15%, which his announcement on Saturday morning would have violated. But after November 3rd, all bets are off. Then we don't have any more midterm elections. These tariffs can ratchet back up. But I think between now and November 3rd, we're set at 10%.
Well, hopefully hopefully we get some clarity from Ambassador Greer. But were you surprised yesterday that we didn't get new policy prescriptions? Nothing really in terms of housing that the president was supposed to outline in Davos, and then it was punted to the State of the Union. Didn't hear about tariff dividends, didn't hear about more potential checks going out to Americans. Was this surprising to you?
Yeah, usually the State of the Union has at least one big, policy agenda rollout, especially this early in a president's term. He's got 3 years to get legislation passed or to announce new programs, and we got none of that. It was obviously a very political speech, just in terms of the theater of it all, which plays really well, I think. But there were no policy fixes. There's no, affordability narrative that we can take with us and say, oh, this is how we're going to fix housing, or this is how we're going to bring electricity prices down. None of that was there.
Henrietta, one thing that AMH noted earlier this morning that I thought was really astute is that China was not mentioned once, that there were no mentions of the second biggest economy in the world, even though that had been such a big dominant force of a lot of the trade agenda, at least in Trump's first term. How much do you see that as something that gives hints at what policy and what discussions could look like going forward?
It really speaks to how much the president is intent on having these in-person meetings with President Xi. He really wants to go to Beijing. He really wants to have 3 more meetings thereafter for the rest of this year. The migration of this White House away from being, China is our #1 adversary, 145% tariffs, fast forward to China actually retaliating and restricting critical minerals and magnets and rare earths, really created a whole about face within the administration, driven by the president himself. And you can see there's some warring factions within the White House over how aggressively to challenge China. You see it in the AI chips debate and the semiconductor chips debate that plays out on Capitol Hill as well. But the president has plainly decided that he wants the personal interaction with President Xi, and that's going to take precedent.
How effective have the restrictions, the chip restrictions, actually been with regards to China?
I mean, there's new reporting out that y'all are leading right now, just talking about the chips that China is getting as we speak, and where those came from and how they were able to get over to China. I mean, I think that the members and the folks at the State Department and the Pentagon that are most concerned about the détente that we just described are concerned about what they're seeing in the chip production that's happening in China, the replication that they're seeing, which goes back to the original Section 301 investigation into China in the first place in Trump's first term around forced tech transfer, intellectual property theft, all the same stuff. And now it's escalating.
Henrietta, appreciate your time, as always. Henrietta Trays there, of Vader Partners, weighing in. Thank you. A lot of that technology is getting into the country.
Oh, it is. And OpenAI and Anthropic have also come out and talked about how China is basically using their inputs and algorithm. OpenAI sent a letter to the China Select Committee saying how DeepSeek is free riding off of their technology. And then you also have this report, of course, that to make DeepSeek, they were using these chips that they're not supposed to have their hands on.
NVIDIA reporting after the closing bell. Look out for that earnings report later on this afternoon. Full coverage from the team on Bloomberg TV and on Bloomberg Radio. Equities at the moment positive by 1/3 of 1% on the S&P. Coming up, we'll catch up with Neil Dutta of Renmac as the president pushes for rate cuts. Plus, Johara is going to drop by. She's got some morning movers. Check out Carver. Shares are climbing after posting an optimistic outlook. That name is up 11% in the pre-market and up double digits so far this month. There is a turnaround in select names in the restaurant business, and they have been beaten up big time over the past year or so. What's happening with discretionary spending in this country? That name is up next. From New York City, you're watching Bloomberg TV.
Welcome to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Let's give a snapshot of the equity market at the moment. Positive by about a third of 1% on the S&P, up by 0.4 on the Nasdaq. The main event for the Nasdaq, of course, later on this afternoon. After the closing bell, numbers from the tech giant Nvidia. Our performance at the moment on the Russell, small caps higher by 0.6% with some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Kava getting it done in what's been a tough fast casual environment as rivals like Chipotle struggle to convince shoppers, convince diners that that they're worth the premium over fast food promotions. Kava posting better than expected growth for the last quarter and projecting more of it this year. It says customers are visiting less, but when they do, they are spending more. So shares are up more than 10% in the pre-market. Meanwhile, Lowe's offering another reminder that the housing market isn't rebounding anytime soon, despite the president's affordability push, which we heard about last night, with Americans growing more frustrated with the housing market's rates still too high, homes are too expensive, so people aren't moving and they aren't taking on those big projects, and that showed up in Lowe's results. The company posted a weaker than expected full-year sales outlook, so shares are down 3.6%. And I don't think I've ever watched a workday earnings report this closely, but here we are. The stock had been beaten down 40% year to date, heading into the report on fears AI could disrupt enterprise software demand. And the softer outlook it gave is only adding fuel to the fire. We are seeing workday shares down nearly 10% in the pre-market, and in the next test of software amid these AI threats, we will get Salesforce earnings, and heading into that report after the bell, shares are down 0.6%. John?
Yahara, thank you. That's a key earnings report later on this afternoon. Software's been absolutely hammered over the past few months, and more particularly over the past few weeks. Got some numbers just moments ago from TJX. The numbers okay for the fourth quarter. We'll get to the outlook in just a moment. The stock is down by 0.4%. For the fourth quarter, comp sales coming in at plus 5%. The estimate 3.67, Bramo.
Yeah, and looking to that full year outlook, which is really perhaps what people are responding to, $4.93 to $5.02. The estimate had been higher than that at $5.18, which could be part of the disappointment. Very curious to hear any commentary. Earnings per share also coming in light versus expectations at 97 cents to 99 cents versus the $1.02. So is this a margin compression story? Is this shoppers not coming in the door? The actual sales numbers came in above expectations. So look at margin compression. Look at how they're absorbing some of those costs in order to lure in different customers.
Every time I see this stat, I'm shocked. 18 years of gains for that stock, up 27% last year, up every year for 18 years, including this year. if we stay the course.
You know, I'm old enough to remember Loehmann's and some of the other names that you could go to and get different discounts that are sort of high-end names that you could dig through. And one after the other went bankrupt, and TJX remained the one that consolidated shares. So now there's a question of how much is this almost the benchmark name when it comes to consumers that are looking for deals, yes, like myself, who are going to different places and hoping for, you know, something that gives them that quality and value that everybody sees.
For the best part of 2 decades, the very definition of up and to the right, that chart. On our radar this morning, President Donald Trump calling the Supreme Court's recent ruling on tariffs, quote, very unfortunate. The president doubling down on his trade agenda, pledging to use alternative legal authorities to impose new duties. Elsewhere, the Pentagon threatening Cold War-era laws to force Anthropic to hand over unrestricted AI access. The startup pushing back, citing concerns over autonomous targeting and mass surveillance ahead of a Friday deadline. And finally, UBS strategists warning private credit defaults could skyrocket to 15% in its worst-case scenario. The firm's grimmer outlook coming as concerns over AI-driven market disruption, a deepening shares of private credit firms taking a beating year to date.
It seems like at this point, people are just throwing out numbers as we get increasingly dire forecasts for just how much disruption there could potentially be. The fact that Matt Mish and the team over at UBS went to 15% in terms of the default rates among private credit from 13%. I just wonder what are the inputs to some of these models. At this point, it seems like people are increasingly worried that there could be entire business models that are eradicated. On one side, you have people saying, what took you so long? We've been talking about this for 3 years. On the other hand, people are saying, these are the companies that are going to use this first and actually be the beneficiaries of it. And so that's the debate right now, and it's playing out clearly in the analyst community.
When it comes to the private market, what's going on there with Jamie Dimon really kicking a lot of this off, saying some people are doing dumb things? You've seen under the individuals come out a little bit more constructive. Dan Loeb was speaking in Miami yesterday, and he said the bad news is that a lot of these loans will be impaired, but they don't make up all of the portfolio that they're invested in. There's not a run-on-the-bank scenario because there's a match between assets and liabilities. So that is a little bit more constructive view of what's going on, even though potentially Jamie Dimon is right. Some people are making some dumb decisions.
A thought-provoking note from the team over at UBS. Thanks for that. Let's stick with the economy. President Trump continuing his call for lower interest rates as many Americans struggle with affordability.
In 12 months, my administration has driven core inflation down to the lowest level in more than 5 years. Mortgage rates are the lowest in 4 years and falling fast. And low interest rates will solve the Biden-created housing problem well, at the same time protecting the values of those people who already own a house.
Joining us now to discuss is Neil Datter of Renomac. Neil, welcome to the show. I should say this up front. I've seen Neil's medical records. He does not have Trump derangement syndrome. So before we start this conversation, I just want to park that. Neil, let's get into it. He's calling it a golden age, a roaring economy. What's your assessment of what this is at the moment?
Well, I'm right. I mean, he's sort of doing his best Jay-Z impression where you're going from lukewarm to hot. But unfortunately, that's not the case. I mean, if you look at private domestic demand for the full year last year, it ran 2.5%. Respectable, no doubt. It's a solid performance. But I think it's short of a golden age of economic growth. In fact, private demand, you strip out trade and inventory investment and government, it's actually a little bit slower than it was in 2024. So, you know, the golden age, you can't rule it out, but it's still very much a forecast, not a present-day reality.
Well, let's talk about the forecast, Neil. And you've heard this all before, I know, because we talk about it so many times on programs like this. Tax refunds are coming. That's starting. We've already had the rate cuts. And these big tech companies are spending tons and tons of money on this economy at the moment. Neil, that's the bullish outlook. Sure. Any of those pillars at the moment you'd push back against?
No, I mean, well, I guess the issue is that there's a lot of optimism and enthusiasm in the economy for the reasons you mentioned, right? I mean, the lagged effects of lower rates, tax refunds, loose financial market conditions. You know, now is the time for the economy to be, you know, really accelerating. And there's not much evidence that that's actually happening. I mean, you look at the PMIs, for example, like business conditions indicators through February released by S&P. That's basically consistent with 2% real GDP. Again, not terrible, but, you know, not the kind of golden age that they're talking about. And, you know, that's important because it's this golden age that they want everyone to believe in to kind of justify the lower interest rates through, the disinflation, and, we're just not seeing that. So, yeah, I mean, I think what's interesting is despite all the things you mentioned, right? Refunds, optimism, AI CapEx, we're sitting here with the 10-year longer-term interest rate basically at a little over 4%. It's actually been coming down despite all these things. So isn't now the time for yields to be going up because of all that enthusiasm? It's not exactly happening.
Well, there could be this pushback about AI and what that does in terms of disinflation. I am curious, Neil, getting your take on the economic transformation that President Trump is discussing, the idea of increasing tariffs and eradicating or at least significantly diminishing income tax. Do you think that that kind of model is one that the U.S. should aspire to, that actually could set the economy up for a roaring number of years ahead?
No, I mean, it's just really a rotation of things. I mean, you want to cut income taxes and raise consumption taxes. I mean, so you'll probably get a little bit less consumption and a little bit more labor. I mean, I don't know that it's going to set the course for the golden age. I mean, I think there are things they've done that have been helpful for boosting potential growth, like, for example, deregulation and so forth. I mean, of the financial sector. I mean, that's probably helping underlying economic conditions. On the other hand, if you're trying to onshore activity, in many cases, that's going to be in sort of a higher cost jurisdiction with higher labor costs. That's probably not the best thing for productivity. So it's a give and a take, in my opinion.
You talked about how you'd expect in such a booming economy the 10-year yield to be higher, or at least increasing as a representation of longer-term higher growth forecasts. A lot of people say the reason why it's not is because artificial intelligence is a disinflationary force, and you're getting that increased productivity, which is also the reason why you have seen kind of sluggish job creation. Do you buy that argument?
No. I mean, I think that, part of it is I'm cautious on the economic outlook, but let's talk about where things are. I mean, for all the talk about like AI displacement, look at prime age employment rates. I mean, they're basically at close to highs. I mean, so where's all the displacement we're talking about here? We talk about disinflation, and again, I think there's good reasons to expect disinflation, but I don't really think that's a function of what's going on with AI. I mean, it's really hard to be worried about inflation when shelter prices continue to moderate. I don't think that has anything to do with AI. I think rental demand is cooling because the labor markets have generally are likely to continue slowing. So I don't think it's really an AI story. And ultimately, like any productivity boom, right? I mean, there's a bit of this. If workers are becoming more productive, then companies should want those productive workers. Are we seeing that? So I don't know. I mean, I think in any productivity boom also, you'd expect to see real compensation growth accelerate. That's entirely the point. The point is for investment to raise household living standards and real compensation growth to go up. And during this alleged productivity boom, which is really just, in my view, statistical noise driven by a decline in the savings rate, pushing up GDP, you look at what's going on with real compensation over that period, it's basically flat. If you look at real incomes net of transfers over the last year, it's zero.
Neil, can we focus on housing for a moment? You say in your note that you do expect continued downward pressure on residential investment. There was a lot of hype that the president was going to come out with more policy prescriptions, what's going on in the housing market. All we had yesterday from him is a reiteration of his call on Congress to enact restrictions on institutional investor ownership of single-family homes. Do you think that'll help the housing market?
No, and in some ways it might hurt because that's been a source of demand for the builders themselves in a time when demand from traditional sources like first-time buyers has been waning. So no, I don't think it would be the best thing. Look, the residential investment outlook in terms of at least construction, that's just a mathematical thing, right? I mean, the fact is that housing starts are running below housing completions by, I think, roughly a little over 100,000 units. So long as starts are running below completions, housing units under construction will continue to go down. And that'll weigh on, construction put in place.
Now, just a final question on the Fed. I'm sure you've been following the communication over the past few days. Are the Doves losing some fuel here?
Well, I mean, you saw Governor Waller kind of make a nod to the fact that if the next jobs number is stronger, he probably wouldn't support a rate cut. And yeah, I mean, I think what's going on is people are punting on any decisions really through the summer, right? So I wouldn't expect any. I mean, if they're cutting rates in the spring, that means something very bad has happened between now and then. So I think this is just an acknowledgement of really the data that's come in. But as I said earlier, right? I mean, you have tax refunds, financial conditions being loose. We're coming off a firmer core inflation number. We're coming off a better than expected jobs number, and all the bond market has to show for it is 10-year yields at 4.05%.
It's notable, isn't it, Neil? What's your final word on that? Yields down by 4%.
Well, I mean, to me, it suggests that a lot of that's already priced in, right? I mean, and sort of the optimism, like the threshold is very high. I mean, if all you're doing is basically 2% GDP and everyone's expecting some sort of gearing up of growth because of the refunds, in the back half of the year, you should be marking down your expectations at that point, because most of the research that I've seen shows that the tax refunds are essentially a one-time sort of jolt to growth that fades in the back half of the year, and essentially the government goes from a tailwind to a headwind.
Neil, it's good to see you. Thank you, sir. No data there of Renmac. In the bond market at the moment, look, bond market could be wrong, of course, but fixed income doesn't appear to be buying the economic boom. You'd expect high yields and steeper curves, and that story slowed down.
I remember when Mohamed El-Arian said to us, listen to what companies are telling us. And what you heard from Home Depot and what you heard from Lowe's is that things are not looking great, and that people feel that uncertainty. Yes, this is tied to the housing market, but that's led to downgrades in some of their expectations. We heard the same thing from Walmart. In that backdrop, can you get really excited about some sort of reacceleration in growth that can be prolonged? This is the reason why yields have been coming in.
Bond yields this morning up by just a couple of basis points, 10s at 4.05%. With an update on stories worldwide with your Bloomberg Brief, Yahara has more. Hey, Yahara.
Hi, John. We are seeing TJX shares up 0.5% in the pre-market. The company reporting fourth quarter earnings that beat analyst estimates, though its 2027 EPS forecast falling short of forecast. TJX on track for its 18th straight years of gains. Look at that chart. Meanwhile, NVIDIA has yet to sell any of its H200 chips to China 2 months after President Donald Trump's decision to allow shipments of the AI processors. An administration official who helps enforce export controls says the U.S. is boosting efforts to crack down on smuggling of advanced semiconductors used in AI. And Stripe is considering an acquisition of all or parts of PayPal. Sources telling us here at Bloomberg the talks are in the early stages and no certainty they'll lead to a deal. PayPal was an early mover in digital payments, but has struggled with modernizing its technologies. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Up next on the program, staying the tariff course.
An unfortunate ruling from the United States Supreme Court. Almost all countries and corporations want to keep the deal that they already made. The legal power that I, as president, have to make a new deal could be far worse for them.
Up next, the Port of Los Angeles Executive Director, Gene Soroka from New York City. You're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1-1
is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Stocks are positive by a third of 1% on the S&P and the Nasdaq up by 0.4. Some nice outperformance on the small caps this morning. The Russell is high by 0.7. Under surveillance this morning, staying the tariff course.
An unfortunate ruling from the United States Supreme Court. Almost all countries and corporations want to keep the deal that they already made. The legal power that I, as president, have to make a new deal could be far worse for them. And therefore, they will continue to work along the same successful path that we had negotiated before the Supreme Court's unfortunate involvement.
So here's the latest this morning. President Trump doubling down on his tariff agenda as questions remain following the Supreme Court's ruling. Gene Soroka, Executive Director of the Port of Los Angeles, saying importers are facing significant uncertainty. Gene joins us now for more. Gene, welcome back. Thanks for making some time for us. You're a master of international trade. How is that uncertainty following Friday's ruling impacting cargo rates at the moment, or will impact cargo rates in the months to come?
Good morning, John. And this conversation continues to be the same between the two of us. The uncertainty means that businesses hit the pause button. They're not hiring. Capital investment is softer than we would like. And trying to make decisions on sourcing and manufacturing continues to be the focus of scenario analysis. Now, we're coming out of the new Lunar New Year holiday, typically our slower season. So even if there's a quick uptick because the nominal tariff rate has decreased, I think the cargo will be able to be absorbed in that supply chain mechanism, from ocean to rail to truck. What happens with ocean freight rates are largely a quotient of supply and demand. There's a little bit of downward pressure on rates right now due to uncertainty, but that's kind of in the short term according to the spot market itself.
Gene, without a doubt, we've increased friction. There's no dispute about that. But over the last 12 months, even with that increased friction, it didn't pull down the amount of trade volume that we saw on a global basis in the last 12 months. Do you see that changing this year?
I do, and it's looking one layer below, John. As you know, in Los Angeles, just as one barometer, we had our third busiest year ever, but there were a number of ups and downs, stops and starts based on trade policy statements that emanated from Washington. Now, as we look into some of the details, we've seen that exports are down 9 of the last 13 months, and U.S. exports to China of soybeans down 90% year over year. All that being said, with the information we have today, it's likely that our ports volume will decline by mid-single digits this year, save any real shocks to the system based on policy changes or the reaction from trading partners overseas.
But what has actually changed in terms of policy? They just basically filled the gap that IEEPA left with another section of 122.
Well, Anne Marie, last Friday, when the Supreme Court came out with their announcement on the 6-3 vote rescinding the IEEPA tariffs, companies, especially on the import side, got to the mathematics. What does it mean for me, country, commodity specific? The Section 122 tariff implementation, which started yesterday at 12:01, is a little more prescriptive, is temporary in nature, and has numerous exemptions. So once again, companies go back to the drawing board to try to figure out what the impact it is to their cost structure and, in some cases, bottom line. There's also a wide sweeping conversation about the potential of refunds. 2/3 of the tariffs that were received thus far by U.S. Customs and Border Protection and ultimately the Treasury Department are under the IEEPA category. What happens to those? We've got companies lined up to test this, whether it be through an application process, legislation, or even litigation. And then the final question there is, what does it mean for the consumer? Lastly, all this cargo volume that could see ups and downs like we witnessed last year, maybe there's a window of opportunity here with the effective tariff rate down and known for the next 5 months alone. Maybe cargo shoots through the system a little bit quicker.
Gene, do you have a sense of where some of the cargo is coming from and how that has changed amid more uncertainty around tariffs?
Yeah, Lisa, the movement of cargo away from China to Southeast Asian nations is real, and we witness it every day. Overall, last year, again, using Los Angeles as one indicator, we saw China volume drop by about 4.5 percentage points, and cargo from Southeast Asian nations rose by more than 7%. The net was Southeast Asia overtook those losses from China. Now, as we heard in the 15th five-year plan from Chinese President Xi Jinping, not only will they be exporting products, but also manufacturing knowledge. There's a tremendous amount of investment that's going into other countries, Vietnam, Indonesia, Malaysia, to name a few, from China sources.
Gene, just a final question from us. How easy is it to cheat these tariffs? Seen a couple of stories in the last day or so. How easy is it to do that?
I think the staff at USCBP is doing a tremendous job looking at the 12-digit harmonized codes and trying to make sure everything matches up, from the product description itself on that bill of lading to the content that's in every product and each shipment that comes across. There's this notion that relay cargo or cargo that transits over other countries is simply trying to skirt the issue of tariffs. And while there are some bad actors, realistically, tiered suppliers ship into one central point, finished goods are made and shipped on to the United States. Continuing to watch for these bad actors and make sure that that activity is kept to a minimum, if any at all, is really the goal of the U.S. government.
Hey, Gene, it's good to see you, as always, sir. Thanks for making some time for us. Gene Soroka there, the Port of Los Angeles Executive Director, forecasting a little bit of softness relative to the record boom we saw in trade last year.
Yeah, but it's hard to tell right now because this is the soft period of time. Later in the year, they'll get a better sense, and maybe later in the year, we'll have a better sense. Later in the year, I'm talking 2 days, which is later in the year, at least the way this year is going.
I hope in about 35 minutes we'll get some clarity as well. Looking forward to the conversation just around the corner. In the next hour, we'll catch up with Peter Chair of Academy Securities, Jay Goldberg of Seaport Global, and in about 35 minutes from now, the US Trade Representative, Jamieson Greer. Looking forward to that conversation in just a moment. The third hour of Bloomberg Surveillance is just around the corner.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
There are elements of disruption that are permeating the entire technology sector.
Diversification is your best friend.
There will be some defensive posturing in the market.
Investors are recognizing they can go into bonds. It is the counterbalance to risk.
Regime change looks a lot like a counter-trend rally at the start.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. Your scores, the price action looks like this. We're positive by 1/3% on the S&P 500, up by 0.4 on the NASDAQ, up by 0.6 on the Russell. The story in the bond market we'll talk about in the next 10 minutes or so. If there's an economic boom, why isn't this bond market buying it? Yields have been falling, and we're near the lows of the year. And typically you'd expect yields up and a steeper curve if you were having a much better outlook for the US economy. Yields high at the long end of the curve, up by 470 on 30s. Looking ahead to the day ahead, it is packed with earnings. We'll hear from Salesforce a little bit later after the closing bell. NVIDIA, the main event for so many of you out there.
And there's actually a connection between these stories, the idea of what the bond market is saying and NVIDIA's results. There is an existential fear that is permeated throughout all of markets that, yes, NVIDIA is going to deliver incredible earnings, and yes, you are seeing AI take over in a lot of different sectors, but you're not seeing the labor market really re-accelerate, and that's been the overall fear. That said, if NVIDIA comes out and shows how they are delivering and how much they're able to increase their margins, I mean, 76% margins is just mind-boggling in terms of the money they are minting. It might convince people to go back into these names.
I'm looking forward to NVIDIA because for a lot of individuals, top of mind is going to be China. And given the fact we didn't get a state of the relationship between Washington and Beijing last night from the President of the United States, who decided to not mention China directly, the first time time since 2005. Last president who didn't do so was Bush. I think potentially this individual who's been noted as maybe a diplomat between these two countries will give us the outlook on what is actually going on in China. Are the H-200s going there? Is there appetite for that? What's going on with the administration in terms of export controls? Maybe we'll get some clarity this afternoon.
NVIDIA in the pre-market high by 0.75%. We're looking for some clarity in about 28 minutes from now. Ambassador Jameson Greer of USTR joining the program to break down just where tariffs stand. There is some confusion at the moment. 10% on Friday. 15% on social media, back to 10% on Monday.
I guess it depends what you were paying attention to, the president's truth or what the Customs Border Protection put out. What the Customs Border Protection put out is 10%. The administration saying we're working on getting to the president's truth of 15%. Okay, but when? We need some clarity.
Let's get you set up for the next hour or so. Peter Chia of Academy Securities joins us following the president's State of the Union address. Jay Goldberg of Seaport Global with Wall Street bracing for NVIDIA earnings. And the U.S. Trade Representative Jameson Greer joins us on the White House tariff push. We begin this hour with stocks edging higher as investors digest the president's address last night. Peter Chia of Academy writing the following: I was pleasantly surprised. He seemed nicer to other countries and didn't really threaten embargoes or really escalate tariffs. Pete joins us now for more. Now, Pete, that's a pretty low bar, buddy. Was that a big takeaway for you?
It was kind of, one, I think the whole thing's a little bit ridiculous that neither side can, one side can't stand ever, the other applauds everything. But yeah, he was kind of nicer to other countries. As Anne-Marie just mentioned, he didn't actually talk about China. I was a little bit concerned we could see kind of the threats of embargoes or something else on tariffs. It seems like they're taking a pause. Maybe we'll hear a little bit more in half an hour when Greer comes on.
Looking forward to that conversation as well. 30 minutes away, 30 Eastern time. Pete, I see reasons for this economy to do better. I believe they've got time on their side. We're going to get the tax refunds. We've already had the rate cuts, and we're seeing a lot of spending coming from big tech players. But I respect the bond market just as much. And this bond market is not buying the boom. Yields are down near 4. The president's talking about a roaring economy. Do you see it in fixed income?
I don't see a roaring economy, though I do think there are two separate things going on. One is this administration is keen on getting 10s below 4%. I wouldn't bet against them, so I think that's happening. I still think we're going to see 3 rate cuts almost regardless of what the data comes. So I think that's playing a little bit in the bond market away from just the traditional analysis. Having said that, I'm concerned about jobs. I'm concerned about the uncertainty. And as we've lost some of this wealth effect, is this spending going to be there? Everyone I talk to, everywhere we look, I think there's just this hesitancy to spend, and that can be self-fulfilling. So I'm really nervous about the economy for the next few months. Not like that it's going to roll over, just that we don't ever really catch fire, and at some point that weighs on itself.
And that's the reason why the likes of TJX are saying the holiday season probably was the peak, and after that, you're going to see some deceleration in shopping. In other words, what you're saying is being borne out in some of the commentary from the earnings. I just wonder for the path forward, how much you see AI as part of this story, and I feel almost, it feels cliched to talk about this, but do you really think that is the driver of the weakness that we're feeling in the labor market?
I still think it is to a large degree. When I'm looking at my portfolio, I still think we're going to see some margin compression from the companies that were very asset light, big tech companies. And it's not that they're going to lose to AI necessarily, but they're going to have to spend a little bit more possibly to defend their moats. Maybe they offer some price concessions. So I think you see some margin compression there. And I do like the heavy asset industries, right? I think anyone who's got a lot of people, a lot of plant, property, and equipment to move around, they're the beneficiaries of AI. So I think there's more room for this kind of rotation that started to run. It's not going to be every single day like it was for a while, but that's where we're moving. We're moving to this kind of production. What are we making? How do we get those things there more efficiently? That's the big beneficiary, and I think electricity production continues to grow.
I think it's important to note that there is at least more discussion in Washington, D.C. around this percolation of AI and what that can mean for the labor market. Last night, President Trump talking about how the hyperscalers would pay for their energy use and the build out of a lot of their infrastructure. What did you make of that?
One, I think it's fairly smart. When I go anywhere and talk, if you see you're losing the audience, just mention the price of electricity, and everyone is suddenly engaged. So the cost of electricity, brownouts, that risk, it's resonating with voters. So I think getting these things paid for, and it's not just the production of the electricity itself or the generation of the electricity, it's the grid to get it there. So I think there's going to have to be a lot of spending on that. I think that's going to probably be borne a little bit by the companies that are building out this, the hyperscaler industry. So it's probably, again, more margin pressure there as you see them having to support that growth. I think it's great for the economy. I think it's great for Americans if we can get that electricity price under control, because right now that's been one of the highest rising factors in CPI for the last 3 years.
How would shareholders, you think, at these companies react to that? The president dictating they need to pay for consumers' electricity prices or subsidize it.
I think like a lot of things, they will attempt to, pay some lip service around it, figure out what they can do, what's within their power. And some of it's legitimate that they want this and need this themselves, right? Plugging into the consumer grid opens up all sorts of problems potentially for them. So I think it's actually a natural fit in some ways, right? You already saw some of the companies want to open like 3 Mile Island nuclear facility. So I think the reality is when you look at the data center and AI, electricity is such a key component of their business. It makes sense for them to have some sort of vertical control over it. So I don't think it plays as bad maybe as some other things like saying we can't do 10% credit card charges.
Peter, I know we said that the president didn't mention China once, but he did mention Iran. You have a number of generals on your board. What is the thinking right now in terms of what the president will do? He had a clear red line last night, reiterated that they cannot get a nuclear weapon.
Yeah, I think that's what we're going to see. We're going to see, I guess they've been using the term we've been talking about, a couple of bloody nose attacks. So as things are in position, we're not sure that everything's still in position. We might still be a full week away from being truly in position to be able to attack and defend any retaliation, but we will see some attacks. They will have the minimum amount of risk possible to U.S. service people, and it would be meant to send a message to Iran. We're serious. We will escalate if necessary, but come to the table and let's sort this out. So we think that's going to occur there. It's going to occur within the coming week, and I do think we will be successful. But in any sort of military action, there is risk, and if we start losing service people, it could get sketchy very quickly.
Pete, what is success? Because arguably, we've already done what you just described. We've done it once already.
I think this time is actually getting them to the table and getting a deal, not this postponement, second, third, fourth, or fifth round. It's like, here's a piece of paper, let's sign this, and let's move on. I think that's where we're at, and it has to be done within, we're guessing 2 to 3 weeks. If we don't get there within 2 to 3 weeks, that's when we see the real escalation.
Watch this space on Iran. Pete, just to turn to the earnings a little bit later, NVIDIA, Salesforce, earnings matter. But at the moment, Pete, earnings don't matter right now. It feels like this equity market is trading on something different, that we're going through a repricing associated with AI. JP Morgan and Goldman, others too, talking about so-called halo, heavy assets, low obsolescence. This came from Goldman recently. The markets are rewarding capacity, networks, infrastructure, engineering complexity, assets that are costly to replicate and less exposed to technological obsolescence. Pete, are we just going on a repricing, sector to sector, company to company, based on that? And a lot of the price action we're seeing is just divorced from traditional indicators.
One, I think so, though that sounds like a very long way for Goldman to say production for security, or PROSEC as we've been calling, because those have been the exact industries we think the U.S. government's going to support and capital is going to flow into. Yeah, I think for Salesforce, what we're looking to see is there any sign of slowdown? Do they have to spend more money to protect their moat, or are they comfortable? And I think that could really help the software side of things. NVIDIA, again, how many chips are they selling? How profitable is that? The news is going to be great out of NVIDIA. The question is it going to be great enough to kind of move things around? And personally, I am looking to see where they come with Intel, right? That's been one of the, possibilities for Intel is doing more with NVIDIA. Last time around at earnings and things like that, it didn't go well for Intel. Could that be a turning point for Intel? And again, that fits to me that definition of, production for security, where a company like NVIDIA kind of looks to do more with Intel.
Pete, you tell him. You were first. Peter Chair of Academy. Pete, it's good to see you. Thank you, as always. Pete, Goldman, JP Morgan, all with that same version. Pete was very early.
I love it. He's saying, it's not Halo, it's PROSEC. Get with the program, get with my marketing. He's been doing this and trying to pitch us for quite a while, so kudos to you.
There's a big AI flavor to a lot of what we've seen recently, and it raises the question just how much earnings are going to matter. Earnings have been great. They've been really pretty good through the first quarter earnings season for Q4. What we've seen over the last few weeks has been pretty decent, I would say, and yet you're not seeing a rally at the index level. Why? Because we're trading on something else.
We're trading on hopes, beliefs, future projections, fiction in some cases, this idea of what is the future growth pattern, what is the future margins of industries that are going to be completely changed by technology. This is use your imagination season, and that's the reason why a lot of people are saying this is the strangest season they've ever seen in markets.
A lot of puzzles to figure out. Let's give you an update on stories elsewhere with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump delivering a record 1 hour and 47-minute State of the Union address last night. The speech was heavy on his economic policy, with the president touting falling food and gas prices. Trump didn't offer many new policy proposals, though he did promise a $1,000 retirement savings match for workers without 401ks. New documents revealing Jeffrey Epstein maintained deep ties with JP Morgan Chase years after the bank officially cut him loose. Records showing Epstein used one of his trusts to wire $150,000 to his girlfriend's brokerage account at the bank just 6 months before his death. And General Atlantic is said to be selling a stake in ByteDance that would value the company at $550 billion. Reuters reporting the potential sale would be the first since TikTok and ByteDance closed a deal to transfer part of their U.S. operations to American investors back in January. Neither company responded to requests for comment. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the program, the morning calls. Plus, we'll catch up with Jay Goldberg of Seaport Global with Wall Street bracing for NVIDIA earnings from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Overall, we expect another beat and raise, quite simply, from NVIDIA here. I mean, that really shouldn't be the surprise. That really should be the base case. If there's any sort of potential risk out there, it might be on the margin side. But nonetheless, I mean, the trajectory is still very good. We think they sustain a mid-70s gross margin there on top of the elevated growth rates that you're going to see here.
That was Angela Zeno of CFRA going into the big earnings report after the closing bell. NVIDIA just around the corner. We'll have another preview for you in just a moment. The scores into the opening bell look like this. An hour and about 15 minutes away. That cash open is just around the corner. Futures are positive by 1/3 of 1% on the S&P. On the Nasdaq, up by 0.5. The Russell higher by 0.7. That's the price action. Let's get you some morning calls. First up, UBS upgrading IBM to neutral, calling its risk-reward ratio more balanced. That stock is doing better. Getting hammered earlier this week. Stock is up in the pre-market by about 1.7%. Your next call from Evercore, downgrading Workday to inline, noting AI investments will limit operating leverage. That stock is down by more than 9% in the pre-market. And finally, Oppenheimer upgrading Oracle to outperform, believing it can be an AI winner. That name is up this morning by 2%. Let's stick with AI. The next test on deck with NVIDIA earnings after the closing bell. Jay Goldberg of Seaport Global remaining the sole sell on the stock, writing, we think NVIDIA will meet expectations. It is hard to see them delivering much upside. Jay joins us now for more. Jay, welcome to the show. Still the big bear based on the recommendation. Let's get into it. What's going to cap the upside from here?
I think they're limited on capacity, right? We know that the industry is constrained across semiconductors. The big problem for NVIDIA is what the capacity they can get out of TSMC, both in manufacturing and packaging. And I think that sort of caps their upside until maybe later this year when we get a little bit more capacity out of TSMC.
Well, Jay, beyond next year, over the next several years, is this going to remain an issue? Is it something we can look through at the moment?
I think we're in a somewhat historic peak of capacity constraints right now for across semiconductors, right? Every sort of nook and cranny you look into in the industry, things we haven't thought about in years, like substrates and photoresist chemicals, everything is in shortage right now. And that's going to last. Some of those are going to last through the year. Memory looks like it's going to be constrained through the year, but semiconductors are cyclical, and eventually things will ease. Probably next year, but who knows when that's going to be.
Well, Jay, that's the big question, because you are the sole sell. There's 4 holds. There's 78 buys on this name. What are the 78 getting wrong?
I think the difficulty NVIDIA has is it's gotten so big, and for it to keep momentum going, the deals that we're looking at, getting these data centers built to the scale that is going to be sufficient for their numbers, that's going to be challenging, right? We're already sort of starting to see the stress on the capital market side. It's getting harder and harder to fund these data centers, and the data centers are just going to get bigger and bigger. And NVIDIA needs that to keep the numbers going. And so I think that it's just getting harder and harder for NVIDIA to sell.
How much of this, Jay, is also their competitive advantage is getting eaten into by some of the other players? I see you've got a buy on Broadcom, on Intel, and I just wonder how much you see a lot of not just hyperscalers, but other companies look for cheaper, more efficient alternatives as they plan to scale up.
Yeah, if we're looking at it over a multi-year time frame, the competition is definitely increasing. Right, yesterday we had a deal between AMD and Meta. There's lots of puts and takes on that deal, but the bottom line is it really firmly establishes AMD as a credible second source to NVIDIA. You mentioned all the hyperscalers. Google's doing very well with its TPUs. All the others are going to try their own hand at it this year as well. There's a lot of competition out there, and some of them are, they're going to get in. It's just going to take a little bit of time, but they're slowly eating it away at NVIDIA's moat.
Jay, is there anything that NVIDIA could say today after the bell in the New York Times that would change your mind and that would actually make you more bullish on a name at a time where there's $650 billion being spent on the build out for just 4 hyperscalers just this year alone?
I mean, I'm negative on NVIDIA's near-term prospects, right? I think they're a good company. They make great products. I've never doubted that. If they could somehow tell me that they've magically gotten a lot more capacity and they're going to greatly increase revenue next year, or later this year, those are the kinds of things I'm looking at. But there's lots of other things to offset that. I'm still worried about memory, the impact of memory prices on NVIDIA's margins. I think that's right. Memory's short everywhere. That's going to weigh on them. I'm also worried about their balance sheet. They're doing an awful lot to keep this AI trade going. And like everybody, sort of all the major players in this are starting to use their balance sheet and off-balance sheet metrics. I think that's, those concerns are out there too.
Jay, in October, we heard from Jensen Huang saying that the Rubin chips and the Blackwell chips were on track to generate $500 billion in revenue over the next several quarters, which was quicker than many had expected. Why is that not enough for you to potentially have a different look on where the stock is trading short term?
I think a lot of that's already reflected in numbers. I mean, my take all along this has been NVIDIA just can't outperform the broader sector. And I think we've seen that play out over the last 6 years. And I don't, 6 quarters, I don't see anything sort of changing that meaningfully in the next few quarters.
Jay, I want to talk about another name that you cover. I want to finish on Apple. Jay, it's really interesting that Apple is sitting out the massive CapEx spend that we see from the other tech giants. Now, the stock is kind of holding in there. It's not doing anything spectacular. But what is the bet that company is taking by choosing to sit out of this massive spending?
I think the gains of AI are going to accrue to those companies that know exactly what they're doing with it. The expense is so high, you want to be really targeted and very judicious in your spend. It's expensive to build these things. And I think Apple will eventually participate more fully. And for the moment, they're happy to pay to make use of other people's AI build-out. And I think that works for now. They need a better AI strategy. I think they're in the process of finding it. But for the moment, they don't need to build their own data centers when they can use Google's.
What do you think full participation is going to look like?
I think we need some compelling use cases. We need Apple to come up with some interesting ways to actually make AI useful and interesting to people. I think that's what's really lacking right now in the AI space is sort of broad-based consumer applications. I think we're starting to see that in some of these weird little side projects like OpenClaw. But Apple needs to productize that in a big way. They don't quite have the capability to do that. I'm also not convinced they know exactly what that looks like.
They were
But I think they have
criticised
a little
quite
bit of time
heavily,
to
as
figure
you
it out.
know, Jay, last year for not participating fully. And I wonder if this market's transitioning to a point where we might start rewarding Apple for not participating fully. Are we close to a moment like that?
It's mixed. I mean, we saw this last quarter when Facebook and Meta reported at the same day. Microsoft's numbers were not great. Meta's numbers were pretty good, and the stocks got, one went down a lot, the other went up a lot. I think investors do care now about how people are spending AI, and it's a big change from where we were a year ago. I think there's a lot more picking and choosing who's doing well with AI and who's not. And so I do think investors care about this a lot.
I know that you've been kind of bearish on the story as everybody else gets super hyped up about how AI is going to transform everything and that spending can be essentially infinite with infinite gains. I'm just wondering if this caution that you're seeing right now, as you see this sort of rolling ball of fear impact a number of different sectors, if you're getting more bullish overall about how this is going to be deployed and a rationalization of some of the new technology.
My take has always been that AI is very, very important and very powerful and has a lot of potential, but that it's going to take a few years at least for us to understand how to adopt it and what it's going to be used for. And so I think we don't fully understand where we're going to deploy AI in the broader economy. And as we learn that, there are going to be winners and losers. I don't think we're going to wipe out the entire software industry, but I do think there will be a change in share among players, and there'll be a lot of new entrants in a lot of new categories. And so I think we collectively are figuring that out now, and we're seeing that in the market. I don't think anyone has a really clear idea on that, but I do think we're finally starting to see signs of like real utility for AI that hasn't been apparent before.
Do you think that the disruption is going to be as aggressive as some projections have it? Matt Mish of UBS creating a lot of headlines this morning with this 15% possible worst case default rate in private credit tied to some of this disruption. Does that seem realistic to you?
I think the time span of the capital markets and the time span of technology adoption are in very different clock cycles, right? The technology is out there. It's going to come. It's going to be very quick by technology standards, but that's going to be very long by capital market standards. And John, I'm like you. I respect the bond markets a lot. There are clear problems with how some of these data center financings are getting done. It's getting very, very heavily financially engineered, and I think that's going to be a problem in the near term. If you taking off my Wall Street hat and putting on my technology tinfoil hat, I think there are incredible things coming out there for AI. It's not going to be quite on the sort of Wall Street timescale.
Jay, appreciate your time. Thank you, sir. Jay Goldberg there of Seaport with one eye very much on the bond market, even from the Technology Pro.
Yeah, I mean, look, this to me is really the key question, both the bond market from the government bond market and then the bond market when it comes to private credit and when it comes to high yield credit. You do start to see some concerns percolating in, mostly concentrated in private credit and BDCs and some of the public representations of that market. Nonetheless, very much wondering when there's going to be pushback from credit investors about some of these plans and exactly how they're going to be paid for.
The fate of this massive build-out right now is in the hands of fixed income, as it often is. Coming up on the program, we're going to catch up with this guy, an important conversation with the U.S. Trade Representative Jamieson Greer on the White House tariff push. Looking forward to catching up with the ambassador in just a moment. Plus, Yohara is going to drop by with your morning movers. Lowe's sliding as profit guidance falls short. That name is down in the pre-market by 3%. Speaking of the bond market, yields higher just a little bit this morning. No drama. Higher by 2 basis points on 10s to just north of 4%. On 30s up by 2 to 470. And at the front end of the curve, as this Federal Reserve sets us up for a prolonged pause on interest rates, yields higher by 2 basis points, getting close to 350. From New York City, you're watching Bloomberg Surveillance.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Live from New York City this morning. Good morning and welcome to the program. The opening bell about 60 minutes away. Equity futures firmer by a third of 1%. Outperformance on the small caps. The Russell this morning higher by 0.7. With your morning movers, Yahira has more. Hey, Yahira.
Hi, John. After Home Depot's lows giving us another reminder that the housing market is not rebounding anytime soon. Rates are still too high. Homes too expensive, so people are not moving and not taking on those big projects. So that showed up in Lowe's results. Shares are down 3%. Meanwhile, HP shares also falling in the pre-market, down 6% after warning profits will likely land in the lower end of its forecast. The company saying demand for its PCs, AI PCs, held high, but that momentum not enough to counter sharply higher memory costs plus tariff headwinds. And we are also seeing Circle Internet shares soaring 18% now in the pre-market after the company behind the USDC stablecoin posted a big profit jump. And despite last year's crypto meltdown, demand for that dollar-pegged coin held up. John?
Yahira, thank you. Thanks for the update. Let's turn to tariffs. The big story, the president doubling down on his trade agenda.
An unfortunate ruling from the United States Supreme Court. Almost all countries and corporations want to keep the deal that they already made. The legal power that I, as president, have to make a new deal could be far worse for them.
The president pledging to use alternative legal authorities to impose new duties following the Supreme Court's ruling against the tariff agenda. I'm very pleased to say they're making some time for us this morning. It's the US Trade Representative, Jameson Greer. Ambassador Greer, welcome to the program, sir. We need to spend some time with you talking about the next year, particularly the next 150 days. But there is some intrigue over the last week. Let's talk about the last week, and particularly on Friday. There is now a new baseline tariff of 10%. Why did we start with 10% when the president appears to want 15%?
So the authority that we're using right now, which is a temporary 150-day authority, that's 5 months, 150 days. And we have a lot of countries out there that for a long time have had 10%. We have some that have higher at 15%. And so our goal with all of this is to have continuity. So we want to have the 10%, and we're looking about how to implement the 15% that the president indicated, because we want to have continuity. We want the countries, we want the companies, we want people to understand that what we were doing before, we're going to reconstruct with alternative tools, because we want to keep going, maintain the policy. We'll just have a change in the legal implementing authority.
Ambassador, you're giving me the impression that this is still under conversation, negotiation, perhaps internally, when the president was pretty explicit over the weekend in his own words. I, as the president of the United States of America, will be effective immediately, raising the 10% worldwide tariff on countries, many of which have been ripping the US off for decades, without retribution, to the fully allowed and legally tested 15% level. How can we sort of explain that, which is rather explicit, with the more nuanced tone you're offering this morning?
So we'll put out a supplemental proclamation that the president will sign, going to 15% where appropriate. Remember, before the Supreme Court struck down the tariffs, a lot of these countries had agreed to have tariffs, U.S. tariffs on them of 18%, 19%, 20%. So going up to 15%, for them, at least temporarily, it's better than the deal that they had. And so the president wants to make sure, again, that we have continuity in this process, that folks who acknowledge they had giant trade surpluses with us, they had unfair trading practices affecting their trade, and who agreed to pay the tariff, that they actually are in a position to do it until we can get the more durable and long-lasting measures in place.
Ambassador Gray, when you say when appropriate, is that this week, or are you looking to do this after the 150 days runs out of the 10% level we currently have?
Oh, it'll be in coming days. It's soon, right? I mean, the president put out this direction, to your point, and so that all of that is in development. So that will be soon. Again, the idea is to establish a through line from the policy that the president has implemented successfully over the past year, and continue it over this 150 days, and as we build up appropriate tariff rates using other investigations and means.
So when you do raise the 122 tariff to 15%, what's your argument going to be to the Europeans? Because this is stacking on top of most favored nation rates. That means that for the Europeans that agreed on a 15%, the highest level they would agree to accept, this new rate for some products will be above 15%. What's going to be the argument to Brussels?
So I've been in constant contact with my counterparts in Brussels, the UK, and elsewhere. And the way to think about this is every country has domestic procedures that they need to go through to come into compliance with the deal. With Brussels, we gave them a good rate on cars. That stays the same. With the UK, we gave them a quota on cars. We gave them a quota of beef to import duty-free. That stays the same. So a lot of these parts stay the same. But just like Brussels hasn't fully implemented its deal, or the UK hasn't fully implemented its deal, we also need a couple months now to have some domestic procedures, because the Supreme Court struck down all of this. It's pretty normal when you have a trade deal to implement over time. Most trade deals take years to implement. We're on the fast track, and so we're just going to have a couple, 3 months to make sure that we rejigger the tariffs in a way that comply with our end of the deal, and we expect the EU and the UK to hold up their end of the bargain too.
But does this new 122 15% now basically break the EU trade agreement, given where most favored nation products are and those rates?
So right now, as we talked about, 10%'s in place. There will be a proclamation raising it to 15% where appropriate. And so once that comes out, I'm happy to come back on and explain how that might accommodate other countries where there's a deal.
Will any of the rates on any country stay at 10%?
Well, we want to make through that we go through the legal process and we get out a proclamation. Again, this is, anytime we put on a tariff, we're going to have foreign interests who want to bring it down, so people are going to sue us. So I'm not going to get ahead of the president. I'm not going to get ahead of the White House counsel and all these folks who are implementing this. So when that comes out, it'll be very clear what and how and why.
Ambassador, in some of your comments, it seems like you're suggesting that the rate could go above 15%, and I just am curious what exactly you're planning to use. It's been discussed that Section 301 in particular will be used to go after places like China, which it has been used for before. Is that still in the cards?
Yes, so Section 301 is a country-specific tool, and it allows the president to investigate unfair trading practices by countries. And again, this is what we've been getting at over the past year. As we've concluded deals with over a dozen countries, they have agreed to eliminate unfair barriers to our trade, take down their tariffs, eliminate fake regulatory barriers, et cetera. And so we can actually conduct these investigations under Section 301 on a country-by-country basis, figure out exactly what they're doing that's been so problematic, and negotiate with those countries, but also impose a tariff as enforcement to make sure that they eliminate those practices. China certainly, but also other countries, Vietnam, Southeast Asia, the Europeans potentially. But the point is to recreate the policy that we've developed over the past year, to give continuity and be able to be in a position where we can honor the deals but also have enforcement available. That's the only reason why these countries have made all these concessions, because they know the president's willing to enforce and willing to raise tariffs if he needs to.
Have you started the 301 investigations?
So there are a couple that have already started. We opened a Section 301 investigation on Brazil a few months ago. We opened up one on China a few months ago about compliance with the Phase 1 deal. And we have many others that we are preparing right now and we expect to launch in the coming days and weeks, such as related to forced labor in supply chains, industrial excess capacity, or unfair trading practices with respect to fishing or seafood or rice, or subsidies for certain products and that kind of thing.
So, Ambassador Greer, you were potentially planning to use 301 because when I spoke to you and your colleagues in the past, there was this concern the Supreme Court could strike down IEEPA. So why didn't you do these investigations from the very beginning?
IEEPA was the most appropriate tool to use because we are facing an emergency in this country. In the 5 years prior to President Trump's second term, our U.S. trade deficit exploded by 40% to reach $1.2 trillion, the largest trade deficit in human history. And the trade deficit was a manifestation of many things, but one of them is a lot of offshoring of production to other countries, jobs and manufacturing that went to China, Vietnam, Mexico, et cetera, to the point where our defense industrial base was challenged. Our manufacturing base and jobs were hollowed out. And this was an emergency and is an emergency. And so the president used an emergency power to move very, very quickly. Section 301 and Section 232, some of our alternative tools, they take more time, they take more process, they're very effective, but they didn't have the flexibility and the speed we needed to really out the gate, make these points, get the deals with the countries, and now we can go back and make them firm.
Ambassador, Canada and Mexico, of course, will be down separately, but does the president feel constrained by USMCA?
So I wouldn't say feel constrained. We're in the middle of a review that we have to conduct in the United States. I'm in contact with my counterparts from both Mexico and Canada. There are things in USMCA that make sense that don't get a lot of news because they function fine. But there are a lot of things where we don't have the type of market access we want, whether it's in goods or services. We have Mexico that historically, over the past few years, has been discriminating against U.S. energy producers and service providers. We have Canada that limits our access for dairy, has taken American wine and spirits off its shelves. So we have a lot of issues like that. We also have concerns about transshipment through Canada and Mexico of goods from third countries coming through and benefiting from duty-free treatment from USMCA. And so we want to make sure that if there's an agreement with either of these countries, that it really benefits these countries and not third countries that might use Canada or Mexico as an export hub into the United States.
I'm sure you followed the story. Josh Wingrove and the team down in Bloomberg News in Washington, D.C., reporting more recently that the president is privately musing about exiting the North American Trade Pact. What can you share with us this morning about the prospect of that happening?
Well, it's not just privately. He talks about it publicly, too. It's not a secret. I don't think that's super newsy, to be honest. The president has been really clear this year that he's concerned with the performance of USMCA. He doesn't feel that we should just rubber stamp this agreement. I'm having separate negotiations with Canada and Mexico because our relationships with those countries are so different. And so I think we'll have, over the coming year, the conversations. Maybe we'll have separate protocols with Canada and Mexico that we tack on to USMCA. We just have to fix some of the gaps in that. The president has already taken action on autos, which is a big problem. We've seen a huge influx of imports of autos from Mexico over the past few years, when really we want to be making those things here. And we're already seeing Stellantis, GM, and others announce new lines and using up excess open capacity in the United States to make more cars here. So we're already seeing a good effect from the president's trade policies with respect to Canada and Mexico.
So it sounds like a review and improve is the path you're on, Ambassador Greer. When it comes to the 122s, are you prepared potentially for suits as well, using that legal authority?
Well, any legal authority the president uses to impose tariffs, foreign interests are going to sue, right? People who are importing from foreign companies and foreign workers, they're going to sue. So, of course, we expect that comes along. However, I would say that the lower courts and even the Supreme Court expressed that 122 is an authority that the president can use. We put out the proclamation last week that lines out exactly how the president can use this and why he's using it and the declarations he's making. Are people going to sue? I expect they will. We feel confident in the case.
In July of last year, though, the president's own lawyers said that 122 wasn't applicable. They said, this is the appeal of the Court of International Trade decision, they said basically, nor does it have any obvious application here, 122, where the concerns the president identified in declaring an emergency arise from trade deficits, which are conceptually distinct from balance of payment deficits. So why do you think it works now when it didn't work over the summer?
So I will say, first of all, that I think that there's more context to that statement. And further, a balance of payments is not identical to a trade deficit. People have kind of set up this straw man. That's just wrong. If people go back and actually read the proclamation that went out, it talks about the actual balance of payments deficit. It refers to the current account. Now, the trade deficit is a big portion of the current account, so it certainly is a driver of it. But we also talk about things like our net investment income position, where we're $26 trillion in the hole. So there are a variety of things that contribute to a balance of payments deficit. And so folks who are out there with this kind of oversimple, straw man argument that we're just equating a trade deficit to a balance of payments deficit, they're just wrong. They don't even understand. I don't think they've read the proclamation.
Ambassador, can we finish on the trade deficit? Widened recently. And just to wrap up the conversation, help explain to us what the metric for success is actually going to be for the administration to demonstrate to the American public that this effort is actually working.
Sure. So when the president put his trade program into place starting in April, every month from April through December 2025, the trade deficit goods went down year on year. That's exactly what happened. So from April to December, the trade deficit in goods went down by 17%, 17%. When we look at, is the trade policy working? We're looking at the direction and the trend in the trade deficit, so that's going the right way. We're looking at real wages. Are they going up? Are people being paid more to produce here? And they are. We have average weekly earnings are up 4.4% over the year. And we're looking at what's happening with manufacturing. And we're seeing a lot more purchases of capital goods. We're seeing starts on factories. And so that's going the right direction. We're seeing productivity in manufacturing surging. So all of that's going the right direction. And we're seeing things like, GE has announced, another $3 billion worth of investment, 1,000 jobs across 5 states, Georgia, Tennessee, et cetera. So we're seeing it in the data, and we're seeing it in the actual expansion of manufacturing in America.
Ambassador, I know you've got to run. Thanks for making some time for us. Look forward to catching up again soon. Thank you, sir. Thank you very much. The US Trade Representative Jameson Greer on metrics for success after that trade deficit was much wider than expected at the previous read.
Yeah, so far it isn't necessarily the trade deficit. It's things like wages. It's things like what kind of plans are agreed upon in terms of new investments to the United States. And he pointed to those, saying that they're expecting to remain in place. Still a lot of uncertainty, though, going forward about exactly how some of these trade deals are going to get executed.
And in the coming days, says it's going to be 15%. And this is where the consternation is over in Europe and the European Union. In the UK, they already have a 10% deal. So they're saying 15% is actually worse than we negotiated last summer. And then for the European Union, the fact of the matter is, for some certain products, having a 15%, 122, stacks on top of already most favored nation product. And they said they will not ratify the deal if that's the case. So this is why this man potentially is getting very frustrated, is going to be on a lot of calls with his counterparts. Yeah, it's confusing.
Yeah, this gets messy, and it's going to take some time to figure out, and that work is happening in real time. Thanks to the Ambassador for making some time for us this morning. Equity futures on the S&P positive here by 0.3%. Equities higher going into the opening bell with an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. In his State of the Union address, President Donald Trump praising the operation in Venezuela that captured former President Nicolás Maduro. The president saying the U.S. has received more than 80 million barrels of oil from Venezuela in the last month. He also awarded the Congressional Medal of Honor to one of the helicopter pilots involved in the raid. The family of Nancy Guthrie is offering a reward of up to $1 million for information leading to her recovery 25 days after she was taken from her home. The family is also donating $500,000 to the National Center for Missing and Exploited Children, and Guthrie made a direct appeal to anyone who may have knowledge of the case to come forward. And Warner Brothers Discovery says a new $31 a share buyout offer from Paramount Skydance could lead to a better deal than its existing agreement with Netflix. In a statement, Warner says it's not withdrawing its recommendation that investors support the Netflix bid. It says the sweetened Paramount offer, however, does meet the threshold for further talks. That's your Bloomberg Brief. John?
Never-ending story. Yahara, thank you. How sick is everyone? of that story? Just wrap it up.
Honestly, the more I see this story, the more I think, more money, more problems. I mean, at a certain point, they're just trying to up the cost, and then if President Trump gets in the play.
I just hope it means more films.
Ellison, that's not likely.
Wasn't Ellison at the State of the Union
Yes,
last night?
David Ellison was a guest of Senator Lindsey Graham.
There you go.
Very interesting.
Very close to Republicans. We'll see how this turns out. Up next on the programme, we'll set you up for the day ahead. Plus, Bloomberg's Ed Ludlow previewing the main event this afternoon, NVIDIA earnings after the closing bell. Ed, up next.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
We have a lot of countries out there that for a long time have had 10%. We have some that have higher at 15%. And so our goal with all of this is to have continuity. We want the countries, we want the companies, we want people to understand that what we were doing before, we're going to reconstruct with alternative tools.
So that was the US Trade Representative Jamieson Greer, Ambassador Greer, doing his best to make this simple, but it's complex and it's difficult to communicate to people right now. A lot of people are confused after the ruling on Friday, where we are, where we're going, where we're going to be 12 months out.
And a lot of that, I mean, to be fair, is directly from the president because it came at 10%, and then the next day we got a Truth Social at 15%. Then the order actually went into practice at 10%, and now we're trying to understand exactly what it is, what it's going to be, and how it's going to affect negotiations with countries around the world.
You get a series of investigations. It was almost cleaner with AIPA in many ways, which is why they went in that direction.
Exactly. So now a question of the uncertainty weighing on potential employment, on potential business plans, and this is what economists are looking for.
The trading diary looks like this morning. Big day coming up. Later on today, lots of Fed speak, Barkin, Schmidt, Muslim after the market close. The big one. Results from NVIDIA. But keep an eye on this one too. earnings from Salesforce. Tomorrow, another round of claims, plus Fed Governor Bowman testifying to the Senate, and US-Iran nuclear talks restarting in Geneva and going into the weekend. One more data point for you on Friday, PPI data. Let's turn back to that big story, the main event, earnings from the world's largest company. Bloomberg estimates projecting NVIDIA's free cash flow to surge to record highs. Ed Ludlow joined us now for more. Ed, looking forward to your coverage today, sir. What stands out for you?
Yeah, it's the ultimate sentiment lever for the AI trade, right, where the market goes into this and wants CEO Jensen Huang, with the words that he chooses, to project confidence. But actually, if you look at the forecasts for top-line growth, what the hope is for the guide for the current period, the fiscal first quarter, they've set themselves a really high bar, right? The data center business continues to grow. They've given quite advanced notice on the roadmap for next-generation high-performance compute systems, and they've not yet really tapped into China. So all of that stuff's on deck. But, you know, for all the numbers, I'm very happy to go through them always. It really does come down to what the main man says.
We don't have a ton of time to go through all the numbers, Ed, but I am just interested in one specific angle. The diplomat.
Yeah.
The diplomat, Jensen, and his ability to stay close to China and stay close to the US. How's that working out?
Yeah, so I mean, NVIDIA's guided that nothing will show up in the fiscal fourth quarter from China, but, you know, he's continued in the interim to walk in front of cameras and talk about how important it is to do business in a market which dominates AI research and where a lot of the engineers are, with, we are an American company and we abide by American laws. And actually, nothing's really changed in that, other than at CES at the very start of the year. He couldn't resist the urge to say, we'd given you this forecast that over 5 fiscal quarters, we'd hit $500 billion of sales for our current and next generation systems. But I think it could be bigger, because China might come into play. You know, he told Bloomberg's Ian King that pretty explicitly. And so in the interim, he's continued to do that, you know, meet with people that are important both in China and the United States, but then formally say, here's our position. We're an American company and we'll do as we're told.
Ed, good luck today. Thank you, buddy, as always. Ed Ludlow of Bloomberg. He'll catch up with the team on Bloomberg Technology in about 2 hours from now, and then later on this afternoon, it's the main event. It's the earnings report from Jensen and the team.
So I've been trying to think through what the surprises could be. Number one surprise, big investment in Anthropic or withdrawing cash from OpenAI. Big question in that drama. Second question, not the saying that they are. I mean, I'm just trying to make it spicy. I mean, let's talk about the drama that could happen after the bell. Second question, CapEx, right? How much are they planning on that? Third of all, how high are their constraints? This is something that we were hearing about earlier. And then 4, how much is attention going to be diverted to Salesforce? The idea that this actually could suck the oxygen out of the room, even though it's a much smaller beast, just because of all the drama around software.
I want Jensen Huang to answer questions about Blackwell and how much China potentially relied on Blackwell chips to train DeepSeek. And what are the conversations he's having right now regarding China and how much his technology is leaking to Beijing?
I remember that statement from a year ago. There were 2 words in it that just stood out for me. And I queried those words at the time. Export compliant. They said it was export compliant. How did they know?
Well, I don't think they knew in terms of if it was export compliant, if it was a Blackwell chip. Maybe they thought it was export compliant because they thought they were using a lesser version of an NVIDIA chip. But to be honest, I don't know, and I hope he can answer this.
NVIDIA up in the pre-market, up by 0.9%. That story has stalled. That rally has stalled over the past 3 or 4 months. That's notable given the amount of spending we're seeing from elsewhere. Look out for the moves a little bit later on this afternoon. Coming up tomorrow, full reaction. We'll catch up with Ed Yardeni of Yardeni Research, Emily Rowland of John Hancock, the Lumen Technology CEO, Kate Johnson joined us, and John Bilton of JP Morgan Asset Management. Live from New York City this morning. Good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Futures higher to kick off the show. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, NVIDIA faces a high-stakes earnings report as investors look for fresh evidence the AI spending boom remains on track.
Private credit fears intensify. UBS warns defaults could hit 15% if AI triggers aggressive disruption among corporate borrowers.
And President Trump defends his economic policies in the State of the Union address and issued another warning to Iran.
So some of the stocks you're watching this morning, it's the deal that will never go away. I think this is like the next year and some change of our life. And I'm talking about Warner Brothers Discovery. So let's look at the next plot twist. Warner Brothers Discovery board members have reviewed Paramount's new bid for the Hollywood giant and now say it might be superior to the Netflix deal. I think it's notable that Netflix is gaining off the back of this. They'd get a breakup fee and they don't have to take the extra leverage on their balance sheet.
Exactly. I don't know that their shareholders, at least all of them, really want it anyway. NVIDIA earnings after the bell expected to move the stock by 5% in either direction, or at least that's what's happened in the historical average. Its outlook will provide investors hopefully a better understanding of the impact of AI on markets and on the economy throughout the year. Right now, NVIDIA stock, and obviously a huge mover that could shape the way the indexes go, up about 0.8%, Danny.
It feels like a lot is at stake with a very shaky market. Let's dig into it with Bloomberg Tech's Ed Ludlow. Ed, this is a company that typically beats. Is good news going to be good news this time around for NVIDIA?
Yeah, I mean, the options market pricing of a 5% swing either way is interesting because actually NVIDIA's fallen very modestly in 4 out of the 6 post-earnings sessions. And, you know, going into it, the market is basically going to look at the forecast for the current period, fiscal first quarter, hope that NVIDIA exceeds what they think it will say by $1 to $3 billion. And then it's all about, you know, the confidence projected by Jensen Huang, the CEO, that everything's intact. They're going to grow revenues overall in in the fiscal fourth quarter by almost 70%. That's not at the same pace it was at periods last year and the year before. But one thing that they have done is set an incredibly high bar with margins. Margins right now are at 75%. And so the market's like, wow, NVIDIA's become very good at not just dominating literally the volume of sales and the proportion of GPUs that go into data centers for both training and inference of AI, but they're doing it by owning more content in the server design and doing it very profitably. Look at their cash flow as well. That adds to how high a bar this quarter will be.
By the way, I didn't even know we needed this lesson, but some people apparently still say NVIDIA. So I want to set the record straight. I don't know who still does that. It's like saying Scott Bessent, but it's obviously NVIDIA. I want to just take a step back and look at this stock, because there's a lot of hand-wringing on tech, but it's still up over the last 1 month, 3 months, 6 months, and it's up 1,400% over the last 5 years. So they're crushing it, but, or maybe because they're still the king when it comes to especially training, right? We heard about the deal with Facebook and AMD. They're talking about inferencing. We talked yesterday with a much smaller player, Sambanova. They're also better for inferencing. But for training, it doesn't seem like anyone is even close to the level that NVIDIA is with its chip design.
Yeah, other than perhaps some of sort of the ASICs and specialized silicon that, you know, thinking Google TPU and what Amazon is doing with its Trainium platform. But, you know, on the stock, right, you can look at it either from purely stock performance and how high a bar that sets, triple-digit gains in prior fiscal years, or look at it on a multiple basis, right? I think NVIDIA right now is trading somewhere 24, 25 times forward earnings. Over the last 5 years, the average has been 38 times. You know, it's kind of taking a bit of a breather right now. But, you know, the reality is, if you want to compare and contrast with AMD and NVIDIA, for example, you know, NVIDIA will do $60 billion of data center sales this quarter, just data center, before you take into account the rest of it. AMD's total revenue in any given quarter is $10 billion. And so it's very hard to track, like, if there has actually been a change in the story. NVIDIA dominates and has a technical monopoly, and AMD's trying to bridge the gap. And on training, you know, first the Hopper platform and now Blackwell, it's been the go-to.
Ed, I just want to look at the forward earnings. We're trading at 41 times forward earnings for NVIDIA. So maybe you're thinking Netflix,
41, yeah.
Netflix trading at 24 times forward earnings. But look, Costco is trading at 50 times forward earnings. So your point is clear. They're just not overvalued in a way that the market needs to be worried about. They're nothing like a Palantir, for example.
Yeah, and you know, again, this is why people are also now looking at the margin level and free cash flow. It's like astonishing what NVIDIA's been able to do, not just in growing its top line, but carrying the bottom line with it. And outside of whatever Jensen Huang will say, Colette Kress, the CFO, is listened to. People pay attention, first initially to her letter that comes just after the earnings statement, but then on the call, because they want some projection of confidence that they can maintain both that margin level and the direction of free cash flow. And of course, like in the news cycle, we're tracking very closely what NVIDIA is doing with its cash, or not doing, as the case may be, you know, when it comes to OpenAI and, you know, the prior commitment of $100 billion not being a commitment and now participating in this latest round.
All right, Ed Ludlow, looking forward to your program. Bloomberg Tech that kicks off at 11. Palantir, by the way, even after falling 27% this year to date, still trading at 100 times estimated earnings for 26. So very heady valuation there. Warner Brothers says a new buyout offer from Paramount could lead to a better deal than its existing agreement with Netflix. Bloomberg Tech's Caroline Hyde, the other anchor of that program, joins us here on set. I like a bi-coastal show.
Yeah,
you know?
me too. Get us everywhere.
So what do we know about this deal? Why is it that it may be better? Don't they know if it's better or not?
It's good enough to reopen conversations, but they're not going to determine as of yet whether it pips the Netflix deal. They're still recommending the Netflix tie-up, but they're going to ongo these negotiations with the team from Paramount Skydance. The determination hasn't been made, and ultimately it's because I think the market was a bit let down. Maybe the board was a bit let down. There wasn't $32, it was $31 instead. But still, the determination from the Ellisons is there that they want to get their hands on Warner Brothers Discovery in all its glory, all the parts of the business, whereas of course Netflix doesn't want the cable side, which is where the question marks come as to whether $31 does beat out the offer that's currently on the table from Netflix. But what's so notable is that this is getting down to the wire. These guys are on the phone until midnight. They are forced to put the phone down on Monday night because they're still trying to negotiate up until that. I had that 7-day window of negotiations. It was then deemed good enough to recommit, to start opening up again. And then if they do decide, if the board does decide it's good enough, well then Netflix has 4 days to respond.
I thought that the price was $34 for Warner Brothers Discovery. Isn't that what they were looking from Paramount to make it attractive? I mean, what is it going to take for not only just to reopen the negotiations, but to actually go with them?
Well, there's so many other bits involved in the deal. Like, for example, if they don't get regulatory approval by September, you start getting this ticking fee. So money will go to shareholders if it's delayed a little bit. So that's trying to take out the angst that regulators are going to push this back.
Ticking fee.
Yeah, the ticking fee. But there's also other little sweeteners that are introduced in there. The fact that they're going to be paying off Netflix in terms of a charge if they do undo that deal. The fact that they're saying...
It seems pretty great for Netflix, by the way, if that's how this deal shakes out.
It's, well, that's what's
or maybe
wondering
the
about the
shareholders.
investors. Yeah, the shareholders like this. Look, the shareholders are pushing the shares up a little bit today. The question mark is how much does the Netflix executive team want this asset? How much are they willing to use their cash hoard to pile on in? Because look, we know they've got the financial firepower. It's just whether it makes sense ultimately.
Good point. Caroline, thank you very much. Caroline Hyde, who of course will join Ed Ludlow on Bloomberg Tech today at 11 a.m. New York time. And we'll also be covering this deal on Bloomberg Deals. That show airs today at noon. Let's zoom out from single stocks to the broader market, to AI risks, and the economy. UBS strategists say that private credit default rates could surge 15% if AI triggers an aggressive disruption among corporate borrowers. That follows Blue Owl's new limits for retail investors in one of its private credit BDCs, and a report from Citrini Research that says AI could lead to a double-digit U.S. unemployment rate by 2025, and also discussed fears in private credit. Let's discuss with Bloomberg senior reporter Silas Brown. Silas, I gotta say, it feels like we've hit a fever pitch of whether it's Boaz Weinstein, Jamie Dimon, one of the people from The Big Short fame, Danny Moses. It's like a who's who of warning about private credit right now.
Yeah, and as I sort of said earlier, I mean, if private credit was a species, it's been able to evolve without predators for most of its history, and now you're seeing kind of increasingly critical voices. I mean, a few years ago, it was quite hard to find a public, someone who would publicly be critical of private credit. Now, I don't think you need to walk too far to find someone who has some choice views about the industry. I mean, such is the nature of sentiment. I mean, I think with the UBS report and default rates, I mean, I think I'm always default rates are kind of funny in private credit because of the bilateral nature of most of the transactions. They can renegotiate terms, and so there's somewhat flexibility when it comes to default language. I think the interesting thing that I'm kind of paying attention to is, or will be paying attention to in the long term, is recovery rates. You know, whether or not private credit that often has more control in negotiations, given that they have bigger positions in the capital stack, whether or not their recovery rates can kind of match or outbeat the syndicated markets.
Hey, I wonder, I was reminded in the Citrini Research piece at the end, in the comments by, I think, a guy named Peter, and that's all he gave in terms of his identity, that it doesn't really matter whether or not AI is going to eat the lunch of software as a service companies, but the perception is enough to be a problem for negotiating the price of those services and then the default rate as well, Silas. Have you had those conversations with investors?
Yeah, I think it's it's to do with does the dog wag the tail, or is it vice versa? And I mean, I think in this, I mean, look, we still see a relatively stable market. I mean, there's not a huge amount of stress yet. But I mean, I think that hasn't impacted sentiment too much. And I think people can see that with a kind of paradigmatic shift in technology, in such a darling of a sector, that will surely have quite profound consequences on not only private credit, but by the way, also private equity. I think Look, the deals that we're tracking now, I think we're paying very close attention to whether or not there's margin pickups. I mean, I think you can see that in the broadly syndicated markets to a certain extent already. And I think the fair expectation is either 50 basis points, 100 basis points pick up on certain credits that will not be able to make a particularly strong case on their kind of like health in the mid to long term.
Hey, Silas, as always, thank you so much for joining us. You are the most brilliant person on this. I will sing your praises from the rooftops. That's Silas Brown, part of our private credit team. Speaking of which, in the next hour, we're going to talk more about this. TKO co-founder, Mathieu Chabran, they manage about $60 billion, nearly half of which are in private credit.
All right, let's get a check on what's going on in futures today. We had a little bit of a rebound yesterday, and that continues today. I think we were up 0.7% on the S&P at the close. Now in futures, up another 0.5% there, 30 points on S&P futures. NASDAQ futures up a little bit more, and the small caps are gaining as well. Let's get a look at some of the single stock stories that we're following this morning.
Indeed, Kava is one of them.
Kava.
Defying the slowdown. I mean, it has been really bad for the fast casual out there, but Kava is delicious. I'm not afraid to buzz market them. They've raised prices.
I've still never been there.
Oh, it's so good. I love it. They see customers buying more expensive items on the menu. Is this me? It might be me. Shares are up 13%.
I always think it's just like pita.
No, you know what? It's kind of like
hummus.
It's like the slop bowl that everyone said was dead. I love a slop bowl, and Kava does an excellent slop bowl.
All right, TJ Maxx sales forecast below estimates as the discount retailers boost from shoppers looking for deals may be fading, and the stock today, which has been an absolute killer, down 1.33%.
And Lowe's results and guidance signaled a slowdown in housing demand. That's not what we saw from Home Depot earnings earlier this week. They did well. Home Depot falls 3.4% in the pre-market.
HP, Hewlett-Packard gave a profit outlook for the current quarter on the lower end of estimates, citing tariffs and the rising price of memory chips, and maybe worse name recognition since they changed their name from Hewlett-Packard, which we all knew, to HP.
Who was that? I can't remember the other company that recently did this.
I mean, everybody is doing that. Just like Ernst & Young is now EY.
It's so
That's supposed
sad.
to be catchy.
I miss our colorful, descriptive world.
WD, is that Western Digital?
Oh, yeah, which, again, is very confusing. Coming up on the show, President Donald Trump defends his economic record, accuses Iran of reviving its nuclear program. More on his primetime address. We'll have the State of the Union wrap-up coming up after this commercial break.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of the wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make a novel style.
Bringing you up-to-the-minute global news whenever and wherever it happens.
I'm Hesla de Amen in Davos, Switzerland, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Let's get now to high interest. Look at what's making headlines around the world. U.S. mortgage rates slipped last week to the lowest level since 2022, generating more refinancing activity. Latest MBA data, that's the Mortgage Bankers Association, showing that the contract rate on a 30-year mortgage dropped 8 basis points to 6.09%. Refinancing has increased in all but 2 weeks this year, but the decline in mortgage rates has yet to inspire buyers as the housing market struggles to gain momentum. U.S. Trade Representative Jamieson Greer said President Trump will sign a supplemental proclamation to increase the tariff level to 15% where appropriate. He spoke on Bloomberg Surveillance.
We want to have the 10%, and we're looking about how to implement the 15% that the president indicated, because we want to have continuity. We want the countries, we want the companies, we want people to understand that what we were doing before, we're going to reconstruct with alternative tools, because we want to keep going, maintain the policy.
Just so we're all unclear on that. President Trump defending his economic record in the longest ever televised State of the Union address.
One of the primary reasons for our country's stunning economic turnaround, the biggest in history, where the Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years, were tariffs. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis.
It was a nearly 2 hours long speech. After a recent poll found the majorities disapprove of Trump's handling of the economy and are concerned about affordability. That remains the cost of living at the center of the upcoming midterm elections. Danny?
Let's bring in Bloomberg Washington correspondent Tyler Kendall, who joins us from the White House. And not only was it long, Tyler, it was the longest presidential speech in history. What was the outcome of it? What did we glean?
Well, Danny, at this point, I think the broad-based outcome is that President Trump largely stuck to the key theme of domestic issues throughout that speech as the White House plays defense on affordability. It felt like there was this bid to convince Americans that the economy is in better shape than polling has been telling us voters are ultimately feeling about it. President Trump did that by touting his economic policies already in place, like tax cuts under the One Big Beautiful Bill, and then doubling down on his tariff plans, threatening additional levies against countries if they try to renegotiate their trade deals after that Supreme Court tariff ruling. Of course, those justices were front and center in the chamber last night. I don't have to tell either of you that the administration wasted no time putting into effect that new broad-based 10% levy under a different federal authority. As you just heard from the USTR Jamieson Greer last hour on Bloomberg Television, perhaps that rate could go up to 15% in some cases. But there really wasn't a lot of talk last night about new policy proposals from President Trump on the economic front, though he did appear to float a plan that would help workers without employer-backed retirement savings accounts as a potential option moving forward, though we didn't really get much details there. Instead, it seemed like President Trump was really calling on Congress to codify some of the ideas we've already heard him float, such as banning institutional investors from buying single-family homes, or his idea when it comes to health care that would shift federal subsidies from insurance companies to American consumers. The thing is, these plans don't have that much backing in Congress, even among Republicans, which could spell trouble for President Trump if he wants to see them enacted ahead of the midterms. And that's really what this is all about as we careen into November and we look at that polling. Matt mentioned that poll earlier in the program when President Trump is playing defense on the economy. I'll point you to that same Ipsos poll out earlier this week that actually shows that Americans confidence in both parties when it comes to handling the economy is split at the moment, which could be troublesome to both parties. Matt and Danny, that's why you saw on the Democratic side, Democratic Governor of Virginia, Abigail Spanberger, deliver that rebuttal address because, of course, she swept to office on addressing those affordability concerns.
You know, I've heard a lot of commentators on both sides of the aisle say that he did a good job at what he was trying to do, you know, selling, as all presidents do, selling his record so far and, you know, hyping up his base for the future. But as usual, he tends to exaggerate a lot, saying it's the greatest economic turnaround the country's ever seen, or that the market is the hottest in the world, even though so many other national benchmark stock indexes have outperformed the Dow, even though it hit 50,000. Does anyone push back on this exaggeration? I mean, is there any fact-checking here? Did Spanberger do that?
Spanberger didn't do it exactly. She more framed her response as being a rebuttal to his overall rhetoric. In fact, she brought in some factions that we didn't even hear from the president last night, such as President Trump's relationship when it comes to Chinese President Xi Jinping. I mean, our own fact checkers at Bloomberg News did have a live blog last night that pointed out some of these exact figures that you're talking about, Matt, because it's really important context that we often do hear or don't get from the president, particularly as we hear voter concerns around affordability. And yes, as inflation comes down, but still those price levels remain elevated. And that is going to be really difficult for Republicans as we head into the midterms and we try to glean what their strategy is going to be to address these voter concerns, because Americans have made it clear time and time again they are not with the president when it comes to affordability.
Tyler, thank you so much for that wrap-up of a very long night last night. Tyler Kendall reporting from the White House. And we're going to get more reaction to the president's State of the Union address in the next hour. We'll speak with Chrystia Freeland, Canada's former deputy prime minister, who's now advisor to Ukraine's president and Bloomberg contributor, and Aline Kmark, senior fellow at Brookings, who served in the Clinton White House. Those conversations coming in the next hour. This is Open Interest.
How the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burrell.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Check on futures ahead of the opening bell. We're looking at gains for the S&P, the NASDAQ, and the Dow Jones Industrial Average. 0.3% on the S&P after the comeback that we saw yesterday. When we come back, Alpine Saxon Wood's Sarah Hunt says if NVIDIA earnings disappoint, the market may have a real problem on its hands. Clearly, it's the most valuable company in world history. She joins us next. This is Bloomberg Open Interest.
Estava sitiada.
Nisso eu começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg. Moments away from the start of trading on this, it's Wednesday, right? On this Wednesday morning. This is Bloomberg Open Interest. I'm Matt Miller. Second day of a rebound for the benchmark indexes. S&P futures up 0.4%, getting back closer to that 7,000 level that President Trump mentioned yesterday. NASDAQ futures up about 0.5% this morning, and the small caps gaining as well. On the New York Stock Exchange, you hear the opening bell, and AmeriCares ringing the opening bell there. More interesting, really, is Intapp down at the NASDAQ market site. This company had a 10% gain yesterday on merely a mention of working together with Anthropic. Should be noted that the stock has still lost well over half of its value year to date. So, but you know what? Who cares?
It's so weird because Anthropic is the reason it's lost so much of its value and the reason it rallied yesterday. It is the kingmaker of companies. By the way, I have an interview with a very big Anthropic investor, Lightspeed, on my Bloomberg deal show.
Your deal show?
Yes.
The fourth?
Yes, the fourth episode.
Installment of your deal show.
Yes, we'll be speaking to one of the co-founders of Lightspeed and a lot of Anthropic news.
At noon today.
At noon today. Please tune in and stay with us here on Open Interest because It's another plot twist. Warner Brothers board members review Paramount's new bid for the Hollywood giant and now say that $31, it might be superior to the Netflix bid. Netflix now gaining a big bid after that, up 2.5% because they get a breakup fee and then they don't have to spend money on Warner Brothers, Matt.
Yeah, absolutely. Could be fantastic for Netflix shareholders, although watch out, if Paramount gets those assets, maybe things will change. Maybe it'll be a different world. NVIDIA earnings after the bell are expected to move the stock by 5%, and well, either direction, that's what's happened historically when it puts out earnings in recent times. Its outlook is hopefully going to provide investors with a better understanding of the impact of AI on markets and the economy, and I guess it has to knock the cover off the ball in order to do well. Let's bring in Alpine Saxon Woods Chief Market Strategist Sarah Hunt. Sarah, obviously we don't know what will happen with the earnings or the stock or the outlook, but if
or
they
the
disappoint,
entire world.
Yeah, exactly. If they disappoint, how big of a problem is that for President Trump's S&P 7,000?
I think the problem is going to be much more along something like the outlook or what people are seeing, because I don't expect some sort of big financial disappointment, but I think that there's been so much riding on this, and NVIDIA has stayed to be the most important group, the most important stock of this group in all of this, and the big wave of CapEx that's carrying along so many other folks. You need to see that keep going, I think, here. You don't want to see any wavering on that. So I think that there's always a lot at stake when they report, because they're both such a big part of the S&P index and such a big part of the AI story, that everyone is paying attention and is looking for any nuance that they can get.
Well, what is the dividing line between whether, because they usually always beat. I think it's 12 earnings beats, 13 sales beats in a row. Last quarter, though, they beat and they sank after their guidance.
Which is why I don't think it's a financial issue. They're not going to miss. It's more that what is the expectation of what they say going forward versus it's always about what are you going to do for me next time? What are you going to do for me next time? Especially in a space that's growing so fast and that CapEx is such a big part of. So I think it's really, when I say disappoint, it's much more along those lines than it is about actually not making their numbers, because that's not been an issue for them.
We're still just 2% away from that record high, right? And although we've been flatlining for months now, there's been a rotation going on under the surface, hasn't there? Because if you look at year to date, the losers, you've got the hyperscalers in communication services, you've got the IT stocks, and those are the gainers have been the sort of old economy stocks that were counted for dead the last couple of years.
It's a broadening out and a rotation that was much more, I think, sharp and fast than people expected. But if you look at the top of the S&P, the top 7 members are still 40% of the S&P, and they're not really, except for Microsoft, which has done poorly year to date for a variety of different reasons, they're not suffering the same way that software as a sector is suffering. They're not suffering as badly. So you've got some great, the industrial stocks have done very well. You've seen a number of industrial companies come out with better numbers, and the stocks have moved really far. It's been a very punishing in the other direction if there is an issue and or that sector is under the AI scrutiny of, oh, we're going to disintermediate your entire business. But the biggest components of the S&P have actually been doing okay, not fantastically, but okay, which keeps the index looking a little better than people would think, given the massive rotation and some of those drops that you've seen.
Well, one of the things I've been thinking a lot about, and please don't roll your eyes at me, this concept of Knightian uncertainty, come up with by Frank Knight in 1921, an economist that basically talks about the idea of maximum uncertainty, Knightian uncertainty. It's this idea that there's this unmeasurable risk, and we're living in true uncertainty. It feels like that moment now, where we've had a massive shock, and like any outcome is possible. The AI robot overlords might overtake us, or it might be obsolete. Is that what you're seeing in this market? It is massive uncertainty, so that just means we won't know the answer, and the swings will be massive as we try to understand every possible outcome that might come from this technology.
I think there's absolutely something to that. I think there's also, you can't prove a negative, right? You can't say, this will not hurt my business, and I know this for certain because X. And every time people start to look and play with the tools themselves, and they think, wow, this could be X for my business, this could be this, you start to get this I don't know where it's going to take us. I don't know where we're going to end up. And big technological changes like this are hard to game out. You know, even when the internet started, where it ended up was not where people thought it was going to be. And some of the champions early days were not what ended up being the best champions. This is a massive change in many ways, but at the same time, it's a refinement of things we've already been doing. So it's really difficult to game that out with any kind of certainty. And then you just layer on a bunch of geopolitical questions on there, and it's hard.
What do you do in the meantime then? Because you can't game this out. We can't know what this will look like. I doubt we'll have any answer to what AI is going to do for us by the end of this year. So what do you do in the meantime when you see these massive sell-offs in corners of the market?
I would actually push back a little bit because of something we were talking about this morning. The CEO of Workday pointed out that both OpenAI and Anthropic use Workday software. So clearly...
But see, that's one of the possible outcomes, that software survives. But, like, you can't say that with any certainty yet.
Well, and I think that is that, like, there is this circularness of both using the tools, and the tools are going to take away the business, and yes, we need this, and we don't need that, and what can I really get rid of? Human nature is not to whole-scale rip out big systems and replace them because this is a little bit better than that. There's going to be an and to all of this. We just don't know what that and is yet. And for some companies, they have got moats that really are defensible. And right now, there are wholesale things being sold as groups. So looking at those and going, okay, where do I really think that there is some proprietary stuff here? And for a lot of companies, it's data. Proprietary data is not, if it's not free on the internet, some of those tools can't use it to the same degree, right? So I want to go ask something about what's going on in near-term financials. I can use the Bloomberg Ask Blee, because they have much more proprietary financial data than some of the other models do. All of this, though, is so nuanced relative to how big and different this is compared to what we've been using before, that it's just hard to filter that through, I think, right now.
By the way, Ask Bee, I'm glad you bring it up. It's still in beta, but I've been using it a lot as well on the terminal. Tells me that although the Dow was up 15% last year, the DAX beat us at 22%, the FTSE was up 24%, the Chinese Shanghai Comp up 25%, the Japanese Nikkei was up 31%, as was the Canadian benchmark index, the IBOV in Brazil was up 35%, the Hong Kong HSI was up 35%, the South Korean Kospi index was up 79%. So it's not the best performing benchmark in the world, right? When President Trump says this is the hottest market in the world, maybe he's talking about some other measures like foreign direct investment or, the lack of regulation. But do you still only want to invest in the U.S. or do you look internationally?
So we also look internationally, and I think you have to. But if you go back and take a look at a chart, the S&P against the world indices as a whole, it's just turned up recently, but it's a long decline down, right? So it's a time frame issue as well. The U.S. markets had been outperforming most other markets. The dollar got a lot weaker last year. That also helped other markets outperform. And there was this move of everything is overvalued in the U.S., or a feeling of, wow, we're really hitting peak valuations or stretched valuations. Where can we look where things don't look so expensive? So it's a relative game, but the time frame matters a lot. International has underperformed for periods of time, for long periods of time. If it's starting to outperform, it could outperform for some time. I mean, like, there is a balance there.
Well, but his point is that the changes that he's made have made this the hottest country and the hottest economy in the world. What he's done in his second term has been the most drastic economic turnaround this country's seen in history after the Biden administration. And I'm just wondering if that plays through for investors.
I think that there is not a politician in the world who doesn't want to take credit for things that are happening. I think that right now with the U.S. markets and the AI story, I would argue that that's been a huge push of the U.S. markets for the last several years. It's not only one thing. It's not surprising to me that politicians like to take credit for things because that's what they do. In the scheme of things, the technology revolution is a big deal. It's bigger in U.S. markets than other markets, but that doesn't mean that it's the only thing out there, especially since we're going through a massive CapEx move and people are now running from CapEx as opposed to embracing it, which they were doing before it took up 100% of everybody's cash flow. CapEx was the greatest thing in the world. Now that people are borrowing money to spend it, all of a sudden it's like, maybe we don't need that much. So there's a lot of things that are going on. So I don't want want to pinpoint down to one thing in any way.
Yeah, narratives are turning on a dime, it feels. Sarah, thank you so much for joining us this morning. Sarah Hunt of Alpine Saxon Woods. Let's get a check on your equity market right now, 10 minutes into your trading day, and we are higher by 0.5%. Despite all the churn underneath the surface, that is likely because NVIDIA is leading us this morning. It all could change after the close when they report earnings, but at the moment, they're up 0.75%, adding 4 points to the S&P 500. That's followed by a lot of the other big tech companies. You are seeing a turnaround just kind of at the bottom here in some of those credit card companies. They've been hit so far this week. You get some buying off the dip over concerns about what AI will do to them. Apple, one of the big losers. Home Depot, this is falling off the back of Lowe's earnings report. Home Depot, solid earnings report. Lowe's comes in and says that there is a slowdown in housing. It's a problem for us, so it hurts the entire sector. If you look at the sector look, every single sector except one is gaining, and that is consumer staples, if things haven't changed. Oh, now I am wrong. It was just consumer staples.
It was close.
It was close. Energy joins the pack, too. Consumer staples, though, by the way, I did a dive into this because I was thinking, why is consumer staples doing poorly? Diageo in Europe had pretty bad earnings, so all of the brewers like Morrison Coles, Constellation, all of those are falling today. And I was also looking in the staples and did not realize this, Matt, but Estee Lauder is in the staples index. Look, I wear makeup as much as the next woman, but is that a staple? Yeah. I don't know how makeup is a staple, but anyway, there's your fun fact of the day.
It sounds discresh.
It does sound discresh, super discresh.
All right, coming up, what will it take for NVIDIA earnings to impress investors? We ask our head of tech research at Bloomberg Intelligence, Mandeep Singh. He joins us next. This is Bloomberg Open Interest.
What's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed. This gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got
got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Let's get you some top calls, the analyst action that we were watching. First up, TD Cowen downgrades Workday to hold. Disappointing earnings leading to growth deceleration, down 5.5%, even though the big foundational AI models are apparently using Workday. That's not enough to save them. Up next, UBS upgrading IBM to neutral, saying that the competitive risk from AI to the company is now largely reflected in the shares after its worst sell-off in decades. IBM up 1.5%. Finally, Oppenheimer upgrades Oracle to outperform. They see a favorable risk-reward mix after the stock's most recent sell-off. Those shares up 1.75%. Matt.
I love the Workday story. I just can't get over it.
I'm surprised that it's not rallying off the back of that, though. That feels like something everyone would get jazzed about.
If you're worried that people are going to use Anthropic to eliminate your need to pay for Workday software,
right?
What does it mean to you that Anthropic uses Workday software and OpenAI and Google?
Right.
All of them could just make up a clone, but they don't for some reason.
But
why?
maybe they will at some point. I don't know.
It's a good point. All right, we'll be discussing it, I think, for a few days at least. Shares of Kava rising after it reported fourth quarter sales growth and gave an optimistic outlook, withstanding expectations for a slowdown. Joining us now is Bloomberg's Red Brown. All right, so what a move in the stock.
Yeah.
It's up 20%.
Yeah, no, it's...
Is that because we want slop bowls now?
People want kava bowls. I don't know about slop bowls in general. Kava is kind of still like a quite elevated product. They're able to deliver it at a price point that I think people still kind of find attractive. It's a little cheaper than Sweetgreen, maybe a little bit more expensive than Chipotle, but maybe a little bit more elevated than the latter. So clearly that they feel that their brand is getting out in front of more people. They talked a lot about how there's more awareness for the brand now. They've done this, they're growing stores at a high teens rate year on year, but they're doing it kind of like quite systematically. They're not trying to push the envelope too far, and it's kind of this slow, steady growth that they're seeing, and I think it's paying dividends now, despite some of the headwinds that we've seen in the fast casual industry.
Not push the envelope too far. Is that what Sweetgreen did? They just expanded too much? Well, what is the difference in that strategy?
Yeah, you could make an argument that Sweetgreen maybe expanded a little bit too quickly, right? You have to kind of think about like how big is the market for a $20 salad, right? Like there is clearly a market for it. People do want that. There are people that are very health conscious. They like the messaging of Sweetgreen. We like that the food is coming from these places that we can identify and things like that. But still, that market, they might have gotten a little out ahead of that market.
All right, Red, great to have you on the food stocks, and it's always a fascinating discussion, but we're going to get to AI now. Red Brown there covers the restaurants for us.
Will AI disrupt Kava?
Yeah, it's unlikely, right?
I think it's
unlikely, but it may reduce friction, right? So if you're thinking, I want to get hummus and pita, should I go to Kava or should I walk to like the supermarket on the corner?
Wait, how does AI do that?
It tells you which one's more expensive.
Oh, I see what you're saying,
right?
Yeah. Or I thought maybe just ask AI, just deliver me.
Or it takes a delivery.
Deliver me a slop bowl,
Exactly.
and I don't care what it is, just give me the cheapest one.
In any case, AI has been disrupting a lot of things, and but not NVIDIA, not the demand story for NVIDIA's chips. We're going to talk about what it will take for the earnings to impress investors next when we talk to Mandeep Singh from Bloomberg Intelligence. This is Bloomberg Open Interest.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in the stock market. This morning, S&P 500 putting up decent gains, 0.6% to 69.32, getting back closer to record highs. The NASDAQ as well, up more than 1%, 1.2% right now to 25,285. So the mover here is really NVIDIA. And wow, for the first time in my entire life, it's not in this panel. Will Shaker, what have you done?
It's still in there.
Ah, there it is. Whirlpool's up there. NVIDIA, it's only NVIDIA, is up 1.3%. Meanwhile, the maker of dishwashers here, which is far more important right now, is gaining 0.2
No, because David Tepper mentioned
of 1% on CNBC. I know.
Yeah.
Diageo is down 15%. You were pointing that out earlier, which is a problem for Molson Coors. What was the other one?
Constellation Brands?
Constellation Brands, exactly. I was thinking Continental Tires. And Netflix is up 4.7% as investors, I guess, salivate over the potential of a breakup fee, which is easy money. Workday still down 2.25% on slowing subscriptions and a bad outlook. Salesforce, though, up 1.6%. So I guess fewer concerns about CRM getting its lunch eaten there.
That is for sure. Let's talk about the big one on the board. It's NVIDIA. Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh, joins us now. Mandeep, so I mean, it's a company that's been beating on EPS for 12 straight quarters. That doesn't always mean that the stock rallies in reaction, though. What would be enough to get us to have a positive reaction to NVIDIA earnings?
I mean, you want to see upward revisions. With a company like NVIDIA and the scale at which they are operating, the buy-side expectations will always be higher. And so I would say the bogey will be higher than the 66 billion expectations for this quarter. But you want to see, them, talking about the Blackwell ramp going better than expected, which I do expect given Jensen has talked about that $500 billion pipeline, the $300 billion in revenue visibility that they have for this year. And look, all the hyperscalers raised their CapEx. So half of NVIDIA's data center revenue is hyperscalers. So from that perspective, the upward revision should happen. And the last point I would add is the AMD Meta deal yesterday. The fact that AMD had to give stock warrants to Meta for them to buy their chips, that's a very positive sign for someone like NVIDIA, where clearly there is more demand than what they could supply to their customers.
How much, though, better do they have to do than the expectations in order to continue to outperform? I mean, the stock, you'd think from what's been happening the last couple of months that NVIDIA has been down, but it hasn't. On a 1-month basis, a 3-month basis, a 6-month basis, it's still doing very well, and it's up 1,400%, obviously, over the last 5 years.
Yeah, it's tied to, I think, the memory pricing. Because when you think about that guide for mid-70% gross margin, I mean, memory is 30% of their costs. And we're talking about, a company that is a scale player that's using the latest HBM that probably has managed the supply chain far better than some of the other hardware makers. So it's really them being able to maintain their gross margins. I think that is what probably people are focused on, at least for this quarter. But in terms of demand visibility, they've already told us they have demand visibility for the next 4 quarters. And then you have to ask yourself, are the CapEx from hyperscalers going to really go down next year? no one has told us that, there will be a cliff or some sort of a tapering in CapEx, at least in 2027. So from that perspective, there is a decent amount of visibility when it comes to NVIDIA's.
By the way, what's the valuation? What are they trading at, like 40 times forward earnings?
Yes, but you have to factor in, this is a company that's growing top line 60-70%. At the scale they are at, with 70% growth, they're going to double their revenue.
Dude, I was saying that's not an incredibly high valuation. It's not the kind of thing that you see from Palantir. It's not the kind of thing that you see from Costco.
The only caveat is this is not recurring revenue. So hardware companies, chip companies are famous for the cycles they have. And when the cycle turns, which it will, it's a question of when, then, the estimates will come down, their top line will take a hit. We will see a year of, slow growth or no growth, which we saw in 2020. So from that perspective, that is inevitable. It's just this is a secular, I would say, uptrend right now, and it's very hard to see when that cycle will turn, given, everyone wants AI compute right now.
It's going to be a fun evening. Mandeep, thank you so much for joining us with a preview of it. That's Mandeep Singh from Bloomberg Intelligence. By the way, today is Deals Day. We're going to have a conversation. The IC today, the investment committee theme is AI infrastructure. So we're going to talk to a lot of experts on that. And we'll also have a conversation with Lightspeed co-founder Ravi Matrai on Bloomberg Deals. That's at 12 p.m. New York time. But first, coming up on this show, Goldman's Ben Snyder talks NVIDIA and whether AI concerns are overblown.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. The reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
is CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. More than 3 weeks after she was abducted, there's still no sign of 84-year-old Nancy Guthrie. But yesterday's emotional video post from her daughter, the Today Show Savannah Guthrie, has led to new interest. Correspondent Jonathan Vigliotti is in Tucson.
Over the past 25 days, tens of thousands of tips have come in. Many, we are told by officials, have amounted to nothing. Since that video was posted yesterday, the FBI receiving 750 tips. At any moment, any one of them could break this case.
The Guthrie family announced up to $1 million for information that brings Nancy Guthrie home. President Trump trumpeted the first year of his second term in office in last night's State of the Union address.
We have achieved a transformation like no one has ever seen before, and a turnaround for the ages.
The analysis is in.
Media analyst Matt Friedman, co-founder of the PR firm Tanner Friedman, says Trump had some unifying moments.
From the U.S. hockey team to veterans to a hero of the mission in Venezuela.
But Friedman doubts Trump won over people upset about affordability or the fatal shootings of American citizens by immigration agents.
He doesn't follow the typical leadership approach of leveling with an audience, of reassuring an audience, of providing facts and concern for people.
Michael Wallace, CBS News.
There's more snow on the way in the Northeast, and some people in New York City say the plows still haven't arrived to dig them out after the Sunday to Monday blizzard. Among them, this man on Staten Island.
It's kind of concerning that they've just kind of forgot about us, but at the same time, I'm sure that they've prioritized other streets.
A famous museum got a new leader today. Reporter Brad Gibson from France.
The French government is not wasting any time replacing the director of the robbery at the museum last year. Christophe Larabeau is expected to take over as head with the job of improving security, and he'll have a challenging job getting the Louvre's credibility restored.
We're learning more about how even mild cases of COVID or flu can have a long-term impact on your body. CBS's Michael George has details.
Researchers at Tulane found that both viruses can leave lasting lung damage after the symptoms fade. But COVID in particular can cause persistent brain inflammation and damage to small blood vessels after the virus is no longer detectable. This may help explain why long COVID causes brain fog, fatigue, and mood changes.
The Dow is up 108 points in early trading. NASDAQ ahead 255. This is CBS News.
Bonus.
The owner of an infamous mega mansion that's been under construction for more than 2 decades is being sued for shorting her contractor.
The home was featured in a 2012 documentary.
We never sought out to build the biggest house in America.
Jackie Siegel became known as the Queen of Versailles for the 90,000 square foot home with 14 bedrooms, 30 bathrooms, a 35-car garage. Altair Companies Incorporated is suing Siegel, saying she shorted them nearly $300,000 on a more than $9 million contract. The company had filed a construction lien against the property. Now it's pushing to foreclose on it. Peter King, CBS News, Orlando.
A trash collector in Huber Heights, Ohio, got the surprise of a lifetime. A suspect who'd run away from police during a traffic stop popped out of a garbage can just as the Senate man was about to dump the contents into the back of his truck. Police were nearby and nabbed him this time. Deborah Rodriguez.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube. We're streaming live on Bloomberg.com as well. Scarlett Fu is out today. Not to worry, Christina Aquino sitting in for Scarlett for the next 2 hours. Christine, welcome.
Yeah, thanks for having me.
Awesome. So Scarlett will be out for a few days, so we're in good shape. However, there's a lot going on in the marketplace. We've got green on the screen here. We're going to start off checking with Nathan Dean. He is Bloomberg Intelligence Senior Policy Analyst to get his thoughts on the State of the Union and the aftermath for Congress as they think about getting back to business. Mandeep Singh, Global Tech Research Head at Bloomberg Intelligence. He's going to talk to us about NVIDIA. NVIDIA reports earnings after the close here tonight. It's always a big report for not just the tech space, but for the market overall. So get his thoughts there. Sarah Hunt, founding partner and chief market strategist at Alpine Saxon, will give us her thoughts on the markets. And then Jenna Lauren, Bloomberg higher education finance reporter. She's got the big take story out today. It's about Harvard. And they are betting big on land, and now they're getting some, I think, coming in some mark-to-markets, which are less than positive right now. So a little bit of a challenge there for the Harvard endowment. We'll get some details on that. But right now, let's kick this whole thing off with John Tucker and a Bloomberg Business Flash. John.
All right, guys, this flash brought to you by IBKR. Will the U.S. Consumer Confidence Index be above 101 in March 2026? Turn your view into a trade at ibkr.com/forecast. Last trading day, March 22nd. Right now, the major averages, they are higher. You have 6 of the 11 major industry groups in the S&P 500 up right now, being led by information technology and communications services technology. This all comes ahead of results from NVIDIA and at the close of regular trading today. Ahead of that, shares of NVIDIA right now up 1 3/4%. And a bunch of earnings, Lowe's guidance falling short of expectations. They blame high borrowing costs and what they call economic volatility. Those shares right now down just about 4.5%. Then TJX's sales forecast also disappointing there. TJX actually up 1.8% right now. And HP shares, the quarterly profit forecast lagging some estimates. They're down 0.2%. Meantime, Julian Emanuel at Evercore ISI says the backdrop for stocks remains bullish.
Better earnings growth. It's likely going to be double digits when all is said and done in 2026. Long-term yields staying very, very, sedate, particularly when you think about the rest of the world. Stimulus and the potential for rate cuts. It says that stocks are likely going higher.
Right now, the S&P 500, 33 points higher. The Dow up 77 points. And the NASDAQ 100 up 298 points. When was the last time I was excited about anything?
Yeah, exactly.
I mean, I'm trying. But do this. You can follow along on your Bloomberg terminal. Just type AskB, one word, ASKB.
Yeah, you like it? It's
it's in beta. And so my question for the Bloomberg artificial intelligence tool, what will be the most important parts of NVIDIA's earnings tonight? And bingo, it's like pages and pages. Analysts will be looking for signs of sustained demand in upcoming quarters with production increases for NVIDIA's GB200 and GB300 server rack systems offsetting seasonal normalization. I mean, I go on and on. I love it.
Ask B. You're in the test group.
Anyway, we check the markets and other stuff. What are you laughing at? Right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Christine and Paul.
All righty. Thanks very much, John Tucker. Hope you have fun playing with AskB on the terminal. But in the meantime, let's take a look at stocks on the move and the companies to watch today. We have Bailey Lipschultz, who is Bloomberg News senior equities reporter, in the studio with us. Bailey, shall we start with HP? Disappointment over those memory prices.
Disappointment over the memory prices, though the stock right now is flat, so maybe not a big mover today, but on an intraday basis, had traded down as much as 3.5%, as much as up as 5.5%. So by the time I finish speaking, it'll probably be taking a different direction. But as you mentioned, pretty strong earnings, all things considered, but calling out the impact of memory costs hitting the company throughout fiscal 26, going into 2027. A lot of interest in spending, obviously, but when the companies making these memory chips aren't able to pump them out fast enough, leads to high prices. So HP management saying earnings will be at the low end of guidance. This is a company over the last 12 months down 46%. So one of the big losers.
Yeah, wow.
Circle?
One of the big winners.
All right, let's go.
Ticker CRCL, Circle. In the stablecoin space right now, up more than 18%. Biggest jump since September. This is a company that has seen shares rally by more than 130% since going public back in June. Quarterly profit beating expectations, stablecoin demand pretty much through the roof. This is a company who has a flagship stablecoin USDC. According to their earnings, 2025 ended with about $75 billion in circulation. That's up 72%. Big thing with stablecoins is if you're investing in crypto, you buy Bitcoin, you buy Ethereum, you have to take your US dollar and put it into something. So typically it goes into stablecoins. As we see sharp sell-offs in the likes of Ethereum, Ripple, and Bitcoin, investors or traders taking those dollars or Bitcoin and putting them into USDC. So one of the small winners in this sell-off. But again, right now up about 17%. Still, though, nowhere near its peak. Right now, around $72 a share, was north of 260 back in June.
Yeah, well, good on them, because crypto has been a challenging space for the last couple of months. All right, let's take a look at First Solar. Again, disappointing net sales outlook. Weighing those shares today?
Yeah, company talking down expectations for the year going forward, issues around production, issues around certainty around demand. Obviously, the administration here in the U.S. not really leaning into clean tech like solar panels. So First Solar, ticker FSLR, right now down about 14%. So that's trading at the lowest level since September. Still up more than 40% on the trailing 12-month basis, but a lot of uncertainty and a lot of chop around what the near-term outlook looks like here in 2026, with our Bloomberg intelligence analyst being more bullish on the long-term story. So maybe a buying opportunity, but still a lot to grapple with as it relates to solar panels being distributed and installed here in the U.S.
All right, Billy, thanks so much. Appreciate that. Billy Lipschultz, he covers all the equities for Bloomberg News. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Well, President Donald Trump offered a defiant defense of his policies and economic record, declaring the nation is, quote, back bigger, better, richer, stronger than ever before, end quote, in Tuesday's State of the Union address. Let's take a listen.
The roaring economy is roaring like never before. The Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years, were tariffs. We are doing really well.
All right, that was President Donald Trump last night's State of the Union address here. Let's get a little bit of a post-mortem here from Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence. He's based down there in D.C. Nathan, what's the thinking down in D.C., about the President's State of the Union address last evening?
So we didn't see a lot of forward-looking ideas. It really was just a recap of what President Trump has been pushing over the last year. And the reason why that's important is because many of us in the policy space, we were waiting for President Trump to come out and say, look, I want Congress to do what's called a reconciliation bill. So think of the one big beautiful bill, but another version of that. So think of healthcare changes, tax cuts, other things like tariff authorities. And he really didn't do that. He sort of touched about it, but he didn't come out and say that he wanted Congress to do this. And with his statement that he just said a couple of weeks ago, where he didn't think he really needed Congress to implement his goals, plus the thin layers of margin in the House of Representatives, makes us very bearish. We're only at a 20% chance that another reconciliation bill can pass this year, which means I think Congress is sort of out of the action for most things until the midterms in November.
Yeah, well, Nathan, of course, the president declared the nation is back bigger, better, richer. That doesn't seem to square with the economic reality for voters on the ground, and how does that, what does that mean, especially when we're heading into midterms and the economic reality is very different from the way that the president characterized it last night?
You just hit the biggest Republican challenge going into the midterms is exactly that. How do you convince the American people that the economic situation is good and that inflation prices are down and that food prices aren't up when a lot of people, at least anecdotally or in their wallets, feel otherwise? And so this is something the Republican Party has to figure out, and it's not going to come from the White House. The White House message is going to remain consistent between now and the midterms because President Trump is just not in his nature to come out and say, look, there's a problem. I mean, he usually comes out and says, look, there is no problem because we're doing great. So I think as we get closer past the primary season, so think past March, April, when
you're thinking here, because affordability is an issue. We saw it with the New Jersey governor election, with the Virginia governor election, and some other smaller elections around the country. Affordability is the big issue. And doubling down on tariffs after the Supreme Court struck them down, that seems to be a tough political game to play. What's the feeling in D.C.?
So, you know, when you think of this idea of the affordability, you want to drive costs down, but then you have this inflationary impact that we would argue related to tariffs, combined with the fact that the prediction markets are saying that the Democrats have an 80% chance of taking the House. And there's even some markets out there saying that the Democrats have a 40% chance of taking both chambers. That gets President Trump closer and closer to that dreaded status of lame duck. And we've seen this time and time again, that presidents in the second administration, as they get closer to this lame duck status, they begin to ignore Congress because political capital just isn't there, and they try and do things on their own, either via deregulation, which takes time. It certainly impacts sectors, but it takes time, or executive action. And so as we get closer and closer to this lame duck status, you're going to see President Trump use the bully pulpit more and more to try and drive corporate behavior. Think of, you know, his statement over the weekend where he tried to push Netflix to kick Susan Rice off the board. That's just going to be more and more evident as we get later and later into his presidency.
All right, Nathan, thanks so much. We appreciate that. Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence. His job is to make sense of what's happening down in D.C. for the rest of us folks here, and he does a great job of that. Christine, we got another, Monday was a rough day in the market, really rough day in the market, but yesterday bounced back. Today, it looks like we're bouncing back yet again.
Yeah, absolutely, Paul. Again, right, questions over this AI disruption. Is it really overblown? That scenario that Citrine Research laid out for us, a lot of people discounting that, like big names in the market saying that's not really a realistic thing that could happen in the next 3 years or so, right?
And I saw some research out from Bernstein, whose research I really do like, and they were saying pretty much the same thing, that, you know, it's really tough and it takes a long time to dislodge a lot of these incumbents in service software and software as a service. You think about the Salesforce.com just as an example. Really tough to displace those people. And if you are with better technology, which is fine, it's just going to take a while. So kind of putting it in context a little bit there. And we see that in the marketplace here. We got the NASDAQ up 280 points, 1.1%. Nice move back higher.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. Right now, the major averages pushing higher ahead of its results after the close. Shares of NVIDIA right now up 1.3%. Salesforce expected to address AI fears. It's going to report results later today. Lowe's forecast sales guidance for the full year. That fell short of expectations. It could be a sign the housing market's going to remain lackluster in the near term. Netflix, among the best performing individual stocks in the S&P 500, it was up about 5%. Warner Brothers Discovery says the new $31 a share buyout offer from Paramount Skydance could lead to a better deal than the existing agreement with Netflix. UBS strategists are saying private credit could see default rates surge as high as 15% if AI triggers an aggressive disruption among corporate borrowers. Right now, the S&P 500 up 33 points, the Dow up 91 points, NASDAQ 100 278 points higher. Remember that when this was a meme stock, the world's largest cinema chain sees more value in shrinking than growing. The CFO of AMC Entertainment Holdings telling investors there's a significant opportunity to keep closing underperforming theaters. The company has lost 99.7% of its stock market value since June of 2021. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Christine and Paul.
All right, JT, thank you so much. We appreciate that. Christine Aquino sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, streaming live at Bloomberg.com as well. NVIDIA reporting earnings after the close. Remember, NVIDIA, $4.75 trillion market cap. The stock's up 5% year to date, but it's up 50%, 50, over the trailing 12 months. So still a mega story in the stock market. Mandeep Singh joins us, Global Tech Research Head for Bloomberg Intelligence. Mandeep, what are you and what's the street going to be looking for, listening for tonight with the NVIDIA earnings?
I mean, it has to be the data center revenue and how much upside can they get from the China market, where we know, they are allowed to ship their product now. And then the hyperscale CapEx changes that we have heard, most of them have given a better than expected outlook on their CapEx increases, and that should translate into better growth for NVIDIA. So the sell side estimates haven't really caught up, but there, I mean, still, 70% growth is quite meaningful, and so we'll probably see a very high likelihood of, a beat and raise.
A
beat and a raise.
More than what we have seen in the last few quarters, given the commentary that we have heard.
Yeah. Well, Mandeep, as we've seen from the history of NVIDIA earnings, even something like a beat and a raise is something that markets have come to expect, and therefore NVIDIA becoming the victim of its own high expectations, right? So what do you think is the setup this time around heading into the release? Is it another one of these too high of a bar for them to overcome, or are markets actually more recalibrated in what they expect from the company now?
Yeah, I don't think it's too high of a bar, at least for this quarter. And the reason I say that is because they've said they have 500 billion pipeline visibility that includes forecasts for this year. So, the CFO has said a couple of times that, that $500 billion number is actually higher from what they've been tracking. And that's just a reflection of how well that Blackwell ramp up has gone there. And they have talked about Rubin, which is their latest architecture. So from the demand side, I really think, everyone wants their latest chips because power is still the big constraint. And even though TPUs have done well and Anthropic has talked about using TPUs, even Google is still getting their NVIDIA allocation. So it's not as if Google has, scaled back in buying NVIDIA chips. So net, I think, and the one other data point I would throw is the AMD deal with Meta. I mean, I thought, the fact that they were offering their stock warrants was really a sign that they wanted to be in the race, where NVIDIA clearly continues to have the most demand when it comes to their chips. Yeah.
All right, calendar year 2021, revenue for NVIDIA, about $27 billion, let's call it. 2026, $334 billion. Are you kidding me? Even by your standards, where your companies go crazy, that is ridiculous. What is their share of whatever market they're in, the chip market, the GPU, or whatever it is? How dominant is NVIDIA in that place vis-a-vis AMD and some others?
Yeah, I mean, they continue to have almost 85 to 90% share. And this market is growing, to your point, is growing, 70, 80% CAGR. So that's a kind of growth rate we are talking about. It keeps doubling every year. And that's what secular cycles are made of.
Dude, I've been doing this since 1986. I have never seen numbers like you guys are doing in AI. I mean, where's the risk? I mean, where could it go wrong? Because I don't think anybody's ever seen numbers this big and with growth rates this big.
Well, there will be an air pocket. So look at the build out of infrastructures in the prior cycles. There will always be double ordering. When you are in an environment where everything is supply constrained,
that's true.
You want to order more than you need. In fact, right now, I think everyone keeps saying if they had more chips, they would have grown faster. We heard that from all the hyperscalers. So there will be an air pocket, but there are no signs. I mean, all the hyperscalers raised their capex. So to think there is a cliff next year, it's like, yes, you can make that assumption. There will be a cliff eventually, but it's not on the horizon.
Yeah, well, all right. Well, we'll keep an eye out for those earnings for sure, Mandeep. I'm sure you will be too. So thank you very much for that. Mandeep Singh, Global Tech Research Head at Bloomberg Intelligence, taking us through what to watch for the NVIDIA earnings later on. So let's broaden that conversation into what we've been seeing in the market with regards to AI and some concerns over there. Let's bring in Sarah Hunt, who is the founding partner and chief market strategist at Alpine Saxon Woods, who's going to give us her outlook on markets. Sarah, we got to ask you first. AI disruption fears, overblown, just right? Where do you stand?
You know what? That's one of those things where the only answer is yes. Yes, it's overblown. Yes, there's more things it can do wrong. I think it's very difficult to parse out who is really going to get hurt, to what extent, and what time frame, right? Because there's a huge amount of immediate disruption the minute a headline comes out that says the entire sector is going to have a problem. Everything takes longer to implement, generally speaking, but AI has moved so fast and we're all catching up and everyone's trying to play with different models. It's really difficult to figure out exactly what that means and for whom and when that's going to happen.
Sarah, you were sitting here in studio with our good friend Mandeep, and again, I know a lot of tech analysts on Wall Street. He's the guy I trust the most on this AI stuff. He's really they've done a ton of work on it at Bloomberg Intelligence. But when you see numbers that big, growth rates that large, what do you make of it? Because we haven't really, you and I have been in this business a while. I don't think we've seen this, even with the internet.com.
I don't think that you've seen a technology arms race to this extent and to these numbers, to your point. You know, certainly during the internet build out, there was a lot of different pieces of that infrastructure that was being built out. But this is so aggressively fast and expensive at the same time. And I think that, you know, it's going to be interesting to his point about an air pocket, because CapEx was, everybody was excited about CapEx until it started to overcome cash flow. And now all of a sudden it's a question of how much is it overflowing cash flow and for whom and what does that mean? And so I wouldn't say that there's a complete and utter shift in how people feel about it, because it still is a race and therefore speed is going to matter more in many cases. But I think it's going to be interesting how this develops over the next 6, 12, 18 months because of that flip in the cash flow situation.
Yeah. Well, it seems like the general view in markets with regard to the AI trade is that it's entering this new phase where it's becoming more bifurcated. It's not a behemoth trade or a monolithic trade anymore, right? And so who do you think are the structural winners in that sort of environment, and which segments do you think are kind of going to be more subject to the ebb and flow of risk sentiment as we move forward?
I think the trickiest bit is for people that don't have proprietary data sets and don't own those data sets. I think anything that's working off data that's somewhat commoditized, this is where you can start to ask questions and be amazed at what you can get back when you're playing with some of the tools that we have now. I think that for folks who thought that they had some sort of moat around their business, if it doesn't include proprietary data, it's going to be harder for them not to have problems. On the other hand, it's hard to see exactly what's going to happen. Are these agents going to be acting with software as opposed to replacing software? Now the argument is everyone's using our software, so it's not going to be a problem. I don't think that we know yet, but I think that definitely not having something that you are the only one that has license to is going to be trickier in an information world where you can ask anything from any of the agents.
Maybe some of the growing apprehension or recent apprehension about the AI trade has spilled over to other parts of the marketplace, i.e. let's rotate maybe a little bit out of some of these areas that we don't know where the risk is to maybe some industrials, some better value, some small and mid cap. We've seen that. Is that the S&P equal weighted is outperforming the S&P 500. Is that just kind of a short-term trade, do you think, or is that something bigger?
So I think right now it's going to end up being a question about that CapEx cycle because people are less excited about the top of the S&P register, which is 40% of it in 7 stocks, when those stocks are spending a lot of money. I mean, NVIDIA's in there, so there's some plus there. I think that you've seen a lot of the industrials already run. They're not cheap by any historical standards, but I think that there's a bias about historical standards that they're growing. There's some real growth in the industrials, and part of that is because this is not just I'm buying chips, but I have to put a whole series of things around this. It goes back to the power issue, right? There's an arms race on compute power, but we have a lack of power. So there's also some things that may slow things down in certain areas. So I think that there is room to broaden out, and the market has been broadening out.
Yeah, well, I got to ask you about the Citrini research report that we got earlier today. Okay, so 2028, their risk case scenario, right? A lot of people dismissing it. That's not a realistic timeline for the doom scenario that they're discussing in there. So what do you think would be a realistic timeline then for some of the consequences of this AI disruption? Massive unemployment, the consumers being hurt in their ability to consume. When do you think that's actually going to play out, if it does?
Well, and I think if it does is the biggest question, because generally speaking, huge transformational changes, and I would argue that what's going on now is one of those transformational changes, does disrupt a lot of things, and there will be consequences. It usually, however, also provides growth in some other areas where you're shrinking in some. I don't know, the 2028 does seem very close, but on the other hand, you have seen plenty of places where machines are replacing people in fast food restaurants and here and there, and it's those entry-level jobs that people are worried about. So I don't know. In many cases, things can go faster, but there will be other things that get repurposed. And so that's why I think it's hard to think of it as such a large sort of mass extinction event, which is what they're talking about.
Yep. Sarah, thank you so much. We appreciate it. Sarah Hunt, founding partner and chief market strategist at Alpine Saxon Woods, joining us live here in our Bloomberg Interactive Brokers studio. Just saw David Gura walk by our studio. Reminded me that we've got a new show debuting this weekend. Bloomberg This Weekend, David Gura, Christina Ruffini, and Lisa Matteo bring you unique conversations and in-depth interviews on news, politics, lifestyle, and culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app Saturdays and Sundays, starting at 7 a.m. Eastern. So that's some cool new programming. We got 3,000 reporters and analysts running around Bloomberg. We might as well tap their content for more original stuff over the weekends. Why not? That's a good plan as far as I'm concerned. We got some great stuff there. Coming up, we're going to check in with Janet Lauren, Bloomberg Higher Education Finance Reporter. She's got a great story out today. The big take story, which you know we love. Harvard's massive bet on land hits harsh real estate reality. More challenging news for some of the folks in higher ed these days. They can't catch a break. That's coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Information technology, the best performing major industry group right now in the S&P 500. As the major averages push higher, the Dow up 72 points, S&P 500 32 points higher. The NASDAQ 100 right now 274 points higher. That is up just about 1.1%. Let's do the best performing stock in the S&P 500. That's Axon Enterprise, up 20%. So they make tasers and public safety software. Adjusted earnings per share for the fourth quarter beat the average estimates. But analysts were impressed, describing Axon as an AI winner rather than a company at risk of any disruption from artificial intelligence. So take that for what it's worth. GoDaddy, the worst performer, down 16%. This is the domain registry company. They delivered a disappointing revenue outlook for the quarter and the full year. Meantime, Kate Moore at Citi Wealth says investors lately seem to be missing the bigger story.
I'm not sure the market is actually reflecting the strong nominal growth environment that we feel we're experiencing. In fact, it's not really reflecting the strong earnings side. It seems to be much more about this rebalancing, reshifting, and multiple expansion for sectors that have been laggards.
And case in point, you look at the companies in the S&P 500, they grew their earnings by 13% in the fourth quarter. That's almost 6 percentage points better than expected. They also served up optimism about the coming year with a majority raising their guidance, yet the S&P 500 is actually tied for the worst performance during earnings in the past 10 quarters. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Christine and Paul.
All right, John Tucker, thank you so much. We appreciate that. And Christina Aquino sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live on Bloomberg.com. I'm reading the big take story of the day, as I always do, because they're always really, really good stories, interesting, and today's is no different. Talks about Harvard's massive bet on land hits harsh real estate reality. Janet Lauren, she is one of the authors on this, along with Greg Ryan. Janet Lauren is a higher education finance reporter for Bloomberg News, joining us live here in our studio. Janet, it seems like the hits just keep coming for Harvard. You know, I'm thinking about the federal funding challenges and taxes on the endowment that are impacting a lot of universities. And now they've made a big bet in some Boston real estate that's not necessarily playing out. What's going on there?
So Harvard had a vision, decades and decades ago that they would create a biotech hub near the campus. If you've ever been to Cambridge, it's kind of landlocked where Harvard is. So they decided, we're going to buy up some land across the river in the neighborhood of Alston, which is in the city of Boston. Very ambitious plan, certainly made a lot of sense considering, Stanford is all about real estate, biotech. Yep. They are the landlord to a lot of massive companies. So it took Harvard quite a long time to get where they are. They bought land, then they had the financial crisis. Their endowment lost 30% of their value. So, this plan had been in the works for a long time. Finally, they break ground on a biotech lab building in 2023, and things started unraveling somewhat. The market for biotech space in Boston, especially where they are, is vacancy rates north of 70–80%.
Wow.
Yeah, well, that lab that you mentioned, only 20% leased at this point in time. I mean, how much of this is really about just a broad downturn in biotech, and how much of this is miscalculations by Harvard itself?
Well, it's a little bit of both. And, at the time when they were very bullish on this building, remember, back in the times of COVID, when the federal government investors were pouring lots and lots of money into the biotech sector. It was a hot area. Moderna's vaccine was developed right in this Cambridge area. And it's a multi-use plant. So the apartments took quite a while to get the rezoning. And as everybody knows, real estate is about timing.
So what's the Harvard plan here? Because it seems like the world may be in a different place. It looks like their finances are going to remain challenged, at least for the foreseeable future, as relates to government funding, as are many other institutions, higher learning. What's the plan here?
So there's two areas that we're talking about. The first one is called the Enterprise Research Center, where this biotech building is. Tishman Speyer, which is a developer, has the majority of the risk in leasing up the building. Harvard is not on the hook for leasing it, although they've been helping since they want, great research partners. Roche is the first tenant, and they're looking to build up their obesity drug business there. And then there's this whole other massive land area, about 90 acres, that hugs the Charles River, that Harvard had bought up, again, decades ago, envisioning this brand new neighborhood in Boston. And the Trump administration pulled several $100 million in transportation funding that would have untangled highway exits and really made it, as Harvard had envisioned, sort of like this new seaport district that would have brought in development, mixed use, a brand new neighborhood. And Boston would have been helped also by, increased tax revenue, more jobs. So that is on hold sort of indefinitely until they figure out what to do with that.
Yeah, well, it seems like maybe it's a little bit of an area-specific issue, but then I want to draw the contrast between Harvard and MIT, right? Because its development of Cambridge's Kendall Square has really flourished. It's now known as the most innovative square mile on the planet. So what did MIT do right that Harvard did wrong in this case?
First mover advantage. MIT had also seen the potential in Cambridge, right next to their campus. And they had sort of a brilliant strategy in their endowment. Instead of looking out and finding some real estate managers, they took that in-house and they said, this is going to be our real estate portfolio and we're going to develop these buildings ourselves. Now, their land costs were not the same as Harvard's because, it was very derelict land, former parking spots, and they had a huge demand, and now it's filled with drug companies. Biogen selected its new headquarters there. Google is there, and it has a huge advantage, and that is the subway stop. Whereas Alston is kind of far. It feels more like a suburban area when you're driving in there, and Kendall Square is very easily accessible by transit. So it's a real estate story. It's a transportation story.
So how about the people involved, like the locals there? Because oftentimes when you see universities and they want to expand, they kind of butt heads with the townies and versus the gowns, the town and gown. Every town has that has a big university. How's that playing out?
Well, initially, Harvard bought up this land in a very clandestine manner. It was not known that Harvard was the purchaser of all this land. So the community in Alston had a really sour taste for quite a long time. But Harvard has proved to be a very good partner with them. And we talked about the apartments, and the rezoning took quite a long time. They have a lot of affordable units in this building, and that really protracted approval process potentially was something that cost them a lot of time. And if they had that done a lot sooner, they may have latched onto a thriving market versus a downturn market in the biotech lab space.
Yeah, well, where does it stand at this point? Is all lost for moving forward on the development prospects of Alston?
Well, they're looking for some tenants. Might get a really good deal if you wanted to be there.
Anyone want to move to Alston?
And and we'll see the state is trying to figure out what to do with those 90 acres. Harvard still holds the land. They still pay real estate taxes, but it's just sort of waiting for development. But it's been waiting for a long time, and Harvard has been around for centuries. They are a patient investor.
Yep, absolutely. Okay, Janet, thank you so much for joining us. Appreciate that. Janet Lauren, higher education finance reporter for Bloomberg News, joining us live here in our studio with the Big Take story. You can read more of this story on the Bloomberg and at Bloomberg.com/Big Take. And that's where all those stories are. And they're great stories, deeply resourced, richly sourced throughout. And they have some nice pictures and graphs, which make it easy for me to understand what's going on. And what's that?
And a video.
And a video. There you go. So it's multimedia. Yeah, the video is there. You're right. All kinds of good stuff there. I'm sure the good folks at Harvard will figure it out. They need to figure out how to play better with the president. That would probably help them out a little bit here going forward. S&P up 30 points, Dow up 72 points, and the NASDAQ up 275 points. 10-year Treasury yields sitting at 4.05%. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Hi, folks. I'm Christina Kino, filling in for Scarlett Fu, and here with me is Paul Sweeney. We're going to be talking a little bit about retail now, and for that, let's bring in Mayor Ross Gilbert, a Bloomberg Intelligence senior equity analyst, joining us from sunny LA, very different from the weather that we're seeing over here in New York. Mary, thank you so much for joining us. Let's start with TJ Maxx, because we did get that disappointing outlook from them. And very surprising, right? Because they did have a strong holiday season, but it seems like they're guiding expectations now for the future. What's the takeaway from that? Is this whole customers trading down to more affordable goods, is that flux over now for TJ Maxx?
Thank you, Christine. But actually, TJX is known for providing conservative guidance. So even though this guidance is coming in below what analysts expect for the first quarter, already, if you look at the first quarter, and the company said this, they're off to a great start. When we looked at the Bloomberg second measure transaction data, we're seeing really robust sales. So it looks like a huge beat right now, the trend that we're seeing. It's very early in the first quarter, but it's looking very, very strong. And I think when you think about TJX, this company, the management team here executes so seamlessly. And the brands that they have, which include Stuart Weitzman's jeweled sandals, for example. You can get rag and bone attire.
Yeah.
And consumers love it.
So, I mean, I am looking at the stock actually is up about 0.9% today at a 52-week high. So good news there. Mary, what's the company saying about the consumer out there? You know, we've got the K-shaped economy. I'm not sure how TJX kind of plays within that marketplace, but what are they seeing?
Yeah. So, Paul, you raise a valid point, the K-shaped economy. The thing about TJX, when you think about all of the off-price retailers, they're in the best position to appeal to consumers across all income cohorts. So they've got the brands that include Celine, Chloe, Gucci, Brunello Cucinelli, but then they'll have brands like Theory or Eli Tahari. So Nike, Puma. So they really cover brands across the spectrum that appeal to consumers across both the high end all the way down to those consumers that are really paycheck to paycheck. And so that's what makes them in a great position and why their business model really works. And when you think about home goods, everybody shops home goods. Whenever you go to a dinner party, what you're seeing there on the table likely came from home goods.
Yeah, well, very interesting in the retail space, kind of the developments that we're seeing as a result of that K-shaped economy that Paul mentioned. Because, you know, in contrast, we did have the Saks CEO, of course, on Bloomberg TV yesterday talking about where they are in the Chapter 11 process. But they're also saying that, you know, hundreds of luxury brands are shipping again. And then at the same time, you know, TJX holding up relatively well. What does this tell us about the state of consumers? You know, are you seeing some kind of a bifurcation where these segments, certain segments, are doing better than others?
Yeah, so I would say that we're seeing strength across all consumers, really, and you see it with the consumer confidence data, but most importantly, I think whenever you have strong employment, which we have had for, you know, many years now, and that really keeps the consumer resilient. So even if you're sort of going paycheck to paycheck, when you're employed, you feel really good. And you might cut back on some essentials just so that you can get something new that makes you feel good. So I really see strength across, you know, all consumer segments. It really comes down to the retailer and their ability to execute. So when you see companies that are outperforming, it's because they're executing. And that's really the delineation that we see there.
Hey, Mary, the Supreme Court and our president just brought tariffs right back to the front burner again. I wonder if the good folks at TJX had any thoughts about what seems to be a new round or a renewed interest in tariffs.
Yes, well, so the tariff question is going to be top of mind with fourth quarter earnings coming in. And TJX, though, because they buy primarily closeouts, like less than 10%, they're sourcing directly. So they're really not that impacted by tariffs. It's so small for them. because like I said, over 90% of the inventory that they're sourcing is closeouts. And they see tremendous availability of closeouts, so they're not impacted. But we did have news out today that Steve Madden decided not to provide margin guidance. They did provide sales guidance, which was strong, but they decided not to provide that guidance because they felt that there was some uncertainty. But when you look at it, we already know the tariffs that went into place prior to the 10% that went into effect. So you know that you get at least a 50% savings for 150 days on new shipments. And then once they issue the executive order for 15%, then you'll have a 25% savings. So that's really the best way to look at what the margin impact could be. And most of these companies are passing on those price increases, and then they're also employing other mitigation measures, including sharing with the suppliers.
And Mary, what's the shopping mall right by the Bloomberg offices there in LA?
Westfield?
Yes.
Westfield Century City, yes.
That is a serious mall out there, folks. That is, they take it very seriously out there. They got top end everything. The food is awesome. You can spend a whole day there. They got movie theaters, the whole 9 yards. So that's how you play it out there in LA. Mary Ross Gilbert, thank you so much. Appreciate it. Senior equity analyst for retail at Bloomberg, located in what are spectacular offices for Bloomberg. I say that every market I go to, the offices are awesome. The ones in LA. The first time I went to LA, I was like, really? This is kind of lame, because usually Bloomberg offices are just phenomenal. Went back 6 months later, they had moved, and they had upgraded like 1,000%. So they're doing a phenomenal job out there in LA, out there in Century City. That's where you want to be. That's where Mary Ross Gilbert is. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, here we go. We got Christina Kino sitting in for Scarlett Fu. Where's Scarlett Fu? I have no idea. She got on a plane at midnight last night, and true story, she's still on that same plane. They're still flying. They're still in the air. I think it's like 14 hours. I have no idea where she's going, but so she'll be gone after a few days. She'll be back, though, at some point.
There's like not enough liquor to get me to do that.
Not enough movies, I don't know what you do, but anyway, that's how she's rolling right now. Coming up, we're going to check in with Geetha Ranganathan. She's the media analyst at Bloomberg Intelligence, gets the latest on the Warner Brothers Discovery deal. Drew Redding, Bloomberg Intelligence, U.S. home building analyst. We had Lowe's report some numbers here. John Tucker, he's got a whole list of questions about the do-it-yourself business. I could care less. I haven't been in the Lowe's or, ever, I don't think. Jerry Kudzel, he's going to join us, general portfolio manager of fixed income at TCW. Those are the really, really smart people out there in Los Angeles. He does the fixed income stuff there. Anurag Rana, Bloomberg Intelligence tech analyst, talked to us about this whole AI disruption, what it means for software stocks. Boy, they've been taking it on the chin. It seems like maybe it's a time to maybe take a look at some of these names that have been beaten down. So we'll do that with Anurag Rana. But first, let's go to John Tucker and get a Bloomberg Business Flash. John.
All right, I'll say that anxiety about artificial intelligence may be on the back burner, at least for now. You have this ETF tracking software firms, for instance, that's extending its rally. This is the iShares Expanded Tech Software Sector ETF, up close to 3%. Investors, of course, waiting for results from NVIDIA after the close of regular trading today. Angela Zeno at CFRA says the company will deliver.
We expect another beat and raise, quite simply, from NVIDIA here. I mean, that really shouldn't be the surprise. That really should be the base case after what we just saw across Q4 earnings season from the hyperscalers. Essentially, all these companies stepped up CapEx well above expectations.
Right now, the S&P 500 up 37 points, 69.27 on the index. The Dow up 152 points, at 49,328, and the NASDAQ 100 is up 268 points right now. That is a 1% pop right there. Mary Ross Gilbert just went over at TJX, think TJ Maxx and Marshalls. Those shares right now up 0.8%. Holiday shopping season above Wall Street expectations. And she really seemed bullish on the stock, too. Bowing to pressure from the Pentagon, Anthropic scaling back its safety policy. This is kind of the core value for the company, saying it's no longer going to delay AI development that could be dangerous if it thinks it's falling behind its competitors. And Pete Hegseth really put the pressure on this company to change that policy. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Christine.
All righty. Thanks very much for that, John Tucker. All right, let's take a closer look at the stocks moving today, the companies that we need to be watching. And with that, we have Norma Linda, who is the Bloomberg Television Markets correspondent, here in the studio with us today. Nora, what you got for us this morning?
Well, we have to take a look at the name that's solidly in the green. I'm looking at shares of Kava, ticker CAVA. We're seeing shares up more than 20%. Earlier, rallying for their best day since August of 2024. Now, this is essentially after the company reported fourth quarter sales growth that were better than expected. It gave a rosy outlook for 2026, and this is really just showing that the company is really outperforming a lot of its fast casual rivals, really bucking that trend and expectations for a potential slowdown. And taking a look at the stock on a year-to-date basis, it's also been rallying up about 40%. So clearly a good day for Kava, solidly in the green here.
Yeah, well,
Never been.
Never been.
Never.
Have you guys?
Yeah,
you
I
like
feel
it?
like it's like a Chipotle alternative.
Okay, all right.
Well, Paul loves Chipotle.
Oh, yeah, I'll check out Kava though.
Maybe you have to venture out.
I need to venture a little bit. The only place open for lunch in the entire city of Manhattan, I think, on Monday, was the Chipotle on like 3rd Avenue and 55th Street.
They're troopers.
Everybody else was closed. So
They're troopers.
All right, Lowe's.
Lowe's, ticker LOW. We've been talking about it. Shares dropping earlier as much as 4.9%. For their biggest decline since April. This is just a day after we got results out of Home Depot. So the peer Lowe's now lower. This is after its forecast sales guidance for the full year missed the expectations on Wall Street. This is all due to high borrowing costs, economic volatility, what we've been talking about all year long. It feels like it's endless. It's really the story about the consumer. And a lot of them not really doing some of those big ticket purchases that they were doing. Maybe it's a remodeling. We know Lowe's is more known for being DIY, where, Home Depot a bit more for contractors. But it seems as though, consumers are really holding off on some of those upgrades, and that's clearly affecting Lowe's here.
Yeah, well, we're the wrong demo for that because Paul and I are not DIYers.
No, me either. It's a no for me.
All right, tell us about what's happening with Workday.
Workday, not a great day. Shares down as much as 10%. Hitting their lowest intraday level since 2020. Ticker WDAY. This is after the company gave an outlook for quarterly subscription sales that missed expectations. They're saying that subscription revenue will be about $2.34 billion, with analysts expecting $2.35 billion on average. But I've also been looking at some of the action that we've been seeing in this year alone, and shares of the company are down about 40%. So there are also, of course, some renewed anxieties after this report from a lot of investors worried about its ability to thrive in this artificial intelligence era. So still a focus on AI and how it's affecting a lot of these companies.
All right, very good. We appreciate that. Norma Linda, good stuff as always with some of these stock movers that are moving around in this marketplace here. What are we moving to? Got the stock market up 35 points here. So we got a nice market on the move here, which I think gets your attention. Certainly seeing some markets move higher, and it's led by the tech names, which is nice to see in NASDAQ.
A bit of a recovery there. So again, right, bringing a question like how overblown really are these like AI disruption worries? Because bad day on Monday, but looks like the recovery is continuing on for a second day today.
Absolutely. Let's get to a little M&A in the media space. The Warner Brothers Discovery deal, the never-ending deal, seems like it's moving a little bit forward here. We got a higher bid from Paramount. We want to check in with Geetha Ranganathan. She covers all the media stocks for Bloomberg Intelligence. So Geetha, give us the latest on this Warner Brothers Discovery sale process. Where are we right now?
Yeah, so Paul, we got the higher number from Paramount. It's $31, so they upped it from $30 per share for the entire company. Now, what that has forced the Warner Brothers Discovery Board to do is to go back to the drawing board, kind of re-engage with Paramount, see exactly what number they can come up with. But ultimately, they have to deem whether this is a superior proposal or not. So far, they have two offers on the table, this one from Paramount and the $27.75 per share from Netflix, but that is only for part of the business. That's only for the studio and the streaming assets. So they're still in the process of making a determination about which offer is superior. But the minute that they, that they make that determination and they call the Paramount offer superior, then the clock starts ticking for Netflix. They have 4 days to come up with their own enhanced offer, so to match the Paramount offer. And then, we'll kind of see where the chips fall after that.
Yeah, well, Geeta, I recall the Warner Brothers board really did not like some of the financing terms for the Paramount bid initially, right? So does this new improved offer improve upon some of those sticking points in the earlier deal? And does that really de-risk the transaction now that they've come up with another offer here?
They have all of the points that Warner Brothers had initially raised. They have the Paramount management team has proposed remedies. So one of the big things that they have kind of come up with is that they're going to cover the financing costs and the termination fee if Netflix exits this process. They actually upped their own termination fee from $5.9 billion to $7 billion. They are going to pay something called a ticking fee, which is 25 cents per share per quarter for every quarter that the transaction does not close beyond September. So they've offered a lot of different things, including kind of backstopping the whole equity portion of the deal, as well as providing guarantees for the debt financing. So a lot of the points that Warner Brothers had initially raised, you're absolutely right, Christine. Paramount has kind of come out and addressed that. So definitely providing a lot more comfort to the Warner Brothers Discovery Board.
Yeah, Geeta, you're right. It seems like Paramount's really stepped up and really said, we're going to be really credible here. Meanwhile, Netflix has been quietly waiting on the sidelines, not really doing anything. But it now seems like now's the time for them to, really make a decision, step up with a bigger, better offer, different offer. I'm not sure. What do you think the options are for Netflix?
The best option, in my view, Paul, for Netflix, and I think majority of its investors would also agree, is to just walk away, pocket the $2.8 billion that you get in termination fees, just walk away and just focus on your core business, because they do have a very strong core business. As we've said many times, Paul, and you agree that this, Warner Brothers is a great asset. There's absolutely no doubt about it, but it is really just a nice to have, not a must have for Netflix. So it could end up actually becoming a distraction. So, in many cases, I think the way that, the street almost perceives it is that Netflix is a winner if they lose this whole bidding process. But that said, they do have a lot of financial firepower. If they did have to increase their bid, up it by about $1-2, they absolutely can do that. The only thing is, once they go beyond that, then they kind of risk overpaying for the asset. They risk their leverage profile really kind of getting a little bit dangerous, I would say. Gross debt is going to be well above $100 billion. Leverage could be at 4 times. They're at 0.6 times right now. So, all of those things start kind of coming into question. But of course, they have a great free cash flow profile, so deleveraging wouldn't be an issue. That said, there still are, integration and execution risks always with any M&A deal.
Yeah, well, so if Paramount does indeed win the deal, does that present stronger competition for Netflix, at least in the streaming space?
It definitely will to some extent, but I think what Netflix and everybody else is banking on is that leverage is just going to be so high for the combined Paramount, Warner Brothers Discovery that, at least for the first couple of years, I think they're just going to be really focused on kind of driving costs down, hitting their synergy targets, not really being able to invest in the business. But again, it's it all comes down to exactly what the number is going to be. But you're right, they definitely will be a stronger competitor, although I don't think it's going to be a make or break for Netflix at all.
Absolutely.
Interesting.
Yeah.
So, I mean, the walk away is a viable option.
Yeah, and probably they might be better off with a walkaway option.
Exactly. Very cool.
All righty. Well, yeah, thank you so much, Geetha Ranganathan, our Bloomberg Intelligence analyst for U.S. media, staying on top of the biggest deal. We've been talking about this deal forever, it feels like it. But, all right, let's move on, though, to John Tucker. One of John Tucker's favorite stocks, and that is Lowe's. They're going to be reporting results. And let's bring in...
I'll say the difference between Lowe's and Home Depot, I find more women at Lowe's than Home Depot.
Nice to know.
Yeah.
Well, I wasn't saying that.
Okay.
I'm just saying, my observation.
Yeah,
Why
but
is
I think...
that? I wonder.
It's more like non-professional friendly,
It's like
I guess.
More DIY, but
Apparently, Paul's going there to pick people up. So,
can I just say that the demographic of women might not be interested in you, Paul?
Okay.
Yeah.
Yeah. No surprise. And John Tucker, speaking of do-it-yourself, he just fixed our microphone here in our studio, folks. We had a professional come in here. John's like, "No, I got it. I got it."
That's okay. We do it all here.
Don't worry, Anthony. We got it.
Very much a product of Lowe's DIY. But all right, so let's get to Lowe's. What is the preview there? And with that, let's bring in Drew Redding, who is the Bloomberg Intelligence U.S. home building analyst. Drew, what is going to be the takeaway? What's the big number to watch as we await these earnings?
So Lowe's reported earlier this morning, and overall it was a solid quarter. They had a nice beat on same-store sales. Really due to the strength of their professional customers and their e-commerce channel. They had about a 50 basis point lift from recent storms. You see the stock is down about 4 to 5%. There's a couple of things going on there. They guided the same store sales for 2026 being about flat to up 2%. While that's exactly, in line with what we heard from Home Depot, consensus was on the higher end of that. We think there could be a little bit of conservatism in there, which rightfully so, given where we are with housing. Also, there's a modest earnings reset for the company. The midpoint of their guidance was about 4% below the street. And really, that's a reflection of weaker than expected operating margins. And that's largely due to some of the acquisitions they've made over the last couple of years. So there's a little bit of company-specific noise in there. The other thing that's going on with the stock, and really, if you look across the housing space as a whole, whether you're talking about the builders, the building product manufacturers, developers, really anyone, they're all red across the board. And I think that has to do with the lack of dialogue around housing policy during the State of the Union address last night. We heard a victory lap on mortgage rates, which have certainly come down. But it was really just a reiteration of the administration's plan to ban institutional purchases. So I think a lot of investors, across the housing landscape, including home improvement retailer, we're hoping for some policy that could really stoke the housing market.
So I'm looking at the Mortgage Bankers Association 30-year fixed mortgage, 6.09%. That's as low as it's been in a long time. Is it low enough to get folks out of their homes, and free up the existing home buyer market?
Yeah, you're right. We're about 100 basis points below where we were just a year ago. And certainly every tick lower in mortgage rates is going to help bring that incremental buyer off the fence. Typically what we hear is that something in that 5.5% range is kind of that magic number. Now, that being said, as we've said for a long time, it's not just about mortgage rates. They've certainly helped affordability. They've brought monthly payments down, but home prices continue to rise. They're up more than 50% since 2019. So when you look at, a more holistic view of housing affordability, it's still really constrained. The other thing that we continue to hear, whether it's from the retailers or from the builders, is that, buyers are increasingly concerned about the economy. They're increasingly concerned about the outlook for the labor market. So there's a lack of urgency out there. You also have a lot of people maybe sitting on the fence because, they're saying to themselves, look, maybe home prices are going to come down. Maybe rates are going to come down further. Maybe I should wait before making such a big purchasing decision.
Yeah, well, so if that sort of turnover, new housing buyers, that's still going to be stalled given the uncertainty in the macro environment, would something like repair and remodel spending, that segment of Lowe's customers, is that something that's going to be enough to carry them through? And I suppose for the rest of the house building sector?
Yeah, so for the home improvement retailers specifically, I think demand has been pretty stable, if not modestly improving. If you look at comp store sales on a 2-year basis, there was a little bit of an uptick this quarter. So I think their customer has been pretty resilient. When you think about what's holding back more robust growth in the sector, it's really that big ticket discretionary spending. These are categories like large scale kitchen and bath remodels, maybe a big flooring project, replacing all the doors and windows in your house. And these are things that typically tend to be financed. So with rates at an elevated level, you've seen a pullback in that. And it also goes back to what we said on confidence. With less confidence in the home, the direction of home prices, you have people who are maybe waiting to take on those bigger ticket projects.
Drew, thanks so much for joining us. Always appreciate getting a few minutes of your time. Drew Redding, home builder analyst, Bloomberg Intelligence, coming in to us from Princeton, New Jersey, talking to us about Lowe's, as well as some of the home builders. Again, 30-year mortgage, 6.09%. It's a lot higher than a lot of people are sitting on their mortgages right now, but it is 100 basis points lower than it was a year ago. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Well, today it's all about NVIDIA's results. They're going to report after the close of regular trading today. The sustainability of margins is going to be one of the focus. And the AI disruption trade, that seems to be on hold today as we have a risk-on mood. Only 5 of the 11 major industry groups in the S&P 500 are up. And information technology, that's in the lead right now. That's home to software as well as semiconductors. Energy is the worst performing industry group as oil is lower. Right now, the S&P 500 up 35 points. That's a rise of 0.5%, 69.25 on the index. The Dow Jones Industrial Average up 126 points. That is up 0.25%, pardon me. And the NASDAQ 100 is 1% higher, and that is up 265 points right now. Well, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Now, I do have a question. I want somebody to answer this for me. And it's not political. I'm just asking. Because the president in the State of the Union last night pointed out the fact that the Dow had, I mean, it's since retreated, but had crossed 50,000. And he said 4 years ahead of schedule.
Oh, I didn't know.
What does that mean?
I didn't know he had a schedule.
You might have to ask him
whose
directly.
schedule?
You might have to ask him directly.
Okay.
JT.
Anyway, if anybody's got the answer to that, please let me know. Anyway, we check the markets and other stuff all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash.
Alrighty, thank you so much, JT. Well, green on the screen, as John Tucker mentioned, but you know what's not having such a good day is fixed income, really. We've seen treasuries in general set for some declines, biggest declines in about a week last I checked. So for that discussion, let's bring in Jerry Kudzel, who is the generalist portfolio manager in the fixed income group at TCW, to discuss what's happening primarily in the bond markets. That's where I'm going to start with, Jerry. I mean, the trend has been one of curve flattening recently. What do you make of that? Is that something related to the short end, maybe questioning the viability of more rate cuts, imminent rate cuts, or is it something that's happening in the short or in the long end where perhaps maybe people are relaxing about the fiscal situation? What's going on?
Yeah, it's a good question. I mean, obviously, coming into the year, there seemed to be a consensus on a steepening trade, front end anchored, some fairly significant tailwinds on growth. And when you take a step back and you look at what's happened, we've seen pretty significant flattening, especially recently. You can explain that away with a couple of things. I think, as you watch the AI theme take hold, one of the reasons, or maybe one of the consequences, is kind of a disinflationary trend with AI. And what you get with that is, well, twofold. Whether you saw the positive research piece or the negative one, both of them mean lower inflation. Maybe one of them would result in lower demand, and maybe one would be higher growth, but both would be lower inflation. That tends to mean a flatter curve. So whether it's a fiscal improvement because of AI or kind of a lack of demand or destruction in demand, it does mean flatter curve. I think positioning has certainly helped kind of magnify some of the moves recently.
So, Jerry, how much credit risk do you think in 2026 investors should be thinking about here? Because you can sit in a 2-year treasury and get 3.5% here. What do you want to do above and beyond that?
Well, I think you got to be very careful about credit selection. We came into the year basically scratching on 30-year tights for corporate credit. So that's pretty well known. And if you take a look at what do you think your forward returns will be based upon these starting spreads in just about every scenario, or certainly a lot of them. I mean, you never say never. A lot of those scenarios, forward returns are challenged, meaning you would be better off owning a treasury than owning a lot of the corporate market. And we've already seen significant volatility in the corporate market. That's playing through in some private credit headlines. It's playing through. It's a real weakness in BDCs. In the leveraged loan market, you're seeing some real weakness happening. There's a growing cohort of stressed loans that are presenting themselves in the loan market. So as you take a step back, just high level, starting spreads were really poor. You had some real aggressive behavior, some significant issuance, kind of facing us. We've already seen $400+ billion of issuance in the investment grade market year to date. And then you have some kind of weakening of the balance sheet, questions around private credit, and you can't really absorb any of that volatility giving starting spread. So I think you have to be, the good news is it was cheap to be defensive. I think the better news is as you look forward, you can really differentiate yourself. It's going to be fun to be an active manager. You got increased volatility, you got increased dispersion. That can mean some real opportunity for return.
Yeah, well, the private credit question, of course, Jerry, just kind of playing a lot of markets over the past week, right? Do you, at this point, see any sort of potential for contagion risk there, given that there are some signs of stress, as you pointed out, in the publicly traded credit markets?
Yeah, I think our base case entering the year was that you'd have kind of supportive fiscal policy, and that would lead to kind of supportive capital markets. Capital markets are wide open. Deregulation means increased M&A. I think you have to recognize that there's been a significant amount of money raised in private, especially in BDC land, which is kind of a nice peek into private credit. I think we would say you have to recognize that when you gate anything, it's a big deal. And when if you don't say that out loud, gating any vehicle that is meant to provide liquidity is a big deal. It's not done lightly. And then on the heels of one product gating, you then see another liquidation. And I think as these things pick up steam, there's a potential that this does kind of become a kind of self-reinforcing loop, and you have to recognize that probability exists. It's still for us, I'd say probably kind of a 25% probability, but it is increasing. And I think the reality is there's a lot of weakness. There's AI concerns, and that's all feeding through into the marketplace for sure.
All right, Jerry, we always appreciate getting a few minutes of your time. Thank you very much. Jerry Kudzel, General's Portfolio Manager in that fixed income group at TCW. I always avoided the fixed income floor. I went right to the equity floor at TCW. I don't want those fixed income. They're too smart, but we appreciate getting a few minutes of Jerry's time. Certainly, if you're a tech investor, you've been dealing with the other side of AI, which is, to what extent is AI a threat to my business? And that's been a real big problem for a lot of sectors out there, including software. Software as a service has certainly been dealing with that over the last several weeks. We're going to check in with Anurag Rana and get the latest there. Anurag Rana is a senior tech analyst, covers all the tech stuff for Bloomberg Intelligence. Anurag, talk to us about the conversations you're having with institutional investors these days, because several weeks ago we saw just a big sell on your whole software sector there. Where are we today on that?
It's been okay the last 2 days, but things will probably change by the time next week comes around. Because the discussion around here is not so much about what's happening to the earnings power or sales growth over the next 12 to 24 months. The big question is whether these guys will be relevant 5 years from now or not. And when you put a question on somebody's terminal value, then there is no argument. It's a 1 or a 0. So there are those that think that some of them will be fine and maybe even grow stronger, and there are certain companies that will be disrupted quite a bit. So I think that's where the dilemma is. At this point, people are just selling the entire index. They're not even looking at some of the bigger ones or the better ones at this point.
Yeah, well, Anurag, let's get into which ones are the bigger ones and the better ones, right? Because we've seen so far the most vulnerable names seem to be companies in online travel or smaller software firms. But then meanwhile, cybersecurity seems to be relatively insulated from the recent bout of caution that we've seen. Is that a sector or a segment within this space that could actually benefit from increased spending on security?
Yeah, we did publish a big report yesterday, and we have put out a framework where we have looked at 4 or 5 different segments or different factors. So if somebody has a very high market share, are they selling into an enterprise or a smaller business? Do they have network effect? And are they a platform or a point product company? So, you mentioned cybersecurity. This is an area that is doing better than the others, and in fact, could even benefit down the road if a lot of the agents that people will create would need to have their own identity, would need to have their own safeguards around it. But there are certain places where we will see more disruptions. Online travel is one area you mentioned, and even the smaller software names, whether that's in HR, whether it's in sales automation, I think they are the most at risk of getting disrupted.
What are the companies saying here? Do they acknowledge that AI is a threat to their business? Are they trying to pivot? Are they ignoring it? What are you hearing from the companies these days?
So everybody's pivoting at a very fast pace. I'll name a couple of examples. A company like Workday, which is the de facto leader in HR software, they are creating their own agents. And down the road, when you and I will interact with an HR software company, it would be through a chatbot or could be conversational. There's a company called Figma. It has added more AI capabilities to its core software. So when you're developing the software, you're actually giving prompts to say, this is what I want the design to look like, and then it pops up something, on the system, rather than doing it, bit by bit using the software. So there is a lot of push by these companies, but that's where the question is, whether it's going to lead to lower margins because this is an expensive way to do things, or whether it leads to the AI native company coming and taking their market share.
Yeah, very interesting on that subject, Anurag, of some companies moving to create their own agents, as you mentioned, because is that something that could potentially drive a wedge also between these companies that are vulnerable to AI disruption? We had Sarah Hunt earlier mentioning that if you're a company that owns the tech, that owns the proprietary data, you're fine, but maybe if you're leaning on somebody else to provide that for you, maybe you're not. Would you agree with that?
Yeah, I mean, if you have your own data, that's fine. But at the end of the day, it's customers' data. I mean, it's Bank of America's data, it's JP Morgan's data. So if they decide to give access to an LLM or an Anthropic or an OpenAI to that data, so it's up to them. Frankly, I understand you can't log into somebody's software and try to get that data out of it. So I understand a lot of these arguments, but frankly speaking, when disruption happens, it happens very fast.
All right, folks, I'm going to plug some of Anurag and the tech team's research here. The haves and have-nots in AI disruption. This is a detailed report that looks at the software space and actually has a really cool spreadsheet that for 100 companies lists the risks and opportunities that AI poses to these companies. It is a definitive read on where the risks and rewards are in this software space from AI, and that has certainly been a huge theme. So Anurag and his team have had this report out. Go check it out. BI Go on the Bloomberg terminal. Anurag Rana, Senior Tech Analyst for Bloomberg Intelligence, joining us there, actually putting out some really good research. Surprising, shocking to me, but that's why he's one of the best on the street. All right, folks, catch our new show, Bloomberg This Weekend. David Gurr, Christina Ruffini, and Lisa Mateo bring you unique conversations and in-depth interviews on news, politics, lifestyles, and culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app, Saturdays and Sundays, starting at 7 a.m. Eastern. That starts this Saturday. Bloomberg This Weekend. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks holding on to yesterday's gains, and of course the market's facing a big test today after the close of regular trading. AI chip giant NVIDIA with the latest quarterly earnings results after the close. Investors continue to be concerned the AI spending wave isn't sustainable. And then you have Mediterranean chain Cava, never been there. Price increases and customers adding more expensive options from the menu, they say, have been a boost. As a result, they have a pretty rosy financial outlook for the year. Cava shares right now, is this ranked 23% higher? Then on the other side of the ledger, you have Diageo. Those shares, a ticker symbol DEO, these are the ADRs in the U.S., down over 13%, cutting its dividend in half. Reducing the sales outlook. They say they're blaming this on Americans, citing American consumers' reluctance to spend because of affordability concerns. Laura Cooper at Nuveen, meantime, says the recent selling has led to opportunities.
We've seen such an indiscriminate sell-off. We have seen a sizable re-rating, but that is opening opportunities for those companies that have more resilient business models in this age of disruption.
And some more individual stock news. Spirit Airlines, they've landed a deal that would allow the budget carrier to exit bankruptcy. Steve Madden, we were talking about this before, ticker symbol SHOO, S-H-O-O. Pulling its profit guidance, the CEO says the sudden change in trade policy makes it difficult to calculate the cost of tariffs in the coming months. The Supreme Court striking down the signature policy of the president, then the president responding with a new set of duties. Madden's like, yeah, let's wait to get a little more clarity. S&P 500 up 44, 69.34 in the index. The Dow up 188, and the NASDAQ 100 up 292 points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Christine.
Alrighty, thanks very much, John Tucker. Feels like we've been gearing up for this all day, all week, really. NVIDIA earnings finally nearly upon us. That's going to come after the close today. And so let's take a look at what the expectations are with Kunjan Subani, who is Bloomberg Intelligence Senior Semiconductor Analyst, joining us today. So, Kunjan, how high is the bar for a beat for NVIDIA today? Is that going to be enough to satisfy investors, or are they looking for more for this set of earnings?
Yeah, investors always are looking for more with this name. Remember at CES early January, Jensen sort of gave away a little bit extra about how the quarter is progressing and even how the April quarter is looking like. All that has already been baked into the high expectations. We again expect them to beat in their normal cadence that they have been doing lately in the mid to high single digits, both for the print and the outlook. But will that be enough? I don't think so. Remember, because of all the goodness baked in and the stock hasn't done much since January, investors are really now waiting for the sort of next big inflection point or something big coming out of NVIDIA. They have their marquee GTC conference in a few weeks. So I think they'll save a lot of that goodness for that conference.
What's the update, Kunjan, on NVIDIA and China?
Yeah, I mean, that's going to be one of the key items people are going to look at. I mean, officially, at least from the news, their new H200, which the White House has approved, but the licenses have not been granted by the appropriate government agencies. So they have not been able to ship those. That is what will really open up the China market again for them to recap all that billions of dollars of revenue. We did hear from AMD this earnings season that they were able to ship their prior approved 308. We hope that NVIDIA has also been able to ship the H20, which was still approved, but they had stopped shipping it. But the big key item focus here will be getting the magnitude and the timing of resuming or starting the H200, which is a much expensive chip to China.
Very interesting on that China piece as well. Definitely something investors looking out for. Another seemingly piece of good news is that hyperscaler budgets, like those of Meta's, Alphabet, still seem to be expanding. I do, of course, note Meta's deal with AMD earlier this week, and they do have a similar deal with NVIDIA as well in terms of purchasing those chips. What's the read across then for NVIDIA specifically? Does demand for their products still looking robust moving forward here?
Yeah, like you mentioned, coming into this earnings season, most of the hyperscalers have increased their spending budget for 2026. I mean, just Google and Amazon and a few other combined have increased $100 billion than what the street was expecting. So a big portion of that will still go to NVIDIA, which is continue to being a big tailwind for them. Demand continues to get stronger every single quarter. But again, supply remains constrained. So when you talk about the substrates, the foundry capacity with TSMC, so there's not a lot of room for them to keep upsiding like they used to be in the past. They will still upside. They can start and try and squeeze out a lot more supply, but demand continues to run way higher than supply.
Talk to us about that supply on a global scale. What's the expectation for when maybe supply can ramp up to meet demand?
Yeah, I mean, look, supply has been ramping up significantly and a lot more impressively and to the positive surprise in the last 6 to 9 months. But same time, demand has sort of kept on moving away, right? So the anticipation is if the demand is here and, supply is trying to catch up, well, next quarter when we come in, demand suddenly jumps 50%, 70%, which nobody's expecting. So supply, unfortunately, has a long lead time. Actual physical factories need to be built and brought up. However, demand is now these days coming up to these hyperscalers coming and just announcing big dollar numbers, which they have cash lying around. So demand, as long as demand continues skipping ahead, supply will still just play catch up.
Yeah. Well, of course, related to that supply issue is the question of margins, and gross margins have been a swing factor for NVIDIA earnings in the past. What are you expecting on that front, and what would margin pressure signal about their pricing power at this point in time?
Yeah, we don't expect any sort of pressure on their margins. I mean, they have been able to surprisingly keep margins at this level despite the new Blackwell and the Blackwell Ultra ramp. We had expected a margin squeeze when the new products ramp, but they have been able to really sort it out on the supply side, on the COGS yield optimization side, and they're not feeling any pricing power on the demand side. So both of that combined have really ease the pressure on margins. We don't expect anything to be different this round. We expect them to continue keeping really healthy, same level margins for the rest of the quarter.
If I'm NVIDIA and I sell you a chip, when do you have to replace that chip?
Yeah, so in terms of the refresh and upgrade cycle of these AI servers, we are not there yet. We in fact just published our BI Bloomberg Intelligence CIO survey, which shows less than 10% of the CIOs, the 500 top enterprise CIOs in the US, are less than 10% of their AI servers are due for a refresh, or are they thinking about a refresh? So we're not still there yet in terms of a whole cycle. I think there's still at least 2 to 3 years left before companies seriously start thinking about refreshing these chips.
Yeah, and is that something that could eventually limit NVIDIA's capacity to sell, given that a lot of their customers at some point, presumably, will have what they need in terms of chip supply, and they're not necessarily going to need to buy more for a good few years?
We don't see any markers or any data points to suggest that. Like I said, as long as the compute demand keeps on rising, they're constantly want the newer and better chips because they are more power efficient. They deliver a significantly higher dollar per token per watt, and which is what is really important for these hyperscalers. When your fleet, as we get to that time when they need to replace the fleet, it's very inefficient to continue running your AI compute on the older fleet when you have the new chips available. So in fact, that point will actually drive the sales better and higher for NVIDIA when we get to that stage.
All right, Kunjan, thanks so much for joining us. Really appreciate it. Kunjan Sobhani. He's a Bloomberg Intelligence senior semiconductor analyst. He's based out there in San Francisco. And of course, we got NVIDIA earnings after the close. And boy, it's been, 3 plus years where it's been a focus point for not just tech investors, but I think investors overall in the marketplace. It's been a real bellwether for this market. So we'll get earnings and the conference call after the close tonight. Stocks trading higher. The S&P's up about 47.7%. The Nasdaq's up 295 points, 1.2% here. Yields, kind of steady-ish. We got the 10-year at 4.03%. WTI crude oil steady at $65.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Christina Aquino sitting in for Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up this weekend, there's new stuff dropping here at Bloomberg. It's called Bloomberg This Weekend. David Gura, Christina Ruffini, and our own Lisa Mateo. It's going to debut Saturday at 7 a.m. Eastern time. So Saturday and Sunday, live programming, 3 hours of live programming to kind of wrap up what's going on out there and get you ready for the next week. David Gura joins us here. He's a correspondent for Bloomberg and host of the Big Take podcast, as well as the Bloomberg The Weekend here. So, Dave, what are you guys trying to do here with this weekend programming? Because this is new to have live programming on the weekend.
Yeah, we haven't done it before, but I think we've all acknowledged the fact that in this news environment, a lot of stuff happens on the weekend. So there have been, to be candid, a few moments over the last year or so when we've come together very quickly to do special programming after President Trump was shot, for instance, when Joe Biden dropped out of the race, more recently with Venezuela and Iran. So there's an acknowledgement of the fact that news is happening and we are a huge global newsroom and need to be well positioned to cover that when it does. But also, you know, people are looking for a place to come to get more analysis, broader perspective on the news that's happening, and some sort of other stuff that's fun. We have a host of great cultural content, a weekend team here that's putting together great print pieces week in and week out. We're going to showcase a lot of that on the show as well.
Okay. Well, Bloomberg News on weekdays is all about breaking news, breaking economic data, all the headlines. What's the weekend offering going to be, and how is that going to be different from what you see in the weekdays?
This is a great question because it gets to something really existential, and that is animating our coverage throughout the week. Markets are open, able to cover that. That will not be the case on the weekend, except, I guess, for prediction markets and for crypto. Surely keep you up to date on that as we need to over the course of the weekend. But again, it's getting that ability for us to step back and have broader perspective. So this will not be a weekend show that is totally divorced from the markets and the economy. We're going to showcase big interviews that we've had over the course of the week, have some live ourselves in the course of the weekend as well, and pull those strands from what's happened in the market the week before, what's likely to happen in the week ahead. So I think you could think of it in this way. On Saturday, we're going to kind of look back at what's happened over the course of the week, put that into a broader context, and then on Sunday, use that as an opportunity to kind of set the table for the week ahead, look at what the biggest agenda items are going to be in terms of general news, yes, political news, but also markets and the economy.
And David, I mean, we're so fortunate here at Bloomberg Radio, television, the podcast to have 3,000 journalists, analysts to lean upon. They produce a ton of content, real-time, all-time, 24/7, 7 days a week. How are you going to leverage that resource?
Well, we're going to beg people to wake up with us on the weekend. I mean, I want to be very clear about that. But no, we are going to showcase a lot of their great work. And you bring up, again, research. I'm thinking a lot about the kind of utility of showcasing research that's both internal and external. Like a lot of chief economists will write great think pieces about, say, the transition to AI, for instance. And those aren't things that we customarily cover in great detail during the course of the week. We're going to surface that coverage from Bloomberg Intelligence and outside research and economists on the show as well. But it is something that sets Bloomberg apart, having these 3,000 plus people all around the world and being able to draw upon those people, yes, when news breaks, but also when there's kind of a roiling story that's continuing over the course of the weekend is going to be huge. And I should say the most intriguing part of this show to me is how it's going to live. So it'll be on Bloomberg Television Live. It'll be on Bloomberg Radio Live. You'll be able to stream it. So it really is a show that you can kind of carry with you over the course of the day. We expect anybody to kind of sit in front of the television for 3 hours on a Saturday morning or a Sunday morning, but you'll be able to kind of follow the conversation as you go about your day on the weekend as well.
Yeah, well, very interesting. In the process of putting together the show, what have you learned about our audience? Weekend doesn't necessarily mean, oh, we want softer ball sort of coverage, right?
No, I mean, there will be, again, I go back to the cultural coverage that we do. I think there is some interest in that, but I think that we have a highly engaged, very intelligent audience that's looking for that kind of content over the course of the weekend. And I look at Bloomberg the Weekend, the print product that we released last year, incredibly popular, people going to those essays, going to those newsletters to get that broader perspective. I think we hope to attract that audience to TV and radio as well. And then I think we hope that it's going to broaden our audience even more, that people are going to find us on the weekend and identify us as being different from what they might find on other cable channels, network channels over the course of the weekend, and may kind of stumble into realizing what Paul said a moment ago, that we have this huge global newsroom that's pretty much unrivaled around the world. And I'm hopeful that people will find us, and that'll kind of bring people into the broader Bloomberg ecosystem.
Politics, it certainly impacts the markets, and it does as well over the weekend. So there's always news being made over the weekend on the political side. How will you cover that?
Yeah, so the Sunday show in the 9 o'clock hour, which will be up against kind of traditional Sunday shows, we're going to aim to focus more on politics, get newsmakers on set for the show as well. The goal there is to really compete. And here I think that we can add something that you won't find on other networks. Yes, we're going to focus on the politics and all of the horse race stuff that is so integral to politics. But again, our prism, our vantage is through business and the economy. And to get politicians on the record talking about those issues, I think is something that will really set us apart from our competitors.
David, thank you so much. Appreciate it. David Gurr, Bloomberg News correspondent for Bloomberg, host of the Big Take podcast. So catch our new show, Bloomberg This Weekend. David Gurr, Christina Ruffini, and Lisa Mateo bring you unique conversations and in-depth interviews on news, politics, lifestyle, and culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app Saturdays and Sundays starting at 7 a.m. Eastern Time. So we'll have that live programming for you, which is new for Bloomberg, and there's nobody better to bring that to you than David Gurr, Christina Ruffini, and Lisa Mateo. We know them. We know Lisa Mateo. She's been a big part of our radio programming here for a while, and that's going to be a good thing. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Christina Aquino, thank you so much for joining us today. Appreciate the help for the last 2 hours.
Thanks for having me.
Awesome. Very good. So that does it for this morning. We got the markets trading up, folks. We'll see what Carol Master and Tim Stenevich can do with this market. S&P's up 45.6%. The NASDAQ up even better, 288 points, 1.1%. More programming coming up. This is Bloomberg.
This is CBS News on the Hour, your home for original reporting.
I'm Peter King. Democrats give President Trump an F. Republicans give him an A+ after last night's State of the Union address. CBS's Aaron Navarro says GOP officials believe his marathon speech puts them in a good position for the midterm elections.
They feel that it went well, specifically in creating the political framing, the contrast that the Republican Party can lean on in the midterms, especially when it comes to the contrast between themselves and the Democratic Party. You're seeing the White House, Vice President Vance, in a Fox News interview that just aired, really lean on the moments where Democrats did not stand for some of President Trump's lines from his address, such as when he called on states to ban transgender care for minors, or when he said the, quote, first duty of the American government is to protect American citizens, not illegal aliens.
In that interview, the vice president says the U.S. wants a peaceful solution for Iran.
We're sitting down having another round of diplomatic talks with the Iranians, trying to reach a reasonable settlement, but a reasonable settlement towards what end? Iran can't have a nuclear weapon.
There's new fallout from the Jeffrey Epstein files. Here's CBS's Christopher Cruz.
Former Harvard president Larry Summers will relinquish his academic and faculty appointments at the school at the end of the academic year, one of which is his university professorship, the school's highest faculty distinction. He's also resigned from a leadership position at the Kennedy School of Government. The resignations were announced after the school said it had been reviewing documents related to Epstein that were recently released by the Justice Department.
Bill and Hillary Clinton are due to sit for depositions about Epstein at their home in Chappaqua, New York. The former president and Secretary of State talking to members of the House Oversight Committee. Kentucky Republican Tim Burchett says he doesn't expect much.
I think they're guilty of sin of a lot of things, but I don't think anybody thinks we're going to get anything.
Just announced this year's Rock and Roll Hall of Fame nominees. And CBS's Deborah Rodriguez has a look at a very long list.
New additions Shakira, Pink, Melissa Etheridge, and Lauryn Hill are among 10 first-timers. Luther Vandross and Phil Collins are newbies, too. The third time could be the charm for Mariah Carey, Iron Maiden, Joy Division, New Order, and Oasis. Second-time nominees, the Black Crowes, Billy Idol, and Sade.
Wall Street responding to the president's State of the Union address. The Dow is up 254 points, and the NASDAQ has gained 250. This is CBS News. Tennessee lawmaker wants big changes to the state's abortion law.
Tennessee's current abortion ban only penalizes physicians. State Representative Cody Barrett's bill would expose the women who get abortions to assault or homicide charges.
Murder should be murder, whether it's a person in being or a person in utero.
Democratic opponents like State Representative Afton Ben warned the bill could even make women eligible for the death penalty.
We should be very scared. That is a very, very scary step the state is about to take.
Barrett acknowledges the death penalty would be a possibility, but he says it would be highly unlikely. Michael Wallace, CBS News.
NASA's Artemis II moon rocket is on its way back to its hangar at the Kennedy Space Center. It's a slow 4-mile trip that can take as long as 12 hours. The rocket's upper stage needs repairs that simply can't be done at the launch pad. NASA hopes to launch 4 astronauts at a trip around the moon as soon as next month, the first time humans have been anywhere near there since 1972. Peter King, CBS.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump sets a record, but did it make a difference? Welcome to the Wednesday edition as Washington reacts to the president's State of the Union address, almost 2 hours in length, with, of course, very different grades on both sides of the aisle. We were watching, so you didn't have to, and we're going to bring you up to date with the help of White House correspondent Tyler Kendall, who's live on the North Lawn this day after, and we'll explore what the president said about Iran, a potential strike against Iran with Bloomberg National Security Editor Michelle Jamrisko, and we'll hash out the whole night, including the Democratic response from Governor Abigail Spanberger with our political panel. It's the day after we wipe out the cobwebs and look ahead to NVIDIA earnings with Charlie Pellet, who kicks us off with his view on Wall Street live from World Headquarters in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Good day from New York. I got you covered on the state of the market right now. You pointed out NVIDIA after the bell up now by 2.2%, but also Salesforce.com also up by 2.3%. Bottom line here, stocks higher, very close to session highs at midday. S&P up 48, 69.38 where we stand, up 0.7%. The Dow up 245 now, up 0.5%. The Nasdaq Composite Index up 252 for Nasdaq, a gain there of 1.1%. 10-year 4.03% with the 2-year 3.46%. Gold is up $65 the ounce, up another 1.3%, 52.08 on spot gold. West Texas Intermediate crude is down 0.3%, 65.46 a barrel. And Bitcoin back with a $68,000 handle. Bitcoin right now just above 68,000. It is surging by 6.3%. And cannot ignore the VIX today. The VIX now with an 18 handle. Bottom line here, stocks higher. The Dow, the S&P, NASDAQ all advancing a day after President Trump's economy-focused State of the Union address. The president said the roaring economy is roaring like never before. Reaction from Neil Dutta, the head of economic research at Renaissance Macro Research.
I mean, if you look at private domestic demand for the full year last year, it ran 2.5%. Respectable, no doubt. It's a solid performance. But I think it's short of a golden age of economic growth. In fact, private demand, you strip out trade and inventory investment and government, it's actually a little bit slower than it was in 2024.
Neil Dutta of Renaissance Macro. Earnings news, Cava, the restaurant chain, Mediterranean food, surging 25.5% after earnings workday, little changed, up under 0.1%. I'm Charlie Pellet. Balance of Power continues now. Back we go to Washington after a long night. Once again, your host. Here he is, Joe Matthew.
Yeah, or I guess an early morning, Charlie. Thank you so much. Charlie Pellet will be back with us, his view on the markets in about 15 minutes' time. Yeah, it went into the wee hours last evening. I think they're still cleaning up Statuary Hall after a record-long State of the Union address. And so we're peeking out of one eye this morning in the nation's capital, and maybe that's the case around the country. How many people watched that thing? I can't wait to see the number. Last year was 36 million. Did 36 million or more sit through an hour and 47 minutes last night? If so, man, we've got something. So thanks for joining us, if you were up late, especially on the Wednesday edition of Balance of Power. We've got a full day of coverage planned for you on this day after the speech. No real insights into Iran last evening, and definitely no announcement of strikes. So that story remains in play, as does the story about tariffs and, of course, the president's hopes for a better economy in the new year. course, we know going into this speech that he was underwater on some pretty big issues. We talk about it every day here on Balance of Power on Bloomberg Radio, streaming live on YouTube right now. You can find us by searching Bloomberg Business News Live. We're always with you on Bloomberg Originals here from Washington as well, because affordability, of course, has been the mantra, right? We talk about it every day. And the president has found himself underwater in major polling from major firms we talk about every day. We just had Cliff Young from Ipsos in here recently. It's not just the economy, the affordability issue, the stubborn last mile when it comes to inflation, or maybe it's a new mile when it comes to tariffs, but it's also immigration and the outrage that we've seen by so many in the country over the deadly shootings that took place in Minnesota, the call by Democrats to take the masks off, to put the badges and the IDs on, and to get a judicial warrant if you want to knock down somebody's door. This is why, by the way, that whole situation is why the Department of Homeland Security remains shut this day after the State of the Union. So it's clear on the two big issues. Pick your poll. The president has found himself struggling on the keys that got him elected: the economy, affordability, if you will, dare we use that word, and immigration. Now, knowing that that's where we stand in the public opinion polls, the president of the United States stands before the American people with this message.
Our country is winning again. In fact, we're winning so much that we really don't know what to do about it. People are asking me, please, 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 Mr. President, we're winning too much. We can't take it anymore. We're not used to winning in our country. Until you came along, we're just always losing, but now we're winning too much.
Can't take it anymore. And so the president wakes up to a new day, having projected the golden age last evening before the American people and before a joint session of Congress. And that's where we start this morning with Bloomberg Washington correspondent Tyler Kendall, who was up late with us too, and she's back at it at 1600 Pennsylvania Avenue. Tyler, we can't take it anymore. No 2-hour speeches, not after this. What's the vibe at the White House today, and what's the message that the administration is trying to frame coming out of this speech, Tyler?
Well, Joe, it's actually relatively quiet here at the White House today, with the president having no public events after what is now considered to be the longest State of the Union address in U.S. history. But it was very clear that President Trump had a goal to make the focus all about domestic issues, despite foreign policy headlines really dominating the conversation here in Washington in recent weeks. I think it's fair to say, considering that we do know, and as you alluded to with recent polling, this White House has really been playing defense when it comes to affordability. And the president did that by touting prior accomplishments, right? Really pushing ahead when it comes to those tax cuts under the One Big Beautiful Bill. As it appears, this White House is banking on larger refunds, more cash in consumers' pockets as they head into the midterms. President Trump also doubled down on his tariff plans. We can talk about that a little later too, but it's really important to note that we didn't really get a lot of new policy proposals from the president. There was a nod to a potential new retirement savings plan for workers that do not currently have an employer-sponsored one. Perhaps we'll get some more details on that too. But a lot of the president's speech when it came to the economy and those affordability proposals seemed to be geared at lawmakers to try to help him codify some of those ideas that we've already heard, including banning institutional investors from buying single-family homes, as well as pushing forward his health care framework, which we haven't really heard that much about, considering that at the end of the year we were talking so much about what the future of healthcare and pricing would look like. Joe, as you well know, President Trump's plan is really centered on the idea of trying to shift federal subsidies from insurance companies to American consumers. But this is going to be a key focus of the president's as we go forward. But it's important to note a lot of these plans don't really have that backing from Republicans in Congress, and there's only so much he can do with unilateral authority.
Now, that's a perfect job, putting structure around a nearly 2-hour-long speech that hopscotched through a lot of topics. Tyler, thank you. And I want to just, while Tyler puts structure around this, I'm going to stay at 30,000 feet here, because the president started on the economy, right? Could have started anywhere. But it was affordability, right? It was inflation. America is back. Gas prices are down. The investments are up. Listen.
The roaring economy is roaring like never before. One of the primary reasons for our country's stunning economic turnaround were tariffs. Mortgage rates are the lowest in 4 years and falling fast. American oil production is up by more than 600,000 barrels a day. Democrats are destroying our country, but we've stopped it just in the nick of time, didn't we?
Oh, did you hear that turn at the end there? And that's important, Tyler. He started with affordability, knowing that a lot of people are probably going to hear, the first 30 minutes of this thing before they either give up or go get some popcorn or go to bed. Things got a little darker in the second half of the speech, Tyler, when he started yelling at Ilhan Omar and others, started calling Democrats crazy people. And those words were in the speech. That was in the script, wasn't it?
It was, according to the prepared remarks that us reporters received directly from the White House. And I think it's fair to say that there were very few moments of bipartisanship. We did see some moments, including when President Trump called for that legislation to pass that would curb insider trading in Congress, for example. But when it comes to immigration, that really seemed to be the main flashpoint between Republicans and Democrats. You mentioned that heated moment between Congresswoman Ilhan Omar and President Trump. And it was also interesting to hear the president call for the immediate resumption of funding for the Department of Homeland Security. This was one of the first State of the Union addresses to be conducted amid a partial government shutdown as we head into next week, and hundreds of thousands of DHS employees could miss their first paycheck. But to hear the president talk about that without us getting any indication that we are any closer to a deal when it comes to curbs on immigration and customs enforcement. This, of course, is going to be necessary as Democrats are really holding the line that they need to see some of those reforms. You spoke to a lot of them yesterday on Capitol Hill when it comes to the idea of demasking federal agents involved in immigration operations, also those new judicial warrant requirements, because, Joe, at the moment, the most concrete change that we've seen have been the mandate for body cameras on federal agents. But again, that's not codified into law. Republicans have often pushed that things could be done through executive action, but Democrats are holding firm. They need to see that tangible legislation to get on board with reopening DHS.
Tyler Kendall perfectly walking us through what was discussed last evening. Tyler, interesting in some cases what was not. In our remaining moment, we can start with China, by the way. I don't want that box truck to knock you over. If you're with us on YouTube, you got to love what happens on the North Lawn. Tyler, China, was that intentionally left out of the speech so the president didn't affect the summit in April?
Well, we can't say for sure. The White House hasn't commented, but pretty remarkable, Joe. This actually marks the first time in over 2 decades that a U.S. president hasn't directly addressed U.S. economic ties related to China. And as you're alluding to here, the timing is perhaps raising some questions as we look ahead to the next few weeks. And President Trump is set to come face-to-face with Chinese President Xi Jinping in Beijing, marking the first time that an American president will be in China since President Trump went last time in 2017. And there's a lot of talk here in Washington about how the president's leverage, his hand going into this meeting, may be undercut in the wake of the Supreme Court ruling against his IEEPA tariffs. Now, to be sure, there are still rather high rates against Chinese imports. Our analysts at Bloomberg Economics have crunched the numbers. It's around 21%. So you ask the administration, they say nothing's changed, but an interesting tidbit to pick up on that China was not mentioned last night.
Yeah, absolutely. Tyler, great to have you back among the living today. Thanks for being with us here in the update live from the White House. Our friend Tyler Kendall, I'm Joe Matthew in Washington. We'll have much more straight ahead, including our political panel, only here.
12:21 on Wall Street. We do check markets all day long here at Bloomberg, a day after the State of the Union and ahead of NVIDIA results after the bell. U.S. stocks trading higher, just about the best level of the day right now on the S&P 500 index. Right to the numbers, S&P up 49 at 69.39. That is a gain of 0.7%. Dow Industrials up 263. On the Dow, a gain right now of 0.5%. NASDAQ Composite Index up 257, up 1.1%, with the VIX currently at 18. We've got the 10-year at 4.03%, the 2-year 3.46%. Gold is advancing 1.3%, 52.13 the ounce, and Bitcoin surging 6.9%. Bitcoin at $68,500. The apparel designer Stephen Madden has pulled its profit guidance after the U.S. Supreme Court struck down sweeping global tariffs on Friday. President Trump did respond with a new set of duties. Stephen Madden says the sudden change in trade policy makes it difficult to calculate the cost of tariffs in coming months. Ticker SHOO as in shoe, down now by 5.9%. Former Harvard president and ex-Treasury Secretary Larry Summers is retiring from his Harvard professorship following revelations that his ties to late sex offender Jeffrey Epstein were deeper than previously known. Recapping stocks higher, S&P up 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Good to see Charlie Pellet every day. It's a reassuring part of our lives, right? The unchanged Charlie Pellet, the voice of Wall Street and the New York subway. He'll be back in 20 minutes with the latest on Wall Street. Big stuff later. We're talking about NVIDIA for a reason. We've got NVIDIA earnings after the bell. Salesforce, too, right? That's actually a pretty big deal, too, when you consider what's been going on in the software world. And on the late edition of Balance of Power, we're going to unpack all of it with Ed Ludlow and Romaine Bostick. To stay up to watch the speech, you know we're watching so you don't have to. Almost 2 hours in length. A new record. Yes, a new record for Donald Trump. Hour 47, he beat his own record for a speech to a joint session of Congress, which, by the way, he said just last year. And also, top President Clinton's all-time State of the Union. 2000. Nearly an hour and a half was the longest on record. Imagine how refreshing it would be. It was 1972. Richard Nixon spoke for under 30 minutes. That, according to the American Presidency Project at the University of California, Santa Barbara. Unbelievable. Now, one thing that happens, whether it's a short or long State of the Union or address to a joint session of Congress, is you wake up every morning the next day, every year, I should say, the next day, with the tip sheets all have the same thing, right? 4 takeaways. 4 takeaways from the speech are 4 takeaways from the speech, reminding us that this whole State of the Union thing is kind of a big blob. And then, like you just heard Tyler Kendall, the journalists come in and put structure around it and frame it in a way that they believe is news, right? It's sometimes up to us to say what we think is the news. And there's no greater example of that than a speech like this one. So everyone's got their 4 takeaways, and I just felt like I needed to come up with some of my own. It is a big blob, CC. It was almost 2 hours long. I mean, there's 40 different topics in there. So somebody's got to play triage on this stuff. So, the big takeaway is clearly, number one, the record that he set is the longest speech of all time, which is saying something before a joint session of Congress. What else did we learn? The president thinks that Democrats not only cheat, but that they are crazy, as we established with Tyler Kendall. The word crazy was in the script that was loaded into the prompter. Last time you called somebody crazy with a straight face, I don't know how that went over for you. Here's my big takeaway. The big one, the screamer. This should have been like the redhead on the terminal this morning. Jensen Huang was not even there. I tried to gin up the speculation yesterday. And lastly, same designated survivor. That's my 4th takeaway. Doug Collins. For the 2nd year in a row, why is Doug Collins not allowed to attend the State of the Union? And it's not lost on us. It's kind of noteworthy that the President of the United States bestowed 2 Congressional Medals of Honor on combat veterans, a Purple Heart on another, multiple, but the guy who runs the VA wasn't there. Just curious. You think they'll let him in next year? We had a lot of questions about Iran going into this speech, of course, and whether the president might even announce strikes. Spoke to a number of lawmakers on both sides of the aisle about that prospect leading up to the speech. No one knew what he was going to say. We don't have a lot more to go on. But with the help of Michelle Jamrisco, we're going to parse the words and actually show you how the president's message is evolving with this massive buildup of military hardware in the Middle East. Here's Donald Trump from last night.
After Midnight Hammer, they were warned to make no future attempts to rebuild their weapons program, and in particular, nuclear weapons. Yet they continue, starting it all over. We wiped it out, and they want to start all over again, and are at this moment again pursuing their sinister ambitions. We are in negotiations with them. They want to make a deal, but we haven't heard those secret words. We will never have a nuclear weapon. My preference is to solve this problem through diplomacy. But one thing is certain, I will never allow the world's #1 sponsor of terror, which they are by far, to have a nuclear weapon.
The secret words he's waiting to hear. Not so secret. Michelle joins us now, of course, Bloomberg White House and National Security Editor. Great to see you the day after. How do you unpack that to find anything different than what we've heard so far?
Well, as you say, Joe, nothing really newsy, but I think a few things were pretty notable.
Yeah.
We did hear, what was not notable was that he repeated, I prefer a deal, but if not, we'll see what happens, with an ominous tone. That sort of message rung through again. But what was notable and a little bit different was he got into this whole section around the protesters and the treatment of the protesters by the regime. And then he mentioned the missile program and some other capabilities. And in the process of doing this, he also said, basically framed this whole narrative from last June as Iran is now reconstituting its nuclear ambitions. Right. He mentioned sinister ambitions. Yes, yeah. He kind of took a very different tone and a very different tack, as he has in Truth Social posts and in other appearances over the last several weeks, where he was kind of squarely focused. If he mentioned the June strikes, he mentioned that it obliterated the nuclear capabilities. Fake media won't report that, but it obliterated the nuclear capabilities. Right. And then when he talked about the protesters, he would talk about it in the sense of, I convinced the regime to stop that, so now we're back on track. So last night kind of took you a little off course in terms of the rhetoric, but whether it took you off course in terms of the strategy remains to be seen. And of course, as you mentioned, the talk yesterday was, will he announce the strike at the State of the Union, which some people thought was absurd, but it became this sort of DC traditional parlor game where everyone's talking about it, everyone's like gaming chances, and in the process, Trump is loving it, because it's exactly what you and I talk about every time I'm on this show. He loves the unpredictability, gives him leverage, he loves the showmanship. He was out there to make this big speech, the longest speech on record for the State of the Union, and everybody's watching because questions like, will he strike Iran, were top of the list and were undecided until he ended the speech.
You point out some really important nuances, though. I think, what were the words he used? We knocked it out, but they're rebuilding it with regard to the nuclear program. So I guess he's sticking with, we obliterated this. But as we've heard from other administration officials, this White House seems to think that they're on the threshold within days of having weapons-grade enriched uranium. Will that be the justification for a strike if we see one?
Well, I think, this is a president who always wants to keep the door open, or at least show that he's keeping the door open for diplomacy. So he's allowing them another chance. Obviously, tomorrow we've got Jared Kushner and Steve Witkoff headed to Geneva for talks.
What should we expect tomorrow, Michelle?
I mean, this is going to be really important. This is a huge pivot point at this point, because we're coming up on that, whether it was 10 days from last Friday or 2 weeks, what have you, we're coming up on that sort of self-imposed deadline that Trump had for, they got to show something. He said secret words that we will not pursue a nuclear weapon. I don't think we should expect that from the regime. Definitely not publicly, probably not privately either. But if they can show some sort of opening, some sort of response to Trump's demands, and of course, this is the art of the deal. They don't have to go so far as to publicly say, hey, we're never going to pursue any nuclear ambitions.
That's right.
Perhaps they can just show cooperation, play the waiting game, keep the talks dragging out, and they can avoid, at least in the near term, a strike on more facilities, targeted strike, or something bigger.
Maybe agree to a lower threshold for enrichment for their own purposes. It's interesting here. You mentioned the protesters as well. He threw a number out there, over 30,000 dead. Remembering it was weeks ago, he said help is on its way. does that imply that he either betrayed these protesters he promised would be there to help him? What they think about that? Because as you point out, he went all the way in last night. He said some of them have been shot, they've been hanged, having previously said that he prevented that from happening.
Yeah, I mean, I think he just kind of hit a reset on let's look at this whole situation holistically, take the past couple weeks out of it in terms of where we were waiting for me to say yes or no on strikes, and look at all the factors here. So he brought the protesters back in, which I thought was notable, but also it kind of makes sense if he's trying to reapply the leverage, especially ahead of talks tomorrow, reapply the leverage on the regime, say, hey, you got to do something, and I care about all these things simultaneously. If you want to focus on nuclear talks right now, fine, with focus on nuclear talks, but we know what you're up to, and you're reconstituting your programs and your sinister ambitions, as he called them, and we're ready to fire away when we need.
Bring us to your specialty, that is the global south. Why no China last night? Are we just trying to keep the lane open for this summit in April?
Yeah, I think there was no, it was a surprise in the moment that there was absolutely no mention of it, but then, you're thinking about it again, it's, he didn't need to mention China.
He could have cleared 2 hours with one paragraph on China.
I'm sure Susie Wiles was happy that he stayed on affordability for as long as he did. I mean, he had a real domestic message that he needed to clarify and hammer, and I think he was having fun with it, honestly. I mean, how many minutes did we spend on the men's hockey team? Go USA!
That's got to be one of the longest.
That was a long tangent. That was a long tangent. Yeah, and a lot of rah-rah around the Olympics, the World Cup, the 250th anniversary in July, and so there was a lot of that to square in. So in some cases, it's remarkable.
Was that targeted at China somehow, or you just mean this was something else he was focused on?
In many ways, if you want to think about it, I think a lot of these things are about China without being about China. This whole posturing around Iran, a lot of people are asking the question, well, how does that make China look? Or how would that affect the Chinese relations? A lot of smart analysts out there are saying it doesn't at all. Because in a way, he can do what he wants in Iran. He's still going to look powerful, peace through strength, if he achieves the target of military strike, then that does what he wants, but he can still remain intact with the Shiv visit, which I think both sides are intent to get off without a hitch.
Boy, I'll tell you what, I don't know where he's going to go a year from now, but it's remarkable how the politics have changed since his joint session.
For sure.
That we saw a year ago. Completely different lineup, completely different stakes. Michelle, thank you. It's great to have you with us here the day after. I could talk to you all day, but at some point we have to pay for business. Michelle Jamrisco, National Security White House editor, with us here on Balance of Power on Bloomberg Radio. I hope you're looking forward to the weekend because we've got plans. I'm headed to World Headquarters in New York, not only to see my friend Charlie Pellet. That's got a lot to do with it. I want to see my friends David Gura, Christina Ruffini as well. Lisa Mateo, look at this if you're with us on YouTube. Have you heard about this? We're in the weekend business now. Bloomberg this weekend with unique conversations, in-depth interviews on news, politics, lifestyle, culture, Bloomberg TV and radio, and the Bloomberg Business app at Saturdays and Sundays starts 7 a.m. Eastern. Set your clock, and I'll meet you there this weekend, only on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We're on NVIDIA watch after the close of trading. Ahead of that report, NVIDIA up now by 2.3%. Day after the State of the Union, stocks are higher. Right now we got the S&P holding very close to session highs with a gain of 49 points. 69.39 where we stand on the S&P. That is an advance now of 0.7%. Dow Industrials up almost 300 points, up 295 now, up 0.6%. While the Nasdaq Composite Index up 1.1%. The Nasdaq 100 Index up 1.2% with a VIX at 18. Spot gold is up $68 the ounce, up 1.3%. West Texas Intermediate crude down 0.2%, 65.47 a barrel. The 10-year, by the way, 4.03%. Lowe's is forecasting sales for the full year that did fall short of expectations. It's seen as a sign the housing market will remain lackluster in the near term due to high borrowing costs and economic volatility. Lowe's shares down now by 5.5%. Rival Home Depot, a drop there of 3.2%. John Campbell is Senior Portfolio Manager at Allspring Global Investments, and on surveillance this morning, he told Paul Sweeney and Tom Keene consumers are hanging in there thanks to a lift from Washington.
One thing that has helped, obviously, is the extension of tax cuts, no tax on tips and things like that. So people are actually starting to get some decent tax refunds. They're getting lower withholding rates. And so the consumer has held in quite well. The high-end consumers, obviously, wealth effect has been keeping them spending quite prolifically.
Allspring's John Campbell interviewed this morning on surveillance. Former Harvard president and ex-Treasury Secretary Larry Summers is retiring from his Harvard professorship following revelations that his ties to late sex offender Jeffrey Epstein were deeper than previously known. Recapping S&P right now, best level of the day, up 50, up 0.7%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great job. The building's going to shake under Charlie's feet right around 4 p.m. when NVIDIA opens its books from the last quarter. It might be a couple minutes later than that. We're all going to be watching the ticker when this one happens because I guess the rest of our lives depend on where this number's going to fall. Don't ask me about Salesforce. We don't talk about software on this show anymore. Thanks for being with us here on the Wednesday edition. I kid, of course. Been a tough run for the old IGV. As we try to clear out the cobwebs from a very late night on Capitol Hill. Yeah, you've heard about it already. Everyone, 2 hours in length almost. It's $1:47. Longest of all time. As I quote the prose of the great Gregory Corti writing for Bloomberg, in more than 1 hour, 47 minutes, the longest State of the Union in history, the president delivered a rally-like speech, punctuated less by policy proposals than by political attacks. Mr. Corti's got his takeaways, by the way. Those are the real ones. I gave you my fake ones from the speech last evening. But yeah, the political attacks were featured prominently. Things started off with a little bit more of a chipper mood of talking about the economy, talking about winning, getting sick of winning, men's hockey. He said, by the way, the women's hockey team's coming to the White House. Has anybody confirmed that? I thought they turned that down. Maybe they worked out a deal. In the second half, though, and of course, Al Green got thrown out very early. I'm not counting that. In the second half, the president started veering off course a little bit, but even when he was on script, he was still criticizing and insulting Democrats. He was perplexed by the fact that they wouldn't stand up and clap for him, knowing that most states of the union are featured by one side of the room or the other, standing and clapping while the other sits on its hands and blah, blah, blah. He tried to set a trap for them at one point as he went after Democrats, tried to challenge them to stand. Here's President Trump from last night.
Look, nobody stands up. These people are crazy, I'm telling you. They're crazy. The increased prices that all of our citizens had to endure, you caused that problem. You caused that problem. One of the biggest ripoffs of our times, the crushing cost of health care, caused by you. Democrats are destroying our country, but we've stopped it just in the nick of time, didn't we?
Well, there was a lot more where that came from, too, as the president got into a back and forth with Ilhan Omar, among others. Did you catch all that? Yelling back to the president, "You should be ashamed. You have killed Americans," referring to the deadly ICE shootings in Minneapolis. The president then takes to Truth Social this morning. He's up and running. When you watch low IQ Ilhan Omar and Rashida Tlaib, who was sitting right next to Omar, and they were pointing and yelling together, as they screamed uncontrollably last night at the very elegant State of the Union, such an important and beautiful event, they had the bulging, bloodshot eyes of crazy people. Lunatics, he writes, mentally deranged and sick, who frankly look like they should be institutionalized. When people can behave like that and knowing that they are crooked and corrupt politicians, so bad for our country, we should send them back from where they came as fast as possible. This is where we start with our political panel. A little light fare for Ashley Davis. Our Republican strategist partner at S3 Group is back with us after a late night. And glad to say that Julia Rodzinski is back, co-founder of Lift Our Voices, Democratic strategist. Great to see you both, and welcome back to Bloomberg. Ashley, is this the new vibe at the State of the Union? This is the new Octagon, the Coliseum when it comes to politics?
You know, unfortunately, Joe, first of all, nice to see you. But I think, unfortunately, it has been over the last couple presidents. I mean, remember last State of the Union, we had the speech being ripped up. I mean, it's just kind of this tit for tat that goes back and forth. If it's a Democrat,
I remember Joe Wilson, Ashley. We can go
Joe
back
Wilson.
years.
I forgot about that. Yeah, that was So that was Obama, right? So. Yeah, unfortunately, I don't like it on either side because I think that it just hurts, the institution. But listen, this is what under the Bush days when I had more experience with this, I think that it wasn't as bad, but it was still bad. It just continues to get worse. Then you have the whole social media aspect. But listen, I think, Joe, Republicans woke up this morning with a sigh of relief. Everyone I've been talking to this morning, I think that thinks that he did. Listen, everyone knows Trump's going to go off script. Everyone knows that he's going to go or say things maybe, that he shouldn't. But everyone's pretty happy with where the speech ended up last night.
Julie, some folks have suggested we need a new look here, the old State of the Union. Maybe it doesn't play the same role that it used to. People don't watch it all live. They see it in clips the next day. They wait for people like me to say what the 4 top takeaways were from last evening. Is this still a productive exercise for either party?
Well, it's a constitutional exercise in that the president needs to deliver some sort of State of the Union to the people.
He could send a letter if he wanted to.
He could send a letter, and then actually, that's what historically that's.
And then tweet it.
I think much like every other norm that's pretty much been shattered during this presidency, this doesn't serve a function anymore because the reality is Democrats sat there like props in Trump's. Coliseum style speech. And I don't know how much they're going to want to entertain doing that for the next several years. At the same time, I think Republicans, if Democrats just walk and don't show up, I think the same thing will happen to Republicans if there's a Democratic president next time around. So, the days of comedy, which really did exist, you talked about Bush's State of the Union. I worked on the Hill back then, and that's actually the last State of the Union that I was around for. And that was nothing like this. And this really began with, as you said, with Joe Wilson screaming, "You lie." And that was such, if you remember, that was such just a shock to people that somebody would actually treat the president this way. Well, this has just become, think about how quaint that is, right? Then you had, of course, Republican congresswomen, including Marjorie Taylor Greene and Lauren Boebert screaming at Biden last time. You have now Ilhan Omar and Rashida Tlaib trying to engage the president here. You have Al Green for the second year in a row being ejected. This has become performative on both sides, and the reality is that it just doesn't serve a purpose much anymore.
It's a madhouse. Al Green, by the way, I was there when this happened, Ashley. The minute he got thrown out, he came straight into Stat Hall where all the camera crews were, and he started doing interviews, which ought to tell you a lot about the motivations here or what you get for that kind of. But before we get back to Ashley, Julie, should Democrats then, or should whatever the minority party boycott the State of the Union so they're not seen as props?
Well, it depends, right? If you have a Biden who is going to, not use them as props and not sit there and try to, score political points to the extent that Trump did, those days are over, I think, for both parties. And the reality is I can't speak to what the next Democratic president is going to do because I have no idea who that person is going to be. But certainly, I do not think Democrats should be showing up to any more Trump State of the Unions because they are props. They're props just as much as the men's hockey team were props, except the men's hockey team probably have a few concussions to the head, so I don't necessarily blame them for acting like, dopes for being used as props. I do blame Democrats for sitting there effectively as the props that they turned into.
Well, I hope nobody thinks they're dopes. That seemed like to be pretty, like maybe the only bipartisan moment of the night when these young men had a chance to step into the gallery. I mean, but Ashley, I want to know, did the president who walked into that room underwater on some big issues like the economy and immigration, did he turn the dial on anything? Did he help his public perception in the middle of a midterm campaign cycle?
Well, just quickly on I'm a mom of a hockey player, so I actually think the hockey players united the country. I mean, how many people were watching them on Sunday morning? So that to me, nothing to do with the president. I was really proud of the United States during that time. But I think that Trump was trying to change the narrative on obviously not the closing the border, but immigration in regards to Minnesota. He was trying to change the message on affordability. And that's why I started out, and on healthcare as well. That's why I started out kind of saying Republicans did wake up happy this morning because the fact that if you watch all the morning shows and just this show too, Joe, as the recaps are happening, Republicans are fine to defend the speech, and it could have gone the other way. So I think he did try changing the narrative. Whether it's going to work or not, obviously everyone's going to start quoting on my side of the aisle today, the CNN poll showing that 64% or whatever the number was. I'm not a big believer in all the polls one way or the other. But they're going to start pointing to the fact that CNN poll said that that people like the speech, but this could all change in 24 hours.
Yeah, I did think it was a really nice moment with the men's hockey team. There are questions about what the president said about the women's hockey team. He said they're coming to the White House after, I believe, they turned down his invitation. But I want to get to the response. Julie, we haven't talked about Abigail Spanberger at all. Delivered the official Democratic response from Colonial Williamsburg. Let's watch and listen.
He lied, he scapegoated, and he distracted. And he offered no real solutions to our nation's pressing challenges, so many of which he is actively making worse. He tries to divide us. He tries to enrage us, to pit us against one another, neighbor against neighbor. And sometimes he succeeds. And so you have to ask, who benefits from his rhetoric, his policies, his actions, the short list of laws he's pushed through this Republican Congress? Somebody must be benefiting. He's enriching himself, his family, his friends. The scale of the corruption is unprecedented.
Julie, what'd you think of the selection of this new governor of Virginia and the construction of the speech, the way she got to her message?
I think the message was great. I think the fact that she is a national security moderate from a swing state was wise. Obviously, she's a woman, and that is who Democrats are trying to get to the polls and droves this year. And so for all those reasons, I think that it was a smart thing for her to do. It's also very smart to deliver it in front of an audience and not to sit there and stare at the camera without anybody applauding her. So for all those reasons, I think she did a good job. I mean, to the extent that anybody stuck around to watch her after that excruciating nearly 2 hour speech is a different story. But, look, the response is never something that, except for Marco Rubio drinking water nonstop, I can't remember another response, Democratic or Republican, that has stayed in my mind. We could have a separate discussion about the men's hockey team. I have a very different view on that, but I guess we'll save that for another time.
God, I can't. Well, I mean, the water bottle with, yes, of course, the chapstick for poor Joe Kennedy, the stairwell behind Bobby Jindal. Ashley, we've got a minute left. What do you think? Did Abigail Spanberger break the curse when it comes to the response?
Yeah, well, I think she broke the curse 100% by doing it with a live audience. I think Julie's exactly right there. I mean, we even look. First of all, I think the response to the State of the Union is like the worst job. If you usually get it if you're like an up and comer, and people always clamor to do it, but usually not good things come out of it. I mean, last year, was it 2 years ago with Senator Britt, and that was something that was unfortunate of how she was set up. But I think that the governor did as well as she could have. I mean, I thought she obviously is there to be the attack dog, and so that's what she did, and she did a good job at it.
Ashley Davis and Julie Roginski are a great panel today. They'll be back with a lot more in our second hour. By the way, I recall we're all old enough to remember Bob McDonnell, another governor of Virginia, who held the Republican response. He did it inside the Capitol with a crowd full watching. That looked pretty good, too. It just didn't end well for him. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The president leans into the biggest stage in politics, but did it move the needle? Welcome to the Wednesday edition as Washington reacts to President Trump's State of the Union address. Record in length, almost 2 hours, with predictable reactions from both sides of the aisle this day after. I'm Joe Matthew alongside Kaylee Lines in Washington as we clear out the cobwebs from a late night or early morning, I should say, Kaylee. We were watching, so No one else had to.
Well, I guess that is a question. How many people really watched or at the very least stayed through the end of the president's speech or the response from Democratic Governor of Virginia, Abigail Spanberger, after the fact, both of them touching on affordability. President Trump, though, obviously took his speech well beyond that issue and spent more time looking back at the last year of his presidency than necessarily telling us what we can expect looking forward in the remaining almost 3.
That's exactly right. There are a lot of questions about the way the White House delivers this message or hammers home what the president said last night with cabinet secretaries fanning out across the country and surrogates, of course, on Capitol Hill. We're going to talk to one Republican senator in just a moment about his take as we seek input from both sides of the aisle today.
Yeah, the senator from Montana, Steve Daines, will be with us, keeping in mind he ran the NRSC in the last election cycle. He was charged with getting the Republicans back in the majority in the Senate. And the question is going to be for Republican incumbents looking ahead to their own elections in November, whether or not President Trump did anything to help them last night at a time when polling shows that the American electorate is not satisfied with the policies of this president when it comes specifically to issues of the economy, but even increasingly immigration.
That's true. We'll hear from a Democrat later, Congresswoman Maggie Goodlander from New Hampshire, the first in the nation primary state, at least they used to call it that, will join us as well as we try to balance input from both sides here. Kaylee, will remind everybody, we're still in the midst of a partial government shutdown.
Yeah, day 12 now and no end in sight. So we'll continue to keep tabs on that, just as Charlie Pellet is keeping tabs, as always, on financial markets for us from New York. So let's check in with him now. Hey, Charlie.
Hi, thank you very much, Kayla. Lines from the State of the Union to the state of the markets. I got you covered with the Dow, the S&P, NASDAQ, all advancing right now, not just higher, best level of the day right now on the S&P 500 index, as seen on my GIP screen. Let's go right to the numbers. S&P up 53, 69.43 where we stand. That is a gain of 0.8%, a little bit better than the Dow. The industrials up 0.6%, not as good though as NASDAQ, up 1.2%. The NASDAQ 100 index up now by 1.3%. The VIX at 18, the 10-year 4.03%. Spot gold up $63 the ounce to 52.07, a gain there of 1.2%. Silver, by the way, up 4.4%, back above 90 right now, closing in on $91 the ounce. And West Texas Intermediate crude 65.50, WTI down 0.2%. A surge for Bitcoin, 68,625 now on Bitcoin, up 7.1%. The big earnings event after the close of trading going to be NVIDIA, stock higher now by 2.2%. Also reporting after the bell, we'll be hearing from Salesforce, up now by 2.9%. And also, we'll hear from Snowflake, Synopsys, and Zoom Communications. And by the way, on NVIDIA, the options market is pricing at about a 5% swing in either direction for NVIDIA the day after earnings. Former Harvard president and ex-Treasury Secretary Larry Summers is retiring from his Harvard professorship following revelations that his ties to late sex offender Jeffrey Epstein were deeper than previously known. Recapping ahead of earnings, NVIDIA up 2.2%, S&P up 0.7%. Balance of power continues right now in Washington. They're remarkably awake and doing well. Back we go. Joe Matthew and Kaylee Lines.
That's what we're here for, Charlie. Many thanks. He'll be back in about 20 minutes with the latest on Wall Street. And yes, indeed, we've got a doozy of an after-hours session, if only for one company, but it's not just NVIDIA, as Charlie just pointed out. Remarkable to see a bid underneath both NVIDIA and Salesforce with so many concerns about the AI spend and the impact on software. They're both hanging in there, and we'll see what we learn on the late edition of Balance of Power. We'll have much more on both. This day after the State of the Union address, Washington is recovering, indeed, as Charlie mentioned, from a very early morning, the president holding forth with a near 2-hour-long address. And now comes the opportunity for the White House to begin framing issues the way the president served up last night to try to impact decisions on the midterm campaign trail. It's where we start our conversation with Bloomberg Washington correspondent Tyler Kendall ahead of our interview with Senator Steve Daines, who's going to join us live from Capitol Hill. Tyler's on the North Lawn right now, and so far a quiet start at the White House after a late night. Tyler, what are we hearing from the administration?
Well, Joe, it's clear that the main message last night was that President Trump really stuck to those domestic policy issues after what I think is fair to say recent weeks where foreign policy headlines have really dominated the conversation here in Washington. As you and Kaylee were just discussing, we know this White House is playing defense when it comes to affordability. That is the main topic of discussion as we head into the midterm. So we saw President Trump try to tout his economic policies that he's already enacted, such as those larger tax refunds under either the one big beautiful bill or doubling down on his tariff policies, right? The administration wasting no time earlier this week re-implementing a baseline 10% tariff rate under a different federal authority after the Supreme Court struck down his IEEPA tariffs. The thing is, we didn't really get a lot of new policy proposals from the president last night. Yes, he did do a nod to a potential new retirement savings account for workers that aren't currently supported by an employer-sponsored plan, but we're still waiting to see additional details on that. Instead, a lot of what President Trump did was call on Congress to codify some of those proposals that he's put out there, such as that ban to limit institutional investors from buying single-family homes, or pushing forward his health care framework, which, as you both know, a big part of that is looking to shift federal subsidies from insurance companies to American consumers. The thing is, we haven't really seen momentum behind either of those ideas in Congress, which raises this question about what can actually get done as we head into the midterms. Because Joe and Kaylee, while polling really has shown President Trump on the defense, important to note that Ipsos poll that we speak a lot about that came out earlier this week shows Americans are currently split about who they trust the most when it comes to their stewardship of the economy. And that's really why we saw Governor Abigail Spanberger deliver that rebuttal address, since we know she sailed to office on those affordability concerns.
Well, and when we think about what could impact affordability in the economy overall, Tyler, you were mentioning tariffs. It was striking that the president literally told the chambers of Congress gathered before him that he does not need them to act on tariffs. He thinks he can do it entirely via his executive authority. So should we write off the notion of another reconciliation package that's going to have codifying tariffs embedded in it?
Well, it seemed to be a pretty confident President Trump that he wouldn't need that congressional approval, something that really sparked this debate in the first place that led that tariff decision at the Supreme Court. What President Trump did make clear, and what we heard reiterated by the USTR Jamieson Greer as he appeared on Bloomberg television earlier today, is that they are keen to use those other federal authorities. The thing is, none of them are as flexible as IEEPA would have been. You hear that time and time again from U.S. officials. Kaylee, we're going to be watching really closely how the president tries to utilize authorities like Section 232, Section 301 that require investigations that would precede those tariffs going into place. It appears very evident that is the course we're headed on.
All right, Bloomberg's Tyler Kendall live at the White House. Thank you so much. And as we consider the topic of tariffs and what President Trump suggested he will do, let's hear from President Trump in his own words on this subject in the State of the Union last night.
Our nation is back. Bigger, better, richer, and stronger than ever before. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis. Almost all countries and corporations want to keep the deal that they already made, right, Scott? Knowing that the legal power that I, as president, have to make a new deal could be far worse for them, and therefore they will continue to work along the same successful path that we had negotiated before the Supreme Court's unfortunate involvement.
So for more on this subject and others, we turn live to Capitol Hill, where Republican Senator Steve Daines is joining us. He, of course, represents the state of Montana. Senator, thank you for being here on Bloomberg TV and radio. You have a seat on the Finance Committee. I know you pay attention to the issues of tariffs closely. The president said in his remarks last night, in addition to outlining the justification for tariffs, what he thinks it will do for the economy, he said congressional action will not be necessary in terms of pursuing further tariffs after the Supreme Court's ruling. Does that make you feel irrelevant, Senator?
Well, the president does have other executive authorities he can deploy as relates to tariffs. I spent most of my private sector career of 28 years before coming to Washington in running global operations. I worked for Procter & Gamble for 13 years, had an assignment over in China for 6 of those years. I was in the software business, having offices in both Australia and Japan. So I've spent a lot of time looking at global operations, looking at trade. What the president is doing, he's really confronting some of the uneven playing fields that have been around the world for many, many years. These tariffs are a tremendous means to a better end, and that is confronting high tariff barriers in many countries as well as non-tariff barriers. When you think about it, 95% of the world's consumers live outside the United States. So when we think about the future of agriculture, for beef, for wheat, barley, soybeans, corn, and so forth, as well as other exports of American products, including Boeing aircraft, it's important we've got access to these markets, because that really is where the future growth will be for American businesses.
Well, Senator, I'm really glad to have you. I'm glad that you walked through some of your resume there, because your service at Procter & Gamble, as well as Right Now Technologies, is important to our audience here at Bloomberg TV and radio. And it's why I'd love to hear more from you on the impact of a 15% global tariff that the president says he's pursuing specific to India. I know that you've been an advocate for strengthening U.S.-India trade partnerships, and I wonder if 15% puts a U.S.-India trade deal in jeopardy.
Well, I was just over in Delhi 3 weeks ago. I was, in fact, the new great ambassador, Sergio Gore, who just started his assignment there. I was his first congressional visitor, and I've done business with India for many years. It was very important that we were able to stick the landing between Prime Minister Modi as well as President Trump when they came to agreement on an 18% number. It was about 2 weeks after I came back from Delhi. The India market is incredibly important. The India relationship is incredibly important. India now, of course, is the most populated nation in the world, surpassing China. They're growing at about 7% in their GDP numbers, so it's a big market, big growth, and look at longer-term demographics. It's going to be a very strategic market and partnership for the United States, particularly in a part of the world where we need to pull countries like India and the others on the Pacific Rim close to the United States as we think about broader strategies.
Well, so clearly the president's trade policies have implications for relationships with other countries, India being one. But I'd also like to get into the potential impact here at home. As we know, polling shows us that Americans' perceptions of the economy right now, Senator, are less than stellar under Republican stewardship. I know you are no longer in charge at the NRSC this cycle, at least, but given that you know how difficult it is to look at a map and look to see where you can defend, where you can go on offense, do policies like this make it harder for Republicans to confidently say they can retain the majority in November?
Well, midterms are just always tougher whenever you are the party in power in the White House. That's been the case no matter if it's Democrat or Republican. But face it, though, we were dealt a tough hand coming off the Biden years with massive inflation. That much of that was caused by the incredibly large stimulus bills, these multi-trillion-dollar stimulus bills that we fought hard against. In fact, Lawrence Summers, Clinton's former Secretary of Treasury, warned Democrats this would be inflationary, and indeed it was. Now we've got inflation, numbers like 2.4%. Definitely inflation has come down, but still stuck with some of these fundamental issues of expensive houses and expensive clothes, expensive groceries. But what are we going to do about that? A couple of things. Number one, President Trump has unleashed certainly more made-in-America energy. We've seen gas prices now the lowest in 5 years. That's an important win for the American people, something you're reminded of usually weekly when you're gassing up your vehicle. Number two, when you address affordability, part of the affordability equation is getting more money in the pockets of the American people. And we've seen that with the working family tax cut bill is just now starting to go into effect. These are new tax laws that started in 2026. The average U.S. family is going to see about a $3,700 a year benefit from lower taxes. Of course, that's Social Security, no tax for 90% of seniors on Social Security will be affected by that. The no tax on tips, the no tax on overtime. Those are just some of the benefits that have yet to be realized by the American people. They're going to see more of that as we get close to the election. So affordability is not just reducing prices, but also providing more dollars in the paychecks to the American people to close that gap.
It's interesting when we talk about affordability and the impact that tariffs may or may not have on inflation. And we've seen inflation kind of hanging around this very stubborn spot, a little over 2% going back to when the president took office. It hasn't really changed a lot in the last year. And when you hear from the likes of Procter & Gamble, aforementioned, expecting tariffs to cost some $400 million after taxes in fiscal 2026, how do you get to that last mile, Senator, to where consumers are more comfortable going to the store?
Yeah, well, we're encouraged by the reduction we're seeing in energy prices. A really important part of a family budget is what's the price at the gas pump. And again, you're going to see more dollars, net dollars, ending up in the American people's paychecks as these tax cuts kick in. The problem is it's early. You haven't seen that yet kick in as to full extent. That's coming, and I think that'll be part of helping mitigate the high inflation years that we inherited from the Biden administration.
Well, Senator, you've referenced lower gas prices and energy prices overall a few times, and I wonder how much that could be disrupted by what could potentially happen in the Middle East, as the president is openly suggesting if diplomacy does not work, we could see military action in Iran that could threaten to disrupt supply coming out of that region. Senator, do you think that is advisable given what you are saying on how lower energy prices are key to the economic pitch here?
Well, we're in such a different position now than we were many years ago. You go back to the War of Yom Kippur in 1973 when you had Arab countries and the oil embargo. You saw a quadrupling of price of oil. It created massive inflation. A 30-year fixed mortgage back in 1981 was 18.6%. What's true today, though, is that we have decoupled our country from many of the global markets as it relates to oil. We were overly dependent on the Middle East. Today, the United States is the largest producer of oil and oil derivatives in the world, and that helps soften the blows if there is any kind of connectivity going on in Iran. So I'm not as concerned about what happened to oil prices, given the fact that we have done a stellar job, thanks to President Trump and the American energy industry, of becoming much more self-sufficient, and we are now energy dominant. We are an exporter of energy, where once upon a time we were a net importer.
To follow on that, Senator Daines, what should be the trigger for a strike against Iran?
Well, that's a heady question. I'll tell you, the president I know is looking at all options. I've spent a fair amount of time in the Middle East. One thing I do know is you can't trust the current Iranian regime. They are the leading sponsor of terror in the world. This is a regime that preaches death to America. They call the United States the big Satan. They call Israel the little Satan. I don't trust this regime. There's one thing this regime does understand and respect, and that's strength and that's force. So I know there's a lot of variables, a lot of considerations the president has to take into account. But I do not trust the current regime. I was at the Munich Security Conference here a week and a half ago. There were 200,000 Iranians protesting against the current regime in the streets of Munich, Germany. It was an incredible sight. So there's a lot of energy right now to change the regime in Tehran. Most Iranians are pro-West, pro-American, but you've got a regime. They're tyrants, they're brutal. They're going to be hanging students, I understand, here in the next 48 hours who've been protesting. This regime needs to go. The Iranian people need to have the ability to topple that regime. That's not up to the United States to do. That's about the Iranian people. But I know President Trump is playing hardball right now with the Iranian regime, as he should.
Well, I wonder if that hanging might end up being the trigger. Senator, it's great to have you back, and we appreciate your insight. Steve Daines, Republican from Montana, with us live from Capitol Hill on this day after the State of the Union address. We'll hear from a Democrat later this hour. And Maggie Goodlander, the Congresswoman from New Hampshire, will join us. But next, it's our political panel as we dissect everything we heard last evening in a record-length speech. This is Bloomberg.
121 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all pushing higher day after the State of the Union address and ahead of NVIDIA results after the close of trading. NVIDIA right now up by 2%. S&P up 50 at 69.40. That is a gain of just about 0.7%. Dow Industrials up 306, up 0.6. S&P, by the way, holding close to session highs. NASDAQ up 1.1%. The NASDAQ 100 index doing a little bit better, up by 1.2%. The VIX at 18 with a 10-year currently yielding 4.03%. Spot gold is rallying 1.2%, 52.07 the ounce. West Texas Intermediate crude oil at 65.74 a barrel. WTI up by just about 0.2%. A major move higher for Bitcoin, surging now by 7.6% at 68,890 on Bitcoin. Earnings news. Lowe's forecast sales guidance for the full year that did fall short of expectations, a sign that the housing market will remain lackluster in the near term due to high borrowing costs and economic volatility. Shares of Lowe's, they're down now by 5.1%. Rival Home Depot down 2.6%. And TJX out of Framingham, Massachusetts, reported sales during the holiday shopping season above Wall Street expectations. TJX, the parent company of TJ Maxx and Marshalls, they're trading at a 52-week high. Right now, we do have TJX shares retreating somewhat at 156.93, down now by 0.5%. Again, NVIDIA and Salesforce after the close of trading. NVIDIA up by 2%, Salesforce up 3.1%. All of this, putting it in perspective, S&P up 0.7. Balance of power continues now. Back we go to Washington, and once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington. And just like Charlie, President Trump spoke often of the financial markets in his State of the Union address last night, touting the many record highs we've seen since his election in November of 2024, the record highs we've seen even just this year, pointing to that as evidence that he is doing a good job with the economy. He actually said specifically that the buzzword we've all been talking about for months now, affordability, is something they're doing a good job on. And not only did the president try to defend himself and the work he is doing, he also looked to cast blame on the opposing party, pointing to the Democrats in the room on this issue and saying this.
Now, the same people in this chamber who voted for those disasters suddenly used the word affordability, a word they just used it. Somebody gave it to them, knowing full well that they caused and created the increased prices that all of our citizens had to endure. You caused that problem. You caused that problem.
Pretty tough words from the president. Not the only time he directed his ire at Democrats in the room, typically sitting on their hands. It's where we start with our political panel today. Republican strategist Ashley Davis is with us, partner at S3 Group, alongside Democratic strategist Julie Rajinski, the founder of Lift Our Voices. It's great to have both of you with us. Ashley, how long can the president blame the last administration when, of course, it's been over a year, and we have to acknowledge the fact it's hard to hide from the data on Bloomberg, and the rate of inflation right now is about the same as it was when Donald Trump took office, and that had come down remarkably from a peak of about 9% in the Biden administration. How do we square that rhetoric?
Well, I've always been a big believer you have 6 months after you take office to blame the previous administration. I thought he was getting a little bit better at doing that, but I think that last night is probably the last time for sure, because at the end of the day, he now owns this economy. And obviously there's very good parts of that, which he's trying to say. He'll own the gas prices, but he'll own the egg prices, he'll own the milk prices, but he'll also, until we get the housing market down, until we get some of these other markets down a little bit more, he'll continue to own that. So, I mean, as you said, Joe, at the beginning, it is rhetoric.
Well, and he can talk about the data he thinks paints a rosy picture all he wants, point to prices that have come down, but perception can be reality, Julie, and the American people are perceiving that prices are still too high for it to be considered affordable to them. Is President Trump falling into the kind of same doom loop trap here that we saw his predecessor, Joe Biden, fall into?
Yeah, I mean, look, you can fool some of the people some of the time, but when you go to the supermarket and you pay for some ground meat or chicken or you pay your energy bills, or any of the things that have gone up since Donald Trump's been in office, you tend to understand that you can't really gaslight people about what they're paying out of their own pocket. And I think that's the problem. You can't cherry pick data that you like when people know full well what they're paying at the grocery store, what they're paying with electricity bills. You can say that gas in Iowa was some made-up number that nobody in Iowa has seen, but the reality is people know what they're paying at the pump. They don't necessarily think that they're paying low prices, even if prices have gone down. And as you point out, of course, inflation is exactly where it was when Joe Biden left office. The job market has slowed precipitously. People are not necessarily getting the jobs that they want. The only growth we've seen in the last, jobs report was in healthcare. Everything else has slowed dramatically. And so when you look at all of that, plus the subsidies that have been eradicated with healthcare, people are paying more and more for that. Nobody's feeling particularly good about where they are. And they're not blind to the grift, right? They're not blind to the fact that as all of this is going on, the really wealthy people around Trump are getting richer and richer. And that includes Trump and his own family with this crypto scam that they've got going. And so I think, you're creating a two-tiered system here, and people are smart enough to understand that.
Well, just sticking with the facts, they're kind of stubborn here. When it comes to gas prices, the president said last evening that gas is now below $2.30 a gallon in most states. AAA, of course, runs these numbers pretty effectively, Ashley. There's not a single state where the average gas price is below $2.30. The lowest is $2.37 in Oklahoma. The national average is $2.91. Again, people know what they're paying, obviously. It's right in front of us every time we get in the car. When you talk about investments as well, the president was professing $18 trillion in investments, and we hear that number a lot, the investments that companies have made to build factories or other infrastructure here in the United States. The White House's own website offers a far lower number, $9.6 trillion, like half of what the president said, which appears to include some investment decisions made during the Biden administration. Are we beyond, Ashley, any of this stuff mattering?
Well, I think that 100% that what people are going to vote for in November, if that's what we're talking about at the end of the day, is how they feel. And that's the same old issue that we've dealt with all the time. I mean, from my perspective, I don't feel that everyone, as was stated, feels that they're worse off than under, the previous administration. I mean, I, for one, am very happy the border's shut. I, for one, am very happy that we're becoming energy independent. I don't, gas prices, a nickel here, dime there, quarter here, I don't know, but I know that we're more energy independent than we were 2 years ago.
I just mean more the use of facts. Like, does the president of the United States need to tell the truth in the State of the Union?
Well, I also think this is what happens all the time on both sides. You take whatever facts you want, and that's what you run with. No matter if you're President Trump or if you're Chuck Schumer, or Joe Biden and, a Republican, Thune. I'm just picking everybody. I think you pick whatever facts you want to and you run with them. And then what even tops that even more, Joe, which I think is kind of the issue as well, is then you continue to get those certain facts fed to you through whatever it is, algorithms, social media, and what you're watching, and then you continue to thrive in that information. So if my big statement is that's the problem with isolating kind of the country in these two camps. It's what I feel, what you got, what so-and-so feels. It just depends on what you're getting fed to you of how good things and how good things are not.
Well, so I guess, Julie, it comes down to a definition of fact here. If the data suggests different numbers and the data is just simply different than the words that are coming out of the president's mouth as if they are statements of fact. I guess the question for a Democrat then is how then do you completely or how do you then try to course correct that and put your facts out there, potentially the facts out there, when the president and on social media are propagating a different narrative? Is it just, how do you compete when all it is noise and both sides, depending on what side you on, are continuing to spin their own narratives?
Well, I want to be very clear here. There's cherry picking facts, which both sides do. There's not inventing facts, quote unquote, out of wholesale cloth, which only this president does. He literally just made up a number and decided to run with it. That's not cherry picking facts. That's a lie. Look, again, Donald Trump can put out whatever he wants about the economy. He can say whatever he thinks is happening or wants people to believe is happening. But people are not stupid. They understand they have a finite amount of money in their pocket to spend on groceries, on energy, on gas, and all of that is being taken from them at a rate that they're not happy with. I mean, if the economy were in better shape, Donald Trump's numbers would be in better shape, but he's underwater on everything. And by the way, I don't think most people are happy about what's happening at the border. He's underwater on immigration. I mean, this has gone so far adrift that nobody is happy about anything that he's doing. There's not one issue that anybody's happy on broadly, except for the very, very small part of his base that keeps shrinking every day. And so, you know, you can, as I keep saying, you can gaslight people, but it's very hard to gaslight people on the economy because they understand what they're spending. And you can tell them happy days are here again. They just don't believe it because they don't see it in their own pocket.
Well, you bring up the border, and I do want to get into this a little bit more, Ashley, because the president was speaking with the DHS, still closed last evening. We talked to a lot of lawmakers, Ds and Rs. No one's budged on this, and we've talked about it a lot, Ashley. When it comes to judicial warrants, when it comes to demasking, all bets are off here. Republicans do not support, and even some Democrats don't support carving out ICE funding so we can fulfill FEMA, Coast Guard, TSA obligations. Do we just spend the whole year with DHS closed? What brings us to an end?
You're exactly right, Joe. I mean, obviously the House just left, so there's for the week they had the Democrat retreat. There's absolutely no way that they're starting to negotiate, and it's not obviously happening in the Senate. And the sticking points that you just discussed are the same sticking points on both sides of the aisle. You know, over the weekend, everyone saw clear TSA was going to shut down. Obviously, that could not happen because they're fee-based. And so that's going to continue for the most part to run on its own. You have Coast Guard, you have FEMA that at the end of the day, if they need money, they'll be able to move money around to do it. There's just nothing that is forcing the two sides to talk to move it forward. And until there is, I don't see any movement. I mean, does it go to September? I don't know. Maybe, but I definitely don't see it happening before next month.
Well, so Julie, we have less than a minute left here, but when does that pain threshold get too much to bear, and for whom? Will it be Democrats that crack again and end a shutdown?
I don't put anything past Democrats cracking. I hope they don't, for the simple reason that what is happening right now with ICE, which I understand is funded through the Big Beautiful Bill, so it's not really relevant to ICE, but what is happening right now with ICE is so egregious and so unacceptable and so un-American that it is time for Democrats to take a stand on it. If Kristi Noem continues to be the head of the Secretary of Homeland Security, I do not think Democrats should be funding her department. She has proven herself to be not just incapable, but a toxin. And until she's gone, I would not give a penny to that department.
All right, Julie Roginski and Ashley Davis, our political panel on this day after the State of the Union. Thank you both so much for joining us, and we have more still ahead. We'll go back to Capitol Hill, where Democratic Congresswoman Maggie Goodlander of New Hampshire will be joining us. So don't go anywhere. We'll be right back on Bloomberg TV and radio.
1:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on a developing story at this hour. CME says Globex metals, natural gas futures, and options markets have all been halted due to technical issues. CME says it is investigating. The development comes after a glitch earlier this month caused a brief halt in natural gas markets near the close of trading. Again, CME says Globex metals, natural gas futures, and options markets have been halted due to technical issues. Stocks are pushing higher. We've got the S&P 500 index holding close to session highs, looking at a 50-point gain right now, up 0.7% after last night's State of the Union and ahead of NVIDIA numbers after the close of trading hour. Nora Melinda is going to have a whole lot more on NVIDIA coming up in just a moment. Right now, the Dow is up 281. That is a gain of 0.6. Again, the S&P up 0.7. NASDAQ, the composite index, up 1.1%. The 10-year at 4.03%, with the 2-year 3.46%. Spot gold up 1.2%, 52.06 the ounce. And West Texas Intermediate crude now higher, up 0.1%. Little change there, 65.71 a barrel on WTI. Bitcoin, major move there, surging 8.4%, back at 69,450 on Bitcoin. Earnings news. HP gave a profit outlook for the current quarter that may fall short of estimates. Shares of HPQ, that's Hewlett-Packard Inc., up by 1.2%. Also out with earnings last night, Workday up by 0.7%. Kava surging 24.6% after earnings. And of course, the big event after the close of trading, NVIDIA up now by 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellett. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellett, thank you so much. I am Kaylee Lyons alongside Joe Matthew here in Washington, where we are fresh off the President's State of the Union address, where we were looking for clues on a number of subjects relevant to financial markets and the economy. Affordability, of course, was looming large, but geopolitical issues did feature as well, specifically when it comes to Iran, amid an amassing of military force from the United States to the Middle East, knowing that diplomacy is still being given a chance here. If you listen at least to President Trump, there are going to be talks in Geneva once again tomorrow between the U.S. and Iran. Jared Kushner and Steve Witkoff, envoys for the president, will be participating in those. But President Trump made it pretty clear that if diplomacy does not prevail, he is not going to hold back from taking action, as he described the threat from Iran, which he also looked back on the attack back in June that the U.S. conducted on Iran's nuclear capabilities specifically. This is how the president characterized the situation last night.
After Midnight Hammer, they were warned to make no future attempts to rebuild their weapons program, and in particular, nuclear weapons. Yet they continue, starting it all over. We wiped it out, and they want to start all over again, and are at this moment again pursuing their sinister ambitions. We are in negotiations with them. They want to make a deal, but we haven't heard those secret words. We will never have a nuclear weapon. My preference is to solve this problem through diplomacy. But one thing is certain, I will never allow the world's #1 sponsor of terror, which they are by far, to have a nuclear weapon.
That's where we start our conversation with an important voice from Capitol Hill and from the national security space. And Congresswoman Maggie Goodlander, the Democrat from New Hampshire, joins us now live on Bloomberg TV and radio. And Congresswoman, it's great to see you. Welcome back to Bloomberg. Of course, a member of the Armed Services Committee and small business for that matter. I note your status as a military veteran, a former naval officer, an intelligence officer who was also an advisor in the national security space. Now you represent a state that is very sensitive to the military community in New Hampshire. Do you believe that strikes against Iran are inevitable?
Well, thanks so much for having me. You know, as I listened to the president last night, it was really hard to square his statements with the way that he's conducting himself when it comes to Iran. We know that decisions about war and peace, these are the most consequential decisions that a person in public trust, at a position of public trust, could ever make. These are questions about American lives and about American taxpayer dollars. The president has not yet been clear about what his objectives are in Iran, what are our goals here. He said again last night that Iran's nuclear program has been obliterated. So it doesn't quite square up with what his objectives might be. You know, the president has not answered the question of what he would be prepared to do. And the reason that the Constitution entrusts Congress with the power to declare war and with important war-making powers is to be a check and to make sure that we get the answer right. That's exactly why we have the War Powers Resolution and why presidents rely on the check of Congress and the blessing of Congress before proceeding with these most consequential questions. And the final thing that he hasn't answered is what comes next. And look, the American people do not want to be in another forever war that's going to cost us in American lives and in taxpayer dollars. So these are basic questions that the president has not given clear answers to. And that's a huge problem.
Well, so when we consider the American lives, knowing that more Americans have been deployed to the region, the Financial Times had reporting today, citing an insider with the Iranian regime, suggesting that Iran, and this is a quote, would move toward escalation, targeting anything within reach from U.S. bases to the Strait of Hormuz and American warships in response if attacked. If you're on an American warship in that region right now, Congresswoman, are you prepared to withstand such an attack? Is it inevitable that if Iran were to choose that course of action in response, that we would see the loss of American life?
Look, we have the greatest and most powerful military in the history of the world. The United States military is extraordinary, extremely capable, unmatched right now. But the fact that we're reading in news reports, I'm a member of the Armed Services Committee, and I'm getting my best information from news articles about what the terms of the debate are here, what our objectives are, what our military planning looks like. And from news reports, I think there is understandable and grave concern about what the range of military options could look like. You know, this is why Congress is a check for the president. This is why the president should come to Congress. His power to wage war is not boundless, just like his power to wage trade wars and to tax the American people with tariffs is not boundless. And he was reminded of that last week. And it would be wise for him to come to the Congress and to have a real conversation about what our objectives here, because the truth is there is strong bipartisan support for the basic proposition that this Iranian regime, which is a brutal and determined enemy of the United States, should never get a nuclear weapon. There is strong bipartisan support for that proposition. But the way the president has chosen to go about this, and you saw it on full display in his State of the Union last night, which was the most divisive State of the Union in American history, in addition to being the longest. He's not building consensus on an issue that really needs buy-in from both branches of our government that are entrusted by the American people and our Constitution with war powers.
Well, so you're not being briefed on anything, Congresswoman, as a member of the Armed Services Committee, which tracks with everything we've heard from other members of the committee, even on both sides of the aisle. This is limited to the Gang of Eight, I guess, so far. What do you then make, with just based on your experience and what you're hearing in Washington, what do you make of the conventional wisdom that no nation, including this one, has ever assembled this much military might in one place without using it?
Well, I'm a student of history, and history's got to be our guide. But in my job now, I'm a congresswoman who is going to demand answers from a president who is refusing to recognize our role under this Constitution in questions of war and peace. And what I know for sure is that the American people do not want to go into another forever war. They don't want to put the lives of American service members and their taxpayer dollars on the line for a half-baked and, frankly, unclear strategy. And it doesn't have to be this way, and it's always the right time to do the right thing, and I hope the president will do that.
Well, Congresswoman, as we consider where American tax dollars are directed, there is not a dollar right now going to funding the Department of Homeland Security, which remains shut down now for a 12th day amid a dispute between your party and the White House over reforms to ICE. Do you see an end in sight here Congresswoman? Because as you cite needing to see news articles to see what is happening with regard to Iran, I don't even think there are many news articles that can say definitively that there's been any progress made in these talks. Are the talks even happening between your leadership and the administration?
Well, the first thing to say is there is no reason. We have agreement on funding all of the law-abiding components of the Department of Homeland Security. There is no reason, good reason, other than to cause unnecessary pain to hardworking federal public servants, for the Speaker to have hit the gavel and sent the House of Representatives home today without funding TSA, FEMA, and the vast majority of the Department of Homeland Security, which is not at issue here. The issue here is really about putting into place common sense guardrails, common sense checks on the powers that ICE and CBP have been exercising in communities across this country, unchecked powers. You know, yesterday, what happened in the state of New Hampshire, I think really should be a model for the rest of the country. We learned in press reports at the end of December that ICE had launched a nationwide campaign to commandeer industrial warehouses to warehouse human beings. And quickly and with one voice, Republicans and Democrats in every corner of our state spoke out against this to say, you cannot proceed with this kind of expensive, questionable, un-American plan without the consent and without the buy-in of local communities. And yesterday, we were victorious in this campaign. These are the kinds of common sense checks that the American people need and deserve from federal law enforcement. Public safety, at the end of the day, depends on public trust. And public trust is impossible when you have a federal law enforcement apparatus that is sending masked agents into our communities, shooting American citizens dead in broad daylight, defying the Fourth Amendment by breaking into Americans' homes without judicial warrants, surveying our communities in ways we've never seen before, except in other countries. I mean, what we are asking for are common sense guardrails that have the overwhelming support of the American people, and it is a decision that the Speaker and the President have made to inflict pain on public servants who shouldn't be working a day without a paycheck, at the same moment that members of Congress are getting paid without actually doing their jobs, which is why I will never accept a paycheck when any federal public servant is at risk of working without pay. It's just dead wrong. The incentives are backwards, and we've got a bipartisan bill to fix that. But in the meantime, there is a path, and this is the work of legislating. We've got to keep trying to build support to get on it, but it does very much exist. It's very clear to me.
All right, Congresswoman, thank you so much for joining us. Democratic Congresswoman Maggie Goodlander of New Hampshire here with us on Bloomberg TV and radio. Meantime, here at Bloomberg, there is another story that we are tracking is once again, we have seen some technical issues at the CME today and a halting of options markets, natural gas futures, Globex metals, all-day orders and good till date orders with today's date will be canceled. For more, we turn to Bloomberg's Nora Melinda. So Nora, are we back in action yet? What's the latest?
Well, Kaylee, of course, this is a major disruption for a lot of traders. We know that this follows a glitch that we just saw earlier this month where it was halted for 2 minutes during market close. And a lot of investors have really been talking about the integrity of the market. Some people actually calling for some sort of changes to position limits to kind of address this concern. But essentially, a liquidity heading into contract expiration is what is weighing on the minds of a lot of traders. So we'll have to see how this trickles out. But there was quite a bit of wrath last time that this occurred.
No, that's for sure. Nora, I have to ask you about NVIDIA because that's going to be all that matters after the bell. Salesforce, too. They've both got a bid today. We expect good news?
Well, there are expectations for good news for NVIDIA, but of course we know this essentially is going to be the barometer for the outlook as to whether or not the outlook for AI remains intact more broadly. We've been seeing a lot of pressure on software names and AI-related names more broadly in recent weeks. So that being said, while there is strong expectations out of NVIDIA after the the closing bell. A lot of focus is what the performance will look like tomorrow and what that will indicate about the broader state of the market. We do know that the options market is currently pricing in a swing of about 5% in either direction. So we'll have to see, Joe.
Yeah. This could be a roller coaster. Nora, thank you. The building's going to shake after 4 p.m. when NVIDIA reports, and we'll have details for you on the late edition of Balance of Power. Starts at 5 p.m. Eastern. Ed Ludlow and Romaine Bostic will join Kaylee and I, and we'll get to the bottom of this earnings report that could tell the near-term future for the market. It's all ahead, only on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. We do it all right here on Bloomberg Business Week Daily. Carol Masser along with Tim Stenivek. Yes, it is Wednesday, February 25th. State of the Union. It is done.
Okay, check.
Yeah.
NVIDIA earnings after the close.
It's a big deal.
That's a big deal. NVIDIA's higher right now by close to 2% on the day. We're also seeing some buying when it comes to equity markets, with the NASDAQ composite up 1.2%.
It's interesting to see that enthusiasm, I should say, ahead of those results, because this is going to be a big deal. I mean, there's the expectations around AI, and we'll see. It feels like investors right now, in terms of AI, their excitement over it kind of intact at a time when the AI scare is real, no doubt about it, and it definitely impacts the trade. But we'll see what NVIDIA says, and is a meet in terms of the forecasts and the expectations enough to get some momentum in the stock, because the stock hasn't done a lot this year.
It hasn't, and that's the backdrop of what we're spending time on for the 2 p.m. hour today on Bloomberg Business Week Daily. Also taking a look at the economic effects, or at least the market effects, from the president's speech last night. You see home builders are lower. Expectations were maybe some sort of policies that would benefit them, but instead the president saying yesterday, again, reiterating he wants Congress to act when it comes to institutional ownership of single-family homes.
I thought it was interesting. There was a lot of analysis saying that there was a lot on the economy. I felt like there could have been a lot more in terms of specificity. So we're going to see what PIMCO's Libby Cantrell has to say about it, and really kind of get to her in terms of what policies and actions could be coming that will matter to the U.S. economy and business environment. Also, we have a question. What exactly is the state of President Trump's economy?
Yeah, hopefully we'll get an answer to that. We're still trying to figure that out. Also, the CFO of the e-commerce firm Mercado Libre joins us on AI and going up against Amazon.
The behemoth that's out there that continues to expand globally. And yes, what to watch out for NVIDIA. We haven't forgotten. We're going to get to that as well. First up, though, let's get a check on that trading day. Here is Charlie Pellet.
Hi, thank you very much. Keeping an eye on a developing story at this hour. Now, CME says Globex markets, natural gas futures, and options markets have been halted due to technical issues. The development comes after a glitch earlier this month caused a brief halt in nat gas markets near the close of trading. And by the way, CME is now saying on its website that all day orders and GTDs with today's date will be canceled. Stocks higher right now as traders brace for NVIDIA's numbers after the close of trading. NVIDIA shares are pushing higher, up now by 2.1%. Yes, it's the report, but also how it will ripple through markets after we get the numbers. Again, NVIDIA ahead of earnings up 2%. Also after the bell, we'll be hearing from Salesforce. That stock up now by 3%. S&P is up 0.8%, higher by 53 at 69.44. The Dow up 0.6. NASDAQ up 1.3%, and the NASDAQ 100 index up by 1.35%. The VIX at 18, the 10-year 4.04%. Spot gold is up 1.1%, 52.02 the ounce. And Bitcoin, big story there, surging 8.1%, 69,258 on Bitcoin. Earnings news. Lowe's is out with sales guidance for the full year that fell short of expectations. Lowe's shares down now by 4.4%. Rival Home Depot also lower, down by 2.4%. And TJX, that is a parent of TJ Maxx and Marshalls, that stock down by 0.6% after earnings. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, Tim and Carol. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We want to talk a little bit about NVIDIA. As you know, as Tim mentioned, the stock is up about 2% ahead of earnings. Those are earnings coming after the closing bell. Today, it is the most valuable market cap company in the world. Those results after the close really coming at a critical time for the U.S. stock market, with investors increasingly nervous about that AI trade and the outlook. How does it impact us? How does it impact companies? So we should point out, investors are expecting some pretty strong results from NVIDIA. Uncertain, though, about how its shares will respond due to fears about that AI disruption and heavy investments. As Tim and I have been talking about, right, Tim? I mean, stock hasn't really been going anywhere.
It hasn't, and it needs a blowout report. But I feel like we have this conversation every quarter, and then the company delivers. So let's bring in Ian King. He's Bloomberg News U.S. semiconductor reporter. He joins us from the San Francisco Bureau. It's always a highly anticipated report. It feels, I got to tell you, it doesn't feel like this one is as highly anticipated as it's been in recent quarters, Ian. Am I just getting the vibes wrong?
Or jaded?
Well, that's, yeah.
No, I mean, you're right, and that's because a lot of the notes and a lot of what the investors are saying is like, NVIDIA's pretty much told us all we need to know for the time being.
Yeah.
We're looking for them to tell us something new. You know, just to remind you, they've said demand is off the charts, it's great. They've talked about new products coming that are wonderful. So that, you know, they've already addressed the sort of things that normally this kind of State of the Union for the AI industry would normally be focused on.
But, you know, are they right? Like when they say that, and as they've said it in the past, and we kind of hear the same message over and over, and the enthusiasm from Jensen, are they kind of right in terms of demand off the charts, and so they benefit?
I mean, you can't argue with numbers, right? A company at this size growing at this particular rate, at this level of profitability, 75% growth margins. I mean, for any other company, arguably in the world, never mind the tech industry, this would be, you know, high fives all around. But for these guys, it's become, you know, another day, right? Another dollar for them. So that's, whether that's fair or not, it doesn't matter. But this is an enormously valuable and an enormously important company. So this is the reality they have to live with. So tomorrow, anything less than a beat, anything less than $2 or $3 billion more than what Wall Street is currently expecting won't be good enough.
So you, in your great preview, you talk about, Ian, that revenue for NVIDIA expected to jump 68%. Adjusted earnings are anticipated to rise 72%. So meeting those expectations, is that enough to get this nearly $4.8 trillion market cap company moving, or it has to be better than that?
Yeah, I mean, turning back to what Tim said in his opening remarks here, what happened 3 months ago? We beat. We were 2 or 3 billion ahead of where we said we were going to be, and then the stock went up a little bit, and then the following day it was down, right? Because it wasn't enough, and that's just the reality of where this company is in terms of expectations. But in terms of operational, it's, you know, it's hard to argue with those numbers.
If you look at the first quarter estimates, the revenue estimate, $72.78 billion, adjusted gross margin estimate of 75%, CapEx estimate of $1.65 billion. It's so quaint when you look at a $1.65 billion, you know, CapEx from you know, one of the Mag 7s. So that's interesting. Which number is the most important? Is it gross margin? Does that tell us would that tell us the biggest story?
I mean, the revenue projection for the quarter is going to be very important. There's a lot of concern around gross margin, and has been for a while, because, as you know, there are shortages out there. Can this company get enough supply of things like memory chips, of its outsourced production from TSMC, which is why its CapEx is so low? Can it get enough to meet the upside, or is it going to have to pay more to meet that upside and therefore crimp its margins? But frankly, 75% gross margins, that's a software margin. That's not a hardware maker margin. That's way above where the rest of the industry is.
It's all just quaint, right? With quotation marks around it when it comes to NVIDIA. What about Blackwell? What about the upcoming Rubin chips? What do we need to watch out for there? And what about China? How important is that in terms of commentary around that?
Yeah, I mean, the new products is something that they've actually done more in terms of talking about them ahead of time. The GTC conference is coming up in the next couple of weeks here in the Bay Area. That is normally the focus of the, hey, look at the new great products we've got. So they've kind of front-run that, so there's a little bit of like, what more can they say? Maybe there's a new product, something we haven't thought about that's coming at GTC. So there's that expectation that exists. And really that, I think, you know, but China is another big area which we should probably discuss as well.
Yeah, well, let's hear it, Ian, because this is sort of like, I mean, honestly it's hard for me to keep track of what the company is and is not allowed to sell to China, and you know, the understanding the effect of that and what that means, not just for NVIDIA, but what it means for what China can do, at least when it comes to this arm race, is I think a really important discussion.
Yeah, I mean, it's my job to keep track of it, and you know, it's difficult, right? Because fundamentally, NVIDIA and its rival AMD are not allowed to sell their best products in the largest market for those products, China. That is an ongoing, you know, giant problem that both of these companies have, which they've got over with by growth elsewhere. Eventually, so investors believe, something has to happen. They either have to be allowed to do business there, or it will have a fundamental impact on their business and their growth and what they are as companies, what they can achieve. Right now, it's still up in the air. We've got signals from the Trump administration. We've got mixed signals from Beijing as to whether, even if orders come from China, they'll be allowed to fill them.
Before you go, we'd be remiss not to ask you this. Ian, Meta and AMD, we've talked a lot about your reporting yesterday on this deal to spend billions on AMD gear and plans with conditions to buy stock of AMD or shares of AMD. What's your read on this, or what should be our takeover as we get ready to get a report from NVIDIA?
Yeah, I mean, you remember NVIDIA had its own announcement with Meta more than a week ago. Yeah. The bottom line here for AMD is it's an affirmation of the viability of its technology going forward from one of the largest purchasers of this type of technology. So all good there. In theory, this could change AMD in terms of what we think about it, catapult it to an unprecedented level of scale that many thought was just not possible for this company. All of that is good, but the flip side is obviously the concern about what exactly does this potential for Meta to become a shareholder. Why was AMD forced to do that? A lot of questions were asked to Lisa Su and the management about that, and she sort of answered them and diffused some of those concerns, but that is adding to this overall sense of fragility about where all of this growth is coming from.
Kind of crazy. Hey, listen, by the way, and for the record, we're so glad you keep track of all the particulars, because that's why we come to you, because we know we get the latest and what we need to know. Ian King, thank you so much. We'll be looking forward to your reporting after NVIDIA reports after the closing bell. He is Bloomberg News U.S. semiconductor reporter Ian King. All right, NVIDIA after the closing bell. That's our look forward, but we do need to talk a bit more about last night.
Yeah, the State of the Union, our look back. The president returned again and again in his speech to the same message on the economy. Everything is going great. What is the reality of the U.S. economy? It's a question, though, that we wanted to ask, and for that, we turn now to Bloomberg TV and Radio international economics and policy correspondent Michael McKee. He joins us here in the studio.
He's our get real person.
He is. I mean, well, so let's start with just an easy one. President Trump said inflation is plummeting, incomes are rising fast. Is he right?
No. Incomes are rising faster than inflation, but that's been the case for a while. Okay. The inflation rate when he took office was 3%. That is a CPI number. It was a little higher than that in the PCE. The CPI number came in at 2.4%, so you could say inflation's come down, but we know the CPI is distorted, and we know that the PCE inflation rate went up to 3% this past month. So really, inflation hasn't changed on his watch. It's about the same now.
Is it likely to change in terms of what he might be pursuing for tariff policy now? I mean, it's a little confusing in terms of what we keep hearing. And I think we heard from, Jameson Greer about what he's expected to do to hike tariff to 15% where appropriate. This is obviously the U.S. Trade Representative. So should we assume that that's going to continue to impact inflation and provide inflationary pressures?
Well, it's definitely going to impact the confusion about what's going to happen. If they drop it to 10 or even 15%, it brings down the average tariff rate by a few percentage points. So in that sense, it could be somewhat disinflationary from where we are. But because they're going to impose on top of that the Section 301 or 232 tariffs once they get their investigations done, then those could be even higher. The president is threatening to make them higher. We'll see where they come down on these things. So you could end up with a higher overall average tariff rate that would push inflation up. The question then becomes, when does all that hit? And that's the thing. And companies are already having to raise prices. We've seen a lot of anecdotal reports on that. And they're not going to lower prices now, just because you go down to 10 or 15% from maybe 20%. They're not going to lower prices that they are charging. They're going to wait and see what happens.
Right. Hey, we need to, one of the things, obviously in the State of the Union and geopolitics came up, but we do have some headlines crossing the Bloomberg right now.
Yeah, just want to mention, this is a Bloomberg. Bloomberg News is now reporting that 4 U.S. speedboat passengers have been shot dead. That's 4 people dead in a U.S. speedboat. This according to the Interior Ministry. It's a headline that we're going to keep following. We'll bring you any updates as we do get them.
Yeah, just one headline there, but we'll continue to monitor. Back to Mike We Go, who follows, of course, international economics and policy. So in terms of affordability issues, Mike, how do economists measure this correctly? And he seemed to be the president, or at least analysis, that he was kind of dismissive with it, like we got it. Democrats, this is something you bring up. I don't want to get into politics, but how do you figure out affordability in America?
Well, it's not a word that has an exact definition. Basically, it comes down to a little bit less of the CPI and the fact of how fast inflation is rising, which is what economists tend to focus on. And it's more about how people feel about the prices they're paying, which has more to do with the level of prices. And while we've seen the price of eggs come down, as the president talked about, they're still significantly higher than they were. So people go to the grocery store and they're looking at their total bill and they're saying, this is a lot of money. They're not saying it's maybe only 2% less expensive than it would have been or something like that if we'd had the same inflation rate. So the problem for the president last night was in claiming victory over affordability, he's not addressing the real political concern that people have. There's a certain point to the fact that he cherry-picked a bunch of numbers in terms of prices, and some have come down, but some have gone up, and as we've seen, the PCE prices are still higher. So he's going to have a hard time selling that one, I think.
Every president has a hard time selling this. I mean, we saw this with the Biden administration, too. I mean, you can talk about how you can point to data, but you can only jawbone so far.
Well, go back to George H.W. Bush in 1992 against Bill Clinton. We were seeing inflation and we were seeing a slowdown in the economy. And he had a very hard time articulating the fact that he understood that to people. They saw him as a patrician East Coaster. And he lost the race to Bill Clinton with the famous slogan, "It's the economy, stupid."
Is it still the economy, stupid, when it comes to politics?
It is pretty much always and everywhere about the economy. The only things people really care about is what their lives cost them and whether or not you're sending their kid to war.
Before we wrap up, though, I think we're all thinking about now, we have a date to think about, and that's midterms. Is the economy that we have today the Trump economy that we can now call the Trump economy, right? He's been in office for a year now and counting. Is this the economy that will be there in the midterms, or what could change it dramatically in either direction?
Well, we're waiting for the tax refunds to come in, and they're supposed to be a little higher than they were. The question is, will people spend those and boost the economy, or will they pay off their bills? Historically, they've tended to pay off their bills, but we'll see what kind of goose we get from that. And then what happens with Iran in the sense of, does it affect oil prices or any other thing affect oil prices that would send gasoline prices higher, that sort of thing. It doesn't look like we're going to see major changes in employment over that period. Because of the uncertainty, employers are going to continue to sit on their hands, and it's too early to really see AI impacts. So for now, this is probably what the economy is going to look like at the time, and people's views on the economy are kind of getting baked in. Charlie Cook from the Cook Political Report, talked to him yesterday. He said, this is about the time when it starts to get too late to change people's minds.
Michael McKee, you rock. We so appreciate it. And we do want to mention that we mentioned Cuba shooting 4 people dead in a U.S. speedboat. Cuba's government says it shot 4 people dead and injured 6 in a U.S. speedboat after first receiving gunfire from the craft, according to the Interior Ministry.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Cuba's government says it shot 4 people dead and injured 6 in an American speedboat after first receiving gunfire from the craft. This according to the Interior Ministry and a statement published on state news outlet Cuba Debate. Now, the ministry says the Florida speedboat was in Cuban territorial waters off the coast of Villa Clara province in central Cuba. Again, developing story. We'll have more details for you as they become available. CME Group now says it has restarted trading on its main natural gas futures and options contracts after a brief halt due to technical issues. The Dow, the S&P, NASDAQ all advancing as traders brace for NVIDIA's results after the close of trading. NVIDIA up now by 2.3%. Salesforce will also be reporting after the close of trading. Salesforce right now up by 3%. But here's where we stand in terms of the equity markets. The S&P up 55 at 69.45. That is a gain of 0.8%. The Dow is up 0.5. NASDAQ up 1.3%. The NASDAQ 100 index, full of big tech names, up now by about 1.4%. The VIX at 18, the 10-year 4.04%. Spot gold up 1%, 51.95 the ounce. A retreat for crude down 0.3%. WTI 65.45 a barrel, and Bitcoin is now surging 7.7%, just above $69,000. Again, NVIDIA coming up after the close of trading. I'm Charlie Pellet, and right now Bloomberg Business Week continues. Back we go once again. Your hosts Tim Stanovic and Carol Masser.
Hey, Charlie, thanks for that update. Just to hit on that story one more time, Cuba's government says it shot 4 people dead and injured 6 in a U.S. speedboat after first receiving gunfire from the craft. That's according to an Interior Ministry statement published on state news outlet Cuba Debate. The Florida speedboat was in Cuban territorial waters off the coast of Villa Clara province, the ministry said. People on the speedboat shot at Interior Ministry border troops as they approached, resulting in the Cuban boat's commander being injured. The injured are receiving medical assistance. Cuba says it is committed to protecting its territorial waters.
And as you just heard from Charlie, equities, we're not seeing too much movement, if any at all, in terms of the equity trade. Just looking to see if there's any market reaction. We're continuing to pretty much trade at our highs, certainly on the S&P and the NASDAQ 100. Well, as Tim mentioned, Cuba certainly on our mind at this hour. Geopolitics, some certainly mentioned in President Trump's speech last night. The president, in his State of the Union speech, focused on the economy, and his view included statements about what we just talked about with our own Mike McKee. Inflation is plummeting, he said. He said incomes are rising fast. And he also talked about Friday's Supreme Court decision that struck down the president's global tariffs.
An unfortunate ruling from the United States Supreme Court. It just came down. It came down. Very unfortunate ruling. But the good news is that almost all countries and corporations want to keep the deal that they already made. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis. I introduced the great health care plan. I want to stop all payments to big insurance companies and instead give that money directly to the people. The roaring economy is roaring like never before. Our country is winning again. In fact, we're winning so much that we really don't know what to do about it. People are asking me, please, 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 Mr. President, we're winning too much. Our nation is back, bigger, better, richer, and stronger than ever before.
All right, everybody. That, of course, was President Trump last night at the State of the Union address. We should point out his speech was criticized by Democrats, including U.S. Senator Elizabeth Warren, who said he had nothing to say about issues like capping credit card interest rates and making child care more affordable. Let's get a policy view of last night's address from President Trump and what policies and actions that may still be coming that could impact the future outlook for the United States. Great to have back with us Libby Cantrell. She is Managing Director, Head of Public Policy for PIMCO. She joins us from PIMCO's offices right here in New York City. Libby, welcome back. Great to have you here. Let's just talk broadly about this speech. What stood out for you, and what do you think should stood out for the investing public, American citizens at large, the business community? And I think about American citizens who still think about this affordability issue. So what stands out on those fronts?
Yeah, nice to be with you. I mean, this was there was more performance here than than policy, we would argue. There was a bit of a spiking of the football in terms of really sort of reinforcing some of what President Trump has perceived as victories, the one big beautiful bill, closing the border, some of the other kind of immigration policies that he has pursued, and also some of the foreign policy wins that he is characterizing at least as wins. So I think that this was in some ways a lot of kind of red meat for his base, as these addresses oftentimes are. Now he did talk about tariffs, as you mentioned. I think that to the relief of many Republicans in that chamber, he did not call on Congress to take a vote on tariffs. I think that is something that probably would have failed anyway, but also would have been politically difficult for Republicans. But by and large, this was, I think, a pretty typical State of the Union address in many ways. It was, again, more of a rehashing of sort of the political wins and pretty light on policy details and light on kind of a roadmap, I think, for a lot of congressional Republicans heading into the midterms.
Yeah, I'm really glad you went to the midterms, because that's exactly where I want to go and try to understand from you if it actually moved the needle on how people could vote come the midterms, because that's what Republicans and Democrats are focused on right now.
I think it was a bit surprising that there were not arguably more policies that he'd actually highlighted in other speeches and other venues, highlighted in last night's speech. He did talk about this ban that he wants Congress to codify in terms of institutional investors investing in single-family homes, but he didn't really talk about some of the other proposals. To Senator Warren's criticism, she remarked that he did not talk about, capping credit cards and what have you. Now, I don't think any of those will actually get effectuated into policy. Those need Congress anyway. But in terms of really leaning into that affordability sort of framework and theme, he didn't really give Republicans all that much. Again, I think what his hope is, and what a lot of Republicans hope is that voters' sentiment around the economy will be different come this fall. Now, of course, that one big beautiful bill, people will be getting refunds on average, $4,000, about $1,000 extra in terms of a refund, relative to last year. So I think the hope is that there will be more optimism and that folks will have a different perception of affordability. And so maybe he won't need to lean into some of those policies. I think that was maybe last night was maybe a tell of that thinking.
Libby, he did focus on the stock market, certainly something we, focus on here at Bloomberg, but, talking about how good that was, right? And wealth created and good for investors. But is that always a good read, or is that even a good read on kind of the state of the U.S. as a nation and as an economy?
Well, I think there are lots of examples where, voters have, one view of things, and the stock market is doing something different. I think if you talk to President Biden, I think that was one of his frustrations, and his economics advisor's frustrations, is that actually the market was doing quite well and the economy objectively was doing pretty well, but voters just didn't feel it. So perception is reality here, and going into these midterm elections, again, I think there is a hope that voters will feel better about things. And I think, to President Trump's credit, in terms of the Trump accounts that were codified into one big beautiful bill, this idea of broadening that out and giving folks access to retirement accounts who may not have access to traditional 401k. But so I think he is trying to tie the stock market performance to kind of everyday people's lives. However, we'll see. There's a lot of distance between here and there in terms of getting that actually effectuated into policy.
I think a lot of folks think, what a great idea, right? To get, if we talk about wealth creation, this is a great way to do it. But I do also think about, how do we pay for all this stuff? And when do we think about kind of the fiscal house and when that's going to matter? I know, go back a decade or so, and it was in every conversation I talked about here at Bloomberg, or even longer than that, then it went away, and now it's back again. So I just think about, when do we have to when does that all come home to roost, or is it already?
Yes, I think if you contrast this speech with the speech last February, where President Trump was really leaning into this idea of DOGE and cutting federal spending and talking about the deficit, there was no mention of the deficit last last night. And in fact, he talked about how important Social Security and Medicare were and how those would not be touched. As you all know, those are important programs. Bipartisan, why bipartisan support? However, they're both very expensive as well. Our view here is that while there is no kind of immediate fiscal reckoning, I mean, the bond market, as you all know, hasn't necessarily, the bond vigilantes haven't necessarily come out here and disciplined Washington. But it's probably a question of, when, not if, that there will be an inflection point where members of Congress will have to actually do something in terms of sort of the fiscal trajectory. It doesn't look like it's close. There's not a lot of political appetite to increase taxes or reduce spending. Our view is a sort of 6 to 7% deficits as a percentage of GDP. There will be a limit to that. And whether it's the bond market that is imposing that discipline, or when it's Social Security trust fund starting to kind of go bankrupt, so to speak, which is expected to happen in the early 2030s. So we do think this is again a question of when, not if, but it's just the when is probably not under President Trump's term, at least as if what the market signals are saying now.
Libby, you've seen different market cycles, different economies under different presidents. We've talked about this a little bit earlier with our own Mike McKee. How do you describe the Trump economy? Is it a good one?
Well, I think that, and again, there is a limitation to how much a president can actually impact the economy. So this is, for better or for worse, presidents, President Trump incled, they like to take sort of credit for when things are going well, but also to sort of avoid any of that, blame when they're not. I think we would characterize this economy, this sort of K-shaped, two-speed economy is quite real. Where if you just look at the components of GDP, obviously, AI-related CapEx fueled a lot of growth last year, as did the high-end consumer. I think there is a hope in 2026, and again, this is what I think Republicans are banking on, that the breadth of that economic growth is broader, and that this sort of the consumer at the kind of middle to lower end starts feeling better about things and starts participating in the economy. But if the economy just is predicated on kind of AI-related CapEx and the high-end consumer, that makes for a relatively fragile economy. And if you sort of see any kind of wobbles in the labor market, for instance, that could have maybe a nonlinear impact. So, I think it's a stronger economy. It's been a resilient economy for sure.
Right.
But again, I think Republicans are hoping that you can sort of broaden out the source of that growth, and that they'll actually be rewarded then, come November.
But that AI spend, the impact on the market, sending it higher, and then, the wealth created among affluent spenders, that is something that Greg Dacco has certainly talked about a lot for us from EY Parthenon, and the importance. And if that starts to come undone, that could be problematic, Tim.
Hey, Libya, I want to shift gears a little bit and talk geopolitics, because ahead of the speech, the president, and he's gotten quite a bit of criticism in recent months, even from within his own party, about focusing too much on geopolitics. And while he didn't talk too much about geopolitics, what he did frame last night was, Venezuela and the ouster of Maduro, that being a win for oil companies and Americans who are getting oil and will get oil from Venezuela. And just now we are learning that Cuba has shot 4 dead in a clash with a Florida speedboat. That's just breaking news just in the last few minutes. I'm wondering about geopolitics, though, and the political risk for a president who came in and said, no more on a platform, no more foreign wars, wants to end wars, for focusing so much on geopolitics within his first year in office. Is that alienating some of his base?
I think it's confused some of his base for sure. As you said, that there is a wing of the sort of Trump base that is more isolationist. I think those folks thought that President Trump would be sharing in that view. He obviously talked about ending the war in Ukraine. That has not happened. He's talked about bringing kind of peace globally. I think you could sort of quibble about whether that has actually been true or not. And then to your point, he has focused on some of these more specific operations. Now I think, you know, Venezuela, the way that they would characterize, the White House would characterize this is an extradition, kind of a high-profile arrest, if you will, that required a lot of resources of the U.S. government, but was quite different from regime change. We'll see kind of how that plays out. But I do think, Tim, you're right to sort of focus on this politically, because, you know, midterms are all about turnout. It's not about persuasion, right? You need to get your base turned out. You need them to get excited. Whereas a general election, it's about sort of persuading folks who might be kind of on the fence. Again, midterms all about kind of your base turnout. And if your base is at all, you know, feeling maybe a little bit less enthusiastic about you, they may not turn out. And so I do think this, you know, we'll sort of see how this kind of movie plays out, but you could see President Trump, you know, maybe kind of be forced by his own party to be less focused on these issues, because they just doesn't have sort of the galvanizing effect as, you know, the kitchen table gas and grocery issues you typically have. The last thing I'll just say, though, is I think President Trump was quite clear about what his framework was he was using yesterday as it relates to Iran. He definitely did not close the door on, you know, potential intervention. He also didn't necessarily endorse that he was going to do this either. So he was using sort of this clear framework about, you know, about Iran's, you know, ability to develop a nuclear weapon and what have you as kind of a litmus test. So I think he's trying to be, you know, more clear about what it would require to engage. But again, politically, he may be forced to back off this as we get closer to the midterms.
Libby, going back to the affordability issues, we know President Trump and Vice President J.D. Vance are hitting the road tomorrow and I believe on Friday to kind of test their affordability message with voters in Texas and Wisconsin this week. So things like, you know, obviously the tax cuts that are already part of his big, beautiful bill, these new savings accounts for kids, maybe banning of institutional investors from buying homes, you know, although we didn't get anything more on that. Are there policies or clarifications of policies or implementation of policies that are likely to come leading up to the midterms that you think kind of improve the affordability issues for those who will be voting?
I think, you know, the reality is that even if President Trump wants to see some changes, it's going to be very difficult for Congress to get anything done before the summer, which is really the de facto end of this Congress. That's when, you know, they will adjourn for their sort of summer, traditional summer recess, for them to really go back to their districts and to campaign. So in terms of the runway to actually effectuate policy, we are talking about a very short one, you know, to July, basically, and we don't see Congress moving. We don't see them passing another tax bill, another spending bill, another bill that prevents, you know, institutional investors from buying single-family homes or what have you. There is a housing bill that they may be able to pass both chambers and get signed into law, but that is likely going to be it. So I think kind of for all intents and purposes here, Trump will have to lean on those policies he can effectuate unilaterally, which is the agencies buying, you know, agency MBS. That is one thing that he did not talk about in his speech. It's kind of for us, you know, bond nerds over here. But you know, we do think that's actually, that and deregulation, those are two things that he can and will, we think, continue to lean on to help, you know, improve, you know, at least mortgage rates and sort of, you know, the rate environment in general, and hope that will actually trickle down to some kind of the perception again of affordability among voters. But outside of that, we do not expect Congress to move, really, period, between now and the midterms.
All right.
I don't recall seeing mentions of agency MBSs on the prediction markets.
Wait, that's when they all stood up. Remember?
Okay.
They like the
exactly. The only bipartisan moment we saw was at our agency MBS.
Bringing the parties together. Libby Cantrell, you rock. Managing Director, Head of Public Policy over at PIMCO, joining us right here in New York City. Don't forget to catch our weekend show, Bloomberg This Weekend. David Gora, Christina Ruffini, Lisa Matteo bring you unique conversations on politics, policy, and so much more, lifestyle, culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app. Catch it Saturdays and Sundays starting at 7 a.m. Eastern. Yeah, it's nothing like Mortgage bonds, or get the bring the
someone who gets excited about mortgage bonds is Charlie Pellet. He's standing by at the Bloomberg Business Week studio. He's also watching markets. Hey, Charlie.
Without a doubt, absolutely watching markets in video after the bell. Got to begin though with fast-moving developments. Here's the latest on the situation with Cuba. We brought you headlines moments ago, but Cuba's government says its forces have killed 4 people and wounded 6 others who were traveling in a speedboat with Florida tags and opened fire on the island's border patrol. Now, the Cuban Ministry of the Interior says that vessel did approach within 1 nautical mile off the coast of Villa Clara. U.S. and Cuban tensions are running high as President Trump's administration has effectively imposed a naval blockade on the communist-run island and dramatically reduced its access to fuel. Again, developing story. We will have more details as they become available right here on Bloomberg Business Week. The other story we're keeping an eye on, CME has now restarted natural gas futures after a glitch halted trading. That halt lasted about 35 minutes, also affected trading in metals on CME's Globex platform. Stocks are pushing higher. In fact, we are just about the best level of the day right now on the S&P. All of this ahead of NVIDIA. S&P right now up 0.8%. The Dow up 0.6. The NASDAQ Composite Index up 1.3%. The NASDAQ 100 Index up 1.4%. The VIX is at 18. 10-year yield 4.04%. Gold is surging 1.1%. 52.02 the ounce. West Texas Intermediate crude little change. 65.63 a barrel. Unchanged right now. Bitcoin, though, major story. It is up 7.5%. Bitcoin at 68,882. Again, NVIDIA after the bell. NVIDIA shares up 2.2%. Also reporting after the bell, Salesforce up by 3.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Shares of Mercado Libre having their biggest intraday drop since 2024, down about 14% intraday after fourth quarter net income missed analyst estimates as the company continued to invest heavily in its main business lines. Now, I should point out, analysts are broadly positive on the growth trends at the company. They did note that elevated spending will pressure the company's margins. Meantime, our own in-house Bloomberg Intelligence analyst, Poonam Goyal, she follows the company. She pointed out that AI is a catalyst, helping spur ad sales and acquire business, and singled out Mercado Pago, I hope I'm saying it correctly, Pago AI assistant. So let's get into it all and look at the quarter in the business. It's so great to have back with us Martin de los Santos. He's CFO of the e-commerce firm Mercado Libre, and he joins us from Montevideo, Uruguay. And it is great to have you back. How are you? And talk to us a little bit about business.
Thank you, Carol. Thank you for having me. It's a pleasure seeing you again. As we mentioned yesterday on earnings report, we are very excited about the growth that we are delivering in all of our businesses. You mentioned advertising that has been helped by AI, growing at 70% year on year. Our e-commerce business, in particular in Brazil and Mexico, growing 35% year on year and growing market share. The same thing with Mercado Pago, our fintech platform, which is also growing very rapidly in a region where financial inclusion is very, very low. So the opportunities ahead are tremendous, and the results that we deliver in Q4 and in 2025 makes us very, very excited, despite the fact that we are conscious that we're making investments that put some margin pressure in the short term.
Well, you have a great view of the consumer, given where you sell and what you sell. If you were to characterize consumers differently in different parts of the market, different parts of the world that you sell in, how would you characterize the consumer?
I think if you compare the consumer behavior in Latin America relative to more developed countries, I think we're behind in terms of adoption of e-commerce, and this represents an opportunity to us. Penetration of e-commerce is only 15% in Latin America. It's half the penetration than the US. Also, there are some barriers to that. Payments, logistics is more complicated, so we have built our own logistic infrastructure. We build our own payment methods. So we have built a platform that is enabling people to move online. So I think those are the main differences. At the end of the day, we sell everything in Mercado Libre. And what we're doing is we're trying to move people online and create a market.
So your sales did beat fourth quarter expectations. We were just talking about some of the numbers with you. 45% year-on-year increase in net revenue, $8.8 billion, driven by customers taking advantage of free shipping perks and credit offerings. I am curious about these momentum drivers, whether they continue, and I'm really interested about the credit offerings. Does it show, Martin, strength of the consumer or a consumer who needs to be buying more on credit?
Yeah, let me first talk about the growth opportunity that you mentioned. We delivered 45% year-on-year growth. This is the 28th consecutive quarter in which we deliver more than 30% year-on-year growth in terms of revenue. So growth has been consistent, and when we look ahead of us, because of the large opportunity that we see in Latin America, it will continue to be there. And this is the reason why we are investing behind growth. And in terms of credits, Latin America is a market where it's very much underdeveloped in terms of penetration of credit. If you look at Mexico, for example, fewer than 15% of people have a credit card. So what we're doing is we're bringing products to them that will include them in the financial system, and they also help our ecosystem, because when people pick up the credit card for the first time, they tend to buy more on Mercado Libre. So it is very synergistic. But at the end of the day, we're doing financial inclusion, and we have the objective of becoming the largest digital bank in Latin America, and we're working towards that.
Martin, you mentioned when we were just a few moments ago the penetration in Latin America of e-commerce and how it's half of what it is here in the United States. So there's a lot of opportunity. There's a lot of runway for your company. What's a good way to think about the progression over the next few years? Like, how does that increase in 1 year, 3 year, 5 years from now? What's a good goal for investors to have an understanding of?
I think a couple of ways of looking at it. I think the penetration of e-commerce, there's no reason why it shouldn't reach the levels of China, north of 30%. So that's double the penetration that we have today. Also, if you look at the number of buyers, we have 120 million buyers in our platform in a region of 600 million. Of course, we're growing at 26% year-on-year, the number of users. But as we continue investing and improving the user experience, that should continue to deliver growth. So we see plenty of runway for growth ahead of us in commerce. And the same thing could be said about fintech.
But when? Like, if you were to give a timeline for when that would happen, when would different Latin American markets reach what China has experienced?
I think it's a matter of, it's hard to put a timeline. I mean, we've seen a lot of acceleration since pandemic in terms of penetration of e-commerce. Yeah. And if we continue to trend, I think we should be able to get to the levels of where China or the US are today, maybe 5 to 7 years. Okay. But then we should continue to increase that penetration as well going forward.
Hey, one of the things I want to go back to, and I think you touched on this, but it's part of why we're seeing a negative stock reaction, and that is the substantial investments that you guys are making in e-commerce and the fintech unit. Analysts say that it's necessary. You got to make these investments in order to bring about future growth. So on that, because investors are questioning it, certainly in the trade today, Martin, how should we think about the run rate here?
Yeah, let me give you an example to make it more tangible what we're doing, right? We lowered our free shipping threshold in Brazil, and that was not the first time that we did it. We did it several times since 2017. And that's a way to enable more people to come online. You know, shipping cost is one of the main frictions for people to come online. So when we did that, we did put pressure on margins in the short term, and we're conscious of that. But we have also seen very important metrics in terms of growth. You know, increased number of users. We accelerated items sold from 26% year-on-year to 46%. We see more users coming to the platform with more engagement. They tend to buy more things on Mercado Libre. So all the metrics are pointing in the right direction, and this is the way to go, in particular if you consider the relatively early stages of development of e-commerce in Latin America. So we think, again, when we try to optimize long-term margins as opposed to short-term margins, and we're very confident that the investments that we're doing in commerce in this case will help us to achieve that goal.
But will it be a drag on margins for a couple more quarters? Like, do you have a good feel on how long that continues to be maybe an issue? Because obviously investors see it as an issue today.
Yeah, of course. I have been consistent to the market saying that our main objective is to capture the large opportunity ahead of us, and we will not hesitate to invest to capture that opportunity. We have a long track record of investment with cautious and very prudently, and we are expecting returns on those investments, but in the long term. So if we see more opportunities to invest in 1P, cross-border trade, expanding the free shipping offering, the credit card, we will continue to do so. because we think it's the right way to go in terms of expanding and maintaining a leadership position in both commerce and fintech.
Well, on that, marketing expenses, they rise when you're trying to increase demand. If you think about churn or like if you reach a new customer, the cost of acquisition of that customer, how long does that customer stick around after using the service? And how do you make sure that you don't have to keep spending to entice them to come in?
That's a great question. This particular quarter, last year actually, we increased the level of investment in advertising, and the cohorts that we incorporated in 2025 perform a lot better than the previous cohorts because they come and they find an ecosystem that works better, that has more free shipping, better financing alternatives, better assortments. So all the metrics that we measure in terms of retention and engagement of users that come through our advertising investments are improving year over year, and that gives us confidence to increase investments like we did in this particular year.
I don't know if this is a crazy question, but I want to ask you before we wrap up.
You talked about this earlier on the call today.
Well, what's been going on in Mexico, and the taking out of the cartel chief, and what I guess we kind of continue to watch this
disruptions at airports.
Exactly. Is any of that? Are you seeing that show up in any way in terms of consumers from Mexico?
Well, obviously, we are monitoring the situation very closely to make sure that our employees and our customers and partners are safe, given the recent events. We have not seen any disturbance on events, but we're monitoring the situation and close contact with authorities to make sure that we don't get any disruption.
All right, we're going to leave it on that note. So appreciate that you addressed that as well. Martin, thank you so much. Really appreciate the time today. Martin de los Santos, he is the Chief Financial Officer of the e-commerce firm in Latin America's most valuable company by market cap. We've seen certainly that trade play out, Mercado Libre. And we should point out the ticker and the stock down about 14% year to date. It gained about 18% last year.
Hey, I do want to bring an update to a story that we've been following all hour. Cuban forces killed 4 people and wounded 6 others who were traveling in a speedboat with Florida tags after they opened fire on the island's border patrol. The occupants of the vessel opened fire on security forces, injuring the commander of the military vessel when approached to identify the passengers. And the Interior Ministry said Cuba reaffirms its commitment to protecting its territorial waters based on the principle that national defense is a fundamental pillar of the Cuban state.
We should remind everybody that U.S. and Cuban tensions definitely running high as President Trump's administration effectively has imposed a naval blockade on the communist-run island and dramatically reduced its access to fuel that came off of the actions in Venezuela. Now, the president has also mused about the collapse of this 6-decade-old regime. The U.S. State Department did not immediately respond to a request for comment, so we are awaiting some kind of comment, perhaps, from the U.S. government.
Well, let's take a look at how markets are looking. We're still seeing some buying. The S&P 500 up 0.9%. The NASDAQ Composite up 1.3%. The Dow up 0.6%. NVIDIA is what I'm watching, up more than 2.3%. That company reporting earnings today. After the close, 75% gross margin is the expectation, Carol. And 420 is when we expect those numbers to cross.
Yeah, we'll be watching. Expectations are high, and we know this is a stock that really hasn't been doing much this year. I'm Carol Messer, along with Tim Stanovic. Let's get to some stocks on the move on this NVIDIA Wednesday, I'm going to call it. Bloomberg News Equities team leader and deputy team leader for U.S. Equities, Carmen Reinecke. She is in the house, and she joins us with some stocks on the move. Let's start with this one. It's definitely on my gainer list. Axon.
Yeah, so right now this is the top gainer in the S&P 500, ticker AXON. So shares are up about 20% right now. So this is the maker of Taser, right? And it also does public safety software. So shares are up after earnings. They reported earnings that were better than Wall Street's expectations. And analysts really cheered it because they see this company as an AI winner. So they're using AI sort of across their software platforms. And so this is such a benefit.
Tim is looking at me like,
well, because
we talked to these guys.
Yeah, we have. And they're very bold. They're so bullish on this.
Yeah.
And the company also, the body cameras and the footage that
robotics is something I think they're exploring, a lot of different things.
Sorry, but we digress.
Yeah, so I mean, they're just seen as one that could be a winner as opposed to disrupted, as we've seen, software stocks really get hit there. So that's Axon. Another place that I'm looking today is the housing sector.
This is an interesting story.
Yeah, I've been looking at the housing index, S15 home. So it's down about 4% today, the worst since October. So there are kind of a few things going on here. First of all, Lowe's, so ticker LOW, shares are down. The company forecast full-year sales that were short of expectations and sort of signaled that there's still weakness and uncertainty in the housing market. And then secondarily, so investors are really hoping that Trump would address this more in the State of the Union speech last night. And he did a little bit, but I guess not as much as investors were really hoping. So sending shares of those home building stocks down today.
No more specificity, right, in terms of a policy that might address the housing affordability issue. Let's go to Netflix. What's going on there?
Yeah, so Netflix NFLX is up 6% today. This is the best day since April 22nd, Earth Day. So basically what happened this morning, so Warner Brothers Discovery said they have a new offer for Paramount Skydance, and that could lead to a better deal than the existing agreement that they have with Netflix. So investors seem to be excited about this because it would mean, Netflix is no longer in this deal, and they could walk away with a breakup fee of $2.8 billion. So we're seeing shares having, some resurgence after it's had a really, pronounced sell-off from, I'm looking, June of last year.
Well, that's what's so remarkable about this is that investors have been pretty bearish on the idea of this company taking on these other assets. So I don't know, it's interesting to see a stock move like this today higher, given that it's coming from a place where investors have sent the signal, this is a lot of money to spend and we're not entirely convinced it's the right way to spend the money.
Yeah.
I don't know.
I'm thinking of...
what are you thinking of?
Who did we talk to yesterday from MoffettNathanson, and specifically, Rob Fishman. And basically, if Netflix doesn't get it, it's kind of okay. They can walk away, and I think they're going to be buyers. Just looking for the commentary that he had. He said, with Netflix's stock at current depressed levels, investors should win either way. We see longer-term benefits of owning Warner Brothers assets not properly reflected at these levels, but if Netflix walked away from the deal, the company's core fundamental drivers of subscriber and ad growth, plus pricing power, should rebuild investor confidence that Warner Brothers was truly nice to have and not a must-have.
Exactly. You're not going to quit. I
thought that was smart.
I think that makes sense. You're not going to quit Netflix because it doesn't have The Sopranos.
Right. You'll be okay, right? You'll still be watching.
Winning by walking away.
Exactly.
I think we can all learn something from that.
It's okay. Sometimes, right? It's a decision, and it's better than not.
The deal's not done. We don't know how this deal will end. He did say, he's like, I have no idea who's going to win this.
No, right, exactly.
Okay, sorry. It's also NVIDIA Day. You're watching shares of NVIDIA.
Yes, exactly. So we've got to talk about NVIDIA. Shares are up 2.2% right now. And this is a little notable heading into earnings because the stock has not seen a lot of momentum in the past really few months.
Yeah.
So investors sort of rotating away from those big tech stocks into maybe less risky parts of the market. But today we're seeing green on the screen heading into these earnings. A lot of things investors will be watching for, mostly the guidance. If Jensen can sort of reinvigorate, investor enthusiasm around AI. And sort of under the hood, I'll be looking at gross margins.
Right.
If they say anything about China.
Right.
And then, of course, that guidance, what they're seeing, especially after we saw so much spending from the hyperscalers sort of forecast into the future.
What did Ian say? Something like operationally, though, our own Ian King who follows it, it's hard to kind of argue with what is going on at this company.
I mean, they've said what surprises are going to be left for us is basically what Ian said, because we've heard a lot from Jensen about demand. He said it's off the charts. Shares down about 4.8% from all-time highs.
Be sure to check out Stock Movers. Find it on Apple, Spotify, or anywhere you get your podcast. Carmen Reinecke, thank you so much. The close coming your way on TV. Tim and I continuing on radio. Thank you. Carmen, nice. That was a nice hit.
Carmen.
Those are all good names.
Well, I was trying to get not just this moved on earnings.
Thank you. It was really good. It was fun to chat that out with you. Much appreciated.
Thank you, Carmen.
Yes, we're good show, guys. Nice hour. We done?
That's what it's like. Could be. Yep.
Yeah.
Okay, and then off the clock? Okay.
This is CBS News on the Hour, sponsored by JTV.com. I'm Jennifer Kuiper. Harvard University cuts ties with Larry Summers over the recent release of Jeffrey Epstein files. CBS's Christopher Cruz.
Former Harvard president and Clinton Treasury Secretary Larry Summers will relinquish his academic and faculty appointments at the school at the end of the academic year, one of which is his university professorship, the school's highest faculty distinction. He's also resigned from a leadership position at the Kennedy School of Government. The resignations were announced after the school said it had been reviewing documents related to Epstein that were recently released by the Justice Department.
Microsoft co-founder Bill Gates has apologized to staff at his Gates Foundation over his ties to Jeffrey Epstein, saying that mistakes he made had overshadowed the work of the group, but denying that he was complicit in or had knowledge of Epstein's crimes. 4 men on a U.S. registered speedboat have been shot and killed and 6 others wounded after being intercepted in Cuban waters. That according to Cuba's Interior Ministry, which also says that the speedboat passengers opened fire on a Coast Guard vessel that approached them. Iran is pushing back against President Trump's pressure tactics, CBS's Cammie McCormick.
Even as the U.S. and Iran prepare for more nuclear talks, Tehran is calling President Trump's remarks big lies. Trump said Iran was rebuilding its nuclear weapons program and will soon build missiles to reach the U.S. Iran has long claimed its nuclear program is peaceful, and its foreign minister compared Trump to Hitler's propaganda minister. The talks in Geneva Thursday will be the 3rd round of negotiations.
Cleanup and power restoration is underway after the massive blizzard that stretched from Maryland up to Maine. Doug Foley of Eversource Energy in Massachusetts.
We have about 1,000 line crews that are here right now. Thousands of people are working hard in the restoration. Tree crews, damage assessors.
New York City Mayor Zohran Mamdani is asked about the viral video of New York City police officers getting pelted with snowballs during Monday's snowstorm. Several officers were treated for injuries.
What I saw yesterday in these videos was a snowball fight that got out of hand. I believe that our officers, just like any city workers, deserve respect.
In L.A., a jury is set to decide if Meta and YouTube are responsible for the mental health issues suffered by a 20-year-old who says she's been a heavy social media user since she was 6. Online safety advocate Lennon Torres.
Big tech's predatory design does not discriminate. It goes after good, straight-A students and the students who'd rather be outside hanging with their friends instead of in the classroom. Families with helicopter parents.
Stocks are up on Wall Street. The Dow is up 322 points. This is CBS News.
Looking for spring jewelry looks? Find them at Jewelry Television. New customers get $20 off purchases of $99 or more at jtv.com.
The second I see that Chick-fil-A text in the group chat, I'm throwing my shoes on and running out the door. Hey, I'm Layla. And I'm Kaylin. And a little thing we love about the Chick-fil-A chicken biscuit is how it feels like an easygoing morning. The chicken adds the most flavor. It's juicy and seasoned. The biscuit is just very light and airy and fluffy, just like a cloud. I also love to put jelly on mine so it's sweet and savory. It's a good start to the day.
Mornings are a little bit brighter with the Chick-fil-A chicken biscuit and Simply Orange Juice. Available on the Chick-fil-A app. Real guests paid for their testimonials.
DQ presents the Spicy Menu. For a limited time, try the new Flamethrower Chicken Strip Basket for $6.99 with spicy, bold strips that heat you up. Served with a side of famous DQ soft serve as a dip to cool you down. That's right, dip those spicy chicken strips right into soft serve. Plus fries and toast, all for just $6.99. And add a new pineapple lemonade sparkler or cooler made with tahini. It's the limited time only Spicy Menu. Get it delivered in the DQ app. Happy, tastes good. Participation may vary.
The Rock and Roll Hall of Fame announces nominees for its class of 2026.
New addition, Shakira, Pink, Melissa Etheridge, and Lauryn Hill are among 10 first-timers. Luther Vandross and Phil Collins are newbies, too. The third time could be The Charm for Mariah Carey, Iron Maiden, Joy Division, New Order, and Oasis. Second-time nominees, The Black Crowes, Billy Idol, and Sade. New members will be announced in April. Deborah Rodriguez, CBS News.
Discord is postponing its controversial age verification policy after users of the popular platform for gamers to communicate online expressed strong objections and privacy concerns. The revised age verification system will roll out in the second half of this year. Jennifer Kuiper, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, welcome everybody to AI Wednesday. Carol Masser along with Tim Stenivek.
For now.
Are you? What do you have to check? Is it the hands that are always like, don't look real?
Hey, that's...
Although they're getting better, aren't they?
I was just going to say.
Cool.
Yeah, it was the eating spaghetti test.
Eating spaghetti.
You can create a video of Will Smith eating spaghetti that looks real. Then...
Okay, we're real, I promise, and we get real. We got a lot going on when it comes to artificial intelligence, and yes, of course, we've got NVIDIA earnings after the closing bell. We've got a rally underway ahead of all of that. Welcome, everybody. We are across Bloomberg platforms here on Bloomberg Business Week Daily.
Well, Carol said it is all AI today, and indeed it is, with NVIDIA reporting after the bell. But also, we're watching what's going on in Anthropic, the company dropping its hallmark safety pledge in that race with its AI peers.
I thought they were like, no.
Well, the U.S. also warning Anthropic to allow unrestricted use of AI by the military. We're going to get to the bottom of it with our tech and national security reporters.
All right, looking forward to that. We're also, as we said, all over NVIDIA earnings. After they cross, they're going to come out around 4:15, 4:20 p.m. Wall Street time. So we've got New Street Research's Pierre Ferragu. We've got Northwestern Mutual Wealth Management's Matt Stuckey, and then Jay Goldberg over at Seaport Research Partners. And then we've got our own Ed Ludlow and Mandeep Singh. So that 4 o'clock hour, you're just going to want to hang around. Check out that lineup because we are going to dig apart those results from NVIDIA. But we also hear from Salesforce and I think Snowflake. So we're going to tap into those because there are concerns about the software space and what AI might do to them, whether or not it gets into their existence going forward. So this is all important.
Anurag Rana is going to be joining us with those and the software names. In the meantime, Bloomberg Business Week is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turned into gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide.
All right, he's keeping a watch on gold, all asset classes, including the equity trade on this Wednesday. Let's head on over to Charlie Pellet.
Hi, thank you very much. And of course, NVIDIA up now by 2.2% ahead of earnings. As we have been reporting, Cuban forces say they killed 4 people and wounded 6 others who were traveling in a speedboat with Florida tags after they opened fire on the island's border patrol. It's a developing story. We'll have more coming up for you in just a moment right here on Bloomberg Business Week Daily. The big story we got you covered after the close of trading will be NVIDIA. Kate Moore is Chief Investment Officer at Citi Wealth.
I think many people have very high expectations for NVIDIA after the close today. And it's not just the expectations that were sort of published, but as you well know, it's the whisper number and the discussion that the investment community has around how high or how much higher than the estimates they'll end up reporting and then guiding.
Citigroup's Kate Moore, and of course the impact on the broader market. Again, NVIDIA ahead of earnings, up 2.2%. As Carol mentioned, the other big story after the close of trading will be Salesforce. That stock up now by 3.2%. The Dow, the S&P, NASDAQ all advancing. This after the State of the Union address last night. S&P up 58, 69.48 where we stand, up by about 0.8%. The Dow up by 306 points now, up 0.6%. NASDAQ up 1.3%. And to be sure, we do have the S&P trading close to session highs. 10-year 4.04% right now. Spot gold is up $58 the ounce, up 1.1%, 52.02. And West Texas Intermediate crude now up by 0.1%, 65.69 a barrel. Bitcoin, a major move there, up 7.6%. Bitcoin now just below $69,000. Again, recapping stocks higher. S&P up by 0.8%. We are on NVIDIA watch, and I'm Charlie Pelleton. That, Carol and Tim, is a Bloomberg Business Flash.
All right, thank you so much for that update, Charlie. First off, we are keeping an eye on that story that came on our radar just in the last hour or so. Cuban forces killed 4 people and wounded 6 others who were traveling in a speedboat with Florida tags after they opened fire on the island's border patrol, the government said. With us is Dan Cancel, BN, Bloomberg News Miami Bureau Chief. He joins us from our Miami Bureau. Dan, we're trying to understand what exactly is going on, who these individuals were and what they did, and we're hoping you can shed some light on it. What do we know about the 4 people who were killed?
Yeah, very little. The source of the information as of now comes from the Cuban military. As you mentioned, the statement dropped about an hour or so ago, where they mentioned that this boat with Florida registration carrying 10 passengers ran into this incident conflict with the Coast Guard, with 4 dead and 6 injured. They haven't identified the nationality of these individuals, or obviously released any names. And on the U.S. side, we don't have any information, either kind of corroborating that information or providing new details. So as of now, it's a bit of a sit and wait to see if the Cubans release, additional information. But obviously, there's a big backdrop here, right, to what's happening between U.S. and Cuba relations. So.
Let's talk about that, because we did know, I think earlier today, the U.S. announced that it would ease restrictions on Venezuelan oil exports to Cuba's private sector for humanitarian reasons. We know Canada has announced an aid package for Cubans because of President Trump's oil blockade. So kind of where are we? I mean, tensions are high right now between the U.S. and Cuba.
They are, yeah. I mean, since January 3rd, when Maduro was captured in Caracas, obviously Venezuela was the biggest ally and benefactor for the Cuban regime, and so taking those oil flows and that support away from the Cubans has created a lot of tension, and obviously the situation on the ground in Cuba has deteriorated in terms of energy supplies and other sorts of supplies. So the U.S. has not come out with a real clear strategy on what they hope to accomplish in Cuba, but clearly there are some new headlines about supplying the private sector with fuel versus trying to kind of go around the regime in helping the people and avoid a bigger humanitarian crisis.
Yeah, I mean, again, the information we have, Dan, on this is very limited, and you make a good point about the backdrop of this and what it means in the context of everything that's happened in 2026 thus far. That said, there has been reporting around where this boat at least was registered to. What can you tell us about that, and if that offers any indication about who was actually in the boat?
Yeah, listen, so far, all we have is a registration number, which, curiously, the Cubans did provide in their statement. It's not returning anything solid as we look into that and report on it. So you can kind of imagine this could be people out for fishing, but apparently they were armed, right? So maybe not. We could be talking about people trying to bring supplies, to Cubans, whether it's food goods, whether it's illicit, right? Kind of smuggling operation. So it's really kind of up to our imaginations here, in terms of what could have been happening, and the fact that the U.S. Coast Guard has not issued a statement or verified this is something that we're obviously waiting for.
We do have U.S. Representative Carlos Jimenez out on social, and he's saying the Cuban government must go to, quote, the dustbin of history. He posted this after Cuba clashing with the U.S. speedboat, and he calls, quote, again, his words, murder, Cuba killing of U.S. speedboat crew. But as you said, we don't know a lot. We have to be very careful. The devil is always in the details, and we are waiting some kind of statement from the U.S. government, correct?
Absolutely. I'd say he's among the more hardline of the Cuban Americans in Congress, and so it's not rare that he'd have that rhetoric today. And again, we need to figure out exactly who these people were. From the U.S. perspective, are they U.S. citizens? Are they Cubans? And so we just, there's so many things we need to figure out here. Yeah. I think the one thing, again, is, what's changed recently is that the private sector in Cuba is now authorized to import fuel, right, for the first time. And so, could people be running, big jugs of gasoline or diesel, right, across the less than 100 miles that separate, right, the two countries? So again, it's just a theory or one possible scenario, right? I just don't know.
One more line from Representative Jimenez's statement on social. He's calling for an investigation of the Cuba incident, but we would all concur that we need to know some more in terms of the details and find out exactly what happened before we can move forward. Dan Cancel, thank you so much. He is Bloomberg News Miami Bureau Chief, joining us from our bureau in Miami. We're going to kind of stay on, I don't know whether you want to call this geopolitics or just tensions, global tensions, and just finding our way forward when it comes to relationships between countries, but also throw things like technology and military, and it kind of all gets interesting and a little tough. Well, the Pentagon on that threatened to invoke a Cold War-era law to compel Anthropic, that's the AI company, to allow the U.S. military to use the startup's tech if the company failed to comply with the government's terms by Friday. That's according to people familiar with the matter. Meantime, Anthropic, which, reminder, for years it's billed itself as this like safer alternative to AI rivals, it loosened its commitment to maintaining its guardrails, one of the most dramatic policy shifts in the industry, as its startups once focused on helping humanity turn their attention to profit and success. Let's bring in Katrina Manson. She's Bloomberg News reporter. She covers technology, national security. She joins us from New York. The policy shift from Anthropic, we're going to talk with Shireen Ghaffari in just a few minutes. Is it tied to that meeting yesterday that you reported on between Dario Amodei, Anthropic's CEO, and Defense Secretary Pete Hegseth?
Well, I think there's a broad policy shift happening at the moment, but in the specific safety release that they changed and announced yesterday, not officially. But what we're seeing across the weeks and months, really, is Anthropic having to grapple with working on classified cloud, the first of all the AI companies to be able to do that, and what that really means. We've seen someone resign recently from Anthropic who worked in safety research, saying it's really hard to put values into actions at the company. So there are a range of things happening right now where Anthropic is trying to compete, is the favored company at the Pentagon, but is also having to loosen its own high-minded ideals when it comes to being slow about releasing new tech, because there's such a competition afoot.
Katrina, what does this really mean? I mean, a lot of companies do business with the government, and I'm sure there are things agreed to, signed. Is this just an AI version of that and kind of the norm, or does it say that there is the government kind of stepping more broadly into information or access of that information?
Well, if you mean, what does this threat mean? We really are on a ticking clock right now. So Secretary Hegseth has said they have until 5:01 p.m. on Friday to decide whether they are prepared to be cut out of the U.S. government system and be declared a supply chain risk, or he will force them to provide their tech to the government under the Defense Production Act. Both are real serious escalations. It's not clear to what extent this is performative. Anthropic says that good faith conversations are continuing. And so the irony of all this is that both Anthropic wants to work for the Pentagon and the Pentagon wants Anthropic to work for the Pentagon. So in that way, there isn't that much light between them, but it does really come down to usage and how they're able to present themselves as safety conscious, and also make sure that AI isn't used in two key areas. One, autonomous lethal weapons, and the other, mass surveillance of the American population, which of course the Pentagon says it doesn't do, and it sticks to the law anyway. So is there a way for these two companies, in your view, to actually move forward together without the United States invoking this Cold War era Defense Production Act, which, you know, we talked a lot about during the pandemic when you're talking about, you know, a company making masks or ventilators, but not necessarily about software? Yes, there is no war on right now, and the Pentagon's already using Anthropic's tools. It seems very unnecessary that they will have to do that to compel Anthropic to do it. But there are a few options. So Anthropic could loosen its language. They could sort of engineer some sort of climb down where everyone is able to say, oh, we didn't really mean it that way. What we meant is that way, and we agreed all along. Or we could see someone like Grok take over. The Pentagon agreed a deal. We've been able to report to put Grok XAI's chatbot onto classified cloud. That hasn't happened yet, and it's really not clear what level tech they have compared to Claude, which is Anthropic's very well appreciated chatbot that the Pentagon is using widely. But it's possible, of course, that anyone can be replaced, and it's meant to be a competitive market. And so far, it does look as if the Pentagon is a little bit too much reliant on one company. And now we're seeing this weight get thrown around, of course, about very significant military uses of AI.
Well, that's what I want to ask you, because it's about the company's insistence on guardrails for use of its Claude AI tool that the military sees as unnecessary. And it was a few weeks ago, the Pentagon published a new strategy on AI that called for making the military an AI-first force by increasing experimentation with frontier models and reducing bureaucratic barriers to use. Guardrails meaning what? So if there are no guardrails, like, where can the Pentagon take Claude?
So what Anthropic is saying is they don't want it used in these two cases, mass surveillance and lethal autonomous decisions that would happen without a human involved. What that AI strategy is doing is trying to say we want AI everywhere. And the Pentagon is experimenting with autonomous drone swarming. And so this is a key question now, and it either happens or it doesn't. You either have AI in an autonomous drone swarm experiment or you don't. And Claude is saying, we don't want ours to be there yet. We don't think the tech is safe. We don't think it can be made safe. The Pentagon, of course, doesn't just use these things without thinking about those things, despite the kind of approach they might be giving in public. There are numerous policy documents explaining how they set about testing for AI and autonomy, evaluating whether it works, where the fail-safes are, the examples where you really shouldn't use it, under what conditions it will fail. And in that way, there isn't really that much difference between the Pentagon and Claude's specific applied position. One has to remember, of course, that this is a long-term roiling debate between Anthropic and the Trump administration. They disagree on many areas in public. Anthropic's CEO was a loud supporter of Kamala Harris during the presidential campaign. Now, there's nothing explicit saying that any of that is feeding into this current row with the Pentagon, but there isn't actually that much daylight between them. And it's been put to me that, of course, weapons manufacturers, when they do provide their platforms to the Pentagon, they always explain the use cases where it will work and where it should not be relied on. If Anthropic can somehow massage the case to say, here are the places where we should not rely on AI and the Pentagon could agree, that could be a room for compromise, but it's not clear to me that compromise is what everyone is seeking.
That's what I was trying to get to. You know, with old defense contractors, what terms or parameters can they kind of put when they are providing weapons systems? And so it sounds like there were some parameters, and does that just then carry over to something like an Anthropic?
Well, if we're going to keep using that sort of analogy of like old school contractors, each one sort of has its own specialty. And yes, there's overlap. Yes, there is competition when these bids go out. But once they get a contract, you're kind of locked in there. And I wonder if software is any different. You mentioned Grok from XAI, OpenAI. You know, there are LLMs that, you know, from many different companies at this point. Is what Anthropic does with the U.S. government, can it be done as well by any of these other companies?
I think at the moment it's easy enough to say no, because Claude is on classified cloud in ways that the others are not there yet. OpenAI has been reapproached to see if they want to go onto classified cloud. XAI is striking this deal, but the ones who have the most kind of reps and sets on these systems, on one in particular known as Maven Smart System, is Claude. That is not to say that Maven Smart System isn't using other chatbots, but this is really a case where Claude is out in front and is not committing to what the Pentagon wants it to do in public the way the Pentagon requires it to do. And this is clearly a fault line that they haven't worked out how to bridge and are going about it. Both sides, I think, in a very clear public way.
Katrina, thanks. A much better understanding of this entire situation. Katrina Manson, she's Bloomberg News reporter. She covers tech and national security, joining us right here in New York City.
Hey, also in New York City and in the Bloomberg Interactive Brokers studio is Charlie Pellet. He's standing by. He's watching everything happening in these markets on this NVIDIA Wednesday. Hey, Charlie.
Well, hello there. I got you covered. Certainly NVIDIA coming up roughly 4:15, 4:20 after the close of trading. We'll have those numbers for you as they break. Right now, ahead of that report, NVIDIA shares are advancing 2.2%. The Dow, the S&P, NASDAQ, all moving higher. NVIDIA after the bell. Sarah Hunt is chief market strategist at Alpine Woods Capital Investors, and she says this report will reverberate beyond just the numbers.
There's always a lot at stake when they report, because they're both such a big part of the S&P index and such a big part of the AI story that everyone is paying attention and is looking for any nuance that they can get.
Sarah Hunt of Alpine Woods, again, NVIDIA up now by 2.1%. Also reporting after the close of trading, Salesforce.com up now by 3.2%. CME says it has restarted natural gas futures after a glitch halted trading, and Cuban forces killed 4 people, wounded 6 others who were traveling in a speedboat with Florida tags after they opened fire on the island's border patrol. S&P up 56, up 0.8%. The Dow up 0.6%. NASDAQ Composite Index right now up by 1.2%. The VIX at 18, the 10-year 4.04%. Gold is surging 0.9% right now, 51.91 the ounce on the precious metal. Bitcoin up 7.5%, 68,814. Tim and Carol, you ready for this? Newark Liberty International says it will start testing self-driving shuttle buses this spring to haul passengers between the airport's new train system and terminals. I'm Charlie Pellet. That is a Bloomberg Business Flash.
That's a Charlie Pellet story if I've ever heard that.
I just want Waymos to take me to the airport.
Well,
that's
just
what I
go
want.
to L.A. and you can do that.
Tim, I was just in L.A., coming back from Alaska. I tried to get a Waymo, and I couldn't. I downloaded the app. Didn't happen because it was too long a wait compared to the other main rivals. So I tried.
You're going to love it.
Next time.
You are going to love it.
Exactly.
You could try in Arizona, too, or San Francisco. They're not going to and from the airports yet in San Francisco.
No.
Yeah.
L.A.
Yeah.
Lots of fun.
Hey, speaking of LA, we're going to be going to LA in just a minute because I want to bring in Shireen Ghaffari. She's Bloomberg News AI reporter. She joins us from our LA bureau. As we've been discussing, Shireen, we're going all in on Anthropic and AI. This is a company that's billed itself as a safer alternative to AI rivals. It's loosened its commitment to maintaining its guardrails. I thought this was their whole thing. This was like, we are the safe AI company. Is it abandoning that in favor of commercializing its products?
Look, I think Anthropic, with this update to their framework for developing AI responsibly, is acknowledging some of the market realities. What they're saying is that while we made commitments about stopping any AI model development if we deem we cannot put the right safeguards in place in time, other companies have not. Government has not set any comprehensive policy around AI, and there is none sort of in sight in the near future. So, in some ways, this is an acknowledgement, really, of Anthropic grappling with sort of the market realities of building an AI business and not wanting to be the only ones who are abiding by a very strict set of guidelines that could hold them back against their competitors.
Shireen, all I can think about is what kind of message does this send more broadly to the AI world and any of the companies involved in this space?
Look, I do think Anthropic has been a leader in putting out some of these very detailed frameworks for how they should address AI safety. They are still committing to publishing even more reporting around this. And we have seen other AI companies sort of follow suit. That being said, I think, it does speak to just how competitive this race has become in AI, and that you can't really afford to delay something, especially if you're delaying because of a hypothetical that a new AI model could cause some danger. Another point that Anthropic made was that they feel there needs to be collective action in order to address some of these deeper systemic risks around more advanced AI, like biological weapons or terrorist threats. That actually, they sort of need an all-hands-on-deck approach, they're saying, from government and other industry partners.
So this blog post came out late yesterday. I'm going to read a little bit from it. Quote, "The policy environment has shifted toward prioritizing AI competitiveness and economic growth, while safety-oriented discussions have yet to gain meaningful traction at the federal level." This is part of what Anthropic said in its post. Dario Amodei, who you've written about so much, and I encourage everybody to go read what you've written about this company and about its co-founders, left OpenAI in 2020 as a result of what he felt like was a company not going in the direction that he wanted to go in for some of these reasons. And that's why he and some others started Anthropic. What are the scenarios that he has outlined in recent years about this technology and the threat that he says it poses to humanity?
I think, a big one that I know keeps people up at night is around chemical or biological risk. So, of course, we all have the internet and can look things up, but AI can become a much more sophisticated type of assistant in helping people potentially develop very dangerous types of tools that could be used for chemical, biological warfare. So that is a major area. Another is around cyber attacks. There was a new report just today about how hackers used AI tools to try to hack into the Mexican government. So that is a very real risk that now the rate and sophistication of cyber attacks can increase. There are also labor impacts, right? While those may not be as immediately sort of existentially scary as, say, a terrorist attack, that is also a big and an impact on one that many everyday Americans worry about AI actually automating labor to the point that that sets off a real economic crisis.
So is Anthropic right, though, in its posts that the idea of safety, and man, I feel like we've seen this movie before when it comes to social media, right? That the government and policy and oversight hasn't kept up with some of the things that can go really wrong on social media. And I just think about the same thing with AI. I mean, Anthropic says, safety-oriented discussions have yet to gain meaningful traction at the federal level. They're right, aren't they? And I mean, when does that happen? What does it take? And like I said, we've seen this movie before, that it's really hard, it feels like, for government to keep up with this stuff when it comes to oversight.
There have been pushes in the federal government to try to get AI legislation on the table. When I started reporting on AI around 2.5 years ago full-time, I remember there were actually dozens of bills already out there on this topic. None of them have moved forward. We haven't really seen comprehensive internet regulation since the late 90s. So I think that what we're seeing here is that government is slow to catch up to the speed of technology. There have been local efforts in states like California and New York, but what the AI labs say is they don't want a patchwork of state-by-state rules. Anthropic has been one of the few major AI companies to be supportive of some of those local regulations, like the one in California that recently passed. But that being said, there is still this big hole in terms of a comprehensive framework across the nation on this.
So one thing that I'm curious about, and I don't know if you're working on something about this or you have done reporting on this, but this was I viewed this as maybe a competitive advantage, at least in the fight for employees, who were aligned at least with the company's values. And you and I have talked about this in the past, the talent war that's happening for employees to go work on AI. I mean, you just look at the pay packages, and that's evidence for, how important and how challenging it is to find employees. Does this affect the employees who are at the company? Do they say, wait a second, this isn't what I signed up for?
I think it's too soon to say if this will cause any kind of backlash or upset at the company. But what I can tell you is that Anthropic employees, many of them definitely care about AI safety. That is one of the primary reasons for some people for why they choose to work at Anthropic over other labs. I think what matters here is if they feel like the company is being transparent and honest in their reason to maybe walk back on some of these framework principles that they had, and if they can continue to work there and feel sort of ethically sound about what they're doing.
Bottom line, though, Shireen, that that meeting Tuesday with Almadeh and Defense Secretary Pete Hegseth, U.S. officials laid out a series of consequences, including those threats to declare Anthropic a supply chain risk and invoke the Defense Production Act to use the AI software anyway, even if the company didn't agree. Bloomberg reporting that out, you guys reporting that out. As Tim kind of brought up, I mean, we saw this during the pandemic, right? But it's one thing to require a company to make masks. It's another one, it feels like in this case, but the government can do this, and we've just got about 40 seconds left.
Yeah, that is a major escalation of the state of affairs between Anthropic and the U.S. government. I think it's also an example where the company does seem to be holding firm on some of the red lines that it has around what it feels are ethical uses of its technology. So two things happening at once. We're seeing Anthropic compromise on some of the principles they have, or some of the binding resolutions they had around AI safety, but also stand their ground on others. So it's an interesting situation.
To say the least.
Yeah. Shireen, thanks for taking the time today and explaining so much to us. Shireen Ghaffari, she's AI reporter for Bloomberg News. Check out her reporting, the entire team's reporting on the Bloomberg Terminal and at Bloomberg.com.
All right, looking ahead to the weekend, lots of conversations about AI, technology, and so much more. Check out our new show, Bloomberg This Weekend. David Gora, Christina Ruffini, Lisa Mateo. You can find it on Bloomberg TV and radio, Saturdays and Sundays, starting at 7 a.m. Eastern.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks higher across the board heading into NVIDIA earnings. After the close of trading, NVIDIA, by the way, up 2.1%. Let us head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a bid from the start today, with the Dow currently up 300 points. The S&Ps are higher by 56, and the NASDAQ, that's up by 1.2%. The U.S. 10-year yield is at 4.05. Gold is in the green. Oil is little change, but Bitcoin is surging by 7%. Among the main 11 SP sectors, leaders were tech and the financials. Real estate and consumer staples were under pressure. And leaders to the upside in the Dow, IBM and UNH, while Home Depot fell 2.4% and led to the downside. After earnings, Kava jumped 25%, having its best day ever. And in deal news, the Netflix CEO is going to discuss the Warner Brothers bid at the White House. Wrapping things up, it's a big night for earnings with Salesforce, Snowflake, and NVIDIA all reporting after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I've been driving all night, my hands wet on the wheel.
Come on, let's take a drive.
A drive?
Yeah, a drive.
Can you just focus on driving? Focus on the road.
Why would I drive fast?
Because I'm asking you to.
Just take your place in the driver's seat.
Just drive, baby.
Driver's seat.
This is the Drive to the Close.
Where we're going, we don't need roads.
On Bloomberg Radio.
I'm feeling like I want to look at the overall markets. We just heard, though, from Charlie, and we definitely are seeing stocks higher across the board. NASDAQ 100 up about 1.4%. S&P 500 up about 0.9%. But NVIDIA, in terms of weightings, big factor when it comes to the major equity averages. And we've actually seen it a little bit higher today, right?
Yeah, NVIDIA shares are higher right now by 2.2%. We can go ahead and round that up. If we look at what it's contributing to the S&P 500 today, no shock, it's the biggest gainer on a points basis.
Right.
Contributing 12 positive points to the S&P 500 right now. Next biggest one is Microsoft, contributing about 10.
Overall, when you think about the S&P 500, NVIDIA is about 8% of that index. NASDAQ 100, it's about 9.2%. So, yeah, what we get and the results and the market reaction could definitely move those major market averages. It does feel like, though, NVIDIA is facing a bit of a high-stakes moment with its latest quarterly results after the close today. Really, what it's all about is that AI spend. We want fresh evidence that it remains on track because there's a lot going on. And if there's any signs that maybe, well, it's slowing down, that could be a big factor.
Well, let's bring in Pierre Farragut, Managing Director and Head of Global Tech Infrastructure at New Street Research. He joins us from New York. Pierre's got a buy rating on NVIDIA, a $235 price target. NVIDIA shares, reminder, they're at $197 as we speak. Pierre, good to have you on the show.
Thanks for having me.
Yeah, it's always good to talk to you. It's been a while since we connected. Is there anything that NVIDIA could say today that you could hear from Jensen that would cause you to change your view on NVIDIA or your price target?
Well, I think like the near term for NVIDIA, which is going to make maybe 70% of the comments that Jensen and Colette are going to do on the call is kind of written on the wall. We have a lot of visibility, so I expect actually very strong comments. I expect them to confirm their target in terms of gross margin, that they are not worried about margin pressure or pricing pressure. I think, like, given how strong the capex announced by hyperscalers and many other players have been in the last few weeks, the environment is stronger than it was three months ago. So I would expect numbers to head in the right direction. Quite interestingly, when I look at investor sentiment and where people's mind is, and why NVIDIA as a stock hasn't done much in the last 6 months, people are concerned about margin pressure. And I think management is going to reassure on this point, because I don't see any reason for concerns about pricing or cost rising, developing in recent months. The reality is that we all hear about memory pricing going up, but HBM prices, these memory chips that go into the NVIDIA chips, are actually already very high and have been secured for like 1 to 2 years, like 12 to 24 months. So I don't see really a risk on that front.
You know, I do wonder in terms of pricing, right? Which higher pricing often great for margins unless the components or everything that goes into it is also higher. But I always do think about that top line, right? You want to see the growth, and I know for revenue we're looking for $65.91 billion. But having said that, does it matter if it's just a higher price point that's pushing revenues higher, or it's actually more being sold, like individual components? Does it matter when you look at these reports?
So NVIDIA doesn't communicate on units.
Yeah.
And
would you like that they do? Would it be a better, clearer picture?
No, because counting units in that market is very complicated. Some GPUs are way more expensive than others and things like that. So that wouldn't be practical. But what you see is how much revenues are growing and how much margin is expanding. That's very important.
Yeah.
I think for NVIDIA, both are important. Their track record of beating what they guided and guiding above consensus expectation is very strong. The environment is good. Developments in China are positive. As I said, capex are high. So I would expect them to actually beat expectations, guide up, and reassure on margins ambitions. Then for margins from one quarter to the other one, it depends on which products are starting to roll out and others, and that's a bit more difficult to anticipate.
When does this party end, Pierre?
You tell me. You tell me.
I don't know. Hey, I'm the one asking the questions here. But
in all
seriousness,
I'm going to give you an answer. I'm going to give you an answer.
Okay, let's hear it.
It's not going to end before well into 2027. Wow. And probably not before the end of 2027, simply because when you look at the pressure to deploy more compute, to be part of that game, of that incredible like generative AI game, is not coming off by the end of 2027. And most people who are spending the money, which are mostly like the 4 hyperscalers, have very, very deep pockets. And everybody is talking about ROI and like, is AI really useful? Like, this remains a technology that is being adopted and paid for the fastest by any metrics that we've ever experienced in the whole history of humanity. So these metrics are still very, very strong. So I think the party lasts until the end of 2027. Now, the risk and the reason why NVIDIA as a stock has been fairly disappointing in recent months is that the more visibility you give to investors, the more they worry about things that can happen in the longer run. And so most people today don't really care about 2027. They're already asking about 2028, of course.
So when that party ends, are we hungover or are we...
On to the next party.
On to the next party. Great, thank you for that assist.
No problem.
That's a good way to phrase it. My personal experience is that when you party hard, you get a hangover. And I would say that party is pretty hard. So people often ask me, is that secular or is that a bubble? It's like, that's the wrong question. That's not framing it right. It is both secular and a bubble.
Yeah.
But as much as it is a bubble, we don't know where the top of the bubble is.
Right.
I think the most likely bubble experience is going to be painful. It's given the pace at which deployments are growing and data centers are being rolled out, the day people start thinking, oh, maybe it's time to take a pause, like the first few months of the pause will be fairly abrupt, probably. Does that mean AI is a pipe dream and is not going to happen, is not going to change the world? Of course not. I think it's going to change the world and it's going to be very big, but this is human nature, this is the nature of the economy. You have something new, you rush into it, and at some point you go ahead of yourself and you have to adjust everything.
I don't know. Horse and buggy looks really attractive to me right now.
Does it run on a new, it doesn't run on the Blackwell, so you're good.
Hey. What's that, hey? Pierre Ferragut, thank you so much. Managing Director, Head of Global Technology Infrastructure at New Street Research. On our way to NVIDIA earnings about 20, 25 minutes away.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
All right, folks, we're counting down to NVIDIA earnings. Just about 27 minutes away. It's 4:15, right? 4:15, 4:20, 4:15-ish.
I'll tell you in about a half hour.
Okay, thanks for that, Tim.
Yeah, no problem.
All right, stock is up about 2% here ahead of that, so a lot coming your way. We're going to be breaking down all the numbers with our TV colleagues, and then we're going to also have a bunch of analysis from our Bloomberg team as well as some outside voices, so looking forward to that.
Hey, this got my attention last night from the State of the Union, and it was what President Trump said about electricity bills and technology companies. The president convening tech execs at the White House next week to sign pledges committing their companies to foot the electricity bill for energy-hungry data centers. So it includes reps from Amazon, Meta, Microsoft, Alphabet. They're expected to attend a March 4th event with the president, a White House official said. Others on the invite list include XAI, Elon Musk, Oracle, and OpenAI.
It's kind of maybe one of those lists you want to be dropped off of. I don't know.
But Carol,
yeah.
The promises will not be binding.
Well, this is what's kind of wild, right? They will not be binding, would lack the force of law. Administrations, though, believing that formal public pledges could bring accountability and offer some assurances to consumers worried that the rapid development of data centers that are crucial for artificial intelligence could lead to environmental damage and higher costs. Already, many would say, leading to higher costs. So I'm not quite sure. So they have to build power plants, build utilities?
So what the president spokesperson said yesterday, or today rather, quote, under this bold initiative, this is from the White House spokeswoman Taylor Rogers, excuse me. Under this bold initiative, these massive companies will build, bring, or buy their own power supply for new AI data centers, ensuring that Americans' electricity bills will not increase as demand grows. President Trump is committed to ensuring American AI dominance while simultaneously lowering costs for working families. Here's the challenge that I see in this.
Yeah.
Is it takes so long to build a new power plant,
right?
And to get a new power plant online. How do you do? How does a tech company do that in the time that it needs to actually get this stuff online?
Exactly, right? There's oversight, and there's a reason there's oversight of utilities. If you're building a nuclear power plant, you want to make sure that things are done right and carefully.
Build, bring, or buy their own power. So let's say they buy their own power.
Okay.
If they buy their own power from the existing pool of power,
how does that do anything?
Exactly.
You're not increasing supply.
Exactly. So you said exactly what I was going to say. So I think it remains to be seen what this looks like. You did mention that electricity bills have gone up. The president did vow during the 2024 campaign to slash electricity bills in half. Power costs have gone up. Nationally, the average retail price for electricity hit 17.24 cents per kilowatt hour in December, a 6% increase from a year earlier.
Listen, you and I have talked about too, and we've had guests on that talked about construction and things that are more.
I was going to say I show you my power bill every month, and I'm like, what's going on?
Not nat gas, right?
No, that's the challenge.
It's all electricity, and wherever that's coming from.
Yeah.
So
but
somewhere there has to be a generator.
Sometimes generated by
nat gas.
Yeah.
I know.
Sometimes the president wants it generated by coal.
Right.
And hence the $175 million investment there that was announced a few weeks ago.
Yeah. Hey, can we do one more thing?
Oh, yeah.
Sure. The company Cards Against Humanity will channel any tariff refunds back to its customers who it said already overpaid for everything. What? Go.
They're saying they're already overpaid? Go on. Go ahead.
The company instructed its customers who purchased its cars from retailers to fill out an online form to return the refunds it stands to receive back to shoppers. Unclear if the U.S. government will issue refunds to companies that have imported goods under the president's tariffs or when that might happen, with the U.S. Court of International Trade to decide on the mechanisms or timing for potential refunds.
Here's what the company said, quote, America's big retailers passed over 90% of their tariff costs onto you, their customers, by marking everything up. If you bought Cards Against Humanity stuff from them over the last year, you likely paid for those costs.
Done.
All
right.
Okay.
Thank you, Cards Against Humanity.
They're good at getting press.
Yeah.
I will say that.
I thought they
are very good at getting.
I thought they were going to have a card question in there.
They sent that game to lawmakers a few years ago.
That's smart. Talk about marketing. Hey, don't go anywhere. Clothes coming your way.
Coming up after the bell, full coverage starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here, taking you through to the closing bell with a global simulcast. It starts right now. Carol Massar and Tim Stenovic join us from the radio room. Caroline Hyde, the co-host of B-Tech, joins us as well as we now drumbeat to those results. Quarterly earnings out of the largest company in the world, and probably, at least for right now, the most consequential, NVIDIA.
Yeah, NVIDIA, and looking at it actually trading off its highs of this session, as we've just got a few minutes left in the trading session, but still up about 1.5% today.
Not just NVIDIA. We'll get a check on some of the software companies. Caroline, of course, following these closely. Salesforce reporting, Snowflake reporting. We'll get Zoom earnings after the bell as well. So yes, today is all about NVIDIA, but let's not forget about some of those humble software companies.
And maybe NVIDIA and Jensen Huang has a few choice words for software. And indeed, remember, he's been trying to convince the market that it's totally irrational, illogical to be selling them off and thinking AI is going to eat their lunch. But we've got a lot to hear from the CEOs of Snowflake and CRM or Salesforce to really prove that the negative, that they're not being disrupted in the way that they think.
Well, this is what I am curious about, Caroline. I mean, we kind of know what the numbers are going to be. 68% jump in revenue, 72% jump in adjusted EPS, and a gross margin at 75%. That's phenomenal by any stretch of the imagination.
For a $4.8 trillion company?
I know. Normally, I mean, you would think, okay, if you post those numbers, the stock should pop 20%. But this is a stock that's up 700-800% over the last 3 years, Caroline. I mean, what can Jensen Huang actually say that you think would materially be an upside for the stock?
Margins. Can they improve on margins? Are they seeing Rubin, Blackwell go along in terms of, well, the supply chain that they're seeing? And more broadly, what about China? Still the key question mark.
Caroline Hyde in the co-pilot seat for us as we have a lot of tech earnings to parse here in the after-hours trade. Let's walk through the numbers in the cash session with the S&P 500 higher by almost 60 points or 0.8%. The Dow adding 300 points or 0.6%. The NASDAQ composite up about 1.3. NASDAQ 100, 1.4. The Russell 2000, Carol Massar, higher by 0.4%.
All right, good stuff, Romaine. Looking at the S&P 500, kind of an even split, guys. 258 names in the index to the upside, Caroline. 244 to the downside, one unchanged.
And look at that for once. IT, information technology, actually an outperformer on the S&P 500. In fact, the NASDAQ 100 managed to push itself into positive territory today. We're currently seeing financials on a bit of a tear as well, up 1.7%. Communication services did well. And that consumer discretionary, Romaine, that you were pointing out a little bit earlier.
Absolutely.
All right, guys, let's get to some individual gainers as we await some earnings to cross the Bloomberg terminal. I'm going to go to one that was the #1 gainer in both the S&P 500, NASDAQ 100. We're talking about Axon. It's the maker of tasers and also public safety software. They reported an adjusted EPS for the fourth quarter that beat the average estimate. So this one up remains 17.5%. We got to go to Salesforce.
Salesforce earnings crossing the wire. I'm going to start off with the forecast for the current quarter, the fiscal first quarter. The company sees revenue of about $11 billion to $11.1 billion. The low end of that range, higher than the average of street estimates of about $10.99 billion. For the current quarter, or the quarter that just passed, excuse me, the company reported $11.2 billion, slightly above what the street was looking for. Adjusted EPS also came in above what the street was looking for at $3.81. The average of estimates was $3.05. And Caroline, the company also saying that it plans to increase its share buyback authorization to $50 billion.
And maybe, Tim, that is what the investor base wants to hear. If that's the proof point, look, believe in us. We're believing in our own stock. We think we're so beaten up, what, more than 40% in the last 12 months. We're going to be buying back to up to $50 billion. They're trying to perhaps tempt people to start to figure on catching a falling knife.
And also trying to get people to think of Salesforce increasingly as an agentic AI company. Mark Benioff, chair and CEO, saying, quote, "We've rebuilt Salesforce to become the operating system for the agentic enterprise, bringing humans and agents together on one trusted platform. And the more intelligence moves to where work happens, the more valuable Salesforce becomes." The question is, can it convince investors that it is a company for the AI era?
You know, having said that, it's a stock that, as we know, has been under pressure, down almost 30% here in 2026 already. The stock is down about 50% since late December, or I should say late in 2024, December of 2024. So it has been pulling back dramatically. And now you can see the stock in the aftermarket down about 2%. This is despite increasing its share buyback authorization to $50 billion. And again, going to that first quarter revenue, 11.03 to 11.08 billion. That is above the street estimate of 10.99 billion. Not enough, though, and to impress investors, at least in that early aftermarket trade.
This also gets to the idea, though, too, of just how important the conference calls are actually going to be here. And I do kind of wonder, I mean, it's kind of dueling conference calls because both Salesforce and NVIDIA start at the same time. Caroline, who are you going to listen to?
Hopefully we can spread across both. I'm going to be sitting next to you, Romain. I'm going to be dialing into what Ed's listening to on NVIDIA and what we're all listening to on CRM. But what I think is interesting is Agentforce. This is where we're seeing agents being deployed by CRM and what we're seeing in terms of the upselling, what we're seeing in terms of adoption. They say their average revenue run rate has reached $800 million, up 169% year over year. They've closed 29,000 deals, up 50% Q on Q. Is that enough to show that their offerings in terms of agentic AI is enough to secure the amount of money and the amount of seats that they need people to still keep on paying for?
Well, Salesforce shares down about 2.75, 3% in the after hours. Trade Desk shares down 10% in the after hours. Make that 12% at this point. This after the first quarter forecast missed estimates. First quarter revenue coming in at least at $678 million. The estimate was for $688.8 million. First quarter adjusted EBITDA, this is the guidance, about $195 million. The estimate was for $222.7 million. Shares continuing to move lower, down about 12.6% in the after hours.
Yeah, and that's on top of already about a 34% decline in shares of Trade Desk here in 2026. I should point out about 10% of the float is short, so any kind of negative, maybe the shorts kind of have it right, but you're definitely seeing the stock down almost another 12% here in the aftermarket.
Yeah, and it gets to this idea, too. I mean, we talk about the idea of what these ad tech platforms are doing and the idea of a lot of the money flowing away from some of the more single players in that space and to, I guess, some of those bigger tech companies that, of course, have their own already baked into it. It'll be interesting. That's actually a conference call I'd be interested to be a fly on the wall on as well.
All right. People are pretty positive on all of these companies. When you're looking at the analyst recommendations, 22 say buy on Trade Desk, only 3 say sell. The price target is well above where they currently trade, at some $46. So where are they going to be able to convince the market that you can start adding to these names amid the disruption in AI angst, let's call it?
All right, we're talking a lot about technology. Let's go to a retailer. A little bit of lightness, perhaps. Urban Outfitters out with their results. Fourth quarter EPS, $1.05 a share. Fourth quarter adjusted EPS, that's coming in better what the street was expecting, $1.43 a share versus $1.26. And fourth quarter comp retail segment sales up about 5.5%. That's a beat too in terms of what the street was expecting remain. And the stock's up about 1.5% here in the aftermarket.
Let's go back to tech. Snowflake shares higher in the after hours trade here. The company saying that first quarter product revenue, in its words, will be in a range of 1.26 to 1.27 billion. That's pretty much on the nose of what the street was expecting. That's coming on the heels of a fourth quarter revenue of about 1.28 billion, slightly higher than what the street was looking for. For the full year, the company says expect about $5.66 billion in revenue. The street was looking for 5.54. The company also says adjusted operating margin for the full year, 12.5%. So at least on the margins here, it looks like a relatively in-line quarter and a slight guide higher for the full year.
Let's check out Zoom Communications because, look, revenue beats both in its fiscal quarter reported and its full year guidance, but not so much if you're looking at the profitability. They're really seeing 2027 adjusted earnings per share coming in at $5.77 to $5.81. Now, the market wants to see $6.06. Zoom, though, did see that 2027 revenue will be in the range of 5.07 to 5.08. That was a beat compared to the expectations. And for their fourth quarter, we saw online revenue up 2.6% year on year. And you also saw a beat in terms of their revenue. But again, earnings per share falling short. This is a company that's having to invest in itself, trying to again convince people that stick with our product, stick with the conferencing, stick with the AI that we've already integrated. But they're probably having to spend a bit on that. We're seeing cash and cash equivalents falling some 6%.
Well, I'm looking at shares of Paramount Skydance down about 1.6%. We're getting some results from the company, not everything at this point. In terms of that outlook, Paramount Skydance sees fiscal year revenue at $30 billion. A look back, fourth quarter year-over-year Paramount Plus revenue up 17%. Fourth quarter revenue coming in just above estimates at $8.15 billion. Fourth quarter loss per share from continued operations at 52 cents. Fourth quarter operating loss at $339 million. Estimate was for a profit of $309.3 million. Shares down about 1.6%. The real story with this company, though, is does it get those assets from Warner Brothers Discovery, or does Netflix win out? Shares down about 1.6%.
All right, let's go to the company behind WWE and so much more, those live events. We're talking about TKO out with their results. Fourth quarter total revenue coming in slightly above the street estimate at $1.04 billion. If you go to WWE adjusted EBITDA, that was better than the street was expecting, $165 million. UFC revenue, $401.4 million. Again, that was better than what the street was expected. And fourth quarter adjusted EBITDA coming in better than what the street was expecting. Right. But stock's still down about 2.3% here in the aftermarket. All right, that's a wrap. Our earnings as we count down. NVIDIA just about 10 minutes away. That's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Caroline and Romaine, of course, continuing there on the close on Bloomberg TV. Tim and I continuing right here on Bloomberg Business Week Daily. Folks, we'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, just about 6 minutes away, actually, from NVIDIA earnings. At least that's our expectation. Actually, is it 4:20? I keep
I told you, I'm going to tell you in 5 to 10 minutes, I will tell you.
10 minutes. Could be earlier. Who knows? Anyway, we're counting down to NVIDIA. I meant to
There's a live blog, too.
Yeah. Oh, good. All right,
we'll
take that up.
Follow along.
I just want to look at NVIDIA here in the aftermarket to see if there's any
it's up
kind
about,
of movement.
There's up about 0.3%.
Okay, so not too much movement yet. And we did see it higher in the regular trade before the close, or at the close at 4 p.m. Having said that, a lot we're thinking about as these earnings get ready to cross.
Hey, let's bring in Matt Stuckey, Chief Portfolio Manager, Equities at Northwestern Mutual Wealth Management. The firm has more than $400 billion in assets under management. He joins us from Milwaukee. Matt, I got to tell you, in previous quarters, we've talked about NVIDIA earnings being like, and actually some analysts have come out and said certain reports have been as important to the market as what the Fed does. It's like, compared to a huge macro event. Is that still the case?
In certain ways it is. I mean, just by definition, it's the biggest stock in the S&P 500, meaning it's the biggest stock in the world. And so, that just, puts a little bit more emphasis on its earnings report. And just given the correlation between the AI infrastructure build out and, the tone and delivery and results of NVIDIA to that trade, it just elevates the profile in terms of what everybody circles on their calendar every quarter.
Do people, do clients, do investors ask everybody still, or ask you guys about NVIDIA as much as they have over the last couple of years?
They do. They want to know our thoughts on just, can this continue? If so, why? Because we've had it in our portfolios for a long time. We bought it in February of 2019, and so it's been a long journey. And our message to clients has been, while the growth in the stock has been phenomenal, so is the growth in the earnings. That's what this story has been. It's just such a unique case where not only have the fundamentals driven the stock higher, you've actually seen multiple compression along the way. That's how impressive the earnings story has been. And so the question is always around sustainability of those earnings. What's going to drive that over the next couple of years? And are those fundamentals sustainable? Those are always the questions we're looking for as portfolio managers.
What about when it comes to the, to think about this like, it's not a value stock, but to think of it like, Warren Buffett or a value investor would approach this company. And that's thinking about its moat. And that is what has really set NVIDIA apart. And certainly there's competition from AMD. There's maybe competition from what Alphabet has developed, at least when it comes to a certain part of the AI ecosystem. But if you think about what NVIDIA offers, in your view, does anyone in the near future hold a candle to what it can do?
Well, there's two parts to that. One is the near term in terms of training and what that market looks like. That is dominated by NVIDIA. Just in terms of the rack scale product they have out there with Blackwell Ultra, how that stacks up versus either the custom ASIC and the TPU versus AMD. NVIDIA wins that head-to-head battle all day long. The question longer term is how do they stack up in what's going to be the bigger market longer term, which is inference. So that's using the models that have been trained by NVIDIA. What is the most cost-effective, lowest latency, lowest total cost of ownership in that market? And that's where NVIDIA needs to win. And that's where the battle, I think, is going to be against the likes of custom silicon from from Broadcom and Google, and the likes of AMD in terms of how that competition stacks up and what market share and margin profiles ultimately look like. We happen to think that the leadership profile of NVIDIA continues to be pretty good in that market. It's not as dominant as what it is in training, but at the same time, you made the comment about Warren Buffett, and so of course valuation comes into it. It's not unreasonable to assume that if this investment cycle continues into next calendar year, we're talking double-digit earnings per share for the company. And against a 190 stock price, which is around where it finished today, that's not egregious from an earnings perspective. The question is